Novo Nordisk ADRs falling in late trading because Trump says the price of Ozempic could come down really significantly. Novo shares down on TradeGate. So, Guy, we keep an eye on pharma broadly as a sector.
So there's a lot to fold in this Friday morning as we think about how these European markets are going to open. We are watching what looks like a negative start to the day, as Val points out as well. Keep an eye on the volatility trade around all of this. So here we go. Let's put some numbers to this story and figure out what we are anticipating. FTSE 100, we'll see what the drop looks like there in a couple of minutes, but we've already got an early drop coming through from the Spanish market, which has also got to factor in the BVA Sabadell story, which we'll come back to in just a moment as well. So that market is down by 1.3%. The Stock 600 is down by 0.4%. We need to wait for the CAC to open, or we need to wait for the DAX to open before we think we get a really clear picture on what is happening there. The FTSE is now down by over 1% and dropping as we start to see more stocks opening. The IBEX is reasonably static, down by 1.25%. You've got a similar story now in terms of the numbers you're seeing on the FTSE 100. Could take a while to get the DAX open this morning. I wonder if it'll take even longer to get the Swiss market open. The CAC, we'll see what happens there, but we are expecting some of the European pharma stocks to be under pressure. So there's a lot going on, a lot to fold in. So let's get into the nitty-gritty of what is happening here. Sectors, single stocks. Val, what are you seeing?
Well, we have all sectors currently opening up in the red. No surprise at the bottom of the basket is the banking sector, down over 2%. We are seeing weakness in Banco Santander, down 4%, but also the likes of HSBC, Barclays, Unicredit also dragging down the index, also BNP. So it does seem like there is some broad weakness across the banking sector, and this follows on from the regional bank hiccup yesterday in the U.S. market, some concerns around credit and collateral. Also at the bottom of the basket, we are seeing a technology and auto parts. So there is some negative read-through actually from what we heard out of Washington when it comes to a longer reprieve for those looking for exemptions on auto tariffs out of the U.S. The likes of Stellantis down near 3%, Renault down 2.5%, but as a fairly negative session this morning, we have 480 stocks in the red, only 46 in the green.
Yeah, about 3/4 of the way down the basket, you've got industrial goods and services, so down 1.1%. And that comes down to defence mostly. A lot of the defence names, all of them in the red, obviously. Yeah. We're waiting for Rheinmetall, I think, but we've got Saab down 2%, Leonardo down 2.8%. Off, of course, this news of Trump and Putin meeting to end the war in Ukraine.
But that's not where the losses are coming through from. In terms of the points hit, tech is down pretty hard, which is interesting because tech didn't get hit that hard yesterday, but ASML is down by 2.3%. But Novo is the second biggest points drop on the market this morning. It is down by 4.2%. The Spanish banks, European banks more broadly, are down pretty hard. Santander is down by 4.7%. HSBC, more Asia exposure, only down by 2%, but I think I saw Barclays is down by 5.1%. Unicredit's down pretty sharply as well. So you're seeing some losses coming through. SAP is now down pretty hard as well, down by 2%. In terms of the biggest points drops this morning, it's ASML, Novo, Santander, and SAP. So you've got banks, technology and pharma really doing the damage to the European markets on the downside.
And let me add some fixed income context to this. We are seeing high yield spreads widen by around 7 basis points when it comes to the CDX crossover. So maybe that is explaining the broad weakness across the banking sector. But I, for one, am very surprised at the pervasive weakness across the banking sector. It's not just Sabadell and Santander on the back of their deal falling apart, but also the likes of Barclays and Deutsche Bank dragging down the index.
There's an anomaly. There's one stock that stands out in the banking sector that is sharply to the upside this morning, and that is BBVA. So BBVA is up by 7.4% this morning after we've seen Sabadell shareholders rejecting that offer. So maybe actually BBVA shareholders are pretty happy that that offer, you could argue, has been rejected, judging by what we're seeing in terms of the market action this morning.
Yeah, I just I'm looking at Volvo Truck because they got their results out as well this morning, and those shares are down 6.5% at the moment. Just trying to find what their news, what the top line of their results was, but we are going to be having a hit on that later on in the programme. It seems to have really knocked that stock this morning. But
North American weakness lasting into 2026 on tariffs. Maybe the reason for that.
There you go. Well, let's get some analysis on all of this. US banks, tariffs, a lot of it. We can speak to DWS Global Equities Senior Portfolio Manager Madeline Ronner, who's in our Frankfurt studio. Good morning to you, Madeline. Thank you so much for making time. It looks like this market is worried about cockroaches in credit. Are you?
I mean, it's definitely a watch item, especially because it seems that more and more one-off situations are starting to accumulate. So, but I think we will get more color as we get more into the earnings season. We will hear from the big banks. We will hear from more regional banks. So I think that has the potential to ease concerns again. And especially as we get more and more also good other signs from the US real economy, I think that's also encouraging and kind of is a little bit of a let's see what data is the most relevant here. But it is definitely something to watch and not something that you just should go over.
I mean, every day we ask whether you should buy dips. I wonder, given the dip buying that we have seen since last Friday on certain days, is the market too complacent that Trump is going to chicken out when it comes to tariffs?
So we're actually also of the view that what we're currently seeing is a little bit of posturing from both sides, from the US as well as from China, to see, okay, who has the stronger negotiation power. We strongly believe that the tensions will remain and we will not get into a state where everything is just completely off the table, but we will have these tensions flare up again here and there. So obviously you have to watch it. The markets are obviously on very high valuation levels, so there is little room for error or something escalating. But we think it will actually, there will be concessions again. We will find some kind of a deal also with regards to the rare earth thematic. So we think actually in October it could be that stocks dips further as these negotiations goes on. Also, if especially in Europe on the defense thematic, if we go into negotiations with Ukraine. However, we still think that given the good earnings momentum that we're seeing, obviously driven by AI, and we had it also the start of the earnings season with ASML, with TSMC, they were really good cross reads for the AI trade, and we hear good commentary from that again. So we think that that has the potential to basically lead to a stronger rally into year end again.
Well, just as you're speaking, we are watching the DAX now fall over 2% as we speak. The CAC in France down 1.3%. The FTSE 100 down 1.5%, and the broad Eurostock 600 index down 1.4%. Madeline, I read that you are expecting a strong finish to the year, especially when it comes to your view on U.S. equities. What, in your mind, is the key risk to that view?
The key risk would be if we don't get a settlement between the US and China, and that escalates, of course. So I think that's the key risk. And as I mentioned, like the high valuations that we see is kind of the reason why we see this higher volatility, and where also the downside risk is more extreme. So we don't see high valuations as a reason to sell, and that has proven over and over again this year in the market. But it is, if something goes wrong, obviously the downside is much larger, and investors should be aware of that. So I think that's one key point to watch. I also think, especially if you think within Germany for the DAX, I think that some of the defense orders come through, because that is also one of the reasons why kind of the DAX was fading a little bit, and the enthusiasm also, especially from investors abroad, was fading a bit because there were worries about like the stimulus package being delayed. However, we were always of the view that we will see the money start to flow in defense in Q4 this year, and for infrastructure more this year, and that should be supportive for GDP growth next year. And that is still supported in our view, and that's a watch item.
Madeline, as you mentioned, you do prefer German stocks over their wider European counterparts. What's your view on the France situation? We've covered a lot when it comes to the volatility in politics there. How are you viewing French assets?
So as you mentioned, so we prefer Europe overall. So we do like also French stocks. However, we still prefer Germany over France and UK stocks at the moment, especially as this political volatility, goes on. But there is a certain amount of risk premium also priced into French equity markets, for example, that we don't have in German stocks as much. So it's a little bit stock by stock basis. You have a lot of international stocks as well that we really like from a business model perspective. So that's something where you have to differentiate a little bit between the French stocks within the index.
Just in terms of the mix that we're seeing, in terms of the downside, Novo, ASML, SAB, Banco Santander, all down hard, all dragging European equity markets lower. The DAX is down pretty hard. The Stock 600 just bouncing off session lows right now. Madeline, what is the relationship between European stocks and US stocks right now? What is the beta between the two? Are European stocks going to be a diversifier still? Are they going to work as a diversifier going forward from here into year end?
It will be very interesting to see what the US markets do today, because it has worked really well to be a diversifier, and we actually saw a lot of days where Europe was even protective on the downside, so it fell less than the US, which obviously in a longer term horizon you wouldn't expect, and you would expect Europe to have a higher beta. So it will be interesting to see if that dynamic changes now, especially if we go through earnings season and we again see stronger earnings growth in the US than in Europe. However, again, as this earnings season has started to shape up, we actually have seen some pretty solid results. I mean, expectations have been low too, but still, I would count that as a positive. So we generally expect Europe to work as a diversifier, and also has the potential to be protective on the downside because simply the valuation discount that it has. So there's much more risk premium priced into Europe versus the US. But yeah, let's see how it shapes out, especially because defense obviously is now more impacting Europe. I mean, the banking sector in Europe has been a strong performance driver as well and a strong EPS growth driver. So if you look at where the EPS growth in Europe has come from, a lot of that has come from banks. So watching that news flow will also be very important to see how the beta versus the US develops over the next few months.
Is the banking sector a point of vulnerability for Europe now? As you say, it has been a key driver. If we start to see a focus on the banking sector globally because of credit concerns, is that going to undermine the European trade in a meaningful way? I'm assuming it will.
I think it could, yes. So we're still positive on European banks. We think they have the balance sheets are very healthy. We think credit quality itself in Europe looks still pretty solid. But if we see more and more of that popping up, and obviously they're very interconnected, very global, that is a watch item and a point of vulnerability for European markets in itself.
So if we're seeing the likes of Rheinmetall down today, and you like German stocks, Rheinmetall down 4.6%, is this a day to buy stocks like that?
Yes. So in our view, yes. I mean, we would buy the dip, especially because in our view, the investment thesis on European defense and German defense as well is more around the changing relationship of Europe with the US, and the US also demanding Europe to take more responsibility for our own defense after decades of underinvestments, really. So there's really like a huge catch-up needed in order to get more independent in that space. And that is not that dependent on the Ukraine war as one might think. I also think it's not that an out of consensus view. So a lot of what I read is that investors kind of want to buy the dip. However, one thing to that is if you have so much uncertainty about how the situation will develop, I think investors will be a little bit cautious to step into that trade because you don't know really where the flow will be as long as you don't know how the Ukraine situation develops. Because if you expect that we might see a peace agreement, obviously stocks could dip further, and then you might want to step in. So the timing of it gets a little bit difficult. But I think generally the dip is one that you can buy.
Madeline, great to catch up. Thank you very much indeed. Looking at potential dip buying if we see this maybe continuing. Madeline Runner, Global Equities Portfolio Manager at DWS. Pretty ugly out there this morning.
Pretty ugly. If you're just joining us, we are seeing European stocks broadly in the red and continuing to drop as we speak. My eye is actually on Euro Stoxx 50 futures. It's futures that really get hit the hardest out of the gates on a move like this. We have Euro Stoxx 50 futures down 1.5%. The DAX is actually trading at session lows, down over 2%. The CAC down 1.1. FTSE 100 down 1.4. We're also seeing a broad risk-off sentiment across fixed income. We're seeing a bull steepening when it comes to the German curve. Also, continued rally into treasuries. Those as 2-year yields are down around now 5 basis points. We are seeing credit spreads widen just slightly across Europe, and oil is also at session lows. So this is a broad risk off on the back of this European cash equity open, which has seen the banking sector really underperform so far this morning.
It would be worse if there weren't for two stocks. EssilorLuxottica is up sharply, as is BBVA. Both of those two are accounting for around 1 point upside. There's 8 points of downside in the stock 600 this morning. So those two stocks are doing quite a lot of heavy lifting and making this actually look better than it maybe actually is. You've got 555 stocks down this morning in the stock 600. There's some fairly significant losses. Let's take a look at what is happening in terms of the core 6 narrative that we are watching this morning. This is the center of gravity, and as you can see, there's some significant losses out there this morning. ASML, one of the biggest points drops this morning, we are seeing there, down 1.4. The biggest points drop on the stock 600 this morning is Novo Nordisk. It is down by, 4.5% this morning, 4.6% on the back of what we've heard from Donald Trump. But Schneider is down by a lot as well. LVMH down by a bit, down by circa 1%. Nestle, a safe haven, you could argue, and a big performer this week, down by 0.9%. We're also watching, obviously, the upside. BBVA, that stock, is up by 7.7% this morning. It is the second best points performing stock that we are watching. The press conference is taking place right now. We've already heard on this program, obviously, from Carlos Torres. Critty was talking to him a little bit earlier, bringing us the news first. But BBVA is up by 7.5%. As they figure out what they're going to do next. M&A apparently is off the table, and the market likes that line. The stock is certainly rising in relief that maybe this is not going ahead. This huge M&A story around Sabadell has not proceeded, will not proceed, and the market appears to like that narrative. Let's get more on what is happening with the single stock story. Here is Chloe Mellet.
Good morning, guys. So apart from BBVA, which is doing really well today, it is red across the board for that European banking sector on the back of that read across from loan problems at 2 U.S. regional banks. That is really weighing on sentiment across that banking sector in Asia and Europe as well. And it's really kind of creating those concerns around the health of the credit market. So we're seeing that reflected in the shares of Deutsche Bank, Barclays, SocGen, BNP. But those are just a few. All of them really across the European banking sector are down this morning. Moving on to defense, and that is also down and also in the red this morning, with Rheinmetall down 4% on the back of Trump saying that he will meet with Putin in about 2 weeks to try and find a peace deal in Ukraine. The previous meeting did not yield an actual peace deal, but Trump said that he was optimistic that this one would result in a ceasefire, and that is dragging down the shares across that defense sector this morning, BAE and Rheinmetall in particular. Moving on to Essilor, which is rising this morning after posting really strong sales growth. Its AI glasses, they are created in partnership with Meta, are very popular, and that is really driving sales and driving the shares this morning. We are up almost 10% for Essilor. Moving on to Volvo, the truck maker mentioned that the weakness in North America it had seen over the last few months will continue in 2026 because of that tariff uncertainty, and that is dragging down those shares. We are down 4.6% for Volvo this morning. And finally, some positive movement in Continental. The tire maker said that it outperformed expectations because of cost cuts and then also really strong demand for winter tires. So that is quite positive, and a reversal from what we saw with Michelin, its closest peer, which cut its outlook earlier this week. So two very different story in that tire sector, and stock is up almost 5% for Conti.
Well, Chloe, from our equities team, we thank you so much. Chloe Melly, you started with the European banks. Banks at the bottom of the sectoral basket, down 2.4%. But that coming from the US regional banking story, Val, and we're seeing the impact on US futures right now.
Yeah, we're at session lows when it comes to S&P 500 futures. We have taken out now the lows on Tuesday. So since Friday, we have now dropped 2.8%. Really now next eyeing the lows from Friday night to evening session. We're at session lows down 1.2% on S&P futures. And over to the NASDAQ, because yesterday it did seem a bit impervious to this risk-off sentiment. We're down 1.4% on NASDAQ futures. Russell 2000 futures, which are a broad indicator for U.S. domestic growth, those are underperforming even more, down 1.75%. We'll have more on the markets next, plus a few stocks to keep your eye on this morning. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Welcome back. 21 minutes past the hour, 21 minutes into the equity session. It looks ugly out there, doesn't it? We continue to fall. We are seeing a significant drop across Europe. The DAX is definitely taking it on the chin this morning. US futures are near session lows. This time last week, we thought we were okay. We thought the weekend was going to be nice. We thought we were going to be nice and relaxed, but turned out not to be the case. Trump was the catalyst last week. This time round, this weekend could be spoiled by regional banks. We'll see what happens as the rest of the session progresses. But the banking story is firmly in focus as well in Europe for a different reason this morning. BBVA's $19 billion offer for Banco Sabadell has been rejected by 3/4 of Sabadell shareholders, putting an end to the 17-month takeover saga. What is interesting is that BBVA is up really sharply on the back of this. We've got a press conference that is taking place currently as the management team at BBVA trying to explain what happened and why they think we're good going forward from here. But we got the early scoop on this story, courtesy of Kriti Gupta, who earlier spoke to the BBVA chair. Kriti, talk us through the explanation, the mea culpa.
Well, it's fascinating because they kind of said, we don't really know what went wrong. Remember, we spoke to them exclusively when this deal was initially taking foot. We spoke to BBVA, we spoke to Sabadell, and BBVA was confident that even with 40 to 50% of Sabadell's retail shareholder base, they could win over the institutional. And that's where the miscalculation happened. That's where the mea culpa happened. We put that question to the chairman, Carlos Torres Villa, earlier in the program. He said they're still doing an analysis of what went wrong. But ultimately, what they kind of spun it forward is to say that now that a deal is not on the table, they can follow the same playbook we have seen in Europe for the last year or so, which is throw up buybacks to the stock market and see your stock rally. That's what the market is reacting to today. One, that BBVA is no longer, as a potential acquirer, going to be losing that cash, and also that it's going to be reinvested, pending ECB approval, right back into buybacks, dividends, and shareholder returns. And that's what this market is really excited about, at least when it comes to BBVA stock. From Banco Sabadell, it is literally the opposite problem, because Banco Sabadell has been trying to woo their shareholders with, again, the shareholder returns. Now it feels that without this takeover bid, could you start to see pressure on their bottom line that could ultimately return in some sort of pullback of those juicy returns?
So, Chrissy, BBVA's failed, UniCredit's failed twice. What does it mean for consolidation across European banking? And what does this mean for the future of the BBVA chair himself?
Well, it's not looking good, is it, Lizzie? Especially when it comes to that consolidation story. And remember, this was really framed as an early step to the idea of if you want to get a integrated European financial market, a capital markets union, what you need to do is not only have domestic banking consolidation, but international banking consolidation. To your point, Lizzie, we saw how that ended up in Italy with UniCredit and Commerzbank. But even the domestic story, they can't quite get across the hurdles. This has turned into not just an economic and a business story, one that affects consumer lending rates in Spain, but ultimately one that is turned into a very political story out of the Catalan region. As far as it comes to the future of BBVA Chairman Carlos Torres, he says he's not going anywhere. He is committed to the role, and he has the board's kind of backing at the moment. Whether that continues, whether he faces pressure, remains to be seen. But for now, the shares responding well to what ultimately is bad news for a takeover bid that's been 17 months in the making.
Well, Chrissy, thank you so much for bringing us that news. One of the rare bits of sunshine in this market this morning. BBVA shares up more than 6%, but the rest of the market very much in the red. And one share in particular that's slumping this morning is Volvo. Those shares actually down 4.9% at the moment. The truck maker saying that it expects a trucking slowdown to extend into next year as uncertainties linked to President Trump's tariffs weigh on demand in North America. So let's bring in our Global Autos editor, Craig Trudell, for more on that story. Craig, what do you make of the Volvo truck earnings here?
You absolutely mentioned the tariffs, which we expect in the next, potentially today or at least in the next couple of days, more clarity about exactly how truck tariffs are going to work. The Trump administration has announced that those are supposed to take effect November 1st. But we also have real concerns about demand, and we heard this from Michelin earlier this week, that the agriculture sector, just freight in general, that sort of the amount of movement going on in the U.S. is slowing. And so to hear this from one of the biggest truck makers, one of the biggest tire suppliers to those truck makers, some real consistency and sort of cause for concern for this broader sector as well.
And separately, we've heard that Trump is looking to roll back some of his auto tariffs, giving them more time to adjust. What's your reading on that?
Yeah, it's a case where, honestly, the tariff picture for car makers is really messy. And there was this sort of partial bit of relief for car companies. If you make your cars in the U.S. and you are importing parts, you were able to sort of partially offset the tariffs on those parts. That was going to phase out over 2 years. What we're hearing is that it will now phase out over 5 years. So is that helpful? Yes. But it's also the case that it's not as though these companies are going to see their sort of, bill fall dramatically or a significant amount of relief for them.
Great. Thanks very much indeed, Craig Trudell on the auto sector. A little bit of stabilization in futures right now. Anyway, we'll come back to that in just a moment. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum or we will never create the solutions that we need.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
This is the opening trade. We're 30 minutes into today's session, and if you thought you could put your feet up and enjoy your weekend, I hate to break it to you, but it is painful out there. This is the worst session so far for the Stock 600 since early August. It's the worst session so far since early August for the banks in particular, and this comes back to those concerns about the US regional banks. It is pain across this screen, in particular for the DAX. And Guy, when you look under the hood, feels like that pain's going to be widespread.
Absolutely. Let's just bring another metric into the mix and see what we're seeing in terms of volatility. The VIX has just opened, and we've got a decent spike to the upside. We're what, 11, 12, 13% on the upside now in terms of the percentages. We're now at 28. This is a decent move, and remember, this is a ripple effect into the ability of funds to be able to carry risk. The systematic funds will be this is one of the key inputs, volatility, into their metrics and their models in terms of how they manage risk, and this will be certainly something that a lot of people will be paying attention to this morning. So at 28.21, we're up by 2.9, we're up 3 a minute ago. So you're seeing a decent move, as you have seen throughout this week, on the volatility story. So pay attention to that. That's an interesting risk input into what we're seeing with these markets right now. Let's talk about what we're getting in terms of the internals on the market this morning here in Europe, just to get an idea of what volume looks like and how that picture is developing. What we're watching there is quite significant as well. You've got a big spike in volume this morning. The market is in on this story and is watching very carefully what is going on, and as a result of which you're seeing a lot of trading going through the books right now. So we're up sharply. You've only got 23 stocks higher. Like Lizzie was bringing you some of the kind of superlatives around what we're seeing in this market. 25 stocks higher, 569 are lower on a big volume day. That tells you a lot about what is happening below the surface here. Let's talk about some highs and lows. There's some highs out there. Believe you me, there's some stocks that are worth watching on the upside. And EssilorLuxottica is a derivative of the AI trade. You go AI, you go Meta, you go into the smart glasses, and you go into EssilorLuxottica. That stock is up by 42% year to date. We hit a high back in February. We've just hit another one, smashing through that this morning, up to around 307. On the lows, there's loads of lows out there this morning that are worth watching. Interesting, not that many 52-week lows, which I think is interesting as I look through the list this morning. But Tomra is one of them. That stock down in the recycling business, down by 17% this morning, and we are dropping to a 52-week low on that stock. But there's plenty of losses out there this morning. Val, what do we need to know?
Here's what else is on our radar this morning. Growing concern in the U.S. credit market is weighing on Wall Street as two regional lenders disclose loan fraud losses. Shares in Zions Bancorp and Western Alliance tumbled after they said had been victims of fraud. The disclosures add to other recent loan blowups, including subprime auto lender Tricolor Holdings, which filed for bankruptcy last month. And Sabadell shareholders have said no to BBVA in a big blow to Chairman Carlos Torres, who spoke to Bloomberg earlier. BBVA's $19 billion offer for Banco Sabadell had been rejected by 3/4 of shareholders. BBVA shares are rallying on the news at the end of the 17-month Spanish banking takeover saga. And lastly, U.S. President is set to host Ukraine's Vladimir Zelensky after announcing a second meeting with Vladimir Putin that will take place within the next 2 weeks. News of the talks has sent European defense shares lower this morning. Guy?
Let's talk about what's happening in these markets more broadly. You are certainly seeing some significant selling in equities this morning. You've got a volatility spike that is coming through in the VIX. Where do you hide? Well, the narrative throughout all of this week, which has included London Metals Week here in the British capital, has been gold is the place that you want to be looking for an area of safety. And the momentum in the yellow metal is absolutely massive. It's having its best week since 2008. We've been talking to plenty of the main players in this market throughout this week about this rally, and this is what they've had to say.
Fundamentally, gold market is oversupplied. However, gold prices are driven by investment perception and by its safe haven status. So demand from central banks, from investors, will continue supporting the gold prices.
It's been a trade where, in particular, a lot of it is being driven by physical buying. And in particular, if you look at central banks who are going out and buying, huge quantities of this. These central banks bought 30% of the mined gold output, or at least equivalent, last year. So they're obviously looking at this as a longer-term trade that they're going to, trying to enter into.
The way we look at it is overbought at the moment, but it is still underinvested, basically. So I think so nothing has changed for me. For the last $2,000 per ounce, we've been bullish, and everything that took us here is still quite bullish.
Momentum is very important here. So maybe you have some speculators riding on the journey in the interim, causing volatility like we've seen today. And maybe some of this physical leasing is part of that. But actually the trend is probably your friend in this environment. And if we are going in this direction, hopefully slowly, we don't want to crash. We are going in this trend, then where could it go to from here? It could go a lot higher if we're actually repricing paper currency relative to real assets.
Bloomberg TV guests on the surge in the price of gold, and indeed investors are surging towards it again today. Gold up 0.3%, $4,339 a troy ounce is where we trade, because it is a risk-off mood in these markets more broadly than just in
little
commodities.
Double top in gold this morning, which I think is fun. We've had a little look at the upside a couple of times and failed on both. Is that significant? I don't know. There's a lot of momentum in this story. The momentum fades. Kind of what happens in terms of the gold narrative, which has been driven so much by that momentum over the last few days and weeks. I don't know.
Silver's down.
Yeah, so that's worth bearing in mind as well. So maybe the momentum comes out of that trade a little bit. Traditionally, past crises, you've sold gold because it's easy to sell. Do people have that same kind of story this time around? I don't know.
Well, look, it's interesting that we have seen the equity market move further into the red and gold not necessarily breach the highs from earlier this morning. So perhaps you can draw many parallels to that. Maybe what's behind this gold trade isn't necessarily a safe haven away from overvalued U.S. equities, that it's still more about the fact we have more structural buyers than sellers. You had ETFs buying, central banks buying, amid retail buying as well.
Yeah. There's a few momentum trades that are going to be really interesting to watch. And if volatility comes up, if we start to see maybe that's making the market kind of less front foot, more back foot, more risk averse, do some of those trades start to fade a little bit? Well,
speaking of momentum trades, Bitcoin is at 106. So we have reached, we're very close to breaching the lows that it hit intraday last Friday. Went all the way down to 105 during that flash crash.
So this time last week, we were talking about rare earths and trying to worry and think about kind of what was going to be the next move and how or whether or not we were going to see the rare earth story sparking another crisis between China and the United States. It's a story that has continued throughout this week. I've read lots of articles this week talking about the fact that China is unlikely to give up on what it sees as being kind of one of the winning hands in its hand right now versus the United States. One company at the center of this story, Pensana, is developing one of the world's largest rare earth deposits, vital for EVs and so much else that we are relying on at the moment. The AI bubble certainly absolutely front and center on this one. The firm has just announced that they are ditching plans to build a £250 million plant in the UK. I think it was up on the North Sea coast, but that is not going to happen now. Instead, that is going to be shifted to the United States. Remember, this is difficult stuff to build and permit and make happen, but the US is now very focused on this story. Paul Atherley is the founder and chairman of the company. of Pensana. Paul, great to see you on the program. Let's talk first of all about that decision to move to the United States. Walk us through the thinking behind it.
So we're developing, as you say, one of the world's largest undeveloped rare earth deposits, and we were looking to have it processed, refined in the UK, taking advantage of a chemical park at Salt End and linked to offshore wind. The challenge we had is rare earth prices are very, very low, and it made financing difficult. So we were looking for government support, and the amount of support we got from government was really small. I mean, it was around £5 million. July this year, the US government made its intentions clear and got really serious about realigning supply chains. And it did it by putting $400 million into a company called MP Materials, which has got a project of roughly the same size as ours. Also lent them $150 million in a soft loan, and really importantly, gave them a 10-year offtake deal, priced at twice the current rare earth price. So the US government has demonstrated what is required to realign these supply chains. Yep. So we've announced a NASDAQ listing, and we're looking to position ourselves into the US.
What I'm also hearing out of that conversation, which is basically that this is now a strategic imperative, and the US is not out in front because China's out in front, but it is now figuring out what it needs to do. But the other thing you're telling me is that rare earth prices are mispriced. So why are they so mispriced?
Yes, that's right. So they're quoted in China, but not traded. So in fact, if you go and try to buy the rare earth metal price now, you'll buy them at the US price. So China prices them at about 70,000 US dollars a ton. You go to try buy that metal in China, physically buy it, it's the US price, around $120,000 a ton. So the actual real pricing has been reset by the US market.
So, Paul, where China's ramping up its rare earth export controls, just walk us through how that affects your business.
So we see the rhetoric from China is a response to tariffs. So basically, China's saying we control 90% of these incredibly important magnet metals. It's a $10 billion industry that drives $15 trillion worth of business. That's domestic, industrial, medical, military, electric vehicles, offshore wind turbines, automation, humanoid robots, the lot. China basically controls that. And so what China's saying is if you mess us around with tariffs, we'll mess you around with rare earths. In the longer term, or in the medium term, the US said, and Scott Bessent said it recently, the US is not going to play that game anymore. They're going to realign supply chains. And to do that, that indicated they're putting money into companies like MP Materials and others in the US to realign those supply chains. So China no longer has this ability to quite literally turn the tap off.
And so since you've chosen not to have this plant in the UK, how would you rate Britain's resilience when it comes to rare earths? I know it's not your responsibility, but as an expert in the field, what does it look like, the landscape, to you?
So you're making a decision when you don't have a supply chain to always be on the end of the supply chain. So if you don't have rare earths, that means you can't supply your OEMs to make electric vehicles or offshore wind turbine generators or any of or humanoid robots, or you're choosing not to have a supply chain to do that. So it means ultimately the UK will have to import those finished products. What the US is saying is we don't want to do that. We want to create industry that's based on these important magnets in the US, and they make it very, very clear that by realigning the supply chains, they are driving domestic manufacture of these important goods. The UK is choosing not to. The US is choosing it wants to.
Paul, can you talk us through your thoughts on the U.S. government's direct involvement in this space? We had the Department of Defense, now Department of War, taking a stake in MP Materials. They also have done the same with Lithium Americas. When it comes to offtake agreements or agreements to buy future production, do you see that could be possibly an avenue the U.S. government could take in order to buffer up its supply chain in the U.S. alone?
Yes, absolutely. What you've just described is the US taking very, very direct action with specific companies to establish the supply chain. And our understanding is there's more in the works. We've been in Washington and been dealing with the US government for nearly 2 years now. And as I said before, they're very, very serious. They're very targeted. They know what's needed, and they're going to do it. They are going to realign supply chains to the US.
All right, that was Paul Atherley, Pensana founder and chairman, joining us for a discussion on rare earths that have been a topic of the week ever since those export controls were announced by China last week. We've heard from people around the desk this week talking about stockpiles of rare earths, just how much these tech companies who depend on them have in their back pocket if this trade war with the U.S. were to escalate. But it's very interesting to think about the U.S.'s direct involvement in some of these single names.
It needs energy. It needs a capacity as well to absorb the pollution that comes from this. But those are prices that I think the US is now willing to pay in terms of making this happen. How long does the buffer last at the moment? I don't know. ASML was indicating that its buffer was kind of not that long, like a couple of quarters.
And finite at the point.
Yeah. So at the moment, China has the ability to control the market. What we've just been hearing is that probably won't last that long, but we're still talking potentially years before it can be neutralized in terms of its ability to manage the export story around rare earths. And therefore, we've got a kind of duration mismatch between what is happening with the AI trade and what we need to make all of this happen and the defense rebuild happen versus kind of the longer-term aspiration to make sure that actually the US is self-sufficient on that. So there's a bit of a duration mismatch here.
I will just underscore the UK point, how much of a blow this is to the UK, to lose the listing, first of all, to the NASDAQ, to lose the rare earths push when this has been going back since 2022, the jobs that would have come with it as well. I think it was Kwarteng, actually. No, one of the former UK chancellors really...
There have been many.
Yeah, I've lost track, but there's been a long-standing push for the UK government. And also, you know, when you look at the LSE, could they have offered more for the company to pick the LSE over the NASDAQ?
Well, how are you thinking about the markets?
It was this rare earth discussion which really tipped the markets last Friday, and we are in the red again, this time the catalyst being worries over the banking sector that leading the declines here in Europe. We are seeing the DAX underperform, down 2.2%. The wider Eurostock 600 index is down 1.6%. That would be its worst session since early August. And we are hovering near session lows in all of these equity indicators. My eye also goes over to the U.S. S&P 500 futures are down 1.3%, and we are continuing to see a Treasury rally.
So retail has bought the dip this week. Is it going to? It's been a big contributor. Institutional money has been much more cautious. This is another leg to this narrative. Does retail keep buying? Is this something that's going to spook the underlying story around this market? Certainly, you're going to see some of the systematic funds with the volatility going up, being obviously having to factor that into their story as well. So where does the buyer come from here? Is it retail once again? Who is going to buy the dip? Because this is a decent dip. This Friday.
You heard Madeleine Ronner earlier saying, for example, when it comes to defence, the underlying story there is a strong one, despite the peace story. So she says buy the dip when it's something like Rheinmetall. Today's a day when it's relatively cheap.
And remember, this story might not end with this session today, because we do have 4 big U.S. regional banks reporting before the bell. I am sure investors and markets are really going to be looking closely at whether they name any more exposure to First Brands, to Tricolor. Anything about their provisions for credit losses will be hotly watched with these regional banks in focus.
Buying the Swissy. Telling you that, definitely seeing that today. Euro Swissy is under significant pressure. Anyway, coming up, President Donald Trump plans to meet Vladimir Putin in a couple of weeks. It's always a couple of weeks, isn't it, to end the war in Ukraine. Today, Trump will be meeting, though, with Ukraine's Volodymyr Zelensky. We'll have the latest on all of that next. It's moving defense stocks today. This is Bloomberg.
Based on the data that you've seen, do you think it's a good idea now for the Federal Reserve to lower interest rates?
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's beige book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates. Real rates are very high right now relative to history, and of course we have a pretty significant term premium built into the term structure of interest rates right now.
So let's talk about the Fed's goal, which is 2%. Is that too low a rate to really get to at this point? And does it have to be at 2% or in sight of 2% before the Fed should lower?
They have a credibility issue right now. The Fed has to get to 2% because that was the target that they set. Although they've already started to project that they're willing now to target a range of inflation, which I think is the approach they should have taken all along. But they're going to get to 2%, and I think the trajectory is still in favor of the Fed's 2% target. And what we're seeing on a shorter-term basis is that's where rates are actually going to in terms of the inflation level, and I think the trajectory is their friend.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to the opening at trade. We're 50 minutes into today's cash equity session, and it is pretty ugly out there. Euro Stoxx 600 down 1.7%, headed for its worst session since early August, all due to underperformance in the banking sector. Some jitters in those regional banking names yesterday after some disclosed some fraud regarding collateral. We're also seeing the DAX underperform this morning. That's no surprise, given banks are a heavy weight in that index, down nearly 2.2%. And an eye on the U.S. market. We're still hovering near session lows. S&P 500 index down 1.2%.
One of the big drivers to the downside here in Europe this morning is what is happening in the defence space. We have a number of significant names that we've been watching, obviously, throughout this year, throughout the last couple of years. Rise, rise, rise. Today, we are certainly seeing them under pressure. Rheinmetall out of Germany is down. Hensoldt, you've got BAE Systems out of the UK, and Saab all down pretty aggressively this morning. This on the back of news that we've heard over the last 24 hours that Donald Trump is going to meet for a second time in quick succession the Russian President, Vladimir Putin. We think it's going to happen in Budapest. To our call yesterday, apparently it was described as being very productive. Apparently it was Putin that made the suggestion of a second meeting. Remember, Trump is due to meet Zelensky a little bit later today, the Ukrainian President, Volodymyr Zelensky, in D.C. Ros Matheson from Bloomberg joining us now to talk about this. Ros, defence stocks this morning are down sharply. The indication from that, I would conclude, is that the market is seeing a higher potential for peace coming out of, A, the Zelensky meeting, and then by extension, maybe what we see coming out of a Putin meeting as well. Is that the right read?
Well, I would certainly caution that we've been here before. I mean, Donald Trump and Vladimir Putin have met. Donald Trump came into office saying he was going to end this war immediately. He's been in office for a while now, and this war is still going. And certainly for all the rhetoric from Vladimir Putin, no great sense is in a rush to end his war. He still has a lot of territorial and other gains there. And does he have a strong enough incentive to end it? So, you know, will this meeting achieve anything is one question. And also, you know, for the Ukrainian president, this came before his own meeting with Donald Trump, this phone call, and he will obviously want to try and reset the table a bit in his own meeting today, try and encourage Donald Trump, keep the pressure up on Russia. You know, there was a little bit of equivocation from Donald Trump in his phone call with Putin and afterward about whether he would agree to send Tomahawk missiles now to Ukraine, about whether he thinks the Senate should really push through this sanctions bill on Ukraine. So is he going to be easing back, on Russia? Is he going to be easing back on Russia as a result? So for Zelensky, the incentive in this meeting is to try and encourage Trump to keep the pressure up on Russia, to make sure that he's not going to make concessions in any meeting with Vladimir Putin. But there's probably a bit of disappointment, at least to say, in the Ukraine camp today to know that that meeting is probably going to happen.
Big reaction in stocks as a result of all of this. Ross, thanks for updating us. Bloomberg's Ross Matheson on the geopolitics surrounding the defence stock move that we are watching this morning. It's just one of the contributing factors, though, isn't it, into a market that is dropping pretty hard. You've got not just the defence narrative off today. They've recovered actually a little bit of their earlier losses, but banks are down pretty hard. You've got the tech stock unwinding a little bit as well. Tech stock story unwinding a little bit today. It's pretty broad-based. There's a lot of selling. There aren't many stocks to the upside today.
No, it's pretty broad-based, and this is all down to some credit worries. Our eye is going to be on some of these regional lenders who are reporting before market open. Fifth Third being one of them, who did declare some exposure to Tricolor earlier this year, along with the likes of JP Morgan. So we'll be seeing if they release anything new when it comes to their exposure. But four the decently large regional banks will be reporting before the bell.
I mean, apart from that, there's pretty much nothing else on the European calendar today to distract the market from US regional banks. So maybe these moves just continue getting worse.
But volatility is picking up. So volatility is really low for a really long time now. So that's another market negative that we're watching here as well. The banking story is not just what they're saying about what's going on in terms of the lending to some of these more distressed private businesses that have been lending maybe into the lower quartiles of the income bracket in the United States. You're also seeing banks potentially or are using the window at the Fed more. So that's that takes me back to SVB and kind of what happened around that kind of phase. Can the Fed ring fence this quickly if there are problems? I guess is another question that we want to be asking here. Does FIDIC, what roles are we going to see for the US authorities stepping into this story?
And I think, having a discussion on what this tells us broadly about the state of the U.S. economy. We know Tricolor and First Brands are both exposed to the used auto sector. This write-down specifically from Zion's coming from distressed commercial real estate in California. So are we going to be able to weave those two together in order to tell us a bigger story about what's going on with the U.S. economy, given the lack of data that we've had now for 3 weeks?
Yeah. Is it the canary in the coal mine?
It comes out on a Friday, though, doesn't it? Which is really annoying.
But that's a good thing, though. Markets get a weekend to think long and hard about what's going on, right?
That's a good thing, right? Yeah.
For a market break over 2 days after a slide like this, yes, that's helpful.
I'm not sure it does anybody's blood pressure any good, but it's going to be a weekend, because last weekend we got really worried about what was going to be happening, and then right at the last minute Trump goes, "Oh no, it's going to be fine."
Well, do you know what you can distract yourself with over the weekend? Bit of sumo wrestling in London.
Val's obsessed with this story.
She really is.
Sumo wrestling at Royal Albert Hall. It's sold out. Tickets are over 300 quid.
We've quid. I love that. So we are going to be watching the sumo wrestling this weekend as we continue to monitor.
The toilets have been reinforced, in case
true,
you're worried.
Wow, that's amazing. Reinforced toilets at the Royal Albert Hall. Sumo wrestling coming to London. Watch out for that one as you try and distract yourself from a weekend that looks like it's going to be fairly choppy as is the session ahead. Hope you enjoyed the show. Hope you had a great week. We'll see you again next week. The Pulse is up next with Francine Lacroix. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you
you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
European bank stocks slump as a sharp sell-off in U.S. regional lenders ripples through global markets amid growing credit concern. The Ukrainian President Volodymyr Zelensky arrives in Washington for talks with Donald Trump, who now says he will meet Vladimir Putin in Budapest within 2 weeks. And the White House is also poised to ease tariffs on the U.S. auto industry in a move that would deliver a major win for car makers. Now, in case you hadn't noticed, it's a big day for markets. We can expect a little bit of choppiness probably throughout the day. What I'm looking at, S&P futures down some 1.2%, but it's really playing out in the European bank index stocks. So this is across the board. There are big names actually falling quite a lot. So the overall index is down some 2.4%, and we saw definitely a flight to some haven assets, including gold, 4,346. Now, this is a picture overall for the European banks. Again, Banco Sabadell a little bit lower than the rest of the index. This is also because there was a failed attempt to buy one of the rival banks, Sabadell, down some 6%. But if you see it, look at Deutsche Bank, Barclays, and Standard Chartered. There does seem to be a mood out there, which is like sell now, ask questions later. And this is again linked to that credit story that we'll have full analysis on from team coverage. Let's take a look at the European markets map. Overall, again, this anxiousness is pulling a lot of the big indices. The FTSE down some 1.4% lower, the DAX and the FTSE maybe down 2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we're ending the week with a rush to havens, stocks tumbling over credit fears of U.S. regional banks that's now hammering European bank shares. It follows a week of heightened trade tensions between the U.S. and China. Now, let's unpick geopolitics and, of course, the week of corporate earnings in just a moment. But let's begin with the credit troubles. And joining us now is Laura Cooper, global investment strategist and head of macro credit at Nuveen, and Bloomberg's Neil Callanan in charge of private company coverage. So thank you both for joining us. Neil, just set the scene for us. I mean, we know that there was, a couple of trouble at some of the banks. This is possibly because they didn't do what they should have. But then it's kind of spreading to the markets wider.
Yeah, absolutely. Jamie Dimon's comment earlier this week about cockroaches in credit markets mean people have been on the lookout for the next First Brands, the next Tricolor, and they think they found it with an alleged fraud that's small in the context of things. It's tens of millions in alleged fraud at two U.S. regional banks. But people are wondering where the next big problem is going to come out in the markets, and so far it looks like this. People, as you said earlier, are starting to sell rather than waiting to ask questions and get answers to those questions. And what we've seen is short sellers in particular have started looking at the US Regional Bank Index. So there's been a big spike in short interest in the last couple of weeks. And that's just a sign that people think that some of the real estate problems that we saw 2 or 3 years ago haven't gone away, and fraud linked to those real estate problems, which has been an ongoing issue in the US, is also driving that.
I mean, I guess the concern, how much of this, Laura, is a concern about what's actually in there, or is it just a, nervous undercurrents running through Wall Street?
Well, I think what we've seen is this kind of benign credit backdrop has persisted for a prolonged period of time. And what the recent developments suggest is we are in late cycle dynamics. And so I think we are going to see greater pockets of these pressures materialize. And as the cycle turns, I suspect we're going to see even more, perhaps a steeper default cycle, lower recovery rates. But I think this is really an environment where we're going to see it's really crucial to have that robust underwriting, overlay that with the active portfolio management approach to be able for investors to discern the quality in a very complex, nuanced market when we kind of throw in the private credit dynamics as well. So I think this is an opportune time as we see these dislocations to find these opportunities.
But, I mean, to you both, was it a long time coming? Because actually, there was concerns about, again, the underwriting, the liquidity in some of these products. And so anything that makes people nervous, then people just sell off.
And I think it's too soon to declare this as kind of being an inflection point for a more systemic risk backdrop. I mean, overall, the backdrop for credit still remains quite healthy. The fundamentals are strong. We are still seeing favorable technicals. So it is still kind of a favorable environment for credit. But I think the more that we see these pockets materialize in unforeseen segments, perhaps then when the confidence channel could be hit. Banks are predicated on confidence. That's the signpost we'll be watching for.
Yeah, credit markets had been priced for perfection, so anything like this is going to cause a ripple effect. But what we've seen is credit markets have been far less volatile than equity markets for the last few years, in part because life insurers step in and start buying credit even when there are periods of volatility. And what we've got to see in the next few days is, does that happen? Do the life insurers come in, start buying things at a discount and calm the market down?
But, I mean, the correlation, so for, this is basically troubles at Zion's Western Alliance, so I know there's going to be a lot more regional banks that will be reporting in the coming days and weeks. But then you look at some of the European banks that are down 5%. I mean, what's the correlation?
I think a lot of those banks do have exposure to the US through various lines. A lot of them have auto lending businesses or still have some legacy commercial real estate assets, even though they've been selling those off. So that once you start seeing fraud and doubts about credit, it's going to spread to those banks who have more exposure. And so you saw the Spanish banks, some of the Spanish banks who were involved in M&A are down less than some of the international peers because they have less exposure to the US in that sense.
And Laura, of course, I mean, there's again this concern that credit markets and the banking sector at large can also have a direct impact on the real economy.
Of course, and I think we're not yet seeing signs of that. We're seeing signs of U.S. resilience. I think the key risk is we have this air pocket in terms of economic data that does leave kind of market participants to rely on shifts in sentiment, on the U.S. government shutdown, kind of any signposts of the evolution of the economy. But I think at this juncture, we're looking at the Fed continuing to ease. We're looking at resilient corporate earnings. Limited impact so far of the U.S. government shutdown, so long as it doesn't persist for a prolonged period of time. All of that does suggest that there's reasons to still be cautiously optimistic on risk assets.
I mean, I like that, cautiously optimistic. So it's basically the question, is this a one-off or is it not a one-off? But if enough people think it's, it's not a one-off, then you have this kind of panic selling.
Potentially, but again, that's going to drive, to Neil's point, this greater volatility, open up these opportunities. And I think so far we've seen very robust earnings come through. That's being continued to being driven by tech. It's too soon to declare any kind of AI bubble. A lot of that is being driven by robust demand. We're seeing a lack of leverage in that space as well, thinking about AI CapEx. So I think at this juncture, perhaps the risk is more about kind of prolonged valuation fatigue in the AI space, but overall I think we're still constructive.
Neil, I mean, the other thing, when you look at Tricolor and First Brands, again, we spent a good amount of this week actually trying to see what the ripple effects of that were. We had some of the big banks and saying, look, this is our exposure, and they've disclosed that. How do we know when we've gotten to everything that we need to know?
I think we're going to look at least another week on that because there's still so many threads being pulled that are coming out of the bankruptcy cases that are going ahead at the moment. And as you say, when it comes to allegations of fraud, there's sometimes surprises, and we don't know who's been sold what on what basis. So there's still things that may come out in terms of the receivables. There are still things that might come out in terms of who's got CLO exposure, etc. So we're still working through that at the moment.
Does it change actually the nature of risk in private credit, full stop?
I think, you know, there's been a lot of talk about private credit and risk in private credit in the last couple of weeks. You know, the one thing private credit has is an ability to modify loans that more so than banks do. And they push the idea that that will make them, you know, recoveries better than if it was a lending scenario from a bank. That test case hasn't been tried en masse because it's a relatively new asset class. So we're going to see, this is one of the first test cases for that, basically.
Laura, you intimated that this could be a good idea, actually, to find good opportunities. Where do you find those?
I think we are still seeing opportunities in the tech space in the U.S., but we're seeing the kind of disparate market. So some of those AI-adjacent smaller firms that are unprofitable are actually lagging, whereas those that are generating profits on the back of the AI capex so far are actually leading. And as well, looking at utilities and materials, they're expected to post robust earnings as well, and they're benefiting from the power generation demand, from the infrastructure demand. So really kind of continuing to see opportunities in that space. And then in the credit, yes, we are seeing these pockets of risk emerge, but overall still fundamental backdrop, as I mentioned. And even in the private credit space, looking at investment grade private placements, looking at private ABS, looking at some pockets of the U.S. mid-market lending, European upper mid-market lending, there are still opportunities, but this is really the ripe environment for that active security selection.
Laura, when you look at AI, I know you don't overall think there's a bubble, but could there be, you know, AI pocket bubbles in certain types of companies?
I think that is certainly going to be the case. I think the key question is, will we actually see evidence of the returns on investment of some of these AI capex come in quickly enough to justify the spend? It's really, we could see this growing skepticism that we're not going to see the returns on this, that we have this, as I mentioned, this kind of valuation fatigue. Investors right now are paying up to capture this AI secular trend, and there's a risk that we're going to kind of see investors no longer want to participate in that. So continuing to pivot into those Mag 7 that continue to show just this robust profitability on the back of this expectations of what's to come.
I know it's a big week. I mean, it's hard to think actually that, you know, the Gaza deal was only Monday, and then we had all of that political turmoil in France. What's the market pricing in terms of political risk?
I think the market is pricing in probably sufficient political risk if we think about France, looking at that Haute-Boon spread. I mean, we've actually seen probably a bit too much of a tightening on the back of recent developments there. I think the fact that they're going to abandon their pension reform really does keep us structurally underweight in French government bonds. Instead, we're looking more in the periphery for opportunities. And then if we think about the U.S., kind of the tariffs dynamics, the political backdrop, we're really seeing that play out in real assets. I mean, the fact that gold is up, you know, almost 60% so far this year, there's probably room for a near-term consolidation on some of the back of the headlines more recently. But I still think there's this bullish case for gold. Notably, you know, EM central banks are underweight, ETF flows continue to be supportive, and given the uncertainty heading into 2026, we still see investor appetite for holding those real assets.
And Neil, given you have the very easy job of, you know, leading the coverage on all private companies for Bloomberg, what are you looking for in the next, like, 4 or 5 days? What are your reporters working on?
We're mainly looking at the next outflow from First Brands and Tricolor as well, and what's going to happen there. And then, obviously, we're looking at BDCs and the impact that that's been had on them as private credit lenders into the market space in the U.S. Those are kind of the main threads for us to pull on in the next week.
Okay, and then let's see if we have data. We have private data. We don't have, of course, the data because of the shutdown in the U.S. Thank you both for joining us. Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen, and our very own Neil Callanan. Now, it's also been a major week, as we were just saying, of geopolitics and corporate earnings. In just a moment, we'll discuss some of the big tech and bank results. But let's begin with President Trump, who's also spoken with the Russian President Vladimir Putin ahead of his meeting with the Ukrainian President Zelensky later today. Well, we're joined by Chad Thomas, Bloomberg's Europe Executive Editor. So, Chad, I mean, it's incredible when you think, you know, what we've had in terms of breakthroughs in the last 5 days. Now the focus is clearly on Ukraine. Do we know what President Trump administration want to achieve today?
Well, Francine, it's obviously a big risk for President Trump setting up the second meeting with President Putin. There was the meeting in Alaska. That momentum seemed to have faded very quickly. I think having one meeting, from Trump's perspective, he can say, I tried. Now setting up the second meeting, it means that he is putting some political risks there to see if he can actually gain some momentum. But clearly, President Trump feels that the momentum is with him off of the news that we've been following so closely in the Middle East this week and the peace agreement there. And so he has decided that he is going to try again and has set up this meeting in Budapest. We don't know yet when that meeting is going to take place, but a meeting with President Putin in Budapest sometime he said, within the next 2 weeks.
Chad, I know there's a number of also opinion pieces on saying, look, maybe we need troops on the ground, U.S. troops on the ground to make sure that the Gaza peace deal continues. But has this week really emboldened the president and U.S. foreign policy?
Well, he certainly seems emboldened and is trying to. He believes he can singularly secure a peace deal between Russia and Ukraine, and so he has said he would move forward with this meeting. I think some of the tough talk that we've heard from President Trump in the last couple of days regarding Russia, this means all of that gets pushed out by at least a couple of weeks. There had been seemingly some momentum around potentially giving Ukraine Tomahawk missiles. President Trump said yesterday, late in the evening, that in fact that the U.S. needs those missiles. So that he seems to have changed his language there a little bit. There's also a bill in the Senate that would put more stricter. Put more sanctions on Russia and those buying Russian energy, and that seemed to also be moving forward. Then President Trump said again yesterday that maybe now is not the time for that. So it seems that President Putin has bought himself some time here, and that President Trump is going to keep talking before he moves forward with any of those measures that had seemed to be moving forward in the last couple of days.
Terrific briefing, Chad. As always, thank you so much. Chad Thomas, of course, in charge of all of our Western, economies and politics. Now, to earnings now, we're joined by Tim Craighead, Global Chief Content Officer and Director of Research for Bloomberg Intelligence. It's been a big week. It's been a big week, actually, on all fronts. But earnings have been really left, right, and center. Like, who's beat expectations?
Yeah, it's early days still, but we are seeing something like 60% win, 25% miss, and a little bit in between. So it's skewing to the positive. Who's done well? Think AI, TSMC, ASML, both of which surprised on the upside. TSMC has raised their sales guidance. ASML had strong bookings that, has caused positive revisions. You've also got EssilorLuxottica that had a positive surprise based off of glasses, but it's Meta's glasses, and so it's AI enabled. So that's one. Second, we've had positive news out of U.S. capital markets, the big banks, and that has repercussions, we think, with a tailwind to European banks to come. There's also been some beaten up consumer names that have positively surprised. LVMH, most notably, with stabilization and improvement in China, which, shock of all shocks, was a big deal. Nestle, also a positive surprise, more on restructuring, but still their volumes were a little bit better than expected. Those can all read maybe into SAP, Kering, Barclays next week, which are all focus ideas, by the way.
So, Tim, I like the focus ideas. They're terrific. I love the in focus stuff. So who should we worry about? And is it sectors or is it companies?
Yeah, I guess the things that jump out to us, number one, we're always still looking for, is there a AI soft belly? We haven't seen it yet. Secondly, tariff impacts. Think Volvo that reported a miss. And that's global trade, container shipping. You don't need as many trucks. U.S. sales were weak. That's an issue. And then you've got this undercurrent of what happens on credit quality. Is there something to worry about in Europe from what we're seeing in the U.S.?
Tim, let's see. It's going to be a big week. I feel like it's going to be a big day and then a choppy, possibly weekend as we get caught up on what's happening on Monday. Tim, thank you. As always, Tim Craighead from Bloomberg Intelligence. Now, coming up, how the U.S. and Europe look to tackle China's stronghold on rare earth supply. We'll be joined by the co-founder and managing director of the Critical Minerals Hub. That's next, and this is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Season is here.
European earnings in focus. We'll break down the results.
Bloomberg is first to break the numbers.
And we bring you some earnings that are coming through a Nordea Bank.
LVMH reporting a surprising return.
And BP.
The earnings story, I think, is really fascinating.
There's just so much news.
With the smartest insights.
It has been a record half-year result. We are committed to capital return. We were even able to increase our outlook. It's very good news, I think, for our shareholders.
Continuing coverage on Bloomberg.
Well, as the U.S. and Europe look to take strategic steps to tackle China's stronghold over rare earth reserves, is Beijing's grip leading to a redrawing of the world order for the industry? Well, to discuss all of this, we're joined by Amanda Van Dyck, co-founder and managing director of Critical Minerals Hub. Amanda, thank you for joining us. I mean, this is basically critical minerals for a reason, because it kind of like changes everything, our prospects for the economy. What do we know about U.S.-China right now? China has such a big grip on this. Could it actually shape this new world order?
Definitely. When it comes to most critical minerals, rare earths included, China owns 70 to 90% of processing. And processing is where they exert their control. Because we can't actually, there's no use having the minerals just as they come out of the ground. You need to turn them into a usable mineral, and that processing is often very complex and difficult. And China's done a lot of investing in securing control over the processing choke points in the world. It all goes through China. That means that if we want to build anything from F-15 fighters to EVs to iPhones, we need materials that come from China. In terms of the U.S. and China, they had a handshake. They had a handshake deal that said, we will continue to provide you with what your industry needs. We'll continue with the supply chain. And then suddenly, for some reason, Xi, right before they were set to start talks on their new set of trade talks, decided to put out an export ban on processed rare earths, as well as any technology required to process them. So basically the IP. They controlled not just the metals themselves and said that we've got an export ban on them. You have to buy the value-added EV or battery or something like that rather than the actual, you can't buy the metals or even the magnets.
But is this a declaration of ratcheting up a trade war, or is it a negotiation tactic?
They're ratcheting up a trade war. There's just no other way to do it. The U.S. actually recently rejigged the way in which they have a critical minerals list, as do many countries in the world, that says what minerals do we need that are critical to our economy. But they went one step further, or two steps further, actually. They calculated the risk of shortages based on a number of factors, and also what a shortage would cost the U.S. economy specifically. I'll give you one.
This is what, in the short term or the medium term? So this is like, look, if we don't have access
in a year, so in any given year, yeah. So I'll give you. So there's 17 rare earths. One of them, one of the smaller ones, is one called samarium. The total value of the samarium market is only about $30 billion a year, and how much the U.S. imports, usually in the form of permanent magnets, is only about $10 billion a year.
Right.
That's not very much.
Right.
But they calculated that if they got their access to samarium or samarium permanent magnets cut off, it would cost $4.5 billion. Sorry, it's $10 million worth of rare earths would lead to $4.5 billion in economic damages for one single out of 17 rare earths.
Because you use it in what components for?
Tiny
for everything.
Little batteries that go into
our phones, I imagine, like
our phones, basically every technology, every electric motor, so every bit of electronics we have has a number of electronic motors in it. Every server, every phone, every radar system, everything. Every electronic component has small permanent magnets in it, and they're usually powered by rare earths.
So what does that? So the U.S. is now trying to get, I guess, a deal on this, but does it change the psychology on what the U.S. wants from China?
Well, the U.S. had this handshake deal. They had a 20% tariff. In exchange for a handshake on, we will continue to supply at the rate we were supplying. So we have supplied a million different manufacturers of a million different electronic products, said would keep the supply lines going. They pay for them, of course, at whatever value and whatever tariffs are required, but they would keep the supply. Now there's export quotas. They can't get them at all. There's no way that those kind of export quotas could be considered anything other than a desire to hurt the American economy.
But Amanda, if you have a list and saying, look, if I go tough on this, then it will cost me this in 1 year, does it mean that they can actually negotiate more smartly? Potentially.
Potentially they could. It depends on how important the U.S. consumer market is for Chinese goods, because that's what they've said in return. If you're going to make all of our consumer products put all of our production lines at risk, then we're going to put all of your production lines at risk, because we're your biggest. They're still the biggest customer for consumer goods
overall. So interesting.
Yeah.
Thank you so much. Thank you, Amanda van Dijk, there, co-founder and managing director of Critical Minerals Hub. Now, the picture, look, stocks are definitely extending their gains. There are many, many doubts on the credit health of regional U.S. banks, and that's really driving traders to cut down on risk. And this caps a pretty volatile week that exposed the vulnerabilities of markets near record levels. Now, what is quite incredible is that these are two regional banks in the U.S., and they seem to be infecting a lot of the big European banks. Traders seem to be in a mood of sell now and ask questions later. Deutsche Bank down 6%, Barclays, Standard Chartered down between 5 and 5.5%. Then Banco Sabadell also has the extra layer of an M&A that did not work out. So that stock's down 7%. Our Kriti Gupta speaking to the chairman earlier. Coming up, all that glitters is currently gold, but for how long? We talk gold next. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. European bank stocks slump as a sharp sell-off in U.S. regional lenders ripples through global markets amid growing credit concerns. Ukrainian President Volodymyr Zelensky arrives in Washington for talks with Donald Trump, who now says he will meet Vladimir Putin in Budapest within 2 weeks. And the White House is poised to ease tariffs on the U.S. auto industry in a move that would deliver a major win for car makers. Now, gold has surged to another record as fears about credit quality in the U.S. and trade tensions between Washington and Beijing strengthen demand for havens. Valerie Teitel is here with more. Hi, Valerie.
Hey, Francine. Gold up again strongly on the week. Gains of near 8% this week alone. It is headed also for 9 straight weeks of gains. If we reach 10, Francine, that's something we haven't necessarily seen in modern history. I wanted to look back on history and just compare when else we have seen a jump of near 8% when it comes to gold. Let's flip on, because we've only seen it, Francine, 4 other times in the last 20 years. One during March 2020. We also had a similar rise around 8%. And then twice, or 3 times, shall I say, during the 2008 and its fallout. Once during September of 2008. We all know what happened then. And then twice during October 2008. That's when we saw the riots in Greece first beginning. So a move like this is something we have not seen very often in modern history. And the recent move today is all in the back of these credit jitters coming out of the U.S. regional banks. Zions Bancorp is moving lower yet again in pre-market. It closed at the lows in yesterday's session, down over 13%, adding to those losses today, down just shy of 2. Fran?
Valerie, thanks so much. Valerie Teitel with the very latest on market moves. Now, gold record-breaking rally is the subject of today's weekly doc from Bloomberg Originals. It looks at what is driving the surge and what it means for the global financial system. Here's a preview.
Metal is having a moment. Not this kind, though, sadly.
Gold hits another record. Spot gold prices have climbed above $4,000 an ounce for the first time.
The key word is scared.
During times of economic and political and financial turbulence, you buy the dollar, you buy U.S. Treasuries, you seek safety.
Not so much now. Now you buy gold.
What we're seeing at the moment is not like anything really that we've seen over the last couple of decades.
In October, gold extended its already furious run from last year and showed few signs of abating. Excitement is evident online, on shopping streets, and in capital markets.
Just gold, gold, gold the whole time.
This gold rally really looks unstoppable at this time.
With any rally, it naturally makes people worried. Is this a bubble? Is this going to pop soon?
I think it is a warning sign that people are very anxious.
Gold is the ultimate safe haven asset, a heart rate monitor, if you will, the health of the global financial system.
And because of that, when you see a spike in the gold price, your first question should really be what's gone wrong.
Well, you can stream that full Bloomberg Originals doc on the terminal and Bloomberg.com. Now let's continue the gold conversation with Michael Haig, head of FIC and Commodities Research at Societe Generale CIB. Michael, thank you for joining us. Gold. I mean, gold is like on a tear. Is there anything that can stop its upward trajectory?
I don't think so in the short term. I mean, gold thrives on uncertainty. We've had an event today. Obviously, we don't really know what's pushing it up in terms of hedge funds or ETF flows, etc., because we don't have government data anymore on hedge funds participating in the gold market. But ETF flows have been rampant. So I'm assuming it's that. I'm assuming it's hedge funds. Before the government shut down in the US, notionally, hedge funds were holding the biggest gold position they've ever had. And they held it for weeks. In the past, you'd see them sell off when you get prices this high. But that hasn't been happening anymore. So in the short term, I don't see this changing.
Michael, I had a good conversation actually with the Citadel founder, Ken Griffin, last week, and we're talking about, de-dollarization. Yeah. And he said, look, there's only one thing that people go into, and it's gold. Yeah. So if this is actually Asian economies and other economies saying, because of what's happening in the U.S., I'm going to stop buying treasuries and get into gold, and stop buying dollar and get into gold, I mean, I don't know what kind of price we could see for gold.
So this is how we actually come up with our forecast. If you look at, say, for instance, China's foreign reserves, 3.6 trillion roughly, of which about 9% is in gold. It was 6% at the start of the year. Just because the prices have increased so much, it's now at 9%. If they go to 20%, which is kind of normal, that means they need to buy another 3,000 tons of gold. So what they normally buy and what we track is about 30, 40 tons coming out of the UK into China. So you're talking about many, many years of buying to get to that level.
But is there a clear correlation that we can see now with people actually wanting to get out of U.S. assets?
You see that data with a lag, the tick data. Of course, there's about 63 trillion foreign holdings in U.S. assets. In 2022, we saw a 15% decline in that. We haven't seen it at that level yet. I'm assuming, to your point, that we see something like 7% decline in those holdings, and that's how we come up with what would go into gold as a result of that.
Okay, when you look at the next couple of weeks and months, again, there's so much concern for, there's credit quality in the U.S., there's a lot of tensions between, Beijing and Washington. Again, how much is that just the daily anxiousness in the markets driving up gold?
So my favorite thing to look at right now are these uncertainty indicators that you can find.
I love an uncertainty indicator.
Much anyway. So there's an uncertainty indicator about the military, about trade, about economic policy. There's daily versions, weekly, monthly. So the Chinese have a monthly version. It's risen again. The US version is really, really high relative to what it normally is. So these uncertainty indicators before we had Donald Trump averaged around 100, let's say. They spiked to 600 at Liberation Day. Now they're around 200, 300. It'll go up again today. And that's what's driving these flows.
Do you worry about the credit quality in the U.S.? I mean, could there be something seriously wrong? Or is this just a little bit of a panic or, positioning in case something goes wrong?
You've been saying this all morning, that people are selling it now and asking questions later. I think that's exactly the situation. It's probably the same with gold's reaction today. Yeah. Buy it now and let's see how this turns out. But whether or not that sells off when you see some sort of resolution, if you get it with the credit, I don't know, and I doubt it.
Michael, what can you tell me about physical demand for gold? Because this, again, we kind of forget. Back in the good old days, 4 or 5 years ago, I mean, this was still a huge, huge factor in the price of gold rising. At some point, it's so expensive that you must see demand being, destroyed.
Yeah, these measures of elasticity of response to gold prices on demand, whether it's ETFs, central bank buying, or even retail, they've all broken. So there's no way of assessing anymore at what price it would go to where this stops, because it's all broken and now everybody's buying for strategic reasons rather than economic. So it's kind of hard to put a number on that. Our forecast for gold is 5,000 by the end of next year. I'm going to guess we're probably going to get there a lot faster than what I think we were going to get based on the flows from retail, ETF, and central bank buying.
You mentioned the China Central Bank. Who will be the biggest owner of gold apart from the Fed? Is it impossible to say?
You mean in terms of the central banks?
Yeah, in terms of central banks.
Well, central banks. So the US has 8,000 tons.
Yeah.
Germany's the second biggest, I think. I can't remember exactly their tonnage. China has about 2,300. Russia has 2,300. So, you know, the US is by far the one that's out on a limb in terms of 80% of all reserves being in gold. But, you know, as you're probably aware, the U.S. value on gold is at $43 an ounce. It hasn't been changed since 1973, exactly. And there's obviously conversations about whether that gets marked to market and what that would mean. Yeah. But, yeah, so there's no bank anywhere close to the U.S.
Yeah. Michael, give me a sense of, again, is there something else out there that could replace gold? You know, I don't know. I know it's kind of, you know, silver's going up, but could there be like a digital currency? Could there be like a yuan or a euro?
We get this question on the crypto and whether or not banks are interested in going that. So far, from what I've read, Switzerland said no way. They would never entertain that idea. The Czech National Bank has said they might. Kazakhstan has said they might. But most banks have said, no, we're not going to entertain that idea. So I don't see anything being replaced. We don't see any silver going into central banks of any kind of size. So
Swiss franc? There must be another. I mean, is it crazy that, you know, the biggest kind of safe haven is gold, full stop?
No, I mean, you can't assume that everything that comes out of U.S. holdings of treasuries or U.S. assets all goes into gold. That's impossible.
Right.
So it has to find a home, you know, in equities. It has to find a home in real assets, for instance, not just gold. That would be... that just couldn't happen.
But even if you had like, what, 40%, right, of money coming out of, you know, some of the U.S. assets going into gold, it's very significant.
It's hugely significant. So, I mean, I'm assuming, you know, of the 7.5% that I'm assuming comes out of U.S. assets, which is 63 trillion, I'm assuming of that 7%, 3% of that value goes into gold, spread over 4 years, and that gets a return of roughly 4 to 5% a quarter on gold, just on those flows alone, nothing to do with the ETFs.
Michael, so, you know, you're expecting 5,000 by the end of next year.
Yeah.
What happens by the end of this year? We could
We're
be,
almost
what,
at,
4.5?
Our forecast for January is 4,400. We're pretty much there. And I hate to keep revising up these forecasts every single week, but... yeah, it's really getting ahead of itself. And again, as I mentioned, we don't exactly know what's going on in the hedge fund space and whether or not they're pushing it up because they're maxed out notionally. But my hunch is that they've become very comfortable with the idea within their macro portfolio that gold is actually an oversized position now, whereas previously they would sell it off and keep it at a lower level. So I don't see that reversing.
Michael, thank you so much. What a great conversation. We've talked about gold all day. Michael Hay, head of FIC and Commodities Research at Societe Generale CIB. Now, U.S. President Donald Trump says he plans to hold a second meeting with the Russian President Vladimir Putin within 2 weeks. It comes ahead of a meeting he's due to hold with Ukraine's Volodymyr Zelensky later today.
I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call. We're going to be meeting in Hungary. Viktor Orban is going to be hosting, and it's really something that's time. Last week, over 7,000 people were killed. That's ridiculous.
Well, to look at geopolitical ramifications, we're joined now by our very own Roz Matheson. Roz, so does this actually undercut any Ukrainian push?
Well, possibly it's a bit disappointing for the Ukrainian leader that Donald Trump had this phone call with Vladimir Putin ahead of his own meeting with Donald Trump today, because there had been a sense for a while that Donald Trump was cooling on Vladimir Putin. He was quite frustrated with Putin and his foot dragging on ending the war in Ukraine. I mean, Zelensky obviously also wants to end the war in his country, but he wants to do it on the strongest possible terms. And the concern is that Donald Trump, in his eagerness to get this war finished, a ceasefire in place, does he push Ukraine towards concessions? And so there's going to be obviously an incentive for Zelensky in his own meeting today to try and encourage Donald Trump, keep up the pressure on Russia, keep up the pressure on Vladimir Putin. You know, there are two things he's probably concerned about in all of this. Is the US going to, you know, drag their own feet on supplying Ukraine with Tomahawk missiles, for example? Is Donald Trump going to walk slowly on trying to get more sanctions put on Russia through the US? Are those things going to slow down because he wants to have his meeting with Vladimir Putin in a few weeks and see how that goes? So again, is this kind of dragging things on and on to Russia's advantage? And so possibly a bit of concern there, at least in the Ukraine camp today, and a bit of requirement here for Zelensky to go very carefully in his meeting today with Donald Trump and perhaps reset the table just a little bit.
Roz, what's the likelihood of Donald Trump bringing an end to the Ukrainian war?
Well, obviously, he's fresh off his ceasefire in Gaza that the US did arguably, bring that pressure to bear to get Israel and Hamas to agree to that ceasefire. But the war in Ukraine is just as complicated, really. And there's no great sense from Vladimir Putin that he's in a rush to end his war. He's got long-standing territorial gains that he wants to make. Russia's continuing to attack Ukrainian energy infrastructure, particularly going into winter again in Ukraine. There's no great let-up in that. And so for Vladimir Putin, he really needs either pressure or incentive to end his war. And there's no sign that he particularly sees either unless the US really turns the screws on his economy. So, the first meeting between Vladimir Putin and Donald Trump in Alaska didn't produce really much of anything. There's a bit of risk there for Donald Trump as a result. Can a second meeting produce anything? But Vladimir Putin doesn't seem to be in a hurry.
Ross, thank you so much for the terrific briefing. Let's see what comes out of the phone call later today. Ross Matheson there on Ukraine. Coming up, Bloomberg's Michelle Hussein joins us to discuss her new show that's launching today and her interview with the Canadian Prime Minister Mark Carney. That's next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, Volvo shares falling the most in 6 months after the truck maker warned that demand slowdown was sparked by uncertainties over tariffs, and that will extend into next year. Well, we're joined by our very own Craig Trudell, our global autos editor. Craig, I know you've been extremely busy, but when you look at Volvo, they see quite a lot of weakness in North America. What else jumped at you?
I think just the parallels between what Volvo had to say this morning and what we heard from Michelin earlier this week, that there's just seems to be a real consistency across the sector of issues with a freight slowdown, weakness in agricultural demand in particular, and that this is a case where there's sort of nowhere to hide if you're in the sector, between on the demand side, but also the pressures that the Trump administration is now putting on this sector after, for up to this point, it's primarily been a case of cars. We're now getting into medium and heavy duty trucks as well. And so whereas we've seen a lot of tumult on the car side this year, maybe 2026 is the year that we see much more of a bite for the trucking sector.
Craig, we've also had new lines this morning from Porsche. It's quite unusual. I mean, they're saying they're in talks with the ex-boss of McLaren for a potential CEO role. I mean, it's quite unusual to know about the talks before he gets signed.
Yeah, it's an interesting one. It's not necessarily a surprise that we're learning that there's been a decision to move on from Oliver Blume because of the fact that he's been wearing two hats, that he's been head of Porsche and Volkswagen. That was, controversial, sort of from the beginning when Porsche was, staging its initial public offering. That IPO went quite well, and yet in the years since the listing, things have not gone well whatsoever. And so the Volkswagen Group wanting to, in this case, bring someone in, and Michael Leaders, who spent time at Porsche, spent more than a dozen years there before going to Ferrari and then to McLaren, had quite a bit of success at McLaren. So in terms of someone to come in who is familiar with Porsche, but also has a strong track record, this makes a lot of sense in terms of a natural successor to Blume for that role, so that he can turn his attention fully to Volkswagen.
Yeah, and we know that the car maker was actually looking for a successor for quite some time. Craig, thank you so much. Craig Trudell there, our Global Autos editor. Now, it's launch day for Bloomberg's The Michelle Hussein Show, a new weekly podcast which aims to make sense of the world with one essential conversation every weekend. The debut interview is with the Canadian Prime Minister and the former Governor of the Bank of England, Mark Carney, and I'm delighted to say that Michelle joins us now. Michelle, I'm so excited to listen to this podcast because the show is chaotic, and that's probably the understatement of the year. So what are you trying to do with this new podcast?
It's such a pleasure to be with you, Francine, and so soon after your own series, Leaders with Lacquer, has begun, which has been a brilliant watch. I think what I'm really trying to do with the Michelle Hussein Show is try to get a balance between the complexities of our time and the human and personal side. So while we will speak to newsmakers in the first two episodes, Mark Carney, and episode 2 will be Nigel Farage, they are people in that zone. But we'll also be talking to thinkers and experts and people in the cultural space. So I think it is about people who are shaping our world and people who can help us make sense of it all. So it's going to be a space for wide and deep conversations. And not everyone falls into that category, right? You've got to have enough range. Often we're going to be talking to people about their past as well as their present.
Yeah, I love that you spoke to Mark Carney because he has a difficult job, right? I mean, he's right close to the U.S. And so I know that you talked to him about how to deal with Donald Trump, and this is what he had to say about that.
Have I learned? I've learned lots of things from President Trump. You always learn things from people. I've learned that the value, I don't fully subscribe to this, but I see the effectiveness. The value of the term they would use is flooding the zone, of doing multiple things at the same time, and the effectiveness that can have. I think that he has a very effective way in his own almost unique manner of framing issues and of dominating the agenda, if I can put that way as well.
I mean, he's been also quite amazing, actually, at doing this balance of humor but seriousness with Donald Trump.
Yes, and this is an admission of what he's learnt in communication terms. But he did also say to me, when I said, what have you found hard about this period? Because remember, he's cast himself both as the political outsider and as someone who's experienced enough to lead in this moment. And he did say that he used the word relentless, that it's as close to 24/7 as possible, which he says he conceptually knew from the outside, but actually living it is something quite different. But I think it's really important to say that this is the human side, but on the complexity, he really helps us understand what it is like leading an economy which is in the midst of what he calls a rupture. He says, we, Canada, never want to be in this position again, essentially the position that the United States has put us in, where a country to which we are so interlinked in every way is leaving us now having to search for new export markets and to export east and west as well as south. So he calls it a rupture, and I think we get a sense of the global moment as well as the personal side of a G7 leader through this conversation.
Yeah, they're so close. I think at times it was really quite an emotional conversation, right? Talking about the next Canada. What did he tell you about climate change?
Well, climate change was a particularly interesting aspect of this to me, because the last time I spoke to him on air was at the Glasgow climate talks, and he was then the UN envoy on climate action and finance. So these are issues he's been really outspoken about. When he led the Bank of England, he was talking about how short-term thinking on climate is such a problem. His first action in office was to cancel a consumer carbon tax, and I asked him about that. And essentially, he uses the words, I'm still the same me, and he smiles about that a bit. So he can see why I'm asking the question, like, are you essentially seeing climate in a less urgent way than you did when you worked for the UN and when you spoke out on these issues? Essentially, he's saying he's got a lot to juggle, and he's trying to find the most effective way to act on the climate.
And here's Carney on climate.
What we're focused on, look, you can say there's a cap, but saying a cap doesn't make it happen. What makes the emissions go down in the oil and gas sector, as long as Canada and America are using oil and gas, and we are, our economies are wired for that, as is the rest of the world. What makes those emissions go down will be carbon capture and storage, particularly in other efficiencies.
So you are dropping it then? That's what it sounds like.
We're dropping emissions from the oil and gas sector.
Dropping the cap.
Dropping emissions, Michelle, from the oil and gas sector. This is the point. This is about results. The climate cares about results. Okay. It doesn't care about a policy that is... An outcome is not a policy. A desired outcome is not a policy.
So I'm getting the strong signals that that particular policy to have a cap on emissions from the oil and gas sector is not going to happen.
An outcome is not a policy. What makes a difference to the climate is whether or not emissions come down.
So I should probably explain that he's talking about a particular emissions cap on the oil and gas sector in Canada, which was promised by the last government, and there's a big debate about whether it's actually going to come in, and the signals are going in one direction on that. But again, it goes back to this idea of the hard realities. Also for him, the realities between the kind of language you use when you're campaigning and when you're governing, because he, at the point of campaigning, would say, I'm going to stand up to President Trump as a bully, and then it's different when you're actually sitting in the Oval Office with him.
I know, and what I love, you've spoken to like such varied leaders. So it was Elon Musk, it was Keir Starmer, and then Nigel Farage. Like, is there a common thread amongst all of them?
Well, I think the key thing I want is also enough time to talk to them in this particular format, to have a long conversation. And what I found so far is that for the most part, even though people operate in sound bites and so many people consume news in sound bites, there is a space for this kind of conversation. And people, I think, even people who have very little time do relish having that kind of opportunity to explain themselves, and they have to understand in that process that some of what comes back at them is going to be uncomfortable. But I think that this conversation is really setting the tone for what we want to do week after week, weekend after weekend, because this is a weekend listen. This comes from Bloomberg Weekend. You hope people have a bit more time to absorb what's being said and to leave with something of value.
Michelle, thank you so much. Michelle Hussein there with the Michelle Hussein Show, which debuts today. Her full conversation with the Canadian Prime Minister Mark Carney, available right now. You can also search the Michelle Hussein Show wherever you get your podcast. Now, it is a big day also for the market, so watch out for anything in terms of credit. We're actually expecting maybe a little bit of choppiness. I feel that the mood of the day is definitely a sell now and ask questions later. You can see Western Alliance pre-market down 2.6%. Up next, Bloomberg Brief, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Credit fears. Stocks dip as two regional banks say they were victims of suspected fraud on loans in their portfolios, and that's casting doubt over the health of the industry. Talks in sight. President Trump announces another meeting with his Russian counterpart. President Zelensky set to visit the White House later today. And a win for autos. U.S. car makers set to get a 5-year extension to arrange new tariff rates on imported car parts. So we did have a down day yesterday, as you all know by now, but still we weren't down a full percentage point on either the S&P 500, the NASDAQ 100, or the Russell 2000. That may change today, though, with futures pointed notably lower. That said, the debate rages on. Is this just into weekend selling? Are people overreacting? Ed Yardeni says, yes, there might be a few cockroaches, but there's certainly no infestation. He's just one of the voices today. Let's take a look at the bond universe, though, because we're pricing in 2 Fed cuts. He says, Ed Yardeni, that is, that will keep this equity market supported. And you have yields much lower. So we're below 340 on the 2-year yield. Remember, 345 was the level to watch. Well, we're 6 basis points below that now. And while we were flirting with 4% and it barely dipped below it during the week, we are now very firmly below 4%. 395.52 and below 460 on the 30-year yield as well. The VIX continues to rise. We went from 27 to above that today. Gold continues to hit records. We're above 4,300 an ounce today. And Bitcoin, well, Bitcoin's just lost. All right, let's get some individual movers now and the details across to London. And Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on those regional names that really grasped our attention into the close yesterday. Both Zions and Western Alliance are in the red. Now, both of these closed at the lows yesterday. Zions was down 13%. Western Alliance was down 10%. So adding to those losses, and this is all around worries about collateral. Zions had alleged some collateral fraud when it came to some loans that had extended into the distressed commercial real estate space. So banks Again, a big focus in pre-market. They were also a huge focus in the European session. Just take a look at these European banks. They got absolutely clobbered in trading. Deutsche Bank down 6.5%. Barclays down 5.5%. BNP Paribas down just shy of 4%. Vonnie, it was the worst session for European banks as a sector since August of earlier of this year. So real, I guess, contagion risk is being felt around the globe, especially in European banks in the session today. Lastly, I want to touch on pharma. Trump hinted in the Oval Office yesterday he wants Ozempic and other weight loss drugs to be priced at $150 a month. That is starkly lower than the $1,000 a month price that they normally go for. So we're seeing the likes of Eli Lilly and Novo Nordisk down over 4%. Obviously, if Trump is pressuring them to lower prices, their margins will be hit on the back of that. Bonnie?
Absolutely. Valerie, thank you so much. That's Valerie Titel there in London. And later in the hour, we're going to dig into those U.S. banking jitters with Seema Shah of Principal Asset Management. So, to that story then, broader market story even as credit fears spook investors widely. That's after, as Val said, Zions and Western Alliance revealed losses from alleged loan fraud. Joining us now from our finance team is Stephen Ahrens. You know, Ben Emmons of Further Capital today, Stephen, saying that there are shades of SVB here, but we're talking about a relatively small amount, no?
Yes, you're right. The amounts for these two banks, the losses are actually quite small, in the tens of millions and something, but they come on the back end of losses we've seen on the First Brands collapse in the U.S., and the Tricolor one, which has raised concern generally about what's going on in the credit risk among banks. That's spilling over now to Europe. So these things are piling up and increasing anxiety for banks, and that's why the hit's so big right now.
The other point about it is that we're talking about private credit here. We're not really talking about a broader, more public credit type of situation. Is there a fear that it will bleed into the other parts of the market, or what is the fear exactly?
That's happening too. You're absolutely right. So, I mean, by definition, private markets and private credit is private. So there's little information. The banks know little about it. There's concern across banking that they've invested and lent to private credit borrowers, and they're exposed where they don't know about other people's exposure. These add up, and the opacity is now something that's growing, that's causing growing concern. They are worried about it. It used to be, it's the booming asset class. Banks have built up massive exposure, and they're concerned now it's coming home to roost.
So what is the solution here? If it's private credit for a reason, I guess it's a little opaque, but surely the people actually lending the money are supposed to do their due diligence. Is there a suggestion that there are plenty of bad actors out there, or that there just isn't enough information to be had?
Well, you know, as is typically the case, if it's a booming asset class and someone else lends to, you know, some private credit borrower, and then the next bank says, oh, you know, whatever has lent money to them, so I'm just going to do it too, and they just tick the box of the, you know, due diligence. So when such a big business is happening, at some point the banks tend to cut corners, and this is now what's again causing concern, that they've not done the diligence, the due diligence sufficiently enough, and have exposure in their books that they're not even aware of, that risks have built up that they're not aware of, and that could come and explode into their faces.
All right, and I do want to point out that we get results from Truist and State Street after the bell today, so perhaps we'll get more comments out of those banks. Stephen, thank you so much. That is Bloomberg's Stephen Ahrens. Meanwhile, President Trump and Russian President Vladimir Putin held a 2-hour call yesterday and agreed to meet again within 2 weeks in Budapest in an effort to end the war in Ukraine. He spoke to reporters about the conversation.
And I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call.
Joining us now is Bloomberg's Roz Matheson. So the timing of this announcement, Roz, does it undercut to a certain extent the meeting today with Zelensky?
Well, it's possibly a bit concerning for Ukraine that Donald Trump did get on the phone with Vladimir Putin yesterday ahead of this conversation, because he's blown a bit hot and cold on Vladimir Putin, and he was a bit cold lately. He was obviously frustrated that Vladimir Putin is dragging his feet on ending the war in Ukraine. It was like looking to put up the pressure on Vladimir Putin economically, sending potentially Tomahawk missiles to Ukraine. And the question is, what did Vladimir Putin say to him yesterday? Did he start to promise him, yes, I am serious about ending this war. Let's meet in person in a couple of weeks. We'll talk about it there. Again, he's just pushing the timeline back, Vladimir Putin. He goes from, meetings to calls, and then nothing really happens. And so for Ukraine, the concern is Donald Trump again engaging with Vladimir Putin in this way? Is this just Vladimir Putin looking to drag things out to Ukraine's detriment? Or perhaps, for Donald Trump to say that Ukraine has to be the one that makes concessions to end this war or to get a ceasefire. So certainly for Zelensky today in this meeting, the imperative will be to encourage Donald Trump to keep up that pressure on Russia, both through sanctions and possibly through supplying Ukraine with those missiles.
Roz, Trump has momentum after his Gaza plan was at least partially accepted. Is there the possibility that he might come up with a plan even in private for ending this war? I mean, it's obviously a very, very different war.
Well, that's right. So obviously he's coming off the back of the Gaza ceasefire, where the US did really pressure both Israel and Hamas to get there. And the question is, in his eagerness perhaps to get yet another notch on his belt when it comes to these ceasefires that he says he's helped arrange around the world, is he possibly at risk of rushing things with Vladimir Putin? I mean, Vladimir Putin's a very canny operator. Does he promise Donald Trump things? Does he say this is what we can do to get this done? And Donald Trump perhaps, is willing to, again, he said previously, Donald Trump, that he's willing to talk about territorial concessions that Ukraine may need to make to end this war. Does he come back into that conversation? And so, in his desire perhaps to get another ceasefire done, and this one's been arguably the most difficult of all since he became US president, is he willing to entertain some of those demands that Vladimir Putin has?
Roz, thank you so much. That is Bloomberg's Roz Matheson there. In Washington, Bloomberg reported the U.S. Commerce Department is prepared to ease tariffs on the U.S. auto industry, an announcement that could come as soon as today. Joining us now is Bloomberg's Eric Fanner. So this announcement is likely to relate more particularly to auto parts. Eric, what are we expecting to hear?
Yeah, that's right. Good morning. So the announcement we're expecting to hear relates to an offset that car makers who build cars in the U.S. were allowed to use for the parts that they import. Now, currently, under Trump's plans, they're facing, under his tariffs, they're facing tariffs on both the parts and any cars they bring into the U.S. But under this extension of an offset that's been put in place, that would go on for another 5 years instead of being phased out, and allow them to offset some of the tariffs that they pay on those parts if they bring them into the U.S. and then build the cars in the U.S. So it's a measure of relief. It's a little bit incremental, but it does help and provide a bit of certainty for the car makers that are, planning their U.S. operations.
Paul Donovan of UBS says that this extension on car part tariffs shouldn't be read as a wider signal for tariffs more broadly because there was intensive lobbying. But could other industries use the same playbook, Eric?
Well, I mean, we're certainly seeing a lot of lobbying, across the industrial sectors, across the entire corporate sector, really. We've seen a lot of action with pharma of late, of course, and so I'm sure it won't be the last sector that tries to get deals. We'll continue to see this has been a movable feast with tariffs, of course, and we're probably not done with cars necessarily yet either, and pharma is still a work in progress, of course, with both the pricing and the tariffs issues. So yeah, I think we'll see continued lobbying from a lot of corners there.
If you have an extension for that long on tariffs on auto part imports, do you try to readjust your supply chain, or do you wait and hope for the best?
Yeah, I think what this does is it provides a little certainty at least. So obviously if you're planning to build a plant, you've got to know that it's going to be viable, economically viable for at least a few years. And it's a lot easier, though, still to build one plant rather than try to import an entire supply chain, which then becomes a whole lot more complicated. So I think this is a bit of a realization of that even if you're trying to get people to build plants in the U.S., you can't get them to import the entire supply chain. So, in that sense, I think it does provide maybe a bit more incentive actually to go ahead with some of these things if you have some certainty that, okay, for at least the next 5 years, we're going to get a measure of relief that allows us to plan our investments.
Eric, thank you so much. Bloomberg's Eric Fanner there. Now to other top stories trending on the terminal this morning. First up, Man Group's assets have hit a record high in the 3 months through September, reaching $214 billion. The world's largest publicly traded hedge fund saw clients pour more money into long-only products, and performance improved. Volvo warns that a demand slowdown will extend into next year as uncertainties over tariffs linger. The car maker has posted weaker orders and lower earnings while projecting declining North American truck registrations for 2026. And BBVA chairman Carlos Torres says he won't be resigning over the failure to buy rival Banco Sabadell. The comments come after the $19 billion offer for smaller rival Sabadell was rejected by 3/4 of the shareholders late Thursday. Coming up, the latest deal driven by the AI race. Meta and Blue Owl are close to finalizing the largest private capital deal on record. We'll have details next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. A record for Meta's latest AI data center. It's close to finalizing a $30 billion package to finance the site in Louisiana. The deal with Blue Owl Capital will be the largest private capital deal on record. Joining us now is Bloomberg Tech Europe anchor Tom McKenzie. So Tom, what is the advantage exactly for Meta in going the private capital route here?
Well, to preserve its credit rating is certainly one part of the rationale. And this is a reminder, I think, the story and the numbers that you just read out there, Vonnie, as to the reach that these hyperscalers are going for when it comes to creative financing to build out the massive data center and infrastructure build around AI. And clearly, Meta is playing a significant role there. So as you say, $30 billion US, that's made up of about $27 billion of debt being raised by Morgan Stanley, but also about $2.5 billion in equity. It's going to be housed in a special purpose vehicle and the debt and the equity will be backed by the physical infrastructure itself. Meta will have about 20% ownership. It will operate the data center itself, but only have 20% in terms of the stake. PIMCO is also playing a role as well, at a time, of course, where we see hyperscalers and the big tech companies actually tapping the US bond markets. That amount they've raised on the US bond markets this year is up about 70% from last year. This is another tool and another framework then that hyperscalers like Meta can use to fund this massive build-out. This is just one, of course, of Meta's data centers that they have planned. This one of their largest in Louisiana.
Yeah, and you have to imagine it's going to provide a roadmap for other hyperscalers, as you mentioned. Tom, can we move to Oracle now? Because we did get some more details after the bell yesterday, helping to ease fears, really, around AI-related margins in particular that had started to percolate, and those fears were adding, of course, to this bubble discussion. Can you give us the details on what Oracle told us?
Yeah, absolutely, Vonnie. And look, you've covered this and you're aware of this as well. And it's something we've been noting over the last few weeks and months, which is just the sheer number of deals that have been coming through. And Oracle has been a key player in that, signing deals with the likes of Meta as well, XAI, OpenAI, to build out again and run data centers that underpin some of these hyperscalers and large language models. And what they have come under pressure on is, fine, you've got all of these deals, you've signed all these contracts, but how much is it going to cost you, and is it going to squeeze on the margin? And there were some estimates of 14 or 15% margins, which is clearly not going to be enough for investors. They turned around yesterday and said, look, we have a better projection now in terms of what the margin story could be. And they gave an example of a $60 billion revenue data center over 6 years, providing a margin of 35%. Much more comforting then for investors exposed to Oracle. 35% was the margin they're projecting. They also, by the way, raised their revenue targets for 2030 up to $225 billion US dollars per year, and they raised their profit margin as well, or profit target, per share profit target. So all of those things coming together to give investors a little bit more comfort. And it was really the margin story, as you say, that was central to that, given that projection and easing some of the concerns about the squeeze on profit that could be coming through as Oracle plays an increasingly large role in that data center story.
And the stock did spike on that news, although it did temper the gains a little later on. Bloomberg Tech Europe anchor Tom McKenzie, thank you so much. Coming up, we'll bring you our conversation with Hong Kong Financial Secretary Paul Chan on HSBC's plan to privatize Hang Seng Bank. That's next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. HSBC has vowed to invest heavily in Hong Kong and the region and has forsworn layoffs as part of its deal to take Hang Seng Bank private. This is all according to Hong Kong's financial secretary. Take a listen to more from my conversation with the secretary, Paul Chan.
From our standpoint, this is business decision, and according to HSBC, this is an rationalization of their organization structure. They will continue to invest in Hong Kong and serve the public under separate entity, separate brand. Substantial investments will be made. So we take it as an additional possibility to better serve their clients. Yeah.
When you say additional investments, can you be a little more specific? Are you talking, a dollar amount? Other promises, like, for example, not firing some workers, not laying off workers?
Yeah. According to what they have told us, there will be no layoff, and the investment will be in the billions of dollars, not just in our market, but in our region. The Hong Kong, as you know, we are super connector, so connecting the mainland with the rest of the world. And Hong Kong is the best gateway for international businesses venturing into the mainland market.
So HSBC has promised to invest billions of dollars in Hong Kong and the region. How will it do that?
Well, it's over the next few years in terms of customer service, in terms of their technology. And as you know, say, for example, in Hong Kong nowadays, private wealth, asset management is promising. So not just HSBC, but there are some other international financial institutions adding headcounts in this respect to capture the opportunities.
When it goes ahead, what do you know about HSBC's plan with Hang Seng? Will it, for example, be on sale after it's privatized?
Well, this is a matter for the bank, but this has not been made to us as a plan.
Part of my conversation there with Hong Kong Financial Secretary Paul Chan. Time now for your front page news. And we'll get to that in a second because I want to have a quick look at this market. The VIX has just dipped below 27, but take a look at these futures. Now, they're off their worst session levels. Still, though, we're looking at a decline of perhaps a percentage point for the S&P at the open. Now, bear in mind, we'll still be up on the week, potentially, because we had an up day, a down day, an up day, a down day. So we'll just see where we end up today. Let's not get too ahead of ourselves here. We are going into the weekend, too, so there could be some risk-off sentiment, just taking off some of those more risky bets. Certainly there are commentators out there like Ed Yardeni that see maybe cockroaches, but certainly not an infestation. So this regional bank sell-off that we saw yesterday after two of them decided they were victims of fraud elsewhere, well, it may or may not be something that's contagious. Let's, though, take a look at yields, because we saw a major sell-off in yields yesterday. Bonds very bid, to the point where you have the 2-year at 339, the 10-year at 396, and the 30-year at 357. Now, that's the lowest in years. The 2-year is lower than at any time, even during the SVB episode between now and 2022. So we're literally at 3-year lows for the 2-year yield. And let's take a look at gold, because we continue to hit records. We're well above 50 records now for gold. We're trading at more than $4,300 an ounce. Oil selling off as well, and the dollar index is weaker today. We have a stronger euro. It's back above 117, and the yen is trading below 150. Coming up, Seema Shah, Principal Asset Management Chief Global Strategist, is next. This is Bloomberg.
think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Credit fears. Stocks dip as 2 regional banks say they were victims of suspected fraud on loans in their portfolios, and that's casting doubts over the health of the industry. Talks in sight. President Trump announces another meeting with his Russian counterpart Vladimir Putin. President Zelensky of Ukraine set to visit the White House later today. And a win for autos. U.S. car makers set to get a 5-year extension to arrange new tariff rates on imported car parts. So if you're looking at futures today, you'll see a significant drop, particularly as we've had an up day, a down day, an up day, and a down day this week. However, we must point to the fact that the KBW Bank Index was down 3.6% yesterday, and that's stoking fears of contagion after these 2 regional banks said that there was stuff on their books that they didn't fully realize and that there might have been fraud attached to those loans, and it was impacting their results. Now, will there be more of those cases out there? That's the big question. If not, back into earnings next week. We have a couple of tech earnings, for example, IBM and Intel and so on. And also the idea that we are definitely in for 2 Fed rate cuts according to the market this year. So we may be back to our 50-day moving average on the S&P, but the market still substantially supported. Let's look at yields. Ben Emmons calling the whole matter shades of SVB, and it certainly did send yields lots lower. That, of course, and Fed speak yesterday, plenty of it. The 2-year yield is back up a little bit, but it was down to its lowest in 3 years, even lower than it was during the whole SVB matter. It's now at 339. And we have the 30-year yield, 457. That 10-year yield, well below 4% now. Let's get across to London for some stocks to watch. Here's Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on those regional banking names that you were just mentioning, because again, they are in the red in pre-market. Zion's falling over 1%. Western Alliance down nearly 3%. Now, Bonnie, this is an important one because we also have 4 other regional banks reporting earnings today before the bell. Watch out for Fifth Third, because they did previously disclose exposure to Tricolor. So this negativity around regional banks could gather some steam after those earnings results before the bell. But it had quite an impact on the European session. European banks got absolutely torched at the open and continue to do so. Deutsche Bank down 6%, Barclays down 5%, BNP down just shy of 4%. But the banking sector as a whole in Europe is having its worst session since August earlier this year. Now, this is stoking fears of contagion, as you mentioned, but we're also seeing those fears reverberate across the globe in Asian and European banks. Lastly, we do want to end on a check on farm pharma. We had Trump in the Oval Office yesterday talking about weight loss drugs costing $150 a month. They currently retail around $1,000 a month. So this pressure again on these drug makers to reduce prices is especially hitting those involved in the weight loss drug space. Eli Lilly down nearly 5%, Novo Nordisk down 4%. Vonnie?
Valerie, thank you so much. Valerie Titel there in London. Well, let's get more on these credit fears driven by those disclosures by Zions and Western Alliance. Stephen Aarons of our finance team joins me now. So clearly, these stocks took a hit. The regional bank index, as I said, was down more than 3.5%, Stephen. But why should the larger banks be affected? Is there a real fear that perhaps managers don't know exactly what's on their books?
Yes, I think that's exactly what's happening. It's a bit fear, maybe concern at least, that there is something happening, that there's something in their books that they're not fully aware of. This comes on the back end of other cases, big insolvencies in the U.S. of Tricolor and First Brands that have stoked fears that banks are exposed to credit risk that they're not fully in control of. And on the back end of a big boom on the asset class, people are just taking a very big step back and thinking, what exactly is in the books? We want to have more information, and until we know more, we're just going to be very careful here.
Well, we're going to get announcements and earnings calls from 3 more regional banks today. I guess that could either add to or calm jitters, because this could be a self-fulfilling thing if we don't get somebody coming out and saying, look, it's not as bad as all that, right?
You're absolutely right. I mean, every single investor who's invested in bank stocks right now will be listening extremely carefully to any comments on any bank earnings call to exposure to these cases and perhaps new ones. So I think credit risk is going to be the major theme during the earnings season that we're facing right now. I'm looking, of course, at the European banks, which are getting ready to report, and that's exactly what I'm going to be, keeping an eagle's eye on. Credit risk is the theme right now.
Exactly, and here in the US, we get State Street and Truist before the opening bell. Stephen, thank you so much. That's Bloomberg's Stephen Aarons. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. So I've seen both sides of the coin in commentary, Seema, those that say, yes, this is some of our prophecies coming true, and those that say, look, no, there's no infestation here. This is a few cockroaches, that specifically was Ed Yardeni. I mean, how are we supposed to know, right?
Hi, Vonnie. I think that's a key thing. And as Stephen was saying, there's a lot of uncertainty. So at the moment, the market is really in that discovery phase, trying to understand exactly what the exposures are, the drivers, and essentially, is this something which is idiosyncratic or is it systemic? It's coming, unfortunately, at a time when I think the market was already a little bit vulnerable, given it's been sitting at record highs. You've already had, valuations very, very expensive, and then a couple of bad news themes just coming through from a trade side as well. So there's already jitters, and this hasn't helped. The early indications from our side are that this is something which shouldn't be considered as systemic. Typically, fraud shouldn't indicate that. It may, of course, be a signal of a deeper problem, maybe if it's economic difficulties. But taking a step back and looking at the broad economic picture, we still see the kind of a fairly constructive backdrop. You've seen defaults and high yields, leveraged loans actually trending lower, not higher. So I think those things give us some reassurance, because as I said, this is really discovery phase at this moment.
Yeah, and I know you're constructive going into 2026, but you also had thought that the market was vulnerable, particularly around the AI narrative and also even the growth picture. So I'm curious, what would it take for risk appetite to disappear for a more extended period than just a couple of days?
Yeah, I think that it's something which is either going to really impact the growth outlook, so completely changing the path of where the US and the global economy is heading, and maybe that would be something on the AI side. Or certainly, a continued rationing up of the trade tensions. That's the kind of thing that we would be particularly worried about. And then from a regional banking side, is this something which is systemic, which is giving us an indication of deeper fears? At this point, as I said, this is not what we're expecting, but certainly it does make sense that investors from this level are going to be extremely cautious and watching out for that credit risk.
We're watching State Street and Truist today like we've never watched regional banks before. I'm curious if we do get more comments, or even just not from these banks, but from other banks, that there are other problems in the system. Is it something that could be contained to just the banks, and we could still see AI and tech and so on fly?
Well, I think typically what we'd see is that investors are going to be rushing for whatever they deem to be the safe haven. Now, typically on the defensive side, that would be something like utilities and healthcare. But we have seen in recent times that a number of investors do look at that big tech side with their big balance sheets and cash flow as something of an island of safety within that kind of storm. So we could see that. But given the valuations there, it may not be the favored place to be focusing on. At this point, even at this point of discovery, for investors, again, diversification has been really key through this year, and I think it continues to be, focusing across sectors and across asset classes. Fixed income, as you can see, given the way that treasuries have been behaving, that continues to be a place where you can focus on if you have got concerns about the broader economy. So there are areas that make sense for investors to have some exposure to, even as they try and maximize on the areas that they do feel there is some continued strength.
Yeah, Seema, you mentioned treasuries. How low can the 2-year and the 10-year go?
Well, it is interesting because I know there's that comparison with what was happening with SVB. And I think the biggest difference, though, is that during the SVB crisis, the Fed was actually hiking rates, whereas at the moment, we've just restarted this Fed cutting cycle. And that's one of the reasons that you are seeing these downward pressures, or at least I should see treasuries actually moving lower than where they were during the SVB crisis. And that is going to be continued help. In terms of how low they can go, well, of course, it depends on the size of the problem. If this problem does fade out and it does seem to be idiosyncratic, then we would expect the 10-year, at least, for example, to be stabilizing at around the 4.1% level, knowing that growth is going to be fairly good, and so that the Fed shouldn't have to go into a very deep cutting cycle.
Seema, on AI, once these announcements of partnerships and deals and so on, once they peter out, because they will have to at some point, what will the next catalyst be to send those prices higher?
Well, I think we just, we want to continue to see those earnings, positive surprises. I think news of productivity gains, that's going to be really key. And I think that's something that investors increasingly are going to be looking out for. Which companies are really benefiting? Are we seeing further strides in terms of growth, which can support that continuation of the AI theme? It's still really early days, and certainly there could be some setbacks along the way. But that narrative, that theme of AI productivity gains driving the global economy is, I think, what could keep it going, even in those moments where things become a little bit more challenging.
Seema, I want to mention something that I read earlier today. Ian Lingen of BMO wrote a love letter, basically, to the data, saying, "Dear data, we miss you." And he ended with, please come back to us soon. I'm curious, what's the chance that when we do start getting government data again, assuming we do this year, that there will be some shocks in there, that we'll be surprised by what we see?
Well, I mean, before I turn to that, because actually this is almost key, is that because there is a lack of data, there's a lack of news flow, it has almost created this vacuum, which I think does enable fears to flourish a little bit more. So this is, I think, playing into this general theme of jittery markets too. But certainly, once we get the data back, we'll have to be fairly careful about it, because some of it will have been compromised in terms of the process of collecting data during the government shutdown. So we'll be treating it with a pinch of salt. Our view, and just taking a step back, looking at the broader picture, some of the news flow that we've been getting from earnings, particularly with regards to the consumer, we still think this is a healthy economy. The key thing that we need to be looking out for is, are companies passing on price increases increasingly to consumers? And of course, what is happening with the job market? If layoffs are staying quite low, then I think we should all be reassured. But of course, if you do start to see layoffs trending higher, then there's a bigger problem at bay.
Seema, thank you so much, as always. Seema Shah of Principal Asset Management there. Now to other top stories trending on the terminal this morning. First up, Man Group's assets have hit a record high in the 3 months through September, reaching $214 billion. The world's largest publicly traded hedge fund saw clients pour more money into long-only products, and performance improved. Volvo warning that a demand slowdown will extend into next year as uncertainties over tariffs linger. The carmaker has posted weaker orders and lower earnings, while projecting declining North American truck registrations for 2026. And BBVA Chairman Carlos Torres said he won't be resigning over his failure to buy rival Banco Sabadell. The comments come after the $19 billion offer for smaller rival Sabadell was rejected by 3/4 of the shareholders late Thursday. Coming up, President Trump hosts Ukraine's Volodymyr Zelensky at the White House today. More on efforts to end the Russia-Ukraine war next. This is Bloomberg.
David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
And I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call.
President Trump announcing another meeting with Russian President Vladimir Putin just ahead of President Zelensky's visit to the White House today. Joining us now from Washington is Bloomberg's John Harney. What about the timing of this announcement, John? Is it respectful, I suppose, to announce that you're going to meet with the Russian president when, you know, the Ukrainian president is going to be in the White House today, or does it undercut that meeting?
To the second question, yes, it certainly seems to. Here again, we see this war, the course of this war, the dynamic of this war shift dramatically in just a day. Now, that's not the war on the battlefield, which remains largely a standoff. This apparently, during this conversation yesterday, this 2-hour conversation with Vladimir Putin, Donald Trump was convinced that another summit with Mr. Putin, this time in Budapest, was a good idea, even though their last one in Alaska not only yielded no progress, but afterward, attacks by Russia on Ukrainian targets, largely including civilian targets, intensified, and you had Russian incursions of drones into Poland, Polish airspace, and warplanes in Estonia, which, of course, upset our allies, NATO allies, to the east, in the eastern region of Europe. So this perhaps will give Mr. Putin time to drag out this conflict. At the same time, Mr. Trump clearly does want to resolve this war. He promised this during the 2024 campaign, and yes, he is even more motivated after his success in Gaza just this week.
Yeah, there is some momentum, but you have to wonder, you know, every time he meets Putin, things go a little awry, and then he gets frustrated with Putin, but he's obviously going to meet with him again. I do want to ask you about the tariff relief, though, because we got the shout that we'll probably get an announcement today that the auto industry will get that relief. Can you give us the details?
Yes, the big automaker, well, two of the big American automakers, particularly Ford and General Motors, are getting a 5-year extension on tariff relief. They would still have to pay some tariffs, but not as much as they would otherwise. on parts that are imported from abroad. Now here, this shows a couple of things. One, world trade is very complex. You know, this tariff regime was installed by President Trump to bolster, to promote American manufacturing. However, a lot of American manufacturers use at least some foreign parts.
Yes.
And it also shows that trade policy is is unfolding, at least somewhat in the offices of lobbyists.
Yes.
The automakers mounted a major lobbying campaign on K Street, as we call it here, even though a lot of them are not actually on K Street, to get this extension, which my colleagues have reported may be announced as early as today by the Commerce Department.
Seems other industries are not having just as much luck just yet. John, thank you so much. That is Bloomberg's John Harney. And to another industry now, and that is the pharma industry. Novo Nordisk and Eli Lilly shares tumbling after President Trump said the price of Ozempic could go down to just $150 a month. Joining us for more is Bloomberg Intelligence Director of Research and Senior Pharma Analyst, Sam Fazeli. So Sam, obviously, President Trump is saying this. The deals are not, just yet in place. Is it possible that the pharma industry will have some success in pushing back on these prices?
Well, Vonnie, I think the pharma industry has already had some success in the deals that they've done, Pfizer's deal and AstraZeneca's arrangement, let's call it, with the administration in terms of how they're going to manage the pricing and availability of drugs, more affordable prices for certain segments. What is, as usual, the case here is that there's so little detail, except for those numbers that you mentioned, and the drugs specifically, the weight loss drugs or the obesity drugs, as they are known. There's so little detail apart from the $150. Now, let's just remember this. We have no idea what channel the president is talking about or the administration is talking about. We don't know what they've been talking about to Lilly and Novo Nordisk. Is it just for the Medicaid channel? Remember that the net price of these drugs is around $540 a month at the moment. And there are slightly cheaper versions in the vials, etc. So let's just wait for the details. I think the markets decided to shoot first and then get the facts right here. It's very possible that this ends up being a sliver of the population, particularly the out-of-pocket patients as opposed to insurance patients, etc. So it might even lead to higher volumes.
Yeah, there you go. Well, that's what I was just going to ask you. I mean, if we do get a deal of some sorts that makes these drugs cheaper, but you've just sort of put a pin in that for the moment, are these companies still correctly priced, or will we see new price discovery?
To be honest with you, as usual with pharma companies, I think the best way to look at it is that as time goes by, more competitors come in, the prices tend to fall. And it makes sense also for the industry as they get their manufacturing and margins set. It becomes pretty much everything else they sell becomes leverage on their manufacturing facilities, etc. Prices do tend to fall. Now, what you don't see, of course, is in the list prices, because they go up every year, 2%, 4%, 5%, 6%. But what you end up getting is a bigger yawning gap between list prices and the net prices that the insurers pay. And therefore, what actually happens is that the net price continues to fall, and at least stay stable. And that's what we see all the time, and I don't think that's going to be any surprise in the obesity market at all for those drugs to follow the same pattern.
Yeah, I mean, you have to wonder if R&D will eventually be affected if this continues. Lilly up 6% year to date, so we'll see how it fares in today's session. Thank you to Sam Fazeli of Bloomberg Intelligence. Coming up, more earnings and a Trump-Zelensky meeting in your day ahead. We'll get you prepped. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. So look out for earnings before the bell from so many regional banks, including Fifth Third, Regions Financial, Comerica, Truist, Huntington. Those calls will be scoured for comments. Then President Trump will greet President Zelensky at the White House at 11 a.m. Eastern before a bilateral. And today we're going to hear from St. Louis Fed President Alberto Musalem. That's at 12 p.m. Eastern. Let's take a look at some movers before the bell now. So we obviously have those regional banks sparking credit fears, extending their decline today. Zion's down by 1%, also bleeding into the bigger banks. Baird, though, has just raised its rating for Zion's to outperform after the steep sell-off, so that will give you a clue. The market jitters also dragging down big banks, as I say, with Bank of America down 1.6%, even after great earnings from all of the mega banks earlier on. Oracle down another 3.6% after a volatile 12 hours following earnings. It reassured investors on margins and even profitability, but shares fell as the firm discussed its 5-year financial outlook. And it is Friday. We are a little nervous going into today, but we have futures down by more than 1%. The Bloomberg Dollar Index looks to be unchanged, but we have the euro back above 117, the yen back below 150. It's the yield space that we'll be watching for most of the day. The 10-year yield at 3.95. The 2-year yield dropped precipitously at a 3-year low before it came back up a couple of basis points. Well, that's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
Estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We've got this extraordinary stock market.
The U.S. capital market is the most liquid of the world.
This has been an earnings-driven market.
We've heard about all the AI infrastructure investment, and that's continuing to drive earnings.
I don't think we're in a bubble. And if we are, it's so early stage.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, spooked by credit. Equity markets heading towards a second straight day of losses as two regional lenders are fueling fears about a turn in credit, driving investors into bonds, taking yields down to new lows for 2025. A touch of drama heading into the weekend.
There's a lot more concern now what's going on in the credit market. Or it's concerns, it's cracks, or as Jamie Dimon said earlier this week, Jonathan, it could be cockroaches. Are we seeing more of these? Now, normally we wouldn't talk about these smaller regional players during especially big banks' earnings week, but the fact of the matter is they were victims, saying they're victims of fraud on loans to funds that invest in distressed commercial mortgages. And there's concern now that potentially, as Jamie Dimon said, when there's one, is there going to be more?
As you often hear from credit investors over the years, the worst of loans are made in the best of times. That's why people are nervous. We've had the best of times for quite a while. This just came from David George of Baird, an analyst on some of these names, taking advantage of today's weakness in the bank group and upgrading Zion to outperform. Why? He says market participants are fighting the last crisis. A $1 billion cap decline over a $50 million loss seems a bit excessive. People are spooked because of the events over the last month.
And at the same time, you do have stock market at an all-time record. We continuously are trading around this record high. So is this an excuse, a moment to potentially take money off the table? Because you are concerned. There is a wall of worry. We have been discussing for weeks what is going on in the world, in the macro environment. The credit market could be the reason why individuals are saying maybe it's time to hit pause.
If you are just joining us, welcome to the program. Equity futures down by more than 1% on the S&P 500. That bid into bonds has been pretty consistent over the last week. It's a drop below 4 on 10s, sub 4% on a 10-year government bond yield, and new lows for 2025. Coming up this hour, we'll catch up with Matt Miskin of John Hancock as equities are tumbling on new credit concerns. Ian Harnett of Absolute Strategy Research seeing signs of an AI bubble, and Chris McGrassie of KBW as two regional banks shake investor confidence. We begin this hour with stocks sliding and the 10-year bond yield falling below 4% as more credit cockroaches are seemingly uncovered. Matt Miskin of John Hancock writing, bond yields are living on the brink. If yields fall, income opportunities that we've been talking about for years will vanish. Matt joins us now for more. Matt, welcome to the program, buddy. Before we get into the bond market, let's talk about what sparked the recent move in the last 24 hours, credit jitters. Matt, how justified are those concerns this morning?
We're going to just have to see. I'm looking at high yield spreads, John, this morning. I'm not seeing that much credit concerns. High yield spreads are still under 3% here. So broadly speaking, the markets are holding up okay. But it's almost like you're a mechanic here and you're opening up the hood and you got to see what's underneath it. And it's hard to do because it's not that transparent. In general, though, as you two have just brought out in terms of opening up the show, markets were priced for perfection. You know, we're still at 22.5 PE on the S&P 500 near all-time highs. High yield spreads are still tight. We just had a massive rally. In our view, you wanted to manage risk. You wanted to prune some of the winners. Income is still available, but it is moving away fast. We want to make sure we've got that in the portfolio and move up in quality.
So let's just stay on the credit story, Matt, just for a few more beats. There's obviously concern about the credit cycle turning, but when you look at non-performing loans, net charge-offs at the banks, there doesn't appear to be much to worry about. In fact, the banks, the big players at least so far this week, have absolutely crushed estimates. But Matt, you've got these big flashy headlines, Tricolor, First Brands. Is there anything more than that catches your eye?
Yeah, more broadly, the macro has been weakening for months. And, we've been talking about this. The jobs data is getting weaker. We've had housing slumping. We've had, some of the business surveys have been weaker, and it's all over the place. So in our view, the macro has been signaling to you that the underlying economy has been weakening, and yet asset prices haven't reflected that at all. So what we're looking at is more of a realization that the underlying economy isn't as strong as the markets had been reflecting. In our view, that's a dose of reality that's probably good. I think about got milk. Well, it's got bonds right now, high quality ones in nature. In our view, they've been underappreciated for much of this year. Pound for pound, they're up about 7-8% with much lower volatility than equities. Not a bad place to be right now.
So, Matt, when you say bonds, what are you actually talking about specifically? Are you talking about treasuries or something else?
Yeah, treasuries are a part of that. MBS, investment-grade corporates. Investment-grade corporates is our new high yields in terms of how much credit risk we're willing to look at, but also municipal bonds. This is a kind of a sleepy part of the market for U.S. investors, but tax-free municipal bonds are actually, on a tax-equivalent basis, giving you almost high-yield type income. To us, that's a really attractive place to be, too.
Matt, does this remind you a little bit of what happened in 2023 when it comes to Silicon Valley Bank?
It's a start, yeah. The shoot first, ask later type market response is definitely reminiscent. It's bringing back flashbacks of that period. The difference between now and then, the Fed was hiking back then. The 2-year yield sniffed it out just like it's sniffing it out now, but the 10-year yield back then was about 3.4%. So just to put it in perspective, that's how much more we could see a drop in the 10-year just pricing this in. Now then, the Fed also stepped in. So we've got a Fed that's all over the place. Just yesterday, the last 24 hours, it's even more bifurcated on Fed messaging. You had Waller saying one thing, Moran saying another. And so you've got to get the Fed to start signaling that they would be a backstop, in my view, to start to heal this kind of regional bank stress. But with a Fed that's really diverging in outlook, it's going to be hard to get them all on the same page.
Well, they're not diverging in terms of what they expect at the end of the month, which is a rate cut.
Yeah, after that, though, what's next? Waller's saying basically yesterday, we might need to take a break after that. Moran's saying we should do 50 basis points. So, obviously there's different perspectives there. But it's what next, and the signals. If the 2-year yield is telling you, the 2-year yield just broke 3.5%, and I just keep going back to, if you want to have a Fed view, talk to the 2-year. The 2-year yield is the best crystal ball on Fed policy, and it just told you that the Fed's going to have to act more aggressively on cutting than it did before this week.
339 at the moment, which is quite a rally considering where we were only a few months ago discussing what the Fed could or couldn't do. We're down 3 basis points on a session so far. Matt, this move more recently, though, is about credit and risk aversion, driving people away from equities into bonds. When you look at the broader economy, and this is the conversation we had with Governor Waller yesterday, the broader economy seems to be okay. The one standout, in fact, some people might say the outlier, is this massive step down in payrolls. And Governor Waller himself will acknowledge it's kind of strange that you've seen this massive step down in payrolls, employment, and at the same time retail sales has held up. Matt, how do you think that's going to resolve itself in the coming quarter?
Yeah, Halloween's coming up here, and I think about basically the Fed has an eye patch on right now. They're going to get part of their mandate data with the CPI just because they want to open it up for the COLA reassessment, but they're not getting much jobs data. The NFP is not going to be there because of the government shutdown. So they're almost half, they've only got one eye really to look at this. I'm looking at Indeed job opening data. It's on the Fred website if you ever want to nerd out and watch some economic charts with me. That keeps going down. This website, this other source called LinkUp, provides data on job openings. That actually just showed September job openings were moved down. Basically, companies are starting to move job openings off. And to me, that's just showing more weakness in the jobs data. I think the Fed is underappreciating this. You go back over history, negative NFPs or jobs reports are very infrequent. Most of them happen in recessions. The only time that we saw it not in a recession was 1996. So either you need the markets to keep going like this, and just to put this in perspective, John, consumer net worth is $170 trillion. All right, the economy is 30 trillion. Basically, the markets and the wealth effect of the markets is overpowering the economy. That's what matters. And if you get jitters in these markets that show a negative wealth effect translate into the economy, I think that's going to spell more weakness on top of the already weak jobs data. And to us, that means the Fed's going to have to cut more than they expect.
So what does that mean, Matt? So right now, Fed funds has a 4 handle. What do you think it's going to look like 12 months from now?
I think it could be sub 3%. And if you're down to 3, and this is a global phenomenon, look at the European 2-year yield. It just rolled over after being in a nice uptrend. In the end of all this, excuse me, but basically, we could go all the way almost back to zero interest rate policy. We haven't even gotten to the hard part yet.
Hold up, Matt. Pause. You think we can go back to zero?
We haven't even gotten to a recession yet or any real liquidity event. High yield spreads are still tight. The market's near all-time highs. This is not yet the real troubling part of the market. When we get there, I think the Fed's going to have to cut more than the markets think. I think it's going to be a global phenomenon. And I think you could need to go back there. The government doesn't have the ability to provide fiscal stimulus like last cycles because they're so tapped out. They've already done so much. So the government's going to say, look, we can't provide the stimulus we used to. Federal Reserve, it's on you to get us out of this. And I think that's going to make them have to cut more than they typically have to and maybe even reach the lower bound.
Matt, appreciate it, sir. Matt Miskin of John Hancock. Everyone's entitled to an opinion. If he's right, Governor Myron has got some company.
Governor Myron might have some company, and potentially Governor Myron could do that at the end of the month when he sits down with his colleagues and explain his point of view. But I don't think Waller was saying they can't go there. The quote from Waller is, you don't want to make a mistake. You want to be cautious and you want to be careful. So why not do 25 and then recalibrate and see where the economy is? And also, maybe we'll get some government data.
This market recalibrating, bond yields down on a 10-year maturity, now about 3.96 at the front end of the curve. Two's down 3.39. Let's get you an update on news worldwide with your Bloomberg Brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Good morning, John. Yes, back to those regionals. The S&P Regional Banks Index suffering its worst day since April after Zions Bancorp and Western Alliance said they were victims of suspected fraud on loans tied to distressed property funds. 74 of the biggest U.S. banks shed more than $100 billion in market value. The White House is poised to deliver a major win for automakers, easing tariffs after months of lobbying by Ford and GM. The Commerce Department is expected to announce a 5-year extension of an agreement that allows car makers to reduce duties on imported parts. It's a key offset to Trump's record-level auto tariffs. President Donald Trump's former national security advisor, John Bolton, has been indicted over allegedly mishandling classified documents. Bolton was charged with 18 counts by a federal grand jury in Maryland. He served for more than a year in Donald Trump's first administration, but then became an outspoken critic of the president. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the program, bringing Russia to the table.
I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. We hope we're going to get it stopped.
That conversation up next with the former White House Deputy National Security Advisor, Victoria Coates, from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Two names at a moment in the pre-market shaping up as follows. Zions down 1%. Western Alliance down by 1.5%. These so-called one-off credit events are starting to add up. These two banks disclosing a $50 million charge-off. That was Zions yesterday. Western Alliance also revealing some negative exposure to potential fraud. This is a conversation that builds after the events of the last few weeks, including Tricolor and First Brands. And it's dragging down the big players as well. Check this out in the pre-market. The likes of JP Morgan down by 1.5% also. This after a week of fantastic earnings from all the banks on Wall Street. Beats across the board. Citi's down by 2% on the session. That risk aversion reflected in the broader index as well, on the S&P 500 down here by 1%, on the Nasdaq 100 down by 1.3%. Also captured in the bond market, 10s sub 4%. Twos, sub 340. We're down 4 basis points at the front end, 338. One guest already. It's just amazing how quickly the tide turns. One guest already on this program talking about the potential of taking rates down to zero. Steady on. That's a major call from John Hancock a little bit earlier this morning. Check that interview out with Matt Miskin on Bloomberg.com and on the Bloomberg terminal. Under surveillance this morning, let's talk about foreign policy, bringing Russia to the table.
I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call. I mean, we have a problem. They don't get along too well, those two. We hope we're going to get it stopped.
So here's the latest this morning. President Donald Trump meeting with the Ukrainian leader later on today and planning to meet with the Russian leader in the coming weeks. For an update, Bloomberg's Jack Fitzpatrick joins us now for more. Jack, we had a feeling after the big event in the Middle East earlier this week that this would be the next big effort. How are things shaping up?
Yeah, there's a lot of expectation among both sides, or all sides, I should say, that the developments in the Middle East have enabled the Trump administration to shift its focus to potentially take a different direction on the Russia-Ukraine war. Both Russia and Ukraine were hoping that could play to their advantage. We're still finding out whether this latest development, setting another meeting with Putin, is a reversal to President Trump's original position, trying to seek a friendly relation with Putin and call off the pressure campaign against him. I think we'll learn a lot more because there is the meeting today, this afternoon, in the White House with President Zelensky, who likely has learned some lessons from his last Oval Office meeting. You can't pressure Trump too much to come to your aid, but Zelensky, I'm sure, will try to suss out exactly what Trump's position, exactly how much he's changing. Lately, he's been much more favorable to Zelensky and more pressure, focused on pressuring Putin, but we'll see how much of a reversal that is, and we've got a couple weeks of planning for this Budapest meeting to figure out exactly what Trump's position is.
Jack, given the apparent success of the president in the Middle East, is there a sense that the president's now operating from a position of increased strength?
Yes, that seems to at least be his interpretation and the expectation of President Trump, that he's gotten one thing more or less off his plate and can focus on Russia and Ukraine if that's where he wants to put his focus. The president is someone who operates on a sense of what victories have I had, operating from a position of strength, getting momentum off of what he sees as a win. He's feeling good about what he's done in the Middle East. And I think, again, that raises questions about what direction he takes this with regard to Russia and Ukraine. But he's looking to make decisive moves on that front.
Hey, Jack, appreciate the update. Thank you, sir. Jack Fitzpatrick of Bloomberg down in Washington, D.C. To extend the conversation, the former Trump Deputy National Security Advisor Victoria Coase joins us now for more. Victoria, welcome to the program. We have an anti-war president who's not afraid of using hard power to try and de-escalate things. That's put him in a position of strength in a place like the Middle East. Can we leverage that success in that region and apply it to this war in Ukraine?
Well, good morning. Yes, I think we can. And certainly what was demonstrated by President Trump last week, bringing together all of those heads of state, not just from the Middle East, but from Europe, from countries like Pakistan, from Indonesia, together to get to progress on the Middle East. And we saw the hostages come out of Gaza. Nobody thought that was possible. And I don't see anyone, not Vladimir Putin, not Chairman Xi of China, performing that way on the world stage in terms of diplomacy, in terms of progress towards peace. So I think that does build momentum for him. Obviously, the Ukraine problem set has been intractable. He has said repeatedly he thought that was going to be easy. It's turned out to be the hardest. But progress in this phone call with President Putin, in the decision to meet in Budapest in coming weeks, hopefully we can get towards a resolution.
How does the president cajole Putin to the table? What carrots could the U.S. offer?
Well, I don't know that it's so much carrots. What I heard also in his remarks yesterday, which caught my attention, is the assertion that India is going to start to reduce their purchases of Russian oil. India is now the second largest purchaser of Russian oil. And in the first Trump term, the Indian purchases of Russian oil were very small, maybe 5% of their imports. Now it's up over 40% from the most recent estimates. So that's a massive amount of income for Putin. That's keeping this war machine going. And the president said yesterday that he talked to Prime Minister Modi. Modi said he was going to reduce them. There are reports that our brand new ambassador to India, Sergio Gore, who's known to be very close to the president, has met with the prime minister and discussed this. If we can get the Indians to reduce those imports the way we did with them in the first term when they were importing so much Iranian oil, that's a big stick, not a carrot, for Putin. That may be what's actually going to bring him to the table.
Another big stick potentially is sending Tomahawks to Ukraine. There's going to be a weapons discussion today in the Oval Office. What do you think the outcome is going to be, Victoria?
Well, we'll see. I mean, that would be a big step. The Tomahawks obviously can strike much deeper into Russia, potentially hit the launchers that the Russians are using to attack Ukraine. It's going to be up to the President, Secretary of War Hegseth, if they decide that is a good strategic move for the United States. I mean, the problem is that while we do have a significant stockpile of Tomahawks, they're not limitless. They're expensive. They take a while to make. And so we have to be very careful to balance what we're giving to Ukraine with what we might need in the Pacific in the event of a conflict potentially with China.
Yeah, they cost nearly $2 million. If the president was to offer these Tomahawks, what do you think the signal would be from Russia regarding this?
Well, for Russia, I mean, this would be, a major step and a potential escalation. But bear in mind, Russia has also been escalating in Europe. They've been sending drones, even MiGs, over some of our NATO allies, Estonia, Poland. So they've been pushing at the boundaries as well. And so for the president, that'll be a strategic decision. Does he want to push back on Putin the way he pushed back on Iran with the B-2 strike in the spring, when they had just kind of dragged that diplomatic situation out to the point that he didn't think there was a diplomatic option on the table? And he has given Putin every diplomatic opportunity to come to a resolution of this war. It's going to be when he makes the decision Putin is just being obstreperous, he's not going to come to the table, does he want to take that next step, which would be the tomahawks?
Victoria, you've worked with the president. Could you share with us his approach to moments like this? Because it's often said that typically when heads of state get together, 99% of the work has been done by diplomats. Heads of state sit down, sign a deal. But with the president, it's often described that he approaches these moments almost on the fly, that nothing's been agreed. He wants to see the person face to face. What's your experience of how it actually goes down?
Well, that's not entirely accurate. There is going to be, there are going to be rather a series of meetings this week between top-level diplomats. I expect Secretary Rubio, Steve Witkoff will get together with Russian counterparts, discuss where they are in their calculus. This will give the president some context for where Putin's head is when he goes to Budapest. And then, but at the same time, I do think you're correct. He does try to go in without a lot of kind of preconceived parameters. He wants to see what's possible. He has an incredibly strong nose for people. He can just kind of figure out where they are, what might be done. And he's said over and over again, he wants to end the killing. He wants to end this grinding, horrible war. And so if there is a path there, if Putin is feeling the economic pain, if he's concerned about the situation with India, maybe there is an opportunity that there wasn't when they met in August in Alaska.
Victoria, appreciate your time on the program today and your experience. Thank you. The former White House Deputy National Security Advisor, Victoria Coates, hopeful Budapest can be different to the Alaska that you experienced on the ground.
Right, and Alaska was really what you're describing in terms of the president taking this starting gun approach. I'm going to meet leader to leader first, then the diplomatic work can trickle down. There will be Secretary Rubio heading over, but the president wants to sit face-to-face with Putin. After today, he sits face-to-face with Zelensky and really debriefs him on this phone call. We just heard from the Kremlin that Putin got off the phone with Viktor Orban. Potentially, are we seeing contours of a group of these leaders getting together? Because really for this war to end, it needs to be a trilateral. You have to have Putin, Zelensky, and Trump in a room.
That's the latest on foreign policy. If you're just joining us, of course, an additional focus on what's happening with the regional banks. We're getting some earnings this morning. This coming from Comerica. Net charge-offs, $32 million. The estimate, $28.6 million. Nothing too scary about that number right there. Net interest income was a beat, $574. The estimate was $569.3 million. We get a range of earnings from regional bank lenders in this country throughout this morning. A lot of focus on that, given what happened with Zions and Western Alliance yesterday, and the kind of moves it triggered in the broader market. Some negative follow-through this morning. Futures down by 1% on the S&P. Up next on the show, we'll catch up with Ian Harnett of Absolute Strategy Research on another massive AI deal, adding to bubble concerns. Plus, Danny is back. She's got your morning movers with growing credit fears, sending bank stocks lower.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
I know it doesn't feel like it, but coming into Friday, actually heading towards a week of gains. We've just had these massive swings. Another 1 percentage point swing in yesterday's session, and this morning, we're down across the board, threatening to take out those gains. We're down by 1% on the S&P. On the Nasdaq, we're down by 1.3. In the bond market, at the front end of the curve, a move of more than 10 basis points so far this week, 4 of which come this morning. 338 on twos, new lows for 2025 across the board, potentially here. 10s at 394.76 and down 3 basis points on a session. And if you want to rally a bigger one, check this out. In the gold market, a 6th consecutive day of gains, up 1/3 of 1%, heading towards a 9th straight weekly advance for gold. The longest weekly winning streak going back to 2020, and this week higher by 8%.
And you can see why, right? You have loan blow-ups in the United States that everyone is looking at whether or not this is idiosyncratic and independent, or potentially is it more systemic? Are we going to see more cracks, more cockroaches? At the same time, what is going on in the macro environment? The two biggest economies right now are at loggerheads, trading hot rhetoric, and yet we do not know what the end game is going to be when the president sits down with Xi Jinping. We think there's going to be an off-ramp, but we don't have that just yet. So this is why. Where else are you going to go? It's a haven trade.
43.37 on gold so far this morning. That story just keeps on moving and moving higher. From New York, welcome to the program. That's the cross-asset setup. Let's get you some single names in the pre-market, some morning movers. Here's Danny. Hey, Danny.
Hey, John. Has another little critter or two scurried out from underneath the fridge. This morning, the sell-off continues in Zions and Western Alliance, both those regional banks earlier this week, taking a $50 and $100 million write-off, respectively, tied to loans gone bad. This was regarding a distressed real estate developer, but it has echoes of Tricolor, of First Brands, of alleged allegations of fraud, of collateral that maybe wasn't there. And Anne-Marie, as you put it, the question is going to be, are these cockroaches or are they termites that have chewed through the foundation? But we are selling first and maybe deciding on those questions later, because you're also looking at the big banks taking an even harder hit this morning, whether it be Bank of America, Citi, Wells Fargo, all of them down at least 1%, nearing 2% for both Bank of America and Citi, despite the fact that they reported earnings that had better credit quality than quarters past. It's not just the big banks, it's also private capital firms that are being hit hard this morning too, those that have big private credit operations. KKR down 2.5%, Ares down 1.6%, Apollo down 2.4%. Of course, all of these and a lot of private credit managers have been very vocal. We are not the cockroach. The banks are the cockroaches, including my conversation with Blue Owl earlier this week. But even so, all the financial services sector is taking a hit, John.
Danny, thank you. Thanks for the update. More from Danny in the next hour. More earnings for you. These come from Fifth Third. Fifth Third, of course, in the news more recently for taking out Comerica. Interested in net interest income, that comes in at $1.53 billion. The estimate was $1.52. Provision for credit losses, a number that's going to take an increased importance, of course, given the events of the last 24 hours. $197 million, the estimate was $2 39. We'll keep tracking that story for you throughout this morning. On our radar this morning, our top story, regional bank stocks sinking with credit concerns weighing on global equities. The slide following Zions and Western Alliance reporting fraud on loans tied to distressed commercial mortgages. Those names again, just slightly so far this morning. Elsewhere, a major relief for the auto industry. Sources telling us here at Bloomberg, the White House is aiming to grant car makers a 5-year extension on tariff relief for imported parts. A big win for the likes of Ford and GM after months of lobbying. And finally, the White House teasing another summit between President Trump and the Russian leader. The news coming after a 2-hour phone call between both of them. President Trump is set to meet with Ukrainian President Volodymyr Zelensky later on today.
And then in 2 weeks, he says, or about 2 weeks, is going to be sitting down with President Putin. At the same time, the Kremlin just came out and said Putin just spoke to Viktor Orban, where the president is going to be meeting Putin in Budapest. So behind the scenes, there's a lot of work and momentum potentially driving ahead to try to put an end to this war. Even Democrats this morning, Jonathan, Rahm Emanuel in the Wall Street Journal talking about after success in Gaza, Mr. Trump standing on the global stage has never been higher. Some of them are saying, though, do more. That sanctions package that's been lingering in Congress, put that forward. Send Ukraine the Tomahawks. Give them everything they need to defeat Putin. At this moment, the president has been 2 steps forward, almost 1 step back when it comes to trying to cajole him to the table.
We talked to Victoria Coates just moments ago. She'd worked alongside the president years back, and we talked about the increased leverage he might have given the success in the Middle East. It's an anti-war president who's not afraid of using hard power. I think it's important to talk about this. If he doesn't have success at a Budapest meeting, if it looks like something that we saw in Alaska, what's the next step for the president and this White House?
I think he starts to rearm Ukraine in a bigger way. Those Tomahawks, maybe they're on the table today for discussion. Maybe they don't get delivered. But if this meeting fails, potentially he doubles down on backing Zelensky. Remember, this entire year, February 28th, that meeting in the White House between Putin and Zelensky, I was at the White House. That was a massive blow-up. Then in August, Zelensky came back, and you saw a much warmer approach between these two men. And even the president coming out and saying things like, I see where he's going, I see his side. So potentially, you're going to see him really double down on backing Zelensky if this Budapest meeting falls.
Look out for that meeting later on today between the Ukrainian leader and the President of the United States, Donald Trump. Let's turn to tech. Sources telling us here at Bloomberg that Meta and Blue Whale are set to seal a $30 billion private capital deal for an AI data center in Louisiana. Ian Harnett of Absolute Strategy writing in the Financial Times recently, the AI bubble looks to be approaching its endgame. But history shows that a bust triggered by this overinvestment may hold the key to the positive long-run potential of AI. Ian joins us now for more. Ian, welcome back, sir. Been trying to make this happen for a while, so appreciate your patience.
Yes, we have, Jonathan.
Let's get to this story. Why do you think we're approaching a so-called endgame?
So I think, if you look at what's been happening in the AI stocks, we've got all the classic symptoms of, a bubble. I do think it is a bubble. We've outperformed since 2016. The FANGs Plus index has outperformed the global stock market 6-fold over. The TMT bubble only saw a 5-fold increase, Jonathan. We've got exponential share prices. Companies are using those share prices to do deals with each other. They're buying each other's goods, and they're even lending each other money to do so, that vendor financing. So the key final element of any bubble is always this overbuild of capex, and that's really the bit that we're seeing now. And I think, it doesn't mean that the AI bubble is going to stop tomorrow, or maybe not even 6 months' time, but the end game is definitely coming in place here.
So, Ian, when you compare this moment to what happened in the late 90s, and you think about the companies central to this moment versus then, the companies now have incredibly strong balance sheets. When you say endgame, I'm sitting here thinking maybe this can go on for a whole lot longer than people realize.
So, Jonathan, the thing that we always try to remind our clients at Absolute Strategy is that, the theme may be structural, and the companies that are winners will probably be the winners in the future. But 2 things to bear in mind. First of all, the companies that are the winners in the digital age today, Microsoft, Amazon, Oracle, Apple, they all lost between 65% and 95% in the tech blow-up. And Microsoft took 16 years to get back to its 2000 level. So there's a price for everything. The second point is the structural story, the theme. It's going to stay there. It's going to be there. AI is going to be. But the problem is that your clients need to have the cash flow. So the theme can be structural, but in the end of the day, the economy and the clients of the AI businesses are going to be cyclical, and that means that somebody's going to run out of cash at some point. So cash flow is absolutely key here.
Ian, you also talk about how tech busts have more negative economic impact when it's funded by debt rather than equity. Can you explain what potentially that can look like if this bubble bursts?
Well, I think that, if you look at the scale of the bust that we saw around the GFC and the debt, losses that were imposed there, debt deleveraging is a very damaging process. Equity bubbles, as we saw in 1987, 1998 with LTCM, you can probably recover from those relatively quickly. And even the tech blow-up, you did come back from that relatively quickly. So the economic cost, I think, tends to be less. But the dangerous lesson from history is that if you are the equity holders funding this kind of accelerated CapEx build-out that takes place when people get crowded into these bubble themes, you typically lose around about 70 to 80% of your capital. So, funding this via equity rather than running, just as Jonathan was saying, if these companies were only using their own cash, then that would be great. But they are using other people's money as well.
Ian, I wonder what GDP would look like. If you look at GDP at the moment, just how dependent are we on that CapEx story already?
Yeah, we're very, and this is something that our chief economist, Dominic White, has been highlighting to clients as well, that, almost half the growth in the US economy so far this year has actually come from this AI-related CapEx. So it's almost as large as total US consumption spending. So this is the first time we've really seen that scale of CapEx driving GDP growth like this. So, yeah, you'd be in a very different situation, I think, Jonathan, if we didn't have this. And this is one thing why we should celebrate this kind of bubble, why we should celebrate this kind of CapEx. But, recognize that it doesn't go on forever, and, there are limits to how strong you can see this performance go on for and how long it can last as well, typically.
So, Ian, just finally, this is your framework for thinking about a pretty important moment and a major transition. What's your approach? What are you advocating for in financial markets, given everything you've just said?
Well, at the moment, we're still overweight equities, partly because you're seeing an administration that wants to cut interest rates into double-digit earnings growth. Historically, that has been very positive indeed. But what we're saying is watch out for those early warning signs. Watch out for nominal growth, nominal earnings, but most importantly, Jonathan, nominal cash flows. When those start going down, and particularly the cash flows of the people that are buying the AI services, then that's the point at which you want to be thinking, well, maybe I want to be in something else rather than some of those tech stocks and some of those highly geared plays in the equity market.
Ian, appreciate your time. It's good to see you again. It's been far too long. Thank you, sir. Ian Harnett there of Absolute Strategy Research on the equity market. Equity futures this morning down by about 0.9%. We've got a lot of news flow to deal with. Let's get your top stories in your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Well, the U.S. government shutdown is in its 17th day with no end in sight. Senate Majority Leader John Thune is trying to entice Democrats to support reopening the government by promising a vote on Affordable Care Act subsidies once the shutdown is over. So far, the offer has not been enough to get the needed 5 Democrats to pass the GOP-led stopgap funding bill. The consortium buying video game maker EA is set to add more than a dozen banks to its underwriting group. This comes after JP Morgan put up $20 billion of debt to bankroll the leveraged buyout. Around 15 banks are likely to join the underwriting group, with some taking around 10% of the deal apiece, while JP Morgan will keep around 40%. IKEA is boosting its U.S. production after President Trump imposed tariffs on furniture and kitchen cabinets. The retailer currently produces around 15% of products domestically. IKEA plans to invest $2.2 billion in new stores and production facilities. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the program, complacency turning to concern.
The problem is investors have been used to this environment of low volatility. The volatility, the price discovery in the market is being suppressed for a very long time, and investors have misallocated capital to vehicles that don't have mark-to-market.
That conversation up next with Chris McGratty of KPW from New York City. You're watching Bloomberg TV.
in case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs,
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Equity futures on the S&P 500 down by 0.9%. A bit of tension building in the last 24 hours regarding credit and credit risk. The Nasdaq 100 also participating in the downward move, down by 1%, and the underperformance from the smaller players, the small caps this morning, down by 1.25%. And the surveillance this morning, complacency turning to concern.
We're at a 30-year tide in credit spreads, and this has been fueled by monetary liquidity and fiscal spending. The problem is investors have been used to this environment of low volatility. The volatility, the price discovery in the market is being suppressed for a very long time, and investors have misallocated capital to vehicles that don't have mark-to-market. We believe there's going to be more pain in the coming quarters.
So here's the latest this morning. Credit fears growing on Wall Street. Zions, Western Alliance, both disclosing loan fraud losses, sending regional bank shares plummeting and triggering fear across Wall Street. Herman Chan of Bloomberg Intelligence joins us now for more. Herman, welcome to the program. Just in very simple terms, what did we learn yesterday from these two banks?
We learned that there was a couple of loans that the two banks in question had exposure to, but should be fairly small, relatively small losses, and the contagion fears seem to be a bit unwarranted given the fact that we've seen a slew of regional banks report this morning, and we've had regional banks report over the past couple of days that showed credit quality is really stable and solid. So there's a lot of fear in the marketplace given the fraud issues that are really hard to screen for. So that's really driving the anxiety today.
David George of RW Baird said something similar, Herman. He said, to take advantage of today's weakness in the bank group, and he upgrades Zion to outperform. Says market participants are fighting the last crisis. $1 billion market cap decline, over $50 million in losses seems a bit excessive. Herman, can you comment on that? Fighting the last crisis. Are we more spooked by this because of what happened in the past few years?
I think so. I think the scars from the SVB issue and the other banks that failed really are on top of mind today. But I think this is a different issue, right? This is a credit issue, not a liquidity and deposit flight issue. And the banks have really strong capital that they've built up since the SVB crisis. And we think that these issues are a bit more one-off in nature that can be readily absorbed. Nonetheless, the contagion fears have affected the marketplace today.
Herman, thank you. Herman Chan. That fear continues. Thank you very much. Chris McGratty of KBW writing the following. The market is becoming increasingly concerned about credit quality with now 3 prominent bankruptcies shaking investor confidence. Chris joins us now for more. Chris, welcome to the program. Before we get to these flashy headlines, Chris, can we spend some time just focusing on the details, the work that you do? When you look at a company, a bank like Zions, net charge-offs, non-performing loans, how good is the credit quality at that bank?
Well, Zion's balance sheet's in a great spot, right? They had an unfortunate credit announcement this week. But if you look at the balance sheet more comprehensively, non-performing assets are 1% of total assets. So we're off very low levels. Now, this normalization process that we're talking about, we're coming off of multi-year lows. And so that process can be painful when you see losses like this. But if you think about the capital position of the company, the credit quality of their portfolio, we think they're in a great spot. And more broadly, we think the industry is in a really good spot.
So, Chris, why do you think these more flashy headlines in the last 24 hours have spooked people to such a degree when you're able to break down the strength that you see elsewhere in the majority of the bank?
Right. The market sells first and asks questions and figures it out later, right? We saw that during 2023. This is completely different, right? So bank balance sheets are in a great spot. The market just doesn't like uncertainty. And so we've done a lot of work on the theme of consistency. The market loves consistency. If you look at the large banks, the earnings they've reported this week, they've been excellent. JP Morgan, Morgan Stanley, these companies, Wells Fargo, the ROEs of these companies are high teens, and they're very consistent. And so what our conversations have been with investors is let's stay up cap. Let's during this period of volatility, let's hide out in banks that have the ability to diversify the earnings through the capital markets. And over time, we're going to get opportunities in the mid caps.
So, Chris, this is an important conversation. Where do you hide out? That really is going to be led by where is the risk. Chris, where do you think the risk is when we're talking about Tricolor, when we talk about First Brands, the events of yesterday? If there is a credit cycle turning, where do you think that risk lies?
Well, I think the common denominator in all three of these prominent credit incidences has been private credit. So private credit's been a really fast-growing asset class for the last decade. The bank's balance sheets, again, some of the effects of deregulation and regulation since the financial crisis has been pushing risk to the non-traditional banks. So there is a dynamic between banks and non-banks and who holds the credit risk. But overall, I think we need to bring it back. Underwriting has been very good. Yes, credit spreads are low, and yes, we are seeing these headline losses. But the industry has made tremendous strides improving the credit quality.
Chris, a lot of people are talking about how this is deja vu to the Silicon Valley bank collapse in 2023. Is it similar in your view?
I mean, the stock moves are, symbolic of it, but this is a completely different situation. That was a liquidity, deposit, uncertainty, volatility, and that was a pretty, volatile period for markets. This is a handful of credits, and again, it all starts, generally cycles start with stuff like this, but this is totally different. Bank balance sheets and credit quality are excellent. Again, I'm going to score that point. Liquidity is something that can happen very quickly. This is not a liquidity event.
Chris, to the extent that one informs the other, I just wonder if, because of what happened last time, faith in management teams was shaken back then. And I wonder, Chris, if that's what's happening now, that there's a lack of faith in management teams because of what happened back then and how those issues were dealt with. Chris, are you saying that lack of faith is misplaced?
Well, I think it's, I think there's confidence in the management teams. I think there's a little bit of uncertainty in just the day-to-day market volatility. So, returns have been pretty good. They're moving directionally higher. The banks have been transparent about where the losses may lie. And so this is a market, I view this as a market uncertainty when you're seeing these headlines come through. But if you kind of zoom out and look at the earnings reports that we've seen over the past week, the returns and the numbers have been very good, right? There's a handful of credits that are destroying confidence temporarily, but that's kind of when you make your money in banks, is when volatility is high.
Chris, in 2023, with the funding crunch, we heard a lot from the Treasury Secretary, regulators came out. Do you expect the same kind of response in this situation?
I don't think we do. I don't think we need a response. I think the numbers speak for themselves thus far this quarter. And again, we are going through, next week will be more of the mid-cap earnings. I would expect general results to be pretty good. I don't think you need intervention every time there's a little bit of a hiccup in the market.
Chris, there is a hiccup. How do you take advantage of it? If you were looking to buy this morning, where would you buy?
Well, look at some of the banks that reported yesterday, right? Citizens Financial reported earlier this week. KeyCorp reported earlier this week. These companies are trading at 7 times earnings, and they're on pace to produce 15, 16, 17 returns on equity, that's a mispriced situation. So you can pick your spots in the regionals, and if you are a little bit more risk averse, but the large cap banks, the universal banks, the ROEs are much higher. They're much more sustainable. You do pay a premium for that. But again, over time, consistency pays.
The numbers this week from the major players just absolutely phenomenal. Chris, appreciate your time. Thanks for joining us. Chris McGratty there of KPW. There is a move from some, particularly in the analyst community, who are looking at these banks on a daily basis to say you should buy some of this weakness. I mentioned David George of RW Baird, and I'm going to share this quote with you, just on the management of Zion. Fundamental trends are solid at that bank. Strong historic underwriting quality should limit further losses. This bank was really shaken yesterday, and it looks at 10-year performance, 2014 to 2024, and says that Zion has averaged net charge-offs of around 0.12% of loans on an annual basis, one of the best in the bank group. Goes on to say, good underwriting relationships and disciplined loan growth over the past few years suggest that lower credit risk from our perspective, creating a buying opportunity following the market reaction of the last 24 hours.
As what Chris just said, this is a hiccup. So you can almost see the end of the day where you see regional and some of the large players actually rally because so many people sold, asked questions later. This morning, they're recalibrating, they're asking questions. They're digging into actually what these banks look like, and they're saying, this is a real buying opportunity. This is idiosyncratic. Chris is there is talking about it's not a liquidity issue the way we had in 2023. So potentially this is the time now to get into the market.
It's funny, it's odd that we just had this week of fantastic earnings from Wall Street, and we're ending it by focusing more on the bad than we are the good. And I understand why. It's been good for a long, long time, and people are worried that maybe some bad loans were made in the good times. I get all of that. But a lot of this comes down to Jamie Dimon of JP Morgan changing the conversation. Coming out and saying there's more cockroaches, that's going to get people feeling very antsy about what's happening.
Exactly. He came out and said, you see one of these, there's got to be more. So now anytime there's a potential hiccup in any of these banks, people are going to start to worry, was this what Jamie Dimon was seeing? Was he foreshadowing this potential, not just idiosyncratic moment, but more systemic risk and contagion? I wonder if he didn't say that, would we be seeing this sort of market reaction across the board? I'm not sure.
He certainly turned the volume up on the conversation, let's put it that way. Western Alliance this morning down by about 2%. Zion's just slightly negative. Coming up on the program, we'll catch up with Liz Ann Saunders of Charles Schwab, the IIF President Tim Adams, Steve Paliuka of Bain Capital, and the Dutch Central Bank Governor. That's all in the second hour of Bloomberg Surveillance. The second hour is up next.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We know that labor demand is cooling.
The weakness of payrolls is ultimately why you're getting rate cuts.
The market, of course, is pricing in a very aggressive path of cuts between now and the end of next year.
The big risk is that the Fed does too much too quickly.
I definitely think there's going to be more discussion around the December meeting.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P negative by 0.8%, off session lows. The Nasdaq still down by 1%. Big moves in the bond market in the last 24 hours. Across the curve, 2s, 10s, 30s. 2s at the very front end of the curve at 340, down 2 basis points on the session. 10s breaking below 4%, a clean break, 396.48 this morning. We're down about a basis point. And these two names responsible really for the price action of the last 24 hours. Western Alliance and Zions. This morning, down marginally by 0.6% on Zions. Western Alliance down by 2.1%. Yesterday, down dramatically.
Shaking investor confidence right now. What's going on and the concerns in the credit market, the fact that these two banks saying they were victims of fraud. But when you hear from Herman and you hear from Chris, you feel like there's going to be a turning point today, because they're saying when you dig deeper into actually the balance sheet of these banks, they're buys. And the banking sector right now is in good condition, even though there are these concerns. And you bring up a great point. Is everyone just focused on the concerns because Jamie Dimon did tell us, look for those concerns?
The concerns are legitimate. I think that the Dimon comments turned the volume up on the story this week. We've been talking about First Brands and what happened with Tricolor for quite a while now. But yes, you're right. In the last 60 minutes, we've heard from a group of people who've said, look at the balance sheets, they're strong. Look at the credit quality, it's strong. But over and over again, there's a worry about a turn in the credit cycle. That's why people are nervous, that we've had good times for a long time, and the worst of loans are made in so-called good times. And is this just the start of more to come?
We heard from John Waldron of Goldman Sachs, and he said the risk of a two-speed economy and that the recent blowups might indicate that those in the lower end of the economy are suffering, and there's been a lot of lending in there. So I also think when you take a step back, this is just indicative of the K-shaped economy we have been talking about for months on end.
As the US session comes online, futures are starting to build on gains. We're still negative on the day, but well off session lows on the S&P 500, down by less than 1%. We're down by 0.75% so far this morning. Coming up this hour, we'll catch up with Lisanne Saunders of Charles Schwab as investors grow wary of credit stress. We'll talk to the IIF President Tim Adams as that worry spreads to global markets. And we'll speak to Steve Paliuka of Bain Capital, with more banks joining the massive EA buyout. We begin this hour with stocks sliding as hidden credit worries intensify. Joining us around the table, Lisanne Saunders of Charles Schwab. Lisanne, good morning. Good morning. Anything to worry about? This is all kind of building up, these one-off events, the fraud at a couple of banks, Tricolor, First Brands. How are you approaching this moment? So I think when you look at now some of the strains in the regional banks, and you think back to the 2023 period, the mini banking crisis, there's been a spread since then that has, again, to the K-shaped aspect, where regional banks are sort of seen as this separate little thing. I think the benefit
to having this happen with Zions and Western Alliance is it occurred during a week where we were getting larger bank earnings. So that provided, I think, the continuation of that bifurcation between the regionals. High-yield credit spreads broadly have been fairly well contained. I think, the CEOs, leaving Jamie Dimon's comments aside, are going to be peppered with questions by analysts to see whether there's an infection here. Wouldn't surprise me if, like was the case in 2023, this leads maybe to a bout of some consolidation and maybe some acquisitions of some of the regional banks.
It's funny, just to stay on theme, that all these comments about private asset managers, we're not talking about Apollo, KKR, or Blackstone. We're talking about Western Alliance, We're talking about Zions, and in fact, we were talking about JP Morgan and their exposure to some of the stories of the last weeks. When you're thinking about, okay, there might be risks, there might be some so-called cockroaches, how do you think about where they are? Where are they, and what do you want to be avoiding?
I think what you want to be mindful of are at the factor level, if you're a stock picker, consider factors like strength of balance sheet and high interest coverage and low debt to equity. I think that's, instead of trying to find where the cockroaches are, maybe provide some protection within portfolios by going up the quality spectrum in areas specifically where they're less likely to have some of these troubles.
Is up in quality and up in market cap the same thing?
No, not necessarily. In fact, I think up in quality is even more important down the cap spectrum. So when you look at the Russell 2000 and you look at the 57% that are profitable, the 41% that are not profitable, by the way, I know that doesn't add up to 100. There's 2% of the Russell that just doesn't have, they don't provide earnings. You can't get data. But the performance on a year-to-date basis of the non-profitable component is about double what it is in the profitable component. So you have seen this bias and retail trader bias down the quality spectrum into the non-profitable areas. You see it in baskets like non-profitable tech as well. I think that's where you want to go up in quality. Again, look for strength of balance sheet, look for actual earnings growth and positive earnings revisions, profit margin stability, and those lower leverage type companies.
So it doesn't mean you just have to stick to the big banks. There's still regionals out there that are good.
Yeah, I think that's the way to think about all sectors. I think it's you have to be careful about taking a monolithic approach to investing at the sector level, at the industry level. And that's why factor-based investing adds so much value, because you can go into that characteristic level and look for opportunities, especially in the midst, or maybe even providing an opportunity when you have sort of babies being thrown out with the bathwater. It gives you an opportunity to sort of pick off some of the higher quality areas.
Why the swift reaction across the board, including even global markets, when it's these idiosyncratic to regional U.S. banks?
Even before this happened, there was some skittishness that you were starting to see in the market, churn under the surface, more rotation, speculation that was moving out of the major indexes. And here's another peripherally good story, is a lot of the speculative fervor has been outside the mega cap tech areas within the market into these micro level baskets. I mean, even the micro caps within the Russell, way down the cap spectrum, were outperforming the index itself. Quantum and drone and meme. And I think there's been this concern about too much speculation in certain pockets, ongoing valuation concern. You had started to just see some agita underneath the surface of the indexes, and then you get a piece of news that sort of exacerbates what I think was already a little bit of a background story even prior to this.
It's a market stacked with contradictions. It's an economy stacked with contradictions too. Governor Waller was in your seat just yesterday, and we were talking about how good employment, or rather how good retail sales was, and how bad employment is. You've got this massive step down in payrolls, but everything else in the economy seems to be okay.
Yeah,
I mean, persist?
Well, the payrolls thing probably has a lot to do with immigration. And everybody is out, all economists are out trying to figure out what the break-even rate of payrolls is. Prior to the compression of immigration, numbers were around, you needed 150,000 payroll jobs a month in order to keep the unemployment rate from rising. I've seen numbers as low as 0. I would say consensus is somewhere in the 50,000 range. So I think we have to take immigration or lack thereof into consideration when looking at payrolls. But I also think there's a size differential too. I think in keeping with the K-shaped, a big difference between the employment outlook, the CapEx outlook, the earnings backdrop down the size spectrum. And that's why one of the things that's interesting that didn't get a lot of press is when we got the second quarter GDP revision. And I know that's very rearview mirror, but so it was a very positive revision. Sure. GDP up from 3.3 to 3.8. Most of that was stronger consumption, but the national income and product accounts version of profits, which is much larger than S&P profits. It covers millions of companies down the size spectrum into S-corps. So it's a much more comprehensive look. After-tax profits based on that measure were revised down into negative territory for Q1 and Q2, relative to 13% or so for the S&P 500. For what it's worth, NIPA-based profits tend to lead S&P profits. There have been divergences that have not resulted in S&P catching down to NIPA-based profits. That happened in 2018. But it does tell you that there is more stress being felt across the spectrum of companies, which maybe you don't pick up when you're just looking at S&P profits. That's not really a proxy for how the country is doing at the business level.
And that suggests that maybe there's some underappreciated risk into 26 from market price for reacceleration. Is that fair?
Yeah, so I think, coming into this quarter, the bar is probably still set sufficiently low, although analysts did more raising of estimates in the lead into the start to third quarter earnings season relative to what they did or did not do in first and second quarter. So there wasn't a commensurate extrapolation of the strong first half into the second half. But that trend has picked up a little bit. And you're right. I think one of the risks in this environment is not that earnings will disappoint in an absolute sense, but you might have some high-profile misses relative to an elevated expectations bar. And I'm almost 40 years doing this, and I'm fond of saying that better or worse matters more than good or bad.
It's true.
It does.
Lizanne, it's good to see you.
Good to see you.
As always, thanks for being here in New York. Lizanne Sanders there of Charles Schwab from New York City. Equity futures are recovering as the session grows older. We're down by just 0.6% now on the S&P. With an update on stories worldwide with your Bloomberg Brief is Vonnie Quinn. Hey, Vonnie.
Hey, John, thanks. Well, let's recap. The KBW Regional Banking Index falling to the lowest levels since August after Zions and Western Alliance said they were victims of suspected fraud on loans tied to distressed property funds. 74 of the biggest U.S. banks shed more than $100 billion in market value in yesterday's session. Shares of Eli Lilly and Novo Nordisk are falling after President Trump said the price of diabetes drug Ozempic could come down to $150 a month. The U.S. list price of Ozempic, which Trump calls the fat loss drug, is roughly $1,000 for a month's supply. Lilly sells similar treatments, including Wegovy and Zepbound. Apple getting ready to launch a touchscreen version of its Mac computers. The new laptops will have displays with OLED technology and a full trackpad and keyboard. The touchscreen Mac Pro is expected to be released in late 2026 or early 2027, with prices likely to be a few $100s more than current versions. So that's your Bloomberg Business Brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next, cracks in credit.
You're starting to see things that feel late cycle, and I would feel quite strongly that we're in the latter innings of a credit cycle. The problem when being in the latter innings, you don't know if you're in the 6th inning or the 9th inning, and no one will ever know until afterwards.
That conversation up next with the IIF President, Tim Adams, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Live from New York, welcome to the program. Check out the equity market. Futures recovering by quite a lot. We're down by just 0.3% now on the S&P. On the Nasdaq, down by 0.5. There was a question earlier this morning about whether the move in banks was overdone. But also, in addition to that, just in the past few moments, the president's been speaking to Fox News earlier on this morning. They've released some of the headlines from that interview. And the headlines suggest, let's just say this, and I know this can go switch and back and forth to heightened tensions, lower tensions, but a more constructive tone coming from the president on tariffs on China ahead of his meeting with the leader at the end of this month.
His hand, Jonathan, is on the knob right now, and he's lowering the temperature. When asked about the 100% tariff threat, he's basically signaling, no, that's not going to stand. He's saying we're going to be fine when it comes to China. He's going to sit down with Xi Jinping. Maybe we do not get the grand bargain deal, and maybe you don't get all of these issues that the United States has with China wrapped up in this one meeting. But it does look like both of these economies are looking potentially for an off-ramp. And the issue really this administration has is the fact that China is making it much harder, much more expensive to get access to rare earths.
That's just helping to support sentiment, those comments. We're down by just 0.3% on the S&P. If you turn from equities to bonds, see the move unwinding there too. 2-year bond yield's now just about unchanged at 342. 10's now up a single basis point, so that's a change as well. 398. On 10 so far this morning. We'll keep tracking that story for you. Under surveillance this morning, the big story in the last 24 hours, cracks in credit.
Equity valuations are very high. Credit spreads are very tight. You're starting to see things that feel late cycle. And I would feel quite strongly that we're in the latter innings of a credit cycle. The problem when being in the latter innings, you don't know if you're in the 6th inning or the 9th inning, and no one will ever know until afterwards. So we're just being a lot more cautious in how we think about credit.
So here's the latest this morning. Traders turning risk off in the last 24 hours on concerns about increasing cracks in the credit market. On that story, Lisa joins us now from Washington with a special guest. Good morning, Lisa.
Good morning, John. It's great to see you and Anne-Marie talking about both credit cracks as well as the trade uncertainty, because it's what's really been dominating the conversations down here in Washington, D.C. I am joined by Tim Adams, who is the head of the IIFF, the Institute for International Finance. You've been going around the world. You've been talking with 1 million people this week. You are exhausted after all of this. How much are cracks in credit markets or some sort of concern about a real kind of credit event? How dominant is that in your conversations?
Well, first of all, thank you for having me on this Friday morning. It's great to be here with you. Actually, not much at all. Most of the conversation here this week in Washington during the bank fund meetings and our own annual meetings is really about bigger issues: geopolitics, U.S.-China relations, AI, technology, stable coins. It really has not come up in a single conversation that we've had this week.
Although on the greed versus fear metric, right, this is sort of going to the same question. Do you get the sense that a lot of CEOs of banks, a lot of finance leaders feel like they might be missing out on profitability still, rather than worried about what they aren't seeing with respect to credit risk, with respect to fraud?
What I have heard are foreign banks coming here this week noting that the U.S. is open for business. In fact, they're a little jealous of the environment, the regulatory environment that's evolving here. And I think Scott Bessent and this administration does a magnificent job of signaling to the financial services industry, we want you here, we want you healthy and profitable. That's really dominating the conversation.
So this isn't really necessarily a feeling that maybe things have gotten a bit too far, that maybe there's this dissonance between really easy financing conditions in the United States, along with not only uncertainty with respect to trade, but also a backdrop of a weakening labor market that has certainly the Fed somewhat concerned.
You know, the perception is the U.S. economy is pretty resilient, and, you know, it's not perfect. There are certainly weaknesses. But given what the C-suites have gone through over the past 9 months, this seems pretty trivial, right? We've gone through a whole year of shock and awe, enormous uncertainty. Where are tariffs going to end up? Where's U.S.-China relations going? That still exists. And I think that dominates the C-suite more than do we see cracks in particular parts of the credit cycle.
We saw this morning, and Anne-Marie was saying that President Trump is turning the dial down when it comes to some of the rhetoric between the U.S. and China and just what's at stake here. We know that the automakers have been very concerned about losing access to rare earth minerals and what that could do to manufacturing. Is there a sense in the C-suite that there is a new normal and that there are certain places that the U.S. and China just will not go, and they can kind of create business around that?
So we're still waiting for the new normal. The old normal's gone. Something new's coming. There will be a new equilibrium at some point, but right now it really is kind of chaotic. But C-suites have gotten used to the chaos, right? Their job is to manage through this, right? Even if you don't know where we're going, you still have to learn how to drive. And I do think there's a perception that despite the animosities that may exist, the dissonance between Beijing and Washington, delinking or uncoupling really isn't pragmatic or practical in the short term.
You sound so optimistic. And I have
it's Friday.
to say, well, it might be Friday, but this morning the discussion is all about what might be emerging, the fact that you could have weakness in the economy, the fact that credit standards have gotten very loose in the United States, that when Wall Street demands a product, when they want income, well, when investors want that, Wall Street will create it for them, even if it means at the risk of lowering some of the credit standards. How do you square this?
I'll take off my optimism.
Okay, well, I'm just curious. How do you square these things?
Look, there's no doubt that we see softness in the labor markets. Corporates are not hiring for a whole host of reasons. That's a challenge. We have a labor supply problem that isn't going away anytime soon, and tariffs are going to work their way through. I know some people in this town say they don't exist, that economists are wrong. They're not wrong. It just hasn't happened in the magnitudes we thought. So there are a lot of challenges to this economy, especially for low-income consumers. But the markets and the wealth effect and high-income consumers are driving this economy, and they're going to keep driving as long as we have buoyant markets. And I don't see that going away in the short term.
How much do international banks, international finance companies right now seek to diversify away from the U.S., keep other channels open and expand them, whether it's Middle East to China, whether it's just Europe to the rest of the world, in a way that feels different to you?
That's a great question. In fact, what I've witnessed over the last 6 months is a great reshuffling of the global economy, a reshuffling of capital flows, trade flows, new relationships. People are getting out of their offices, getting on planes and going to new destinations to create new alliances, new relationships, and new trade deals. The world is not being static. People are looking for opportunities, whether it's in the Gulf or Africa or the ASEAN countries. The world moves on, and it's rewiring itself.
Do you get the sense that there is a shift away from the dollar, in the sense that is beyond just the price of gold, that is beyond just lip service, that is beyond just using derivatives to offset, hedge the risk of some sort of weakening in the dollar?
I think there's still some concern about where the Fed is going to end up, who's going to be the next Fed chair, where are interest rates going. Will this administration take its foot off the neck of Jay Powell in the short term? I think Scott Bessent has done a magnificent job of signaling to the industry and the people here this week that, in fact, they're not going to hassle the Fed going forward. But it remains to be seen. The president could wake up tomorrow and decide to go in a different direction.
How much fear is there that the Fed is going to be prompted to cut rates disproportionately in the near term and inflate whatever, I don't want to call it a bubble, but whatever bubble there might be, whether it's in AI or whether it's in some of these credit markets that certainly are showing some strains, at least in terms of the credit quality underpinning them?
Well, all the aspirants to be the next Fed chair have all indicated that they want to see looser monetary policy, and they've argued a variety of different reasons for it because of productivity, AI. I know them all. I think they're world-class. Any of the individuals that have been cited by Secretary Bessent, the president, I think would be fabulous Fed chairs. But talking about it and being in the seat's different. And I think whoever gets the job will be much more prudent than maybe they sound today.
Is that the belief in markets right now? Is that the reason why people aren't taking the whole idea of Fed independence that seriously? And it doesn't seem like it's actually bearing out in any kind of market action that demonstrates concern?
Yeah, the people who've been decided are world class. And I know them all. They're quite good. Now, if you have some dark horse that comes out of left field and we don't know them and it has a different view, I would be worried. I would sleep comfortably with any of these people decided and replacing Jay Powell.
So were there any risks that people flagged to you, or did everyone just seem really happy?
It's still trade. It's still a lot of technology, stable coins, where's AI going, quantum computing, the technology stack. But it really is about given the uncertainty in the global economy, we still have to navigate through it. We want a new equilibrium. Probably not going to get that for years to come. Chaos is the state of nature. It's just how do we work our way through it?
You know, I think about some of these events as, I don't know, counter-indicators sometimes. And I know that in April, the feeling was pretty dark and people were gathering and asking each other questions that nobody could answer. This time around, there is incredible optimism. And honestly, it's been shocking how much optimism there has been from everyone who I've talked to, that there's going to be calm that prevails with trade, that markets are going to keep chugging forward, that deals are going to just accelerate. Does that...
It makes me nervous. Yes,
yeah,
it does.
But that's what I'm wondering. I mean, hasn't that been your impression as well?
Indeed. And, you know, in March, we were pro-Europe. Everyone was herding into Europe. That was the place to be. Now people are pessimistic about Europe, unfortunately. So, yes, I think maybe too much optimism. I think the concern is more about technology. Where is all the technology going? What does it mean for labor markets? What does it mean for tech spend? But I do think we've just gotten used to the animosity between Beijing and Washington. We've just gotten used to the chaos and uncertainty. Maybe that's what people get paid for in the C-suites. It's to really manage and lead through times of chaos.
It's an irony that a lot of people are coming here and talking about the loss of U.S. exceptionalism and the loss of U.S. dominance. They're all here.
They're all here.
So doesn't it make you feel like maybe that's not the case?
Well, I heard one European CEO tell me yesterday, U.S. is open for business. And I think it puts pressure on others. We hear it from the UK. The Chancellor was out yesterday absolutely on fire selling the UK. The Europeans are they need to be more aggressive as well.
Tim Adams, thank you so much for being with us. That was Tim Adams of the IIF. John, as you can see, a lot of optimism down here in Washington, D.C. from world leaders amid even some of those credit cracks and concerns that we talk about every day.
Hey, Bramo, thank you. Appreciate it. You see that optimism in the market. Futures recovering. We're now down by just 0.3% on the S&P 500. The turn, if you're just joining us, off the back of some comments from the President of the United States just moments ago on trade and the relationship with China.
Yeah, he was asked about the 100% tariff threat and what that would mean, given the fact that we already have double-digit tariffs in place when it comes to China. And he signaled, of course, that's not sustainable, and that will not be the outcome when he sits down with Xi Jinping later this month.
Stocks recovering in the bond market. Yields were lower, just a little bit higher now. Up next on the program, we'll catch up with Steve Pagliuca of Bain Capital as more banks jump on the EA buyout. Plus, Danny's got your morning movers. Truist Financial rising following their latest earnings. It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Stocks recovering this morning. We're now down by about 0.3% on the S&P 500. Only a few hours ago, we were down about 1% on the S&P. So this is a quick, fast turn on the S&P 500 and the Nasdaq too. You see this also in the bond market. Yields were down across the board. 2s out to 30s across the curve. 2s now higher by a single basis point, 343. 10s up as well by a basis point at 398. Yields at the front end were sub 340 only 2 hours ago. This is a major change off the back of some comments from the president about 10, 15, 20 minutes ago.
A question about the 100% tariff threat. Is that sustainable? The president basically signaling it's not sustainable. But I don't get the sense that no tariff level is not going to be sustainable. This is a president that we know continuously wants to use tariffs. I don't think that we're going to go down to 0% when it comes to China, but I don't think we're going to go to north of 100%, was basically what the president signaling, and also confirming that this meeting will happen. So when you talk about the two biggest economies, one thing investors always say, at least they're talking, and they will be talking, and they're going to be meeting face-to-face.
Looking forward to that summit later on this month. Let's turn to the gold market. Gold was higher. Now it's negative. We were on a 6-day winning streak off the back of these headlines. Just turning slightly negative. We're down by 0.2% on gold this morning. Still heading towards a 9th consecutive weekly gain for the precious metal. The longest weekly winning streak going back to August of 2020. Gold this morning, 4,300. As we count you down to the opening bell about 2 hours away, let's get you some morning moves and cross over to Danny Berger for more. Hey, Danny.
Hey, John. Good morning. Even some of those jitters around regional banks, the comments from the president seemingly lifting those as well. I guess it's overall risk appetite starting to come back into the market. Just moments ago, these shares were both down more than 1%. Western Alliance now up 1.5%. Zion's up 0.7%. Of course, these are the two mid-sized regional banks who've come out and saying that they're taking write-offs tied to loans gone bad, allegations of fraud. It's the credit concern that's been rippling through markets. But again, after those comments from the president, those shares turning positive. We also had some earnings that's helping out the regional bank space too. Truist reporting earnings in the past hour, and the key for them is that their credit quality got better. Their losses tied to bad loans was less than expected. They beat on a whole host of metrics, so those shares up 1.1%. Of course, they fell 5% yesterday in the drama, so still not recovering from them. We also got Amex earnings about half an hour ago, really strong too. Even though the share price reaction isn't huge, it was the Platinum card that had huge amounts of signups. The CEO saying it was the best refresh cycle that they've ever seen. Maybe that was anticipated. Maybe that's why you're not seeing a reaction. But the CEO saying that there are a lot of concerns about credit out there, but ours is pristine. John.
Danny, isn't that always the way? Danny, thank you very much. A turnaround for some of those banks this morning. On our radar, credit concerns weighing on stocks around the world. Regional banks tumbling after Zions and Western Alliance said they were victims of fraud on loans to funds that invest in distressed commercial mortgages. Those names have turned around in the pre-market higher across the board. Elsewhere, the three candidates for New York City mayor facing off on the debate stage last night. Andrew Cuomo, Zohran Mamdani and Curtis Sliwa trading personal attacks and discussing various issues, including President Trump and their stance on the Israel-Hamas war. And finally, US-China tensions showing signs of easing. President Trump telling US media high tariffs on China are not sustainable. President Trump adding he's still on track to meet with the Chinese leader later this month.
It comes after this threat. The president on Friday talking about potential 100% tariffs on China after the fact that China was talking about and continuously is making it more difficult for U.S. companies to access rare earths. Now, the president was asked, you would have a tariff rate north of 100%, considering what is already right now stipulated on Beijing. And he's saying, no, that is not sustainable. It doesn't mean we're going to zero, but that high tariff threat, he's bringing down some of that heat we saw.
How much is new about that line, not sustainable? I've heard that line a few times from the president since April.
Well, I don't think anything is really new, given the sense that what happened Friday, the market was down off this threat and hot rhetoric, the tit-for-tat rhetoric between Washington and Beijing. And what happened on Sunday? The president saying is all going to be fine. So he already signaled he was looking for that off-ramp, and it's not going to be as high as he had threatened just 48 hours ago.
There's a turnaround in the stock market. We're down now by just 0.3%. Let's turn to private equity. The consortium by Electronic Arts is set to add more than a dozen banks to its underwriting group after JP Morgan put up $20 billion of debt to bankroll the leveraged buyout. The banks are in line to share roughly $500 million in fees for arranging the financing. Joining us now, a man who knows something about a leveraged buyout, Steve Pagliuca of Bain Capital. Steve, it's good to see you, sir.
Good to be here.
Good morning. Let's reflect on your time. The largest leveraged buyout ever before this one was HCA back in 2006, 2007.
Right in there, yeah.
You were right there in the middle of it. Describe that moment and how it compares to what we're seeing play out now.
Well, it's really interesting. I think that buyout was $5 billion equity and $27 billion debt. This buyout is much more equity, kind of $30 billion of equity and $20 billion of debt, maybe $35 billion of equity. So the markets have changed to that extent that you can't leverage as much, but the EBITDA is a little less. Very quality sponsors, and JP Morgan is a very quality bank. So they did the deal because of the great growth in gaming and media and entertainment, and I think it's a very solid company.
You did tremendously well out of HCA. Need to be very, very clear about that. But the timing of it is curious. It came right at the peak of credit, and this is now too. Is that anything to be concerned about?
I'm less concerned about credit right now in terms of the private credit markets because the private lenders actually are very good. The banks have been very good. JP Morgan, especially Bank of America, well-run, well-capitalized banks. And private credit is different than credit from banks because if it does go bad, you only write off the equity from people that put the equity in. It doesn't have a systemic multiplier effect. So I'm less concerned about private credit. What I'm more concerned about is the size of the national debt and how much interest we're spending on the national debt. It's really interesting. If you go back to when I got out of business school, there was a huge Sturm and Drang about the national debt passing 1 trillion. That's in 1982. So it took 250 years to have 1 trillion of national debt. In the last 40 years, we now have 37 trillion, which is more than the GDP. GDP is about 30 trillion. So that concerns me more in terms of the impact of the dollar. Interest from the government now is one of the highest expenditures. It's right up there with defense and healthcare. So that concerns me more than private credit.
So, Steve, I could probably find you people who were concerned back in the 80s too. And then in the 2000s, and as we went through 10 trillion, 20 trillion, and kept going high, they were concerned all the way up.
Yeah, unfortunately,
why is this moment different?
Well, I think I don't know if it is different, but in situations like this, it's always okay till it isn't okay. So you get used to, you pass a trillion. Everett Dirksen had a board up that was counting it up at that time, and it passed a trillion. There was a huge outcry. Now it's 10 trillion, then 20 trillion, then 30 trillion. But at some point, you've got to have some long-term plan to pay that money back and get that deficit down because it's eating up huge amounts of the government budget. And as the interest rates roll over, a lot of that is still financed in the old, really low interest rates. They're going to have to refinance it at 5%, 4.5%. And then the number goes up again.
Well, when you see what's going on in Washington, I want to go back to your EA deal. It's not just the size and scope that got a ton of people's attention. There's concern in Washington given some of the players involved. Have you heard from politicians about that?
I don't think there's been a lot of pushback on that. And the deal, I think, will be controlled by Silver Lake, which is an American, fantastic private equity company.
But with the Saudi PIF being involved, some people think Jared Kushner was brought in just to get the, Czech government seal of approval.
Again, I think Silver Lake's a fantastic firm, and they're leading the charge there. And so I think there's really going to be no concern because they'll be calling the shots on the deal.
Steve, we started this conversation by comparing this deal to HCA in 06, 07. Have the pools of capital changed in the last 20 years?
Yeah, absolutely. When I started out in the industry, there was only 3 or 4 firms doing this, I think, in general, and it was mostly USA. Now it's global. The fund sizes are up probably 20 times from when I started. And also you have sovereigns and big institutional players partnering with private equity. So the dry powder is huge.
Are there enough opportunities to go around?
I got asked that question in 1989, in 1990.
I'm asking it again, 27 years later.
And I feel like a broken record. Private equity, I think, is here to stay. The model has really evolved, so it really is huge value added to kind of transform companies, make them better, globalize them, build new products, and in an environment where you don't have to worry about quarterly earnings. So the model is a very good model, and it's only expanded, it's only gotten bigger. And I think there'll be plenty of opportunities for these folks to invest money.
Well, let's talk about the opportunities now for you and how your sport franchises are going, starting with Atalanta. Steve walked into the room with some Atalanta sneakers with the sponsor New Balance on. The relationship between you and New Balance, can you just describe what that's like at the moment?
Fantastic. New Balance is kind of a fighting brand, growing, taking a lot of share. They really like the Atalanta story because we have the same values. We're kind of a fighting brand against the vaunted AC Milan team that you support. And so it was kind of a match made in heaven. The New Balance is very excited about it. We're excited about it. We've just named our stadium New Balance Arena. I think it's the first arena that New Balance has named. And we're very proud to be associated with New Balance. It's a family company. The Pax Group is a family company, and the Percassis in Italy are a family company. So the three families have come together and hopefully take Atalanta to the next level.
You've done a tremendous job with the team and the franchise. Can you just describe the opportunities now that still exist in the sports world at a time when some people are pushing back against valuations?
Well, no question, valuations are at record levels. Why is that? Is because sports is now the only thing left that aggregates huge audiences globally. And there's been a technology change where, when I lived in Holland in the 1970s, you would only get sports scores 3 days later from an International Herald Tribune. You couldn't watch anything. Now you can watch any team globally, so fans are counted in the billions instead of the tens of thousands, what they used to be 30 years ago. So I think sports still has upside because advertisers, want to reach the globe, and that's the way to do it.
As you look at the sports world, and it's pretty broad, where do you see the best opportunity right now? Because your name's been linked to a team in the WNBA. I know you wanted to bring a team up to Boston. Is that where you're looking still, or is it elsewhere?
We're looking at many opportunities. I think the WNBA is a great opportunity. Women's sports in general, women's soccer in the USA and globally is growing. The NFL is the marquee properties. I think they had record ratings and record advertising on the NFL. So again, I think sports as a category is really a growth asset. And as you have this battle between old media and new media, it's existential for them. And they're battling over these properties that get all the eyeballs in. So I think that bodes well for all the leagues.
John mentioned the WNBA Connecticut team. Do you think that there potentially could be a future for you in that team?
That's something clear. We've kind of stood down for now, and we're going to abide by whatever the NBA wants to do with the team. I think it's very exciting. The ratings are huge for WNBA, and I think it's great that all Americans are following that sport now, and it's going to really take off. And the NBA's done a great job with that.
You've done a great job, Steve. It's always good to catch up with you. What a career! It feels like you're having the best of times now.
I've been very fortunate. My grandfather came from Italy on a boat with one suitcase and worked in a shoe factory here in New York in the Bronx for $8 a week. So I would say America's a great place. Coming from that, and I've loved the homecoming, coming back to Italy with Atalanta. I get off the plane, and I love it because everyone looks like me there.
We've talked.
I haven't lost my Italian heritage.
We've talked extensively about this in the past together offline, and I'm very proud of you and everything you've done. Steve, thank you, sir.
I really appreciate it.
Thank you. Steve Pagliuca of Bain Capital. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. U.S.-China tensions showing signs of easing. President Donald Trump telling U.S. media that high tariffs on China are not sustainable. The president adding that he thinks we'll be okay with China. Trump is preparing to meet with Chinese President Xi Jinping at the APEC summit later this month. Gold is heading for its biggest weekly gain in 5 years. The precious metal is surging alongside silver as concerns over product quality in the U.S. send investors looking for safety. Gold's gain of more than $300 this week is the biggest on record in dollar terms. Automaker Stellantis is partnering with China's Pony AI to launch self-driving vans in Europe. They'll begin testing level 4 autonomous vans in Luxembourg in the coming months, a move that is Pony AI's first major team-up with a Western car giant. It lays the groundwork for future European passenger robo-taxi services. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, bracing for future shocks.
We consider that where we are today, we are in a good place, and we are well positioned to face future shocks. And future shocks there will be.
That conversation up next with the Dutch Central Bank Governor live in Washington.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Bit of a turnaround going into the weekend. We were down by about 1% on the S&P, now softer by just a third of 1% on the S&P 500. On the Nasdaq 100, we're down by just 0.5. More constructive comments from the president regarding China, lifting sentiment just a little bit. Under surveillance this morning, if you're just joining us, welcome. Bracing for future shocks.
Bottom line, we are currently, at least in the euro area, at 2% inflation, which was our medium-term goal. We are at 2% interest rates. It's a surprising coincidence, but we consider that where we are today, we are in a good place, and we are well positioned to face future shocks. And future shocks there will be. Both Kristalina and Talman said it. I completely agree with that. We will be facing shocks.
So here's the latest this morning. The ECB President Christine Lagarde showing confidence that risk to inflation and economic growth have become more balanced. Lagarde signaling the European Central Bank is unlikely to cut rates at this month's meeting. Lisa joins us now from Washington for more with a special guest. Hey, Lisa.
Hey, John, thanks so much. I am here with a member of the European Central Bank, Olaf Slijpen. He is the new head of the Netherlands Central Bank as of July 1st. And Governor Slijpen, thank you so much for being here.
Pleasure.
I want to start with that contrast, this incredible optimism that you're seeing in the U.S. economy, notwithstanding some of the recent credit cracks. And yet the Fed is going to cut rates several times. And in the Euro region, it seems like the ECB members that we've spoken to seem pretty okay with where things are at right now, but there isn't that much optimism around growth. Does there seem like a dissonance there?
Yeah, from a monetary policy point of view, we are in a good place, and you have been hearing that a lot, I think, these days, because inflation rate is basically around our target, 2% in the medium term. We have more or less full employment at the moment in the euro area. But having said that, the potential growth in the euro area is actually relatively low compared to the United States. I think not a lot needs to be done in this context, but that's not for monetary policy. It's more for structural policy.
At the same time, the trade shocks that Madame Lagarde was talking about yesterday have to do with both, yes, tariffs, but the tariffs have come in much less than people have expected, but also China flooding the European region with cheap goods that have suppressed inflation. I mean, how much is that a risk, the disinflationary risk, that you're taking increasingly seriously?
What we see is that the euro area economy, and I think that's also true for the global economy, has been much more resilient than we thought it would be, actually. Yes, if you look, go back to a year ago, the economy has worsened. But if you look to the spring, I think things look a little bit better than we thought. So, yes, the tariffs do have an impact. They have an impact on growth. They may have an impact on inflation, in particular, I would say, in the United States. But, yeah, so far, the economy is holding up pretty well. At the same time, there are a lot of risks out there, and there's a lot of uncertainty. So it's very important that we remain vigilant in this respect.
Christine Lagarde was talking about shocks and future shocks coming down the pike, and yet there is this feeling that the bar to cut rates is pretty high at the ECB. Is that the case for you? What would it take for you to think, okay, we need to accommodate? I'm worried once again about disinflation.
Yeah. As I already said, we're in a good place, but that doesn't mean that let's say, will always stay in this place. We have what we call the meeting-by-meeting approach. We are data dependent, and depending on new data coming in, new forecasts, we make our assessment regarding the inflation outlook. And that's when we decide on what to do with monetary policy. And that's the approach at the moment.
It must be nice to receive data. We're envious of your data collection and your data releases.
It's extremely important.
We haven't gotten some recently.
Yeah.
I am wondering what your response is. We've been talking about cracks in the credit market in the United States and this potential that there could be some froth developing, whether it's artificial intelligence-related stocks and some of the valuations there, or whether it's just some of the credit conditions that have gotten pretty loose. I'm just wondering how much you're watching that from a financial stability point of view, how you see that potentially rebounding into the European Union.
Yeah, I think if you look at valuations at the moment, I think one can say that they're pretty stretched. And that also means that, let's say, certain accidents, incidents, jitters can lead to more volatility. And that's something that we are closely watching, also from a financial stability point of view. That's correct.
What would your response be if there was some sort of stress event? I mean, because right now the market's implying that there's going to be some sort of Fed response in the form of rate cuts. We've heard from Fed Chair Powell that potentially they're going to stop rolling off their balance sheet, stop quantitative tightening. I mean, how much is the ECB also considering some sort of measure to ease the liquidity strains that might be emerging down the line?
I mean, when we say we are in a good place, it also means that we are of the view that we have the instruments let's say, that can be employed whenever it's necessary. And that's also being part of being in a good place.
Do you welcome the increase in fiscal spending in the Euro region right now? We're hearing that from Germany. We're hearing that in other places as well, to try to, yes, bolster some of the defense side of things, but also just in general, infrastructure, and to adapt to some of the AI build-out.
I think it's important here to distinguish what kind of fiscal spending we are talking about. It is good that governments are boosting public investment, and I think indeed Germany is a very good example in this respect. At the same time, we also have to acknowledge that the overall debt to GDP ratio in the euro area is quite high. So there is limited room, so to speak, to let fiscal deficits and debts increase too much. But indeed, more focus on public investments, I think that's definitely a good thing.
Is it frustrating for you when you talk about the need for some sort of growth engine in the Euro region and cohesiveness? And I hear this a lot in the sense that you can't rely on the United States, but then everyone's here in the United States talking about all of these things and talking about the growth and the optimism here. I mean, I'm wondering how you square that disconnect.
Yeah, I mean, it's actually good to be here and to, let's say, observe that optimism. What would be the lessons for Europe? I think when you talk to investors, then they tell me, they tell us that Europe, it's interesting, but it's not really a single market. We have 27 countries, and despite the fact that there's European legislation, there's also a lot of national regulation, national rules, gold plating going on. So the scale of the market is basically too small compared to the United States. So what does it mean? It means that we really have to create a true single market. That's one thing. So that markets, investors also really see Europe as one single market. Create a true capital markets union and finish what we started, that's the banking union. I think those are, for me, the three most important priorities for European growth.
Governor Slijpen, thank you so much for being with us.
My
Wonderful
pleasure.
to see you. That was Governor Olaf Slijpen, John, of the Bank of Netherlands, Central Bank of Netherlands, after joining back in July.
Lisa, very cool. Thank you very much. Appreciate the update on the European Central Bank. It's interesting to hear the ECB talk about policy being in a good place. And I understand why they're saying that. They have a very narrow mandate. It's an inflation target. But can you imagine the chairman of the Federal Reserve saying we're in a good place when they're forecasting 1% GDP for 2026? That ain't a great place for the European economy, that's for sure.
No, absolutely not. Europe has a growth problem. We've known this. And the issue they also have right now is they're stuck between the United States with higher tariffs, and they're stuck between China, which is absolutely decimating their industrial base. And Europe needs to decide, how are they going to fight back, or they're just going to allow it, which is going to mean a lot more layoffs, which we've already been seeing coming out of big European companies, especially in Germany.
They've got some policy issues. Just a lot of them are outside the ECB and beyond their control. Up next on the programme, we'll catch up with the Deutsche Bank CEO, Christian Saving, James Picariello of BNP Paribas, Steve Rasciuto of Mizuho, Mark Haefele of UBS. The third hour of Bloomberg Surveillance up next.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We've got this extraordinary stock market.
The U.S. capital market is the most liquid of the world.
This has been an earnings-driven market.
We've heard about all the AI infrastructure investment, and that's continuing to drive earnings.
I don't think we're in a bubble. And if we are, it's so early stage.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. We're focused on 2 bank names, 2 regional banks that are at the epicenter of the price action of the last 24 hours. They're recovering this morning. Zion's up by close to 4%. Western Alliance up by close to 2%. A lot of pushback against the concerns of the last 24 hours, including from R.W. Baird and David George, saying that we're fighting the last crisis, that a $1 billion market cap decline over a $50 million loss seems a bit excessive. Those 2 names are being bought so far this morning, and the equity market's turning around as well. Equity futures across the board on the S&P, the NASDAQ, erasing losses. We're now down just 0.25% on the S&P 500. Similar turnaround in the bond market. There was a risk-off bid. Yields were lower. Now they're higher by a single basis point on 10s, approaching 4% again, 398.77. And a lot of that in the last hour came from some comments from the President of the United States.
The President had an opportunity to continue with the rhetoric on China and amp it up, and he decided to once again dial it down as he looks forward to this meeting he has upcoming with Xi Jinping. He says it's not sustainable, the high tariff level. Now, it doesn't mean we're going to go back down to 0, but that 100% threat on top of what already the United States has in terms of the tariff wall in China, he says that is not sustainable. So the market now can look at the worst case scenario being avoided as we head into the end of the month.
Hey, hopefully the worst case scenario is avoided. That meeting's going to take place in Asia at the end of the month. At around the same time, we get a Federal Reserve meeting and a ton of tech earnings as well. Coming up this hour, great lineup for you. The Deutsche Bank CEO just moments away. Christian Saving as credit concerns grow over the last month. James Picariello of BNP Paribas as he's downgrading Tesla ahead of earnings. And Steve Raschuta of Mizuho as bond yields break through 4%. We begin this hour with stocks lower as doubts grow over the credit health of U.S. regional banks. Lisa is standing by with a key guest. Hey, Lisa.
Hey, John, thanks so much. I am here with Christian Saving, the CEO of Deutsche Bank. And before we get started, I want to say we booked this weeks ago. This was not necessarily booked to talk about the credit issues that are emerging and to stave off any concerns that might be percolating out. But I do want to start there, this idea that this morning we're all focused on what are we missing? Have things gotten too frothy? And have there been some issues of fraud or easy financing conditions? Do you see that anywhere in your book?
Good morning, Lisa. No, actually not. I mean, there is a lot of volatility in the market. We have seen that actually over the last weeks and months. Whenever something is supposed to be there, market is reacting. In our books, I can tell you, no, there is no deterioration. We're very confident with our credit portfolio, and that across the world, whether it's in Germany, whether it's in Europe, whether it's in the US, in the different asset classes, corporate bank, private bank. And in this regard, I think the market is reacting quite heavily, but I think you always have to see it over the long term. And so far, to be honest, I see no credit deterioration.
Long term, your shares are up more than 80% so far this year. So a couple percent here or there. It's sort of, okay, it's tough, but we can manage through it. I am just wondering, though, whether it's indicative of people's mood, that people are looking for a reason to sell because they're getting nervous about how good things are getting and how far valuations have gone. Do you see that with any executives and the confidence that you're hearing from them in terms of what they're seeking to do or how much they're planning to expand?
No, actually, confidence is quite good. I mean, there's obviously always the risk in case a recession would come. Then obviously confidence would go down. You would also see then a deterioration in the credit portfolio. But this is not a topic at all. Also, in the whole week here in Washington, we haven't discussed the topic of recession at all. People are seeing growth. They're seeing employment. We talk a lot about what is happening in Germany and in Europe and how we can actually grow competitiveness and the economic output. So therefore, I wouldn't say that people are concerned. Of course, the geopolitical uncertainties, still trade discussions, other issues are also dominating the discussions. But I wouldn't say that there is a concern of the executives. We are watching the market, but there is nothing out where I would say people are concerned of a deterioration.
Given the fact that there are so many uncertainties still outstanding, are you surprised by how much optimism you've been hearing?
Yes, because we have talked for the last 2 years, given all the instabilities and uncertainties, when is actually a potential downturn in the markets coming. But again, there is a lot of liquidity in the market. People, we have seen it, for instance, in the second quarter, when there was a stimulus program in Germany, how much liquidity came to Europe. And you see that people really want to deploy their money. And therefore, I think you always have to see if there is a slight decrease in market prices, liquidity immediately comes in again. And therefore, I'm still optimistic, actually, that we are not talking about an overvaluation. We have some stretch valuations, no doubt, but I wouldn't say that the whole market is overvalued.
Let's talk about Germany. And European banks in general have been on a tear this year. And it's been driven by this idea that maybe there will be deregulation and maybe there will be actual fiscal spending to support the region. Are you seeing any actual tangible signs of deregulation that you think could unleash, whether it's bank mergers, whether it's just more dynamism in the European banking sector?
Well, at least we have discussions. Look, there are also some tangible items like the delay in the implementation of FRTB. We have also in certain national buffers, when it comes to capital buffers, we have seen some movements of the national regulators, but also of the ECB. I think we have a constructive discussion with the ECB. We are obviously talking about that we, as European banks, are demanding a level playing field. We see the developments here in the US, we see developments in the UK, and therefore I think there are constructive discussions with our regulators, so there is some movement. Nevertheless, I think it's not only about regulation. I think the most important is how can we ensure that Europe overall, but also Germany, is actually increasing the competitiveness and growth. And therefore, we need to do more on the structural reform side, which goes way beyond bank regulations, That is actually the topic which we need to push for, because at the end of the day, regulation is important. We need a level playing field, but the most important is the underlying growth, and therefore we need structural reforms in Europe.
Is that fiscal spending? Are you saying that you hope that they increase it more and that you're already seeing stimulative effects from that?
It's both. I personally think that the debt brake alignment and adjustments which we have seen in Germany was the right step to do, but only doing this is not the right thing. Just increasing debt is not the right thing. What you need to do is, in parallel, work on structural reforms that it makes sense for corporates, private individuals to invest. And that has all about to do with, tackling the problem of energy prices in Germany, reducing bureaucracy, making sure that we are doing bigger investments into infrastructure, that the approvals for new investments are not taking that long as it did before. All that needs to be done. So aligning or just growing by a stimulus program will not be sufficient. We need in parallel structural reforms. And there I can see that actually the German government is taking the first steps.
What about businesses? How much are businesses in Germany moving away from places like China in terms of sources of business? How much are you seeing those fissures just in the companies that you work with?
Well, it's a result already of the COVID. I think after COVID, people really thought far more about diversification. We can see that German corporates, European corporates are very active in diversifying their supply chains, their production chains, and are also trying to invest more globally and less concentrated. You can also see actually that businesses are confident actually to really reinvest in Germany. You may have heard about the initiative which is running in Germany, the Made for Germany initiative, where more than 100 corporates are actually committed to invest over 700 billion euros in Germany over the next 3 years. That shows actually that there is confidence in the business, and at the same time that corporates are really redistributing their supply chains.
Are you seeing any clients trying to shift away from dollar exposure right now?
Look, there was clearly a trend in Q2 about reallocation, but I wouldn't join the core of saying, well, that is the end of the US dollar as the reserve currency. The US dollar will be the reserve currency, but I think that a lot of investors actually are trying to reallocate. And in particular, with what happened in the second quarter in Germany, but also in Europe, you could see a shift to Europe, and that's actually the momentum which we need to retain and where we need to build on.
And this move away from the dollar has been largely in derivatives markets. I mean, how much has that just been on fire this year in terms of hedging any exposure to the dollar, not necessarily getting out of dollar-denominated assets?
Well, I think it's both. It's not only in the derivative market. We really have seen real flows, and therefore it has been a trend in Q2. It's a little bit reversing in Q3, and therefore it is so important, in particular for Europe, that they really continue with structural reforms. If this is not going through, if we are not continuing with structural reforms, then obviously growth and therefore also the inflow in European assets will not further increase.
How does that affect just whether there will be reforms or not? How does it affect where you want your footprint to be dominant, right? Do you want to be more in Germany? Do you want to be more in the United States? Do you want to expand more in one place or another based on your faith, hope, et cetera, that there will be reform in Europe versus what actually is happening elsewhere?
Look, Lisa, for me, it is that from a bank's point of view, the most important is to be diversified. And we as Deutsche Bank have taken a clear decision to be a global bank and to make sure that we are not too concentrated in any one of the regions. Of course, when you have your home market in Germany with 40% of the revenues, you have a great interest that this country is growing, that you have the right structural reforms, that fiscal stimulus is kicking in. But at the same time, despite all the talks about the end of globalization, globalization will not end. Globalization will be different going forward. But that needs actually global banks with local know-how. And that is actually where we are focusing in from a Deutsche Bank point of view. Strong home market, but being an international player. Because what we see from our clients, they would like to have a bank with an international exposure, with an international expertise, and that with a global network. And that's exactly what we want to be. So diversified and a global setup is, I think, the key to success.
Are you interested in any acquisitions, or is this going to be a very organic process going forward?
It's a very organic process. Look, I'm very happy with the development which we have taken. You were just talking about our share price. I think overall the bank has done very well over the last 3-4 years. The turnaround has been completed, and now it's really bringing the bank from a 10% ROTE to the next stage. All levers for that are levers which are, so to say, within our own hands. It's about a better capital management. It's about focused growth. It's further about investing into technology to get further efficiencies out. All that is in our hands. And as long as I have the chance to further increase my return on equity with, so to say, homework, that is always the preferred option.
So not interested in any local banks that are nearby that you might bring under your hood?
Look, as I said again, if you can focus on yourself, if you can improve your return on equity by applying this homework, honestly, it's always the first option.
There's also a big question here about artificial intelligence and how much it's going to alter the size of the staff, the way of doing business going forward. Have you seen any material changes or advantages from using and adopting artificial intelligence of late that have really materially improved profitability or decreased staff?
Well, we have many use cases, and you can apply that across the bank. And the interesting part is it actually applies to revenues, i.e. customer satisfaction, interaction with clients. It applies to efficiency and cost management. And also it applies to something which is very important for banks, control and regulatory compliance. And in each of these 3 areas, we have seen great use cases. If you think about also our research department, they started actually applying AI. If you think about the precision of research reports with the help of AI, got far better. Of course, that has an impact in terms of the speed and turnaround of research reports. Same actually in other areas when you think about operations, the way we can apply AI. Now, the real important thing is now that we have a structural approach to all these use cases and that we have a clear priority. Where do we prioritize it first? Because you can imagine that everybody in this bank wants to apply now AI. We need to have a clear priority of investments, but I think it will be a game changer going forward, and it will be one of the key levers how to increase profitability of banks.
Christian Sewing, thank you so much for being with us this
Thank
morning.
you.
Christian Sewing there of Deutsche Bank, the CEO here in New York. And John, it really is a tale for the Europeans of looking to what levers can be pulled going forward, given some of the concerns and challenges facing the region.
Lisa, thank you. Great work down in Washington, D.C. Lisa there in the nation's capital. Let's give you an update on news worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. The White House is poised to deliver a major win for automakers, easing tariffs after months of lobbying by Ford and GM. The Commerce Department is expected to announce a 5-year extension of an arrangement that allows car makers to reduce duties on imported parts, a key offset to Trump's record-level auto tariffs. Meta is set to seal an almost $30 billion financing package for its data center in rural Louisiana. Sources telling Bloomberg that Blue Owl Capital will split ownership of the data center, with Meta retaining just 20% of it. The deal would mark the largest private capital deal on record. President Donald Trump's former national security advisor John Bolton has been indicted over allegedly mishandling classified documents. Bolton was charged with 18 counts by a federal grand jury in Maryland. He served for more than a year in Donald Trump's first administration, but became an outspoken critic of the president. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, the Morning Calls Plus. James Picariello of BNP Paribas as he's downgrading Tesla going into next week's earnings. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Regional banks are sort of seen as this separate little thing. Wouldn't surprise me if, like was the case in 2023, this leads maybe to a bout of some consolidation and maybe some acquisitions. Instead of trying to find where the cockroaches are, maybe provide some protection within portfolios by going up the quality spectrum.
That was Lizanne Saunders of Charles Schwab weighing in on signs of credit stress in the last week or so. In the equity market, we recover. We're down by just 0.1% on the S&P 500, with the open about 1 hour and 11 minutes away. That's the price action. Let's get you some morning calls. First up, Baird upgrading Zions Bancorp to outperform, calling the pullback, quote, excessive. That stock is bouncing back by 4.4%. Next up, Goldman raising its price target on Schwab to 114, saying EPS growth is on track to continue through 27. And finally, Mizuho raising its price target on Microsoft to 640, calling it a favorite stock with solid upside. They're your morning calls. Let's turn to autos. The White House gearing up to ease tariffs on imported auto parts for 5 years. Bloomberg's Craig Trudell joins us now for more. Craig, welcome to the program. What are we hearing?
Yeah, Gabrielle Coppola, our colleague in Detroit, had the scoop last night on this. So this is a case where the industry has been concerned, particularly about U.S. vehicles that are importing parts from outside of the U.S., wanting to get credit for the fact that these are made in America cars and trucks. And there's been relief already put into place where for 1 year there was going to be a certain amount of recognition for the fact that those vehicles are made in the U.S., but that was going to phase out after 2 years. This will be an extension to 5 years. So it gives I would say this is an acknowledgement of the realities of this industry, where even if and when you do announce plans to build an entirely new car plant in the U.S., that can take 3, 4, 5 years before you go from announcement to actually having cars coming off that line. And this is an industry that, if it's going to sort of answer the call that the Trump administration wants, it's going to take time.
It's going to take a long time, potentially. Craig, thank you, sir. Thanks for jumping on and breaking that down. Craig Trudell there of Bloomberg. Breaking down the moves in the pre-market. GM positive by 0.75%, going into some big earnings over the next week or so. Tesla reports on Wednesday. James Picariello of BNP Paribas downgrading his rating on Tesla to underperform with a 307 price target. He writes, Tesla may be the victim of its own ambition in our view, with its insatiable appetite for growth leaving the company with more on its plate than it's able to execute unsuccessfully. James joins us now for more. James, good to see you.
Yeah, you as well.
Just build that out a little bit more. What did you mean by that?
Well, the fact is Tesla has a $1.4 trillion market cap. And how we've assessed it after valuing the auto business and FSD, full self-driving, and the energy storage business, 75% of the implied valuation rests in robotaxis and Optimus humanoid robots, right? So what we've done is try to put a real picture to what robotaxis and Optimus look like, even out to 2040, right? We've gone that far. And what we've assessed is when you compare Tesla's valuation to the Mag 7, right, to the Mag 6, right, if we exclude Tesla.
Sure.
The future 2035 looking profitability, it's towards the low end. It basically looks like a smaller Amazon, which is also in the Mag 7. And so then the question is, if that's what our version of the future looks like for these AI-led businesses, what is the real implied, what's the right implied valuation?
What do you think it is?
I mean, I would generously apply the Mag 7 average forward EV to EBITDA multiple to Tesla's business, but how we've done that, because you can't just look at 2026, right? You have NVIDIA as the highest valued company of the Mag 7, excluding Tesla, at around 35 times, and you have Tesla sitting at 85. What we've done is we've taken that 2035 picture of Tesla, discounted it back to 2026, and then suddenly Tesla's valuation makes a lot more sense, where it's trading at around 18 times EV/EBITDA on our price target. And I think that's probably the appropriate valuation, and that's what informed our price target.
So let's take the robotaxi business. How proven is that concept right now? And how quickly do they need to show some real results?
So here's some context for how constructive we are for Tesla's robotaxi business, which still informs our underperform rating. The industry leader right now in robotaxis is Waymo. They've got about 1,500 active robotaxis on the roads today. And they've boldly said that they're going to expand to 3,500 by next year. We have Tesla in 2030 having 525,000 active robotaxis. Right? It just contextualizes how much credit the market is already giving Tesla for what is going to be potentially, right, an extremely successful story. But what does that successful story look like, and what's the right valuation? We've obviously made our determination.
We also have news at the White House, and it comes to the auto space, looking to ease some of the tariffs that are hitting these major players. That put them in line now with some of the Asian auto companies that actually were getting a lower tariff rate after Trump's trade deals?
Yeah, certainly. I mean, if we think about GM and Ford, right, GM's net tariff exposure is about $4.2 billion. For Ford, it's just under $2.5 billion. And yeah, I mean, when we think about GM and this South Korea trade deal that it should soon get finalized, you're looking at $1.1 billion, just over $1 billion of savings for GM. And Ford certainly will benefit from these tariffs relaxation, no question.
James, it's good to see you. Thanks for breaking down the latest call going into earnings next week with Tesla and a whole lot more. James Picariello there of BNP Paribas. The earnings story, tariffs, these guys, I think of GM earlier this week, just kind of stuck between a rock and a hard place. The tariff story, the EV story as well. Stellantis investing, what was it, $13 billion, that announcement earlier this week. They're getting squeezed from both sides.
Stellantis, I think this is their biggest investment in North America because they realize if the tariff walls stay up, which potentially they will, we're going to do more production in the United States. But yeah, a lot of these companies are stuck from a hard place because policy has swung so drastically between the Biden administration. Here, we're going to give some individual subsidies and help to go buy EVs, make those EVs, to the Trump administration saying those subsidies are not happening, and actually the auto parts are going to be more expensive due to the tariff walls. It's hard right now
and
to
they
run
don't know
an auto company.
If the policy is going to swing back in 4 years' time. Coming up on the program, we'll catch up with Steve Rasciuto of Mizuho as bond yields break through 4%. That conversation up next.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The open about 60 minutes away. Lots of swings over the last week, but on course for a weekly gain on the S&P 500 after the close yesterday. This morning, steep losses, and we erased them. We take some of it back on the S&P 500. We're just about unchanged on the S&P 500. On the NASDAQ, we're down by just 0.25%. As we count you down to the cash open, let's get you up to speed on the movers out there this morning with your morning movers. Here's Danny. Hey, Danny.
Hey, John. Maybe exemplary of the calm that's overtaken markets are what's happening with the two banks that were the poster child for the next little critters to scrawl out from underneath the fridge. That is Zions and Western Alliance, the mid-sized banks that reported write-offs tied to loans made to a distressed commercial real estate developer that maybe was fraud. There are allegations of that. Maybe collateral disappeared. Either way, climbing 5% and 3.5% respectively. It coincides with the broader turnaround in sentiment in markets, but it also coincides with some of the regional bank earnings that we've been getting this morning. And we've had quite a few. We've had Truist, for example. We've also had Fifth Third Regions. You can see all those shares up that have reported because all of them also reported better than expected earnings. And key, their credit losses were less than expected. So no infestation here. Finally, one of the stocks that continues to lose steam this morning is Eli Lilly. Those shares down nearly 4% after Trump yesterday in that press conference with Merck saying that the obesity medication could be sold as little as $150 per month. As a reminder, Ozempic and Wegovy goes for about $1,000 a month. To be clear, the services for Medicaid and Medicare say that negotiations are still ongoing, but BMO notes that this just shows how tough and stringent those conversations are. So again, shares of Eli Lilly falling this morning, John.
Danny, thank you. Thanks for this morning. Look out for Danny and Matt Miller in about 30 minutes' time to run you through the opening bow. Better tone to the tape this morning off the back of comments from the President of the United States, a more constructive tone around the issues of China. And just seeing a report right now, Anne-Marie, that the Treasury Secretary will be speaking to his Chinese counterpart later on today.
So obviously they're going to be talking about trade and potentially what Xi Jinping and President Trump could agree upon in the next few weeks. Critical for the Treasury Secretary is going to be really trying to figure out if China can walk back their threats and what they potentially plan on doing in terms of choking off really the whole world when it comes to rare earths. Not just the fact that they own all these rare earths, they process them, they refine them, and then they sell them. And if we don't have access to that, that can affect everything from your cell phone to a tomahawk.
The very same week those two leaders sit down together, it's the very same week we get a Federal Reserve decision, the central bank going into the blackout period after the close today, but not after a week's worth of Fed speak. Bloomberg's Mike McKee joins us now for more. Mike, we get a ton of Fed speak going into the weekend. We've had a ton over the last week.
Yeah. We have indeed, and I'm sure everybody is glad that at midnight tonight we start the Fed blackout period. They can't talk to us for 10 days until we get to that Fed meeting on the 29th. We have had 17 Fed speeches, appearances, questions, interviews this week, and one more to go. Alberto Musalem sits down with me later this morning. There have been 10 different Fed speakers, and you can see the impact that they've had. you wouldn't really make a lot of money in Las Vegas on the change in those odds from 98% to 103%, and December 97 to 110. Well, you know, it's about where you think they are. And really, nobody has moved. We did this chart on Monday, and nobody has changed their position in terms of whether they're hawkish, dovish, or somewhere in the middle. The middle is the one where most people are, the largest number. So it looks like we are on track for an October cut. And as Chris Waller was telling you yesterday, then we pause for a second and see where we are if and when we get some more economic data before we start deciding on December. Markets have already decided, but the Fed is trying to make it clear that they haven't yet. One thing we did learn this week, Jay Powell came out on Tuesday and said that we are getting close to the end of QT, and the markets are starting to push in that direction. The Fed's standing repo facility has been taken up by the most amount since 2021 rather, in terms of banks accessing the facilities over the last 2 days. They are starting to show signs that there are some liquidity strains in the markets, and we could see the Fed, even in October perhaps, announcing an end to QT, or at least a timetable for that.
Mike, this was great. Looking forward to closing out the Fed Speak with you, sir, and the St. Louis Fed President later on today at noon Eastern Time. Don't miss that. Alberto Musalem, the St. Louis Fed President, sitting down with Bloomberg's Mike McKee down in Washington, D.C. Let's stick with the Federal Reserve. Governor Christopher Waller weighing in on the bond market.
If you think about cutting rates, which we're doing and I think we'll continue doing, that does have a pass-through to the 10-year. And the 10-year is often the anchor for pricing mortgages. So the 10-year is down to like 4%. It's come down from 4.5%. That's about 0.5% off. If it were to continue drifting below 4%, you'll start seeing some downward pressure for certainly mortgages.
Certainly after that conversation, we continue to drift below 4%. The 10-year below 4% at 3.99. Steve Asciuto of Mizuho writing the following: this is the minimum level of rates you would expect if the Fed were credible in its inflation target. At 4%, the yield on the 10-year is fully priced for an economy with little to no inflation risk. Steve joins us now for more. Steve, good morning.
Good morning.
Do you think we should be priced for an economy with little to no inflation risk?
No, I don't. I think there is more inflation risk in the system than the markets are currently pricing in. But I think the markets are pricing in the degree of excess liquidity that's still there. Even though we're seeing some, chinks in the armor in terms of the quantitative approach here and what's happening in terms of some of the reverse repo areas, there's still an enormous amount of liquidity. And you see the way the market traded this week, especially, earlier in the week in the credit story when we were worried about banks initially. And then we saw the Goldman issue come out, and the market was substantially oversubscribed for that issue. Well, we're worried about banks. And so I think there's still an enormous amount of liquidity, and I think that's holding down the long end of the curve. Plus, there's the global deflation story that's holding down the long end of the curve as well.
When you say inflation risk, do you mean tariffs, or are you seeing inflation in other parts?
Well, I mean, we've got a Federal Reserve that wants to maintain full employment, and we have an economy where we are seeing inflation without much tariff running at well above its target, running closer to 3%. So you would sit there and say, okay, then there is inflation risk in there that's not being priced in. Now, you could say the 10-year is expecting, on average, the Fed to be credible over a 10-year period of time. True. However, we have been above 2% for 4+ years. So there starts to be a window there where this is a fully priced market. And I think that's part of the reason why, we had this rally yesterday afternoon, and then we've pulled back towards that 4% level, because it is a critical psychological level, and it's also a critical mathematical level because it's a 2% inflation rate.
Why is it critical psychological level?
Because it's an environment in which, when you look at most people who've been in the marketplace, if you break through 4%, you're usually looking at a substantial move below that, because something has gone wrong in the system. And that's why you had so much of a response to yesterday's announcements by Zion and so forth, in terms of the way the market's knee-jerk response took place on that. And now we're starting to see the pullback as we begin to realize it's more idiosyncratic than it is systemic.
And we've bounced back big time. The broader equity market has too. We'll be tracking that. I want to stay on course for the Federal Reserve and stay on track with you. This Fed and the recent decisions, and the next one too, is anchored to a massive step down in payrolls. What do you think they should be anchoring these decisions to?
I think they should be setting it up as an insurance policy standpoint. And I think they should be setting it up in an environment in which they want to make sure that they are achieving still full employment. That's what they say their target is. And I think if you wind up getting an unemployment rate movement that goes against their need to cut interest rates, then I think they should pause.
So this is a risk management decision.
Correct.
That's kind of what they're doing, isn't it? How much daylight is there between you and what they're doing right now?
There's not a lot. I mean, after the payroll employment numbers came out in August, I was on this call, and we talked about the fact that they might as well just do 3, September, October, and December. And it looks as if that's what we're going to get out of it. And that will pull us back into, from my calculations, a marginally stimulative monetary policy standpoint. For the market, they still have to get to 3% to be neutral. For me, 4% is neutral. So if we get to that level of 3 3/4 or so on the 10-year note, then we're into a stimulative territory.
If their bias is to the labor market,
yes,
what do they do without a labor market report?
Well, I mean, as the chairman indicated the other day, they have the ADP numbers. They could look at some of the weekly claims numbers. They can look at some of the continuing claims numbers. They can do some work and adding those things up and making those kind of assessments. And I think you basically have to take into consideration that there's a lot of uncertainty built into this situation. If you look at the wall of worry, I mean, we've got a government shutdown. We've got the tariff situation. We've got the Chinese trade war negotiations, in terms of you want to call it that or not. We've got the Middle East hostilities. We've got the Ukrainian hostilities. We've got a government shutdown that doesn't look as if it's going away. We have the upcoming question as to whether or not the tariffs were legal or not in front of the Supreme Court.
Why not go on pause then for October and recalibrate for the end of the year?
I think you want to make sure if there is something wrong, you get it in October so that you make sure there's a good fourth quarter of the year.
Steve, I've got no idea what happens in May and beyond because we don't know what the leadership of the Federal Reserve looks like. But do you think markets might be underappreciating the potential for a pause from the new year up to May?
Oh, I think the market definitely is underestimating the potential not to get to 3%, yes.
Steve, it's good to see you. Thank you, sir. Steve Asciutto of Mizuho, more constructive on growth for next year and less constructive on rate cuts for the new year and beyond.
And what he's talking about is that there's still a lot of inflation risk in the system. To his point, the tariffs haven't hit yet. They really haven't hit a ton of consumers. Besides Levi saying they're passing it on, a lot of companies are actually just absorbing it. And we're going to start to see the effects the end of this year and then 2026.
Stop talking about trade for a while through the summer, and here we are in the last week, driven by the trade story again, going into these talks between the US and China. Equities were down 1%. A lot of talk in Europe and Asia about what happened in the US session yesterday. Credit stress coming to the fore in a couple of regional banks. And here we are with equity futures totally unchanged off the back of comments from the president a little bit earlier this morning on trade. Let's get you an update on stories worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thank you. U.S.-China tensions, as you're saying, showing signs of easing. President Donald Trump telling U.S. media that high tariffs on China are not sustainable. The president adding that he thinks we'll be okay with China. Trump is preparing to meet with Chinese President Xi at the APEC summit later this month. Apple is getting ready to launch a touchscreen version of its Mac computers. The new laptops will have displays with OLED technology and a full trackpad and keyboard. The touchscreen MacBook Pro is expected to be released in late 2026 or early 2027, with prices likely to be a few $100s more than current versions. In sports, the Toronto Blue Jays blew out the Mariners 8-2 behind a pair of home runs, leaving the American League Championship Series at 2 games apiece. In the National League, the Dodgers held off the Brewers 3-1 and now lead the series 3 games to none. And in the NFL, the Cincinnati Bengals edged out the Steelers 33-31 with a last-second field goal. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for this week. This is a Blue Jays free zone, right? We don't talk about the Blue Jays?
Definitely a Blue Jays free zone. I'm a little bit still.
You're still sore about that, really?
It's ridiculous. It's insane we lost those games. Absolutely smoked in Toronto, and it's embarrassing.
Okay, all right, we'll move on. Awkward. Up next, let's set you up for a day ahead. Plus, Mark Haefele of UBS Global Wealth Management joins us in just a moment from New York City. You're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Fed's going to have to cut more than they expect. We could go all the way almost back to zero interest rate policy. We haven't even gotten to a recession yet or any real liquidity event. High yield spreads are still tight. The market's near all-time highs. This is not yet the real troubling part of the market. When we get there, I think the Fed's going to have to cut more than the markets think. I think it's going to be a global phenomenon, and I think you could need to go back there.
I tried to stay open-minded because so many people have got so many things so wrong coming out of the pandemic. But that is quite a call from Matt Miskin of John Hancock. And I kind of understand his point. Even with GDP where it is, a lot of people are talking about a Fed taking rates down to 3. And I guess Matt's point is, what do you think is going to happen to interest rates if things get really bad? If this is the conversation with unemployment in the low 4s, what's the conversation with unemployment 1 percentage point higher? And then I start to think about, okay, maybe not 0, but you can get your head around the idea that you go back to the 1s or the 2s, and that's the point that Matt is making here, just getting you to think about what could happen in the future. What could happen in the future is equities could turn green, because the equity market's turned around big time in the last 2 hours. We were down by 1% on the S&P 500, now down just 0.1%. On the Nasdaq 100, we're down by 1/3. We were down by more than 1%. You see it in the bond market too. 2-year, 10-year, 30-year bond yields were down across the board, and now they're higher across the board. 2s at 344. We were sub 340 when this program started. 10s at 399, and a lot of it is the President of the United States with a more constructive tone on China.
Yeah, he's like the Terminator this morning for the cockroaches everyone was concerned about when we walked in, Jonathan, earlier this morning.
Pest control.
Pest control, exactly, yeah. Because remember, everyone's saying there's a cockroach here, we're going to have all these credit concerns. Actually, the banks are turning around, and we might end the day higher when it comes to the banking sector and also the broader market. And the president is just basically turning down the dial when it comes to rhetoric between himself and Xi Jinping, and signaling the tariffs are not going to be as high already as he threatened as he goes into this meeting.
The swings we've seen in the market over the last week, since last Friday, have been unbelievable. We talked about Friday, the biggest one-day drop last Friday since April, biggest one-day rally since May on Monday, and then everything in between has just been a massive swing of anywhere between 1 percentage point to 2 percentage points every single session coming into Friday. As we count you down to the opening bell, here's the trading diary for today and into next week. Today, President Donald Trump meeting with the Ukrainian leader in Washington. Look out for that. Next week, some earnings for you. Netflix on Tuesday. Wednesday, we get Tesla. Thursday, Intel becomes a more and more interesting story. And on Friday, we will actually get some data We'll get some data, CPI, going into the weekend. Let's stick with the data. CPI could be the only government print the Fed gets ahead of the rate decision later on this month. Mark Hafley of UBS writing, with the Fed on track to continue its rate-cutting cycle, we believe the case for quality fixed income as a source of portfolio resilience remains strong. Mark joins us now for more. Mark, welcome back, sir. Let's just talk about that income. Over the last week or so, that yield is just slipping away from us, Mark. What do you think is driving that story?
Well, I mean, it's a lot of factors. I think first, we do have some concerns out there about the labor market and other things. But, we've got a Fed that's going to cut. And then I do think this QT story is also important to this because, that was a huge factor perhaps in creating some of those term premiums. So that side of it seems to be coming together.
S&P 500 target for you and the team mid-year next year, 7,300, Mark. What needs to go right to get us from where we are to get us there?
Yeah, well, first, anybody who's in the equity market does have a call on AI, whether they like it or not. And we think that the CapEx can continue into next year. That's one thing. Second, again, don't fight the Fed. Third, the earnings are looking good. And fourth, the one big beautiful bill is going to start to add some stimulus as we get into next year. So that looks like a positive backdrop to us.
Even you're constructive on AI, do you have any sort of concerns about the vendor financing that's happening within this space?
Well, 26 years ago, I sat down and was writing to clients about the dot-com bubble. And so writing this month was, brought back some memories. So yes, I think that I remember, some of the circular financing of the dot-com very well. I think that it's still early stages. Obviously, somebody's concerned enough that it's getting disclosed, and it's definitely something to watch. We'll just have to see where it goes from here.
Mark, when it comes to what we had this morning, which was the bank sector under pressure, given the concerns of these bankruptcies and credit qualities, do you think that this could potentially be a longer-term problem within this space and that can affect and have contagion across the broader market?
On the banks, we're looking at the delinquency rates. They look like they're okay so far, and so we're still thinking this is kind of a one-off. And the globally significant banks, the large banks, are doing very well.
It's odd, Mark, that we finished the week talking about these issues, and I get them, they're important, we should track them, on a week when we've just had blowout numbers from the big banks on Wall Street, Mark. Do you see this market as a bit of a market of contradictions at the moment?
Well, I love talking to you on a Friday because you're looking back on the week with this sense of wonder, almost awe that like all the stuff that has happened. And so I agree with you. I mean, we've had a heck of a run in the market. We don't have a lot of data right now, economic data. And so every data point is important. But I think as some of the, as you highlighted, you have to look at everything that's going on, from what the president is saying to, what the Fed is saying to what foreign leaders are saying to, what you're hearing from companies, and put it all together in the right matrix.
The good news is, Mark, this is just a relentless rally, Mark. We're on a 9th straight week of gains, a run we haven't seen since 2020. This week alone, we're up by close to 8%. I think 7.5% is the number on my Bloomberg terminal right now. Mark, can we just finish that? The relationship between gold and risk. We were touching on this when we talked last time. How are you reading these moves in gold? What's it all about?
Well, I think that part of it is fears about kind of the dollar and this and the concerns about debt. But a large part of it is the weaponization of the dollar after the Russian invasion of Ukraine, the use of sanctions, and central banks saying, hey, how else can we function that we're not necessarily beholden to the dollar system? And we continue to see that happening. Obviously, we've seen speculatory trades and retail come in on top of those things. But I think this central bank component is key to the story. And then, of course, underpinning this whole rally
is the continued fiscal spending, deficit spending that goes on, and it's don't fight the Fed, but also don't fight that tide of money that is stimulating economies around the world.
The Fed's an interesting component of this, Mark, and I'm pleased you mentioned the central bank diversification off the back of what happened with Russia, because that's been a source, a massive tailwind for this story, a non-yielding assets perform so well in an otherwise high interest rate environment. Mark, as we start to reduce interest rates at the Federal Reserve, is that just more fuel for the next leg of the trade? And what kind of numbers are you and the team considering?
Yeah, it normally would be, but I think that given this run, from here we're a little cautious and thinking more of gold as a hedge against potential risks that pop up, rather than saying, hey, this is a great time to pile in for kind of speculative gains or trading gains.
Mark Haefele of UBS. Mark, thank you, sir. Appreciate the clarity on gold as well. Mark Haefele of UBS Global Wealth Management, breaking down a move on gold. We've had a long, long run. A really steep run. If you look at the chart of gold, it's like exponential over the last 3-4 months.
It's been relentless, and it's also interesting who's buying it. It's central banks, as we were just talking about, and that's been a story since Russia's invasion of Ukraine a few years ago, but also concerns about inflation, concerns about trade war, shoppers in Asia. There is a ton of demand around the world from different pockets of the financial system for this asset.
Since the middle of August, we've just sort of gone vertical on that chart. Great to catch up with Mark going into the weekend. Heading into Monday, here's the lineup for you. We'll catch up with Russ Kostrick of BlackRock, Amy Gower of Morgan Stanley, Sarah Hunt of Alpine Saxon Woods, Abby Yoder of JP Morgan Private Bank's going to join us as well. The next 2 weeks are going to be really, really interesting. So next Friday, a week today, we'll get some CPI data. Then the week after that really is the big one. We're going to spend the next week talking about it. A sit-down conversation potentially between the President of the United States, the Chinese leader, a Fed decision, and all those big tech companies. We've talked about the start of earnings season. Earnings season begins in 2 weeks' time. The major players on the planet, the big tech firms, reporting numbers.
And going into that meeting, as you would say of a Fed meeting, the Xi Jinping-Trump meeting is live.
Going to be quite a meeting going into month end. From New York City this morning, good morning. Thank you very much for choosing Bloomberg TV. Have a wonderful weekend. This was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures.
But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs?
How
And
are
you're
the
lowering the
meatballs?
cost of the meatballs,
So I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
A fantastic recovery into the open. 30 minutes to go until the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, President Trump dials down fears of a trade war with China, saying tariffs on Beijing are not sustainable.
And traders get SVB flashbacks as two regional lenders fuel fears about problems in credit markets.
Plus, the president is apparently going to make Ozempic cheaper. Good news for users, but not so great for drug makers Eli Lilly and Novo Nordisk.
Well, Matt, we are on critter watch, I guess. What else is crawling out from underneath the fridge? Maybe they're not critters, maybe they're flicks of dust, because we are looking at some of these regional banks having a really good day. They are steady and higher by nearly 2% for Truist, and for Fifth Third more than 2%. We had a sharp sell-off yesterday, but they had solid earnings. Not just those two, but every regional bank we heard from today, Matt, had better than expected credit losses.
Yeah, well, but the KRE cratered,
yes.
And now is recovering. Stocks are the same. Novo Nordisk and Eli Lilly, those shares are still down. 4.2% for Eli Lilly and about the same for Novo Nordisk after President Trump said the price of Ozempic could go down. He's saying $150 out of pocket.
Now, elsewhere, President Trump said that high-threatened tariffs with China are not viable as tensions intensify ahead of an expected meeting with China's Xi Jinping. Trump spoke in an interview on Fox Business earlier.
It's not sustainable, but that's what the number is. It's probably not, it could stand, but they forced me to do that. I think we're going to be fine with China, but we have to have a fair deal. It's got to be fair.
Let's get more from Bloomberg senior editor Mike Shepard. And Shep, those comments turned around the entire market. We were looking at steep losses, and we have climbed back a lot. Does this mean it is, Taco Friday? Things aren't as bad as Trump had initially said?
Well, the president really is saying the quiet part out loud here, Danny, something that economists have been warning about all along, that there could be severe economic dislocation resulting from a high tariff rate against Chinese goods and then retaliation from the Chinese government against American products. So we do see a signal from the president that, hey, there will be economic pain and maybe we don't want to get that close to the stove on this. At the same time, though, we did hear him in the same interview put the ball back into China's court, saying, in essence, they forced me to do it. And he's alluding to the move last week by China to impose those curbs on rare earth mineral exports. And that is a big deal to U.S. officials. They had thought that this issue had been resolved in previous rounds of trade talks, only to see it reopen last week, much to their chagrin. And there has been some tit for tat even before that between the two sides over shipping and also over U.S. moves to target subsidiaries of sanctioned companies. And that would affect real lines of the Chinese economy like Huawei and SMIC. So this is all pointing ahead to that meeting in 10 days between Trump and his Chinese counterpart, Xi Jinping. The president also acknowledged that, look, that meeting still seems to be on track. But boy, Danny, they really do have a lot of work to get done ahead of that leaders' sit-down.
And Mike, the president spoke with Vladimir Putin yesterday. He's going to meet with President Zelensky later today. Is he going to continue to give the Russians even more time?
Well, this is a great question about what the call yesterday presages for today's meeting with Volodymyr Zelensky. The Ukrainians have perhaps been hoping for just a clean shot at the president, who had been signaling an openness to sending more weapons, including longer-range missiles, to Ukraine to help it fight back against the Russian invasion and strike targets deeper in Russia, including its industrial production and some of the air bases that have been used to launch drone attacks on Ukrainian targets, including the capital, Kyiv. Now, with this call with Putin, which lasted yesterday more than 2 hours, and Trump described it in favorable terms, it's unclear how tough a line Trump will be willing to take. Since the Alaska summit a few months ago, the president has expressed frustration with his Russian counterpart, signaling that, look, Vladimir Putin came all the way to Alaska, and he's still shown no willingness to move closer to the peace table. Whether that gets us any closer today, after speaking within a 24-hour span between the Russian and Ukrainian leaders, it's hard to say, Matt, and it's unclear how much of a discount on Trump's willingness to provide longer-range weapons and other support, material and energy and other things to Ukraine, whether that has been diminished following this call with Putin.
All right, Shep, thanks so much for joining us. Mike Shepard there out of Washington, D.C. Let's turn back now to the bank story. Regional banks sparking a credit concern after Zions and Western Alliance said they were victims of fraud on loans. Chris McGrady, KBW, head of U.S. Bank Research, spoke earlier on Bloomberg.
Right, the market sells first and asks a question and figures it out later, right? We saw that during 2023. This is completely different, right? So bank balance sheets are in a great spot. The market just doesn't like uncertainty. And so we've done a lot of work on the theme of consistency. The market loves consistency. If you look at the large banks, the earnings they've reported this week, they've been excellent.
Joining us now at the desk is Herman Chan, senior analyst for regional banks at Bloomberg Intelligence. So concern has been sparked. But not a crisis.
Not a crisis. I was telling Danny earlier I should bring a can of Raid spray to get rid of all these cockroaches.
So he's going to be a Terminator for Halloween.
Ex-Terminator, hopefully.
Right, exactly. But
ex-Terminator, thank you.
We're not seeing a lot of credit worries from the regional banks that have reported this week so far. It's been pockets of concern with a few credits related to fraud, which inherently is hard to predict and uncover. So we're seeing that uncertainty creep into the markets, but overall credit quality has been really strong.
But isn't that a problem itself? We were also talking about this in the and Zions didn't even know about this until Western Alliance reported it. Is it not a problem that there are issues that the banks themselves don't even know until someone else gives them a
Yes, that is a worry, right? So it's really about client selection. It's about having the controls in place to monitor these credit risk, and that's something that it looks like something that Zions needs to work on. On the other hand, we are seeing these are one-offs. We're not seeing that proliferate across the industry, given the third quarter reporting has been fairly solid.
So one critter here and there, not termites that have chewed through the foundation, basically. If I can like really make the metaphor painful.
It hasn't proliferated across the bank's balance sheets. We see one here and there that can be squished with a foot.
I can't wait till we're done with this metaphor. Herman, thank you so much. Herman Chan of Bloomberg Intelligence. Elsewhere, Novo Nordisk and Eli Lilly shares tumbling this morning, down more than 4%. President Trump said the price of Ozempic could go down to just $150 a month. Joining us now is Bloomberg's Shelley Banjo, managing editor for Global Business. And we did see the director of Medicare and Medicaid push back and say there are still negotiations ongoing. So how likely is it that the prices actually go this low?
Yeah, you saw a little bit of panic in Oz's face as Trump was talking about numbers and throwing things out about a deal that has not yet been inked. However, if it goes low, it's sort of, the numbers do matter, but the indication is that this is coming, and any sort of haircut to this price is going to affect the bottom lines of these businesses.
Well, and the important thing, it's not trivial to try and figure out whether President Trump was talking about the cost for the drug monthly or the out-of-pocket cost for those who are covered by insurance, right? Because for a lot of people, $150 out of pocket would be a 100, 200, 300% increase in the cost they pay. The drug's covered by insurance. Of course, if you buy it yourself, you can get it for $1,000. So that would be a huge decrease.
Yeah, so this is why this is so interesting and why the stock has dropped so much on Lilly and Novo compared to when they announced the Pfizer deal. Didn't see a lot of movement. People were like, oh, whatever, you know, it's just a deal. It's not going to really impact the business. The economics of selling these weight loss drugs are so vastly different from the economics of selling other drugs because so many people do cash pay. And so because such a big part of this business is coming from cash pay, it is going to impact them.
Well, because so many people need them, right? I mean, more than half of the people that live in this country are considered medically obese. Shelley Banjo, thanks so much for joining us. Shelley covers global business for us here at Bloomberg. Quick check on what's going on in futures right now. We do have red arrows, but they look pretty darn good compared to how they looked at 4 or 5 o'clock this morning. This is, you know, from the board, you see really nothing, a moment in time. But if you look at what we call the GIP here at Bloomberg of S&P futures, which is just tracking it throughout the early session, you'll see a strong dip. At one point, we were looking at futures losses of more than 1%. So we've really recovered pretty miraculously since President Trump made that comment about China.
The overall market has recovered. Regional banks have recovered, but what's still down is interesting. KKR in the pre-market still down 8.5%. Apollo still down massively. Citi also down this morning to a large degree to 3.8% this morning. So even though we've decided maybe the regional banks are okay after their earnings, a lot of those financial institutions are still under pressure this morning with those credit fears.
Yeah, keep your eye on, if you've got a Bloomberg terminal in front of you, type MOST space U4 to look at those pre-market movers. Let's take a look at some of the individual movers that aren't related to finance on our radar. Micron is falling on a report that the chip maker plans to stop supplying server chips to data centers in China. So it's a small drop, though, 1.5%.
Yeah, just a tiny little drop there. CSX shares, those are rising. The France transportation company reported third quarter revenue that came in above the average analyst estimate, matching what we saw in some of the other heavy trucking industry earnings too.
And American Express reported better than expected earnings after unveiling its long anticipated platinum credit card refresh and jacking the price up last month. So you can see those shares are in the green.
The CEO telling Caroline Hyde their credit concerns, but ours continues to be pristine, kind of like the quote of basically everyone saying, I'm not the cockroach.
Exactly. You're the cockroach. Yeah. Coming up, we're going to speak with Nadia Lovell of UBS and Gerard Cassidy of RBC Capital Markets. This is Bloomberg Open Interest.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
now to high interest. Look at what's making headlines around the world. Former New York Governor Andrew Cuomo spent much of New York's first mayoral debate on defense, fending off attacks from Democratic frontrunner Zohran Mamdani and Republican Curtis Sliwa. Running as an independent, Cuomo warned Mamdani's left-wing agenda was too risky, while Mamdani hit back over his pandemic record and harassment allegations. The two also sparred over Trump, policing, and anti-Semitism, with no clear winner emerging, but many say there was a clear loser. Car loans have gone from one of the safest kinds of consumer debt to among the riskiest, as delinquencies jumped more than 50% in the last 15 years. Soaring car prices and 9% loan rates are squeezing drivers, with 1 in 5 now paying over $1,000 a month. Even prime borrowers are falling behind as loan terms stretch past 7 years, and the average new car price in America is now more than $50,000. American Express topped estimates as spending surged following last month's Platinum Card revamp. The company reported $421 billion in billed business for the third quarter, beating analysts' expectations. Bloomberg Tech co-host Carolyn Hyde spoke with the CEO of American Express about the results, and he said, quote, "There's a lot of concern about credit in the market, but ours continues to be pristine." It's cool with us.
Because everyone wants that sweet, sweet $75 Lululemon credit per quarter. But there are credit concerns out there that have been rippling for markets. For more, we are joined by Tassos Vosos, Bloomberg credit market reporter. And Tassos, it's been said over and over, these are just one-offs. It's allegations of fraud. It's not representative of the entire industry. But isn't it a problem in itself that so much money has flowed into all pockets of credit throughout this market that terms are being lax and potential red flags may be overlooked?
I mean, yes, that's a concern I've been flagging for a while now. And a number of people just started moving from some kind of incredulity to some kind of acceptance that tight spreads and money flowing to every corner of the economy seems to be fine eventually. Let's just accept it. But what we're seeing right now is actually the first few dominoes falling through. And then we started thinking, is there more behind the scenes? Well, JP Morgan CEO Jamie Dimon said it very well with his comment that made everyone stand up and take notice with the cockroaches and whether there's any more to see. And this is why now we are looking into every single regional bank disclosure to see provisions for bad credit. And this is something that we will keep seeing and which will drive sentiment in the market.
I mean, the idea here, if you're not concerned, is that these are a few issues potentially of allegedly of fraud, and but the concern is that maybe underwriting standards have gotten lax. I mean, Zion's has a $50 million exposure that they didn't even know about until it was pointed out by someone else.
That's exactly the case. What is the standard of underwriting, and how lax has it been for what period of time? Because up to a few weeks ago even, we didn't even know of these individual cases, for example. Back then, it was like 0 cases of bad credit, and now we have quite a few names to mention. So yes, we can argue that this may not be a systemic issue. We will find that out soon enough, or maybe in months to come. But, you know, every new name that's being added to it increases skepticism in the market.
Even if it's not systemic, Tassos, there have been past examples throughout history where if fraud is big enough and bad enough, it can cause market corrections and have an impact on the economy. Enron is an example of that. Can you completely write off that possibility that, yes, perhaps credit quality as a whole is strong, but there's one big thing out there that could upset the entire market?
Absolutely not. We cannot write it off entirely. Actually, what the market did yesterday, as a first step to that, they drew a line between the large diversified money center banks, as we call them, the big six. You know, if a loan goes bad with them, you know, the balance sheet is big enough to support that. And then differentiated them from the regional banks, where a loan failure there is actually going to have a disproportionate impact. And the latter actually underperformed in the market. So the big six did okay. The regional banks underperformed, and this is the first step towards skepticism that there could be something bigger out there.
Tassos, there's so many data points we could look at, what kind of losses regional banks are reporting. They actually don't look much better than they did in the aftermath of SVB. The 2-year yield is now at its lowest point since September of 2022, so it's lower than it was during the SVB crisis. But I guess bank balance sheets, the reserves, at least at the Fed, look good. The repo lines aren't being accessed too much. What are we seeing in terms of spreads? I mean, I'm always shocked to see that high-yield spreads are so tight.
High-yield spreads are very tight. Actually, the cost of capital for banks is very tight as well. But the one thing we need to see as well, for example, with Zions yesterday and with Western Alliance, the cost of capital when it comes to preferred equity, for instance, which is a type of hybrid security that they issue to raise capital, that went really down. I mean, not the cost, but the value of the security itself. So the market can really adjust really quickly when it comes to the perceived risk to a security. So yes, all the indicators could be flashing green at a certain point in time, and then a bad headline comes up, for example, then the market reassesses very quickly, as we saw yesterday.
All right, Tassos, great to get hold of you. Thanks so much for joining us. Bloomberg's Tassos Vassos covers credit for us out of London, and you can see a lot of credit work being done this morning. Just type MLIV GO. Our markets team is all over it. Quick check on futures. Right now, we're back to little changed on S&P futures after having dropped more than 1% a couple hours ago. This after President Trump said in a Fox News interview that the current levels of tariffs are unsustainable on China. All right, coming up, Nadia Lovell of UBS joins us to discuss her bullish views on the market. This is Bloomberg Open Interest.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Given what the C-suites have gone through over the past 9 months, this seems pretty trivial, right? We've gone through a whole year of shock and awe, enormous uncertainty. Where are tariffs going to end up? Where's U.S.-China relations going? That still exists. And I think that dominates the C-suite more than do we see cracks in particular parts of the credit cycle.
That was IIF President Tim Adams speaking earlier on Bloomberg, downplaying credit market concerns and talking about what tariffs have and haven't done to the C-suite. Joining us now to discuss is Nadia Lovell, Head of Global Equity Strategy at UBS Global Wealth Management. Nadia, if we had been talking 2 hours ago, it would have been all about credit market concerns and where the cracks are forming. Instead, it's a market that turned around on President Trump saying that it's not sustainable, the current levels of tariffs. Are you surprised that the day in and day out comments from the president on tariffs are still moving this market, still the dominant force?
A little bit surprised because I think, I thought we would have come to a place to know that some of this is a negotiating tactic. But again, markets have rallied a lot over the last couple of months, and I think that any opportunity to take a little bit of a risk and protect some profits off the table, you're seeing that. You saw that last week with the tariff headlines. You saw that yesterday around the news around some of these regional banks that we think actually will remain very well contained. And so I think you have to expect this choppiness of the market near term, just given how far that we have run recently.
Where do you expect to see strength beyond AI? We can get into the conversation about whether AI is a bubble or not, but it's run up so far, so fast. What else is out there that you like?
Within the U.S., we also actually like healthcare. Healthcare has been this beaten down sector all year. It's seen a little bit of pullback as well this morning, just given the headlines again around the president. But we think, again, these are negotiating tactics, and we think that healthcare will be better positioned going into 2026. And even in the banks, we do think that there's some opportunities there. The reality is you're seeing indiscriminate selling happening in the last couple of days around the banks. Even large cap banks are down. And the fact is they had a pretty good earnings season. So you look at that as an opportunity to leg into that as well. And I think outside the United States, you have to look at China. You have to look at Japan as well.
I just want to. So Danny is the cockroach commander. She'll get to the banks.
That's a title I never wanted to have. Thank you.
I wonder about healthcare. I mean, even with the president trying to drastically lower prices, if he meant 150 in total for Ozempic, that's like a 1/9 of what it costs.
Like Dr. Oz said yesterday, still in negotiation. These negotiations should not be a surprise to the market. This is part of the IRA. We knew that Ozempic was up to be negotiated with the government. And so, again, we think that when all is said and done, this will be manageable for the sector.
Dr. Oz is one of the leading medical officials in the United States of America.
Correct. Director of Medicare and Medicaid.
Sink in. Nadia Lovell of UBS is sticking with us. Quick check on futures ahead of the opening bell after the big swoon that we saw. You're looking at that on your screen. Those are S&P futures. Huge drop, but a complete recovery. We'll get back and talk with Nadia and Danny about the credit quality in this country. This is Bloomberg.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now
than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that have recovered significantly from large drops this morning. We were looking at big drops of more than 1%. And on concern about credit quality, then President Trump on Fox said Chinese tariffs are not sustainable. So maybe rolling over, showing them his belly a little bit. S&P futures are now back to a loss of only 0.2%. NASDAQ futures are down still 0.4%. You have the bell at the New York Stock Exchange. It is Breast Cancer Awareness Month, so the Breast Cancer Research Foundation ringing the bell down there to open the session to end the week. And then Terra Innovatum Global Solutions ringing the bell at the NASDAQ. It's like a nuclear company. Don't really have to say what you do. If you're a nuclear, people will buy your shares because we need the energy. So they're up like 30% year to date after having not moved before that. Danny, what are you watching?
So I am watching the regionals, the thing that everybody is watching, because these were declining by double digits yesterday after warnings from Zions, from Western Alliance on loans gone bad, allegations of fraud. But today, they're not just steadying, they're higher by at least 2%. That also got a boost from solid earnings from Truist, from Fifth Third, both of them, Matt, and all the other regionals we heard from today, reporting better than expected credit quality.
Yeah, Zion's in the last two sessions has lost like 20%.
Correct.
Of its market cap. All right, Novo Nordisk and Eli Lilly, they continue to fall in the cash trade after dropping in the pre-market. President Trump said the price of Ozempic could go down to just $150 a month. I quibble here. He said out of pocket, but maybe he meant in total. That would be the price.
Wait, in total being with insurance, you
I mean,
or?
if you say out of pocket, you're implying that insurance has picked up, you know, some of the cost.
Oh, yes, I see what you're saying.
And then you pay the rest.
Yeah, well.
So it costs $1,000, and now, out of pocket, people pay $50, $100.
Well, that's what the market's assuming, right? And why these shares are falling so much.
The market is assuming he means the total price
yes.
is going to be $150,
yes.
which would be drastic. And we were just talking about that. But let's get to credit quality because Nadia Lovell, UBS Global Wealth Management Head of Global Equity Strategy, is still with us. And this has been the concern with Tricolor, with First Brands, and now with Zions. But do you think each one of these is idiosyncratic?
I think so to some extent. Now, we can't rule out that there might be another one that comes out, you know, in coming weeks. But again, don't think that this is systematic. Look at the earnings growth that we saw from the large cap banks this week. In fact, delinquency rates remains well controlled. I think even JP Morgan, in fact, their, you know, net charge-offs numbers came down for in terms of their guidance for this year. And so I think you have to look at the bigger picture beyond just what's happening in these single stories and look at the health of bank's balance sheet. And also, quite frankly, the capital markets activity has been quite strong. I mean, you had Goldman talking about the best pipeline in 3 years. And so I think that you have an opportunity to pick up some very quality, high quality companies in this sell-off that we saw yesterday.
But isn't the high activity part of the problem? The fact that there's been so much money flowing in that needs to be put to work, that there's been lazy underwriting. Mark Rowan of Apollo talked to the FT saying that it's symptomatic of a late cycle where there are accidents because of that. Maybe it's not suggesting that there's a big blow up, but does it at least suggest that we are somewhere in the late cycle of this credit market?
Possibly, like, yes, and when you reach these late cycle stages, you start to see some hiccups like this. But again, you know, we're talking about $50 million for one. It doesn't feel like it's going to be the systematic things where you're going to see billions of dollars of losses here. Yes, there's probably some credit standards in terms of underwriting standards that was lowered a couple of years ago when we were coming out of the pandemic. But I would say, like, again, this seems very well controlled to us, and there are opportunities. Maybe not so much leaning in, again, in any sort of low quality regional bank, but staying up in quality in some of these other names.
What do you think about the Mag 7, the Great 8, the AI bubble, as it were?
What bubble?
Yeah, that's exactly what I was wondering.
Look, we don't think that we're in a bubble. Yes, there's a lot of questions around, you know, vendor finances and circularity of some of these deals, but I think it's, again, a reflection that the demand is there and the supply isn't. And so the fact that you have companies investing into each other helps to broaden that ecosystem. And when you think about it, at the end of the day, like, this is 13% or something of NVIDIA's, you know, revenues. Not a huge thing. And again, going back to the fact that much of the CapEx is still being financed by the large four hyperscalers, right? These companies still have very strong cash flows, even after CapEx. They're looking for cash flows this year of over $200 billion. That's very important to remember, that it's not heavily debt financed, it's not all vendor financing. And the fact that you had a pretty solid earnings season so far, you heard from the likes of TSMC that the fact that the demand still remains strong, much stronger than they even thought 3 months ago, and the fact that the tokens compute is increasing at exponential rates.
If you are, though, maybe worried, and you look at the valuations and you say, I don't want to move against this, but I at least want protection, gold seems to be the choice du jour. Does that change? Can gold continue to ride the wave?
It's interesting that you say bubble, and if you pull up the charts, gold versus the Mag 7, I would say, which one is up a lot more?
So is gold in a bubble now?
I'm not saying it's in a bubble. I'm just saying that we always come back to the story about the Mag 7, whether it's a bubble or not, versus an asset that is a store of value versus something that is an investment that at some point will be monetized. Yes, central banks are continue to buy gold. There is a story behind gold in terms of diversifying. We do believe in that. But I think the reality is, like, we always have to take these other things into context. The fact is that you do have gold up quite a bit. We do think it is part of a portfolio, though.
All right.
5% or so.
Fair enough. Nadia, thank you so much for joining this morning. Great to get a sane voice in the chaos. Nadia Lovell of UBS. All right, let's get a check on your equity market right at this moment, because you are looking at little change. We are not even down 0.1% this morning. Quite the difference from what you would have woken up to when futures just started trading and we were down more than 1% on banking jitters. It is a turnaround in part led by Apple and American Express. American Express coming out with very strong earnings, now up 4.4%, saying that the uptake of the new credit card refresh was the best that they have ever had, saying, credit concerns, not us. Our credit is pristine. The CEO saying that to Caroline Hyde. Now, on the downside, you do see some of these AI players, Broadcom, NVIDIA, Oracle, Microsoft, all down this morning. Eli Lilly, that's been taking it on the chin this morning, too, after President Trump saying that Ozempic prices could be as low as $150 a month. Looking at the sectors themselves, one of the important ones to note is the fact that you have financials gaining. They're up 0.25%. You can see they're the fourth best gainer in terms of sectors this morning. Energy, consumer staples, that also leads the pack. I showed you before how NVIDIA, Broadcom, Oracle are falling this morning. So Infotech goes down 0.4% for an overall index that is little change, Matt.
All right, just looking, gold actually has beaten the Mag 7 not only year to date, but over the last 12 months and the last 24 months.
Huge gains.
So it's been incredible to watch, and I guess it's either it's in a bubble or it's telling us something, right? Coming up, more on regional banks sparking credit jitters. Gerard Cassidy, RBC's head of U.S. bank equity strategy, joins us to talk about whether or not these shares are fairly valued. This is Bloomberg Open Interest.
what point do you say we made a mistake and we're getting out? How long do you give it before you say this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We've gone back from the worst of the losses during the pre-market session, thanks to President Trump saying that the current level of tariffs with China are unsustainable. Even so, it is tech now that's leading the market lower. NASDAQ underperforming, down 0.4% compared to the 0.2 for the S&P, which stands at 66.16. Some of the top calls from the analyst action that we are focusing in on this morning. UBS. They are upgrading Deere to buy. They expect 2026 to mark the bottom of their earnings slump. They see a rebound starting in 2027. Agricultural conditions sentiment are weak now, but the analysts say that the next upcycle could start being priced in over the next year. Those shares up about 0.7%. Next up, Moody's is getting an upgrade at Raymond James, the firm citing limited downside risk. The analysts say that the company could hit the high end of its full-year guidance, but notes tight credit spreads may not last, up 0.5% for Moody's. Finally, Baird upgrading Zions to a buy. They called the recent sell-off excessive. The analyst says that he is using weakness in the banking sector as an opportunity. He notes that the $1 billion plus drop in Zion's market cap likely stems from contagion and liquidity fears, and you can see the rebound well underway, up 3% this morning. Now, Deutsche Bank CEO Christian Sewing weighed in on the state of the credit market in the last hour.
There is a lot of volatility in the market. We have seen that actually over the last weeks and months. Whenever something is supposed to be there, market is reacting. In our books, I can tell you, no, there is no deterioration. We're very confident with our credit portfolio. In this regard, I think the market is reacting quite heavily. But I think you always have to see it over the long term. And so far, to be honest, I see no credit deterioration.
And for more on the regional banking story, we're joined by Gerard Cassidy, RBC's head of U.S. bank equity strategy and large cap bank analyst. And Gerard, for the most part, we've heard from CEOs who say there's nothing to see here, please move on. And we don't really see signs of stress in the data. If you look at the Fed, what's being drawn on repo lines. Do you think that we have underwriting problems, maybe even just in the regional banks?
It's no. The short answer is no, but it's a very good question to be asking due to the fact that there has been some high-profile frauds or alleged frauds being announced in the last 30 days, with yesterday's fraud with Zions and Western Alliance hitting the headlines. And so it is something that we should be digging into, but this category of loans that everybody is referring to, NDFI, the non-depository financial institution loans, that category of loans has grown rapidly over the last 5 or 6 years. And I think that's another reason people are more concerned about it. But here's a really interesting distinction of what we're seeing today versus other credit cycles. Now, the credit cycle back in the 1980s with the Texas banks, when oil dropped below $10 a barrel, that led to obviously significant losses in their oil portfolios. And it spread, the contagion risk spread to commercial real estate in Texas. Today, these non-depository financial institution portfolios are a regulatory category, and they're not interconnected. So that's one of the reasons why I think right now there doesn't seem to be contagion risk, which is what people are worried about. And I think the underwriting, there will be slip-ups, no doubt about it, as the frauds are shown, but we don't see an underwriting, deterioration across the board at all.
Gerard, does it just say something about the state of how hot this credit market is? The fact that you had Zions not even aware that this was in their portfolio, that there was this loss of loan that they might be dealing with until Western Alliance reported it in their own earnings. Is that not a problem in itself that Zions didn't catch this earlier on?
Well, it really comes down to fraud, but yes, also when you do the analysis, the credit analysis, and the monitoring of credits, obviously the frauds are surprises, and that is, I think, the case with the First Brands bankruptcy as well as Tricolor, and now this one. So it's not something that you obviously want to see. I totally agree with you there, but it's not shocking, if you will. I mean, when the others announced the Tricolor problems, even JP Morgan, it doesn't, happen until the bankruptcy filing hits or you miss payments, and it comes as a surprise. It's very tough to predict.
But Gerard, Tricolor and First Brands, they were really, really distressed even before the allegations of fraud, and still people poured money into them, giving them loans both in the broadly syndicate market and private credit. Isn't that kind of a problem too, that people are taking so much risk at this moment because they have to put money to work?
I think you're touching on a very good point, and there is definitely excess risk, because to your point, the liquidity, there's still plenty of liquidity out there, and the underwriting or the investing is taking excess risk. But again, most of it's outside of the commercial banking industry, and across the board, every bank from JP Morgan all the way down to the regionals today are showing very strong credit metrics. So this is not something, that is epidemic to the banks at all.
Yeah, and all those regionals that reported today also had strong credit metrics. Gerard, never enough time with you. Thank you so much for joining us this morning. Great to get your thoughts. Gerard Cassidy of RBC Capital Markets. Coming up on the show, we talk the AI trade with Jay Jacobs, BlackRock's U.S. head of equity ETFs, and what he's seeing in his extremely popular active AI ETF. That's coming up next. You're watching Bloomberg Open Interest.
geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check of what stocks are doing. Looking at losses, but they're not deep. So the S&P 500, after closing down about 0.6% yesterday, is off another 1/10 this morning. There are some credit concerns, but they don't seem to be that serious now, and especially since Trump said China tariffs are unsustainable, the market has recovered significantly. NASDAQ still down 0.2%, and one of the reasons is the drop in NVIDIA, although that now is only about 0.2% as well. You can see here, not even. Oracle is down 5.3%, so a much bigger drop for a company that's becoming much bigger, turning around today. Zions and Western Alliance were the focus of a $50 million loss, and that's why we had such big drops yesterday. Zion yesterday was down more than 13% in the cash trade, and it was down a lot pre-market, but has recovered significantly. And then Meta and Blue Owl, we put that in there, even though Meta's not really moving, because they finally closed this deal with Blue Owl, and I believe PIMCO, Danny, as well, was in on that financing deal, a $30 billion data center deal.
Yeah, I'm not sure they fully confirmed it, but our reporting does suggest that they will be confirming it in the coming days, according to the Bloomberg News team. The AI trade, it is the darling of this market, and for more on it, we are joined by Jay Jacobs, BlackRock U.S. Head of Equity ETFs. And Jay, I know you oversee a lot of active ETFs, but one of them, BAI, less than a year old and already almost has $7 billion. Why is this thing so popular when someone could argue, hey, if I just buy the S&P 500, I'm like kind of getting AI exposure too, given just how big of a weight NVIDIA is?
I mean, I think that's the biggest mistake investors make, is assuming that the S&P 500 or the tech sector is giving them good exposure to AI. It's giving you some exposure to AI, but there's a much bigger value chain. Think about data centers, think about power suppliers, think about companies that own a lot of really valuable data. These are some of the hidden gems within the AI value chain that an active manager like Tony Kim, who's running BAI, can sift through the noise and find these opportunities and really give a much more nuanced exposure to the AI trade.
Is there any concern? I mean, I'm sure you must have talk, at least around the water cooler, of a potential AI bubble. Do you have to play it anyway, even if you think that's how it turns out 2-3 years from now?
I think, again, a lot of people have exposure to a lot of these AI hyperscaler names, the Mag 7 stocks. There's a smarter way to get exposure to it. We're not so concerned about valuations because you're seeing a tremendous amount of growth in the space. And this growth is being driven by real revenues. A lot of the investment is being driven by profitable companies, not borrowing, not taking on excess leverage to build into this AI trade. So we feel good about where we are, and it's really about shifting from just kind of basic exposure to AI through the S&P 500 to getting much more comprehensive exposure through a dedicated fund like BAI.
There does seem to be really this conversation, though, happening. If you are worried of things looking bubbly, or not even that, you're just nervous about valuations, where do you turn to instead? Gold has been a big proxy for that. But in the uptake of your ETFs, do you also see some of those nerves playing out of people looking for things of alternatives that might help protect them if there are jitters in the AI trade?
One of the interesting areas where we've seen a lot of flows this year is in infrastructure, just kind of broad global infrastructure.
We brought in AI too, though?
It is a little bit AI, Jason, and I think that's what's interesting about it is valuations are very low in this category. These are more value-oriented companies. It's a lot of utilities, some real estate companies. But when you think about kind of barbelling your portfolio between technology and infrastructure, you can really have more balance and not be so kind of overweighted into tech. You can play two themes that are actually quite related.
I'm drawn to Bali because love Indonesia, and also I want some dividends here. You have this ETF, right? It's the large cap, the iShares US large cap premium income active ETF. I wonder about the tightness of credit spreads and how long they're going to stay that way.
Yeah, so when you look at the market environment right now, a lot of people want to have their cake and eat it too. They want to participate in the growth of the markets, but they also want to get income because the S&P 500 is delivering like 1.5% dividend yield. So we designed Bali to be able to deliver both of those pieces, upside participation with generating additional income by selling covered calls on the S&P 500. So if you look over the last 12 months, it's distributing about a 10% yield, but having tremendous amount of upside participation. To your point around credit spreads, I think a lot of investors are looking for other sources of income in a portfolio beyond just going for credit or, you know, the short-term part of the bond curve where we're going to see declining yields going forward.
By the way, it's also, I see Microsoft up there at the top, and remember TD Cowen said the spread could go negative over treasuries.
Right, yes. Yeah. I mean, it just shows a sign of the times, but also a sign of the times, Jay, just taking a big step back. BlackRock, you and your colleagues have really pioneered giving everyday investors access to this economy. Things have changed, though, and the number of public companies has really shrunk. Is it getting harder to compile these and give investors access to the real innovators of the American economy?
Well, if you look, there's actually more ETFs than there are stocks in the United States now, which I think is a really interesting statistic. But we have to remember, ETFs are more than just stocks. Fixed income has been a tremendous growing area for ETFs. We've seen, you know, option strategies like Bali become a very fast growing area. Areas like Bitcoin and gold, completely other assets beyond stocks. So what we're seeing from investors is, yes, there's several ways you can play the equity markets, but a lot of interest is going into categories that are just beyond kind of plain stock ETFs. Gold, Bitcoin, premium income strategies, fixed income, et cetera.
Jay, great getting in here on a Friday. Thanks so much for joining us. Jay Jacobs there of BlackRock on ETF Friday. Coming up the next hour, Baird analyst David George joins us, talk more about banks. We'll get Monroe Capital's take with Ted Koenig and Amy Wu Silverman of RBC Capital Markets on derivatives. Plus, we're going to talk about AI power demand. We're growing nuclear with the CEO of BWX Technologies. This is Bloomberg Open Interest.
Villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin-yang 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
CBS News on the Hour, sponsored by Eggland's Best.
I'm Deborah Rodriguez. President Trump's former national security advisor, John Bolton, surrendered last hour at federal court in Maryland. Correspondent Scott McFarland.
The one-time Trump national security advisor is now a federal criminal defendant. He appeared at the Maryland courthouse this morning and faces the possibility of prison time in this case. CBS News has learned it was a career national security prosecutor who made the case to the grand jury in Maryland yesterday. He was a Trump political appointee and one-time White House aide who presented those cases against James Comey and Letitia James.
Yesterday, President Trump held a lengthy phone call with Russian President Vladimir Putin. Today, he hosts Ukraine's Volodymyr Zelensky at the White House. CBS's Nancy Cordes is there.
Today, in the Oval Office, Zelensky will likely ask again for long-range Tomahawk missiles capable of striking deep into Russia. Trump has said repeatedly that he's thinking about it.
If this war's not going to get settled, I'm going to send them Tomahawk.
The president says he and Putin plan to hold an in-person meeting in Hungary. As tensions rise between the U.S. and Venezuela, CBS News has learned the U.S. has destroyed another boat in the Caribbean. CBS's Errol Barnett.
This marks the sixth known boat attack in the area since last month, and the first known instance with survivors. The White House hasn't publicly acknowledged this latest attack. The number of passengers and survivors from yesterday's strike is unclear.
The president says the first 5 targeted drug traffickers. A soccer game turned scary at Wagoner High in Louisville, Kentucky last night when a section of railing in the stands collapsed just as the Rocks were celebrating a final penalty kick that lifted them to a 4-2 win. WLKY caught it all on camera.
You can see students leaning over the railing in the student section before it completely gives way when the players get there, with students falling to the ground on top of the players.
The school says several players and fans were injured. All of them are expected to be okay. A founding member of KISS has died. CBS's Vladimir Duthier looks back.
Paul Ace Frehley is considered one of rock's guitar gods with his signature smoking 6-string. Frehley formed KISS in 1973 with Paul Stanley, Gene Simmons, and Peter Criss. He wrote the song Shock Me after he was nearly electrocuted on stage by his guitar.
Frehley died weeks after he fell at his home in New Jersey. He was 74. The Dow is up 156 points. This is CBS News. New court action targets a recent White House policy.
The U.S. Chamber of Commerce is suing the Trump administration for imposing a $100,000 annual fee for new H-1B visa applications. The suit claims it's unlawful and would significantly harm American businesses. The administration announced it last month, arguing employers were replacing American workers with cheaper talent from overseas. Amid pushback, the White House said the fee would not apply to existing visa holders and offered a form to request exemptions from the charge. Previously, most H-1B visa applications cost less than $3,600. Steve Kathan, CBS News.
Cardi B, who is expecting baby number 4, says she's too busy to breastfeed, and she's encouraging other women to make their own choices, too.
Just like me, baby, you're not guilty. However you feed your baby, just make sure you do it with confidence.
She signed on to promote an organic infant formula. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so check us out there. Scarlett Fu and Paul Sweeney with you this morning for 2 hours of the Bloomberg Intelligence program. Coming up, we're going to check in with Herman Chan. He's a Bloomberg Intelligence senior analyst. He covers the regional banks. I'm going to ask him, do we have anything to worry about out there about these regional banks and credit quality? Is there another shoe or two to drop, or is this not a big deal? Keith Knowlton's going to join us, Bloomberg News auto reporter. Auto loan delinquencies jumped 50% as car prices reach new heights. Wow. Ed Price, non-resident senior fellow at NYU, is going to join us here on just kind of some geopolitical news and how it might impact some of these markets going forward. Michelle Hussein, editor-at-large for Bloomberg Weekend and host of the Michelle Hussein Show. She's going to give us some thoughts on her conversation with Prime Minister of Canada, Mark Carney. So a lot coming up over the next couple hours. We'll keep an eye on these markets, which started out in the morning on the futures market very negative, but have turned around. We've got a little bit of a green on the screen here. So let's check in with John Tucker in a Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. Yeah, so the back and forth on trade resumed this morning. The president telling reporters that current tariffs on China are, quote, not sustainable. So that's given a lift. After some real jitters yesterday and earnings painting a better picture today of the regional banks. Right now, one of the best performers in the S&P 500, that belongs to Truist Financial. Those shares are right now up 3.8%. They reported lower than expected provisions for credit losses. Meantime, Amy Wu Silverman at RBC Capital Markets says, you know what, the recent market run-up probably was due for a bit of a pullback.
I feel like we were in some ways due for a shakedown, for a volatility pothole. There are a lot of folks who are very well hedged going into this year end. And, you know, you've seen a lot of monetization of hedges because people, you know, I think it was just a very reluctant rally.
Right now, the S&P 500 kind of reluctant to push any higher, up just 3 points, 66.32 on the index. The Dow Jones Industrial Average up 112 points. The NASDAQ 100 right now 17 points higher. Any action in treasuries? Well, the 2-year up 3 basis points, 345. The 10-year is up 3 basis points, right at 4%. Oh, I don't know if you're Formula One fans, kids.
I saw the movie.
Well, that makes you a fan.
Yeah,
Apple entering a 5-year partnership with Formula One. They're going to give Apple TV exclusive broadcast rights for the races in the U.S. starting next year.
Yep.
I know they've tried to do that in New York City, across the river, on the Hudson waterfront, but it never took off.
No, but they need to make a commitment to some. It's really big in Miami. That's like a big event when they do it in Miami.
Yeah, you can see it there.
Everything's good in Miami.
I'll watch if Brad Pitt's involved.
Yeah, exactly right.
Other than that, no, thank you.
In the movie. All right, John Tucker, thank you so much. Appreciate that. As always, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio and streaming live on YouTube as well. Market Drivers today is brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn more. As John was saying, we got some red and green on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Christina Aquino. Christine, what are you looking at?
Let's take a look at Novo Nordisk, Paul. So that's one of the red stocks on the screen at the moment. So ticker NVO. Those shares are down 3.8% now. So that's extending some of those opening declines that we've already seen. And this is the Ozempic maker. And of course, we did get President Donald Trump saying earlier that the price of the drug Ozempic could come down to just $150 a month. I think at the moment the list price is about $1,000, so it would be literally a fraction of the cost. And you know, Novo has already been challenged this year, right? Like shares have been down about 58% in the last 12 months because it's facing increasing competition in the weight loss market. But we did have Bloomberg Intelligence analysts weighing in saying that, okay, in theory, this would be bad news for Novo, of course, but implementation would be challenging. And we don't even have any details at the moment in terms of how this will go down and what sort of proportion of patients would actually be will have access to those lower prices. And so the knee-jerk reaction is a sell today, but watch the space for a bit of a clawback there potentially.
The knee-jerk reaction to State Street's latest results is also to sell it.
Absolutely, Scarlett. So State Street, ticker STT, those shares also down this morning, extending declines as well, down more than 5.8% right now. We did get their results, third quarter adjusted EPS beat estimates. That's the good thing. Fees are also up, but everyone is focusing on their net interest income, which is below expectations. I think the word in the street is that, okay, fees are up, that's great, but that's more reflective of the broader market environment, right? It's not necessarily reflective of State Street's very specific strengths. And in terms of its net interest income coming in below expectation, that's actually a very specific weakness because Truist analyst David Smith was pointing out that investors will definitely be asking why they've kept their NII guidance lower when other trust banks have actually raised it. So that's something that is causing a bit of concern in terms of the net interest income outlook and something that's probably weighing on the shares today.
Zion? What is a Zion?
Zion's the bank that we've all been talking about for the last 24 hours anyway. And so, right, yesterday, big decline, 13%, clawing those losses back today. So Zion, ticker ZION, shares are up now more than 5%. And yeah, they're rebounding because, you know, after the aftermath of the great sell-off yesterday, I think the word on the street is that it is, at the moment, it's looking like it's an idiosyncratic risk, and potentially what we saw yesterday was a price action, sell first, ask questions later. Bloomberg Intelligence weighing in, Herman Chan, who we will have, we have on the show later. So he wrote that, you know, this looks like it is very specific to those charge-offs related to two specific commercial loans, and otherwise credit quality has actually been well managed. We did see, you know, prior to the news that, you know, Zion is looking like it has a good base when it comes to its small business clients. And as Herman mentioned, asset quality has been solid, loan losses have been below peers. And so, yeah, knee-jerk reaction yesterday, already clawing that back today.
Speak of the devil, we've got him in studio right now. So, Christine, thanks so much. That's perfect timing. Christina Aquino, she's managing editor for Markets Live News, joining us here in our Bloomberg Interactive Broker studio. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Speak of the devil, we got the man himself here in studio, Herman Chan. He covers the regional banks for Bloomberg Intelligence, and all kinds of sizes, from some of the smaller regional ones to the really big super regional kind of names here. Herman, I don't know, you're the expert, dude, but it feels like, and John Tucker hates this word today, we're not allowed to say it in his presence, idiosyncratic, that it's kind of bank-specific, kind of localized issues. Am I being too optimistic about that?
I just walked in and he told me not to say that word. So
yes.
I'm going to say one-off. So one-off issues that seem to have spooked the market. So this Cantor loan, not related to Cantor Fitzgerald, was hit Zions and Western Alliance. It does look like specific to those two names, and we've seen a slew of regional banks report earnings this week, and all of them have reported pretty stellar results and not seeing any deterioration across their commercial lending book, and nothing specifically related to these non-bank loans that have affected issues like Tricolor and this Cantor issue.
Okay, that's reasonable, and that's something that a lot of people who are, saying, calm down, everyone. This is not a massive fire, but it's also reasonable to ask, why are these credit one-offs or idiosyncratic events?
Why are these happening?
Why are these seemingly occurring in a short period of time?
That's right. So there's no rhyme or reason. I think yesterday's sell-off was really about if there's more fraud prevalent in the market and in bank lending, maybe we should just take a breather and sell. But what we're seeing today is that a lot of the banks that reported this morning confirmed that they don't have much exposure at all. Fifth Third mentioned a bit of exposure to First Brands, but that's already contemplated into their numbers. So everything seemed to be fairly calm and steady. So that reassurance has really helped the market today.
All right, so some of the bigger regional banks, I'm thinking Comerica, Fifth Third, Truist, Huntington, what are you learning about what's the message you're hearing from some of your banks this quarter?
Yeah, they're talking about steady revenue gains and really propelling results into 2026 with strong revenue growth and higher earnings. So that's what we're seeing. The messaging has been really strong, particularly in Truist, talking about improved return on tangible equity. Fifth Third gave some really solid comments on their top line. Regions top line's a bit softer, but overall we're seeing really strong comments across the group and no real credit concerns at all.
And Scarlett, I guess we must disclose that Huntington Bank is the bank of one Matt Miller and his financial empire.
Really?
Yeah. So
I was not aware of this.
That. Yep.
Okay.
Because it's based in Columbus, Ohio, which is where the Matt Miller clan.
The Columbus link. That's right. Okay. So Herman, as we go forward with investor days and people kind of making sense of all these one-off events. I'm looking at John Tucker as I say one-off instead of idiosyncratic.
We got the memo.
What kinds of questions are you going to be asking? Because now that there have been emergences of one-off loan fraud instances, people are going to be digging a lot more.
Right. So that's the million-dollar question. How do investors and analysts get comfortable with the underwriting, the credit monitoring, the controls? Because Zions in particular, as an example, Western Alliance sued the Cantor Group back in August, and only now are we hearing that Zions found out about the issue. So there's been a few months of lag and really speaks to potential worries about how they're monitoring their credit quality. So that's one thing. And another is, where are these exposures and potential issues with these non-bank loans? So that's another issue that's front and center across the analyst community that's been asked during the Q&As of these earnings calls.
All right, what I learned from you from a couple of years ago when you had a couple small banks blowing up, KRE, the Spider S&P Regional Banking ETF, it's up 1.6% today, and it's basically flat for the year. So a little bit of a rebound in some of the regional banks. Herman Chan, thanks for walking us through it. Herman Chan, he's the senior analyst covering the regional banks for Bloomberg Intelligence, joining us here in the studio. The S&P's up 18, Dow's up 180, NASDAQ's up 65, a lot better than we saw earlier this morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half. If you move to Oracle Cloud Infrastructure, this is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, President Trump said high threatened tariffs with China are not viable, so that's one of the reasons we're seeing a bit of a risk-on move for this Friday trading session. Among the what do we call them now? One-off stocks. Fifth Third Bancorp, they posted a higher profit in the third quarter. It beat what Wall Street was expecting. The average deposits also beat the street, and the net interest income, one of the key metrics, they are also beating projections. So as a result, those shares are higher. Fifth Third up right now 1.9%. Among the most actively traded, NVIDIA at the top of the list. Those shares up 0.7%. Then you have the Intel shares 3% higher. You have 8 of the 11 major industry groups in the S&P 500 in the green right now, being led by consumer staples and consumer discretionary. Materials, that's the worst performer. The federal government not releasing economic data, but we do have an analysis of state-level jobless claims that shows unemployment benefits fell last week. Initial claims, that is, slipped by 19,000 to about 215,000 for the week before. Economists also saw a decline, estimating that initial jobless claims totaled about, again, 217 last week. S&P 500 up 13, the Dow Jones Industrial Average up 129, and the NASDAQ Composite Index right now 43 points higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
Thank you, John Tucker.
You're so welcome.
Scarlett Fu and Paul Sweeney here on Bloomberg Intelligence, TGIF, everyone. TGIF, John?
Yes, very much so. What are your plans for the weekend?
I'm actually going to your neck of the woods, Princeton, later on today.
Okay.
Yeah.
Is there a hockey game?
No, there is no hockey game, but I'm attending some event at the Institute of Advanced Studies.
Absolutely.
Yeah. Einstein Drive.
Einstein.
Yeah,
Whoa.
there we go.
That's like the smartest people on the planet Earth, including one of Scarlett's relatives, I'm told.
Yeah, she works there, but we can get to that later on. Let's talk about the economy and the market.
Conti's Pizza. You heard it here first.
Thank you. Okay, good tip. I will keep that one in mind. The fundamentals underpinning this economy and the buoyant financial markets is this idea that the consumer is resilient. But a new study shows that all is not well in car loans. Keith Naughton is Bloomberg News' auto reporter in Detroit, and he joins us now. And Keith, auto loans is really a good leading indicator of the economy because people will continue to pay their car loans because they need their car to get to work. So when they're not paying their car loans, that's a sign that something's not going well. What are we learning about car loans right now?
Yeah, the authors of this study say that consumers are actually in their most precarious position since the last recession. You're absolutely right, Scarlett. Normally the car loan and the mortgage payment are the priorities, particularly the car loan, because you need to get your kids to school, get to work, all the things you need from a car. But what we're seeing is over the last 15 years, delinquencies, so 60 days past due and more, have gone up by more than 50%. So that has made car loans actually the riskiest consumer credit product out there, more so than mortgages, credit cards, and personal loans.
So, Keith, another data point that jumped out at me is the average auto loan balance has grown 57% since 2010, outpacing all other credit products. I mean, it's getting crazy out there. The average cost for an average new car is, I think, north of $50,000 now. I mean, what's the industry saying?
Yeah, so that's also news of this week is that the average price of a new car is topping $50,000 for the first time. This is all part of a shift that the industry has made to selling more high-priced, high-profit vehicles, especially sport utility vehicles and pickup trucks. The industry, particularly the Detroit automakers, have sort of moved away from the bare bones economy models you might remember coming straight out of college. And now it's all about these very well-equipped, very well-appointed cars. You can spend over $100,000 for a Ford F-Series pickup truck.
Keith, you've spent about 40 years tracking the auto industry, covering it in great detail. When you get a report like this, how do the automakers respond? How do they capitalize on this, or how do they modify their offerings in response to this?
Yeah, there is a lot of talk and some movement lately toward coming out with affordable models again. They really had kind of disappeared from the market, cars under $30,000. In fact, one of the Kelley Blue Book people recently said the $20,000 car has basically become extinct. So there is some focus on that, including in the electric vehicle space, but we've yet to see that materialize in a big way, Scarlett.
Well, what Matt Miller tells me, Keith, is that they're going to continue to make these cars because people are, these high-priced cars, and which are very high margin, because people are buying them.
Yes, they are. What it does, though, is it shrinks the new car market to just kind of the wealthiest households. It really excludes mainstream consumers if everything is priced above $50,000. And, that can cause trouble down the road if your market keeps shrinking.
So how do you think this plays out in the secondary car market, the used car market then?
Used car prices are also high. They're close to $30,000 on average. So a lot of those first-time car buyers or budget-minded car buyers are going to the used car market, and they're finding, the sort of 3-year-old used car, the classic good buy, is more expensive than it used to be.
And this is the stat that gets me. What's the average age of a car these days out there on the roads?
It's over 12 years.
Wow.
Which is such a change from the days of our youth when a car would never last past 100,000 miles. Now cars are built to really go the distance. And so that's another factor in this affordability crisis. A lot of people aren't even going after the used cars. They're just, sticking with the clunker that they have for as long as they can ride it.
All right. U.S. auto delinquencies 50% higher than they were just 15 years ago. Keith Naughton is, of course, our auto reporter based in Detroit for Bloomberg News.
All right, let's talk about tariffs, world trade, because that seems to be one of the key issues moving this market around, particularly over the last 4 or 5 days. Remember, we had that sell-off a week ago today on concerns about China, and now it's just a question of what is the last social media post from President Trump that tends to move the markets as it relates to China here. Ed Price joins us here. He's a non-resident senior fellow at NYU, a little school here in Manhattan. He joins us live here in our Bloomberg Interactive Broker Studio. Ed, we haven't talked to you in a while. Love to get your thoughts on just this whole tariff strategy from this administration, particularly as it relates to China. I know you were just over in Japan, so you probably got that view, certainly. How do you view this whole policy?
Thanks, Paul. There is no tariff strategy, right? I mean, this is the great unbidden secret that looms over all of us. There is none. And I say that not just with reference to the complete departure from neoclassical economics that the president and his team seem to indulge in every day, but also how the tariff policy does or does not relate to the domestic economy. So I've said this a million times, forgive me. If you want to confront China and its economy of scale, you need more workers from Latin America, period. You can't kick them out. So that's just one example of how there is no strategy, as I say. It's a complete hodgepodge.
Okay, that's the U.S. strategy. How has China's strategy shifted in response to this chaotic rollout by the Trump administration?
So I suspect it hasn't, and I suspect China does have a strategy in the sense that they've been planning for a long time to get the United States addicted to cheap goods, knowing full well that eventually, because we might be slow, but we're not stupid, we'd figure out that that's the plan, and then be in a position of essentially manufacturing dominance. So China is in a latent war footing, as is their sovereign right, as their prerogative as a country, and we're not. And that is the fundamental proposition of Donald Trump. So again, the president, if we're grading his term papers, should get an A for choosing the essay question, which is what's wrong with the world economy? It is imbalanced.
He's given the right diagnosis.
Absolutely.
Okay.
He has an uncanny knack for looking at things and saying, yeah, there's the problem.
Yeah.
We send fiat currency abroad, we get goods, that means we'll lose a future war. But then I'm going to fail the guy outright, if I can, from my little school downtown, when it comes to the execution and the actual essay itself, which isn't very good.
So I guess what we learned many things during the pandemic. One of the economic lessons I think we learned is hey, for some of the critical stuff that we need, maybe it's even toilet paper, I don't know, we should have some meaningful presence here in the U.S., if not onshore, friendshore. I guess we kind of all learned that. Most of us feel pretty comfortable with that. Are tariffs a way to get us there, I guess?
So tariffs might be a way to stimulate domestic economic manufacturing in the medium to long term. They might be. What I'm concerned about is the period before that, which is essentially turmoil. You can see in markets that they swing around when these things are announced and then de-announced and re-announced and so on. And I don't know that that feeds into business planning. So essentially what we're seeing is that the United States is now confronting a peer competitor in the world, China. That peer competitor has mastered industrial strategy and economic policy, and we're not doing very well with our mixed market economy in response. So that is a fundamental challenge to how we do things at home, and frankly, I think we're struggling.
All right, thank you for laying that all out. Before we let you go, I got to ask you about President Trump hosting Vladimir Zelensky in Washington today, and this is as Trump is planning for a second meeting with Vladimir Putin. What are you going to be looking for? Are we going to make any progress here in this meeting today?
No, I doubt it. President Donald Trump, at every turn, when confronted with a choice between President Zelensky and President Putin, has chosen President Putin. I don't see that that will be any different despite the lukewarm rhetoric about tomahawks, for example. And that is something that me as an analyst, someone who lives and breathes this geopolitical stuff, cannot explain.
So do you think that President Trump has leverage with President Putin in order, because presumably they're going to get together within 2 weeks? Is there any reason to have optimism that President Trump can convince President Putin to end this war in some fashion?
The U.S. military, in its conventional posture, would have a lot of leverage with the Russian military, but President Putin seems to have some sort of leverage with Donald Trump, and the U.S. Army reports to Donald Trump. So the ABC of policies that an armchair analyst like me could write down on an envelope and say, here's what you do to push the Russians back or indeed out of Ukraine, won't be done. Biden didn't do it because he was afraid of nuclear arms, which was, I think, a mistake. And Trump won't do it because ... Nobody knows.
Who can influence President Trump on this? Or is he not listening to anyone? He's following his gut instinct?
Well, again, I mean, I'm not the Trump whisperer, right? We're all wondering who influences Donald Trump.
Mm-hmm. But on this particular issue, on Russia, on Ukraine,
he seems only to need 5 minutes in a room with Putin to change his position entirely. So if I had to rank it, I would say Putin, and then only after that, the rest of the administration, vice president, and so on. Certainly not Zelensky.
We'll see in the Middle East, it looked like Jared Kushner had a renewed role there.
Yes,
and
yes.
I'm wondering,
and you wonder what
is there
he's
someone
doing.
like this for Russia to help, or just to, help the president in this process here? Ed, thanks for stepping in again. Appreciate seeing you again. Edward Price, he's a non-resident senior fellow, NYU, joining us live here in our Bloomberg Interactive Broker Studio. And again, after a morning of futures pointing to a decidedly lower market, a little bit of green on the screen here.
We're back to buying the dip.
We're back to buying the dip. I mean, and if you tell me retail is buying the dip, I'll be like, okay, I guess
that sounds about right.
I guess that sounds about right. All right, we're going to have more coming up in just a moment. This is Bloomberg Intelligence. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Major stock averages right now higher to mixed. S&P 500, in fact, just turned lower, down 2 points, 66.26 on the index. The Dow up 64 points right now. The NASDAQ 100, that has now turned lower. That is down just about 16 points. Truist Financial, among the best performing stocks in the S&P 500. That is up right now 3.9% after a positive earnings report. And, of course, this follows yesterday's regional bank sell-off. The regional bank's select industry index suffered 6.3% rout after Zions Bancorp and Western Alliance said they were victims of fraud on loans to funds that invest in distressed commercial mortgages. President Trump seems to have toned down the China trade war rhetoric, so that's easing some of the risk-off sentiment for today. Again, the S&P 500 down just 4 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio and streaming live on YouTube. Well, today marks the launch of Bloomberg's new podcast, The Michelle Hussein Show. Each week, she'll make sense of the world with essential conversations with world leaders, business titans, and cultural icons. In her premiere episode, Michelle speaks with the Prime Minister of Canada, Mark Carney. Carney talks about renegotiating trade deals under President Trump and why Canada can't afford to let Washington lead. In this portion of the conversation, Carney was asked for his thoughts on the future of U.S., Mexico, Canada trade deals and what is his strategy on U.S. tariffs.
We have the best trade deal at the moment. 85% of our trade with the United States is tariff-free. We have the lowest average tariff against of any country with the U.S. It's 5.5%. So we're in a good position now with two important caveats. One is your question, what's going to happen with the renegotiation of what they call USMCA? And secondly, some key sectors, steel, autos, aluminum, forest products being the main ones. Those issues are quite related. Our view is that the renegotiation, it's not formally a renegotiation, it's a review, but I think we should recognize that in effect there will be a renegotiation of some elements of USMCA because the president has signaled that desire. Our view is that a deliberate process, which has begun now with the consultations, including the United States, will make it increasingly clear that in certain sectors, particularly, the integration of the Canadian and U.S. and Mexican economies is essential to U.S. competitiveness. So in steel, in autos, as two examples, that the linkages are so tight. They're so tight such that the Canadian content, the U.S. content in Canadian finished automobiles is higher than the average U.S. content in American automobiles. So we make America stronger in these sectors, and our strategy is to make sure that that is as well understood as possible.
Okay, so the prosperity of both countries is at stake. Your language, though, has changed on President Trump since you came to office. Do you remember when you talked about him as a bully that needed to be stood up to? In February, when you were campaigning, we're going to stand up to a bully, we're not going to back down. And yet now you're much more likely to talk in more conciliatory terms. I mean, obviously one is campaigning and one is governing, but perhaps people who wanted you to do the standing up to the bully might feel that you haven't done that as much as you suggested when you were campaigning.
Well, let's be clear the actual situation. We're one of there are two countries effectively that put retaliatory tariffs on the United States. Two countries in the world. We put them on, we kept them on up to a point where they ceased to be effective. We got to a point when we took our retaliatory tariffs off, we had 85% of our trade tariff-free. When we put them on, given the steps that President Trump had taken, it was a third of our trade was tariff-free. So, strikes me that that's pretty effective.
Yeah, but
number
he has
one.
shown his power, hasn't he, over you? Like, for example, your digital services tax. You announced it, he hated it. You had to back down on that.
The digital service tax was announced multiple years before. It was just effectively coming in. It was coming into effect. Look, the United States.
And it couldn't, because President Trump wasn't having it.
Well, we made a decision in the context. And what happened after we took that digital service tax off? Within weeks, the president confirmed, in writing, formally confirmed in an executive order that tariff-free status for the vast majority of our trade.
So there was something broader at stake
There's something
trade. I get
very
that.
much broader at stake.
All right, you can listen to the full conversation between Michelle Hussein and the Canadian Prime Minister, Mark Carney. Just search the Michelle Hussein Show wherever you get your podcast. Now, joining us from London is Michelle Hussein, editor-at-large for Bloomberg Weekend. Michelle, thanks so much for joining us. A very interesting conversation with Mr. Carney. He stresses the importance of the mutual relationship between the U.S. and Canada. Does he, at the end of the day, feel like he can work with this president and this administration?
So nice to be with you, Paul, and thanks for featuring part of this conversation. I think that while a lot of what we heard there showed Mr. Carney emphasizing the linkages, and that's going to be a major point that he stresses with the United States publicly, and of course in the run-up to the trade deal coming up for renewal. The bigger picture in this interview is that you see someone who's leading a G7 economy, who was a political outsider at the start of the year, although he led important institutions like the central banks in Canada and in the UK. You see someone who's in the midst of trying to transform his economy, because as he said to me, we never want to be in this position again. The assumptions on which Canada had linked its economy to the United States and others did the same, those assumptions have been fundamentally torn up. So he is in the midst of thinking, where are my export markets, east and west, because I need them, rather than rely as much on the one to the south, where 3/4 of Canada's exports currently go. He talked about this period as a rupture, and that is the context in which he has to operate as Prime Minister, with people in Canada not traveling as much to the United States, very conscious of how much has changed in their relationship with the U.S. in this second Trump term.
And Michelle, I love the fact that we played some of your interview with him. One part we didn't get to was your question, which was very provocative, asking him if he's learned anything from President Trump. What surprised you about the way he answered?
Well, you know what I was thinking of was things like when he cancelled a carbon tax early on, like first day of being Prime Minister, he did it with a flourish. You know, it was done on camera. There were people watching who thought that this is a very presidential thing to do. Maybe it's a much more American than Canadian thing to do. So I had that in my mind, and I did ask him specifically about that. And that's what I was getting at when, are you doing things in a certain way, in a more performative way because of President Trump? But he answered it in this broader way that he has learned from him, that you've got to operate on these multiple fronts at the same time, throw information, throw thoughts, throw policies or different tweaks in direction out there. He's obviously not operating in the same way as President Trump is communicating, but I thought it was very interesting that he referred to that phrase, flooding the zone, and while he said he didn't agree with it completely, he is saying he's learned something from that.
Michelle, thanks so much for joining us. Really appreciate it. Michelle Hussein, editor-at-large for Bloomberg Weekend. And remember, you can listen for this debut episode of The Michelle Hussein Show. Each week, she'll make sense of the world with one essential conversation, bringing her signature blend of curiosity to conversations with world leaders, business titans, and cultural icons. Listen and watch The Michelle Hussein Show each week on Apple, YouTube, Spotify, or anywhere else you listen. But if you're Mark Carney, it's well, like for all world leaders, it's a tough tightrope to walk with your relationship with this American president.
And you have to be very pragmatic. She asked another great question of Mark Carney, which was, I wonder whether the Mark Carney of 2020 and the kind of platforms that he, really stood on would be slightly disappointed in the Mark Carney of 2025.
Interesting. But he's probably, at the end of the day, I got to do what's best for Canada. Yep. Probably with this relationship, the U.S. and Canada, it's better to try to get along here.
He has to.
Yeah, I think you have to. I think most world leaders and even company leaders have come to recognize that. So we'll have more coming up. This is Bloomberg Report.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio in New York City, streaming live on YouTube as well. Let's talk a little bit sports, the business of sports, because that's you love the business of sports.
I do love the business of sports.
As you wear your New York Rangers
I know,
jacket
in
every
great
day.
disappointment. I keep hoping that they'll be able to do something. They managed to score a goal, so that's good.
They did score a goal, right?
Yeah,
Was that
but
a
it wasn't
home goal? Or, no,
it
they
was
still
an
not
away
had a
goal.
home goal.
I know.
All right, we have you business of sports. You want to bring in our guest here? Because
Randall Williams, who now joins us every Friday. Yay. Thank you
cool.
so much for coming in on a Friday, because I know not everyone likes to do that.
Anything for you all.
But I know you do. You've got a lot that you're covering, whether it's the NBA season beginning next week, the NFL League meeting that's going to be taking place next week as well, and of course what's going on in baseball with the Dodgers just one win away from the World Series. Let's start with the NBA season. There's new ownership groups. Is that going to change the on-the-field product?
Not yet. I don't think so. I think the Celtics are kind of getting back in the swing of things. Of course, we had Jason Tatum get injured, and so I think they'll be managing expectations in year one. The Genie Bus/Bus family deal with Mark Walter hasn't quite hit the finish line yet. So, as we know, the Bus family will still be in control, and Mark Walter will take over whenever that deal closes. And then we have the Trailblazers, who sold as well. And so I think all of these teams are in different positions, but they all have title aspirations at the end of the day, and some are further along than others.
NBA, wildly successful. Is there expansion? Are they thinking about expansion? Maybe
they are,
domestically?
both domestically and internationally. But I think they're at different points. I mean, we could see international an NBA International League as soon as 2027. But on the domestic expansion, it's a little bit up in the air. They're contemplating it right now, as opposed to this international where Adam Silver and NBA Deputy Commissioner Mark Tatum were traveling overseas and having plenty of conversations. So I think they're just at different points, but there are a lot of people, as myself and reporters have covered, that are waiting in the wings, potentially in Seattle and Vegas and other markets, who want those last two NBA teams here in the States.
The NBA, I think, which catches some people by surprise, especially those who don't watch every game, is very international, more than any other professional sports league.
Definitely.
More than the NHL, I believe, even.
I would agree. I think the NHL is more concentrated in Canada and different places in Europe. But one thing we haven't discussed is the NBA has 2 new media partners, NBC and Comcast, and of course Amazon. And they'll be bringing a different flavor to things as well.
So the reason I ask about the international exposure is because there's always talk about how there's competitor leagues coming up that want to try to take the NBA's mantle. And now you've got PIF, the Saudi Arabian Sovereign Wealth Fund, looking to do just that, really take on the rivalry with the NBA. What's the talk in the business of sports about whether this is really feasible?
I think the NBA is a behemoth, and I think PIF can pose a rivalry depending on how strong the league is. And the NBA, I think, make concerted efforts when they're going to expand internationally to make sure they have all their cards in order. So I think unless PIF is going to do what they're doing in some of these other leagues like Live Golf and even in soccer as well, by offering players $500 million and $650 million and things like that, and you're going to be hard pressed to compete with the NBA because their contracts are just as big. One of the reasons Live Golf was able to bring players along was because they were offering such huge money, and that isn't necessarily happening yet on the NBA side of things.
Yeah, we need President Trump to fix that golf. I'm not kidding.
He said he could get it done very quickly.
He's the only one.
And he's highly motivated.
I know. In my opinion, he's the only one that can get that done. All right, the NFL has a league meeting next week. Should we expect any news coming out of that, do you think?
I think that what I expect is for them to approve some small minority stake deals. We have, of course, the Koch family, which bought a 10% stake in the Giants. We have another private equity deal with 6th Street and the Patriots, and then the 49ers sold a small stake as well. As far as on-the-field products, tush-push, things like that, I think if there's any movement on that, it'll be in the offseason.
How about Bad Bunny?
Exactly.
Some pushback on Bad Bunny as a halftime show.
I do plan on asking Roger Goodell about it. This is my one time every single year I get to ask him an entertainment question, and I think he's going to double down on his partnership with Roc Nation and Jay-Z. Last year with Kendrick performing, it was the most watched halftime show ever. And so Bad Bunny, who knows if he'll top the viewership of Kendrick, but when they select him, the NFL's never walked back a performer. I don't expect that to change this time.
I think it's super interesting that as much as most companies are walking back or watering down whatever DEI initiatives they did have, professional sports leagues need to move forward because they are mindful of who their audience is.
Exactly. And I think Bad Bunny pushes the NFL outside of its comfort zone, but at the end of the day, if he brings in 135 million viewers, who's really going to be complaining?
Yeah, exactly. Well said.
All right, the Dodgers, one win away from another World Series. If they win this thing, can we talk about this? Now, I'm a Yankees fan, so I lived my whole life with
Is
Yankees.
this painful for you?
Well, it's just...
Yeah, it is.
I'm not going to say now that the league's got to do something, but the league's got to do something.
So yes, it's painful.
I mean, look, there's going to be CBA negotiations, there's going to be media negotiations in the coming months and years, and we'll talk about if there needs to be a salary cap, if there needs to be a minimum floor in terms of spending. But when you have a good owner who's willing to spend as much as Mark Walter is, that's going to bring some different level of power. And I think that money doesn't always equal success in baseball, but in LA it does. And so for baseball, in terms of the whole economics of the league, whenever you have one of the biggest brands playing in this with the biggest superstars, it's a good thing. Now, it doesn't matter if they win or lose at that point. People just like tension. So maybe you'll be on the Mariners or the Blue Jays side of things.
Yeah, I don't know.
I don't think he can bring himself to that.
We'll see. But anyway, the Yankees, they're going to bring it all back next year. So.
Okay, let's just keep hoping.
Yep. Randall Williams, thanks so much. We appreciate it. Randall Williams, U.S. sports business reporter, joining us here every Friday, which is a good thing. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. And I just lost my spot there. There we go. All right, coming up, get the latest market news and industry research. The next hour of Bloomberg Intelligence starts, I don't know, right now. This is Bloomberg Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning. We're live from Bloomberg's Interactive Broker Studios in our global headquarters in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are also streaming live on YouTube, so check us out there. All right, coming up in this second hour of Bloomberg Intelligence, we have a conversation with Mike McGlone, the senior commodity strategist of Bloomberg Intelligence, on how metals traders are enjoying their most profitable year on record. Gold is slightly lower today for a change. Sally Bakewell of Bloomberg News will be joining us to talk about the latest on regional banks. A little bit of the concern fading this morning, but certainly there's a lot of worry about some broader credit issues. And we will put munis in focus with Tom Kozlik, head of public policy and municipal strategy for Hilltop Securities. And then we've got Rosalind Brower, the president of Spelman College, joining us, interim president, and we will talk a little bit more about some philanthropy from one Arthur Blank. In the meantime, let's get things started with our Bloomberg Business Flash and John Tucker. Hey, John.
Happy Friday. Major stock averages, right now they're mixed, and it looks like the trade tensions with China, at least for the moment, have eased somewhat, so that's adding just a bit to the risk sentiment. Then you have the U.S. regional bank executives. They're trying to calm down shaken investors. Truist's CEO Bill Rogers said on a conference call that overall credit quality is strong. The new loan charge-offs linked to fraud sparked what was the biggest sell-off in regional banks in 6 months yesterday, but it looks like they have been one-offs, Scarlett. Meantime, Matt Mishkin at John Hancock Investment says the economic backdrop for investors, you know what, it's not all that great.
You know, the jobs data is getting weaker. We've had housing slumping. We've had, some of the business surveys have been weaker, and it's all over the place. So in our view, the macro has been signaling to you that the underlying economy has been weakening, and yet asset prices haven't reflected that.
Right now, 6 of the 11 major industry groups in the S&P 500 higher. Consumer staples in the lead. That's home to Kenvue. It's up close to 9%. Also, best performing stock right now, the S&P 500. You know them because they make Tylenol. S&P 500 down 2. The Dow up 59. The NASDAQ 100 right now down 20 points. I didn't even know this was still a thing, but TiVo is getting rid of its, sold its last DVR. This according to The Verge. Really? The company killing its hardware business 26 years after becoming synonymous with TV recording. I think I have a TiVo somewhere up in the attic.
That tracks.
We used to have someone at Bloomberg Intelligence, and up until, Bloomberg Television, and up until, I'm going to say 2 years ago, still using the DVDs from
Yes. She swore by them.
Yes.
And she would return them, on a regular basis.
People like that, just like that technology.
It's tactile, it's physical.
Yeah, exactly right. All right, so there you go. All right, John Tucker, thank you so much. We appreciate that. Right now, it is looking at these markets, as John was saying, kind of mixed out there, but we'll keep an eye on those markets. It's a lot better than it was earlier this morning. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Natalie Kinijevic.
Hi, guys. So let's start with regional banks. So Truist Financial, the ticker is TFC. Shares are up by 3.4% today. Adjusted EPS, net interest, non-interest income came above expectations. The bank also reported a lower than expected provisions for credit losses, and it kept unchanged its full-year pre-tax and pre-provision outlook. Analysts, of course, attributed strong results to strong fees coming from investment banking division. And on the earnings call, the management said that the bank had no exposure to Tricolor Holdings and had some exposure to First Brands. Overall, when we look at regional banks' results, yes, there is a lot of volatility, but one of the highlights is that they still show strong demand for car loans, and it's kind of a little bit erasing some concerns about the strength of the U.S. consumer and low-income consumers specifically.
Yeah, we see the KRE, the ETF that tracks regional banks, recovering a little bit, up 1.3% after plunging 6.2% yesterday. Yeah, let's talk about Micron.
Yeah, so Micron, the ticker is MU. Shares are down by 2% today. Reuters reported that the chip maker plans to stop supplying server chips to data centers in China. And that, of course, could come after the company kind of failed to recover from this 2023 ban. As a reminder, in 2023, China announced that Micron products caused significant security risks to its information infrastructure. Meanwhile, sources told Reuters that Micron will continue to sell to Lenovo and another Chinese customer with significant data centers outside the company, and also will still be supplying chips to auto and mobile phone sectors and customers in China. Meanwhile, we saw some analysts' upgrades today, specifically from Mizuho Securities. The analyst raised price target to $240 from $195. The stock is currently trading at $198.
Novo Nordisk.
Yeah, so drug makers are in focus today. Yep. Obviously, the ticker is NOVOB. The stock is down by 6%. This is, if I'm not mistaken, the largest drop since July. Of course, it comes after President Donald Trump said that prices of Ozempic could come down to just $150 a month. Shares of other drug makers such as Eli Lilly are also under pressure. So just as a reminder, U.S. list price of Ozempic is roughly about $1,000 on a monthly supply. However, when we look at analysts' comments, we see that BMO is saying that negotiated price may not present such a huge fundamental change to Novo's business, because Ozempic actual price after deducting all insurer discounts is likely approximately 60 to 70% lower than the published price. But anyway, stock is under pressure, down almost 60% over the past 12 months.
Yeah, pretty brutal. All right, Natalia Knežević, thank you so much with our market drivers this morning. And for more conversations like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners, the biggest losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got to talk about metals, because gold has just been on a tear. It's unstoppable, really. I mean, it's a little bit lower today, but it's just record after record after record.
The GLCO screen on the Bloomberg terminal, that gives you all the commodities. You click on the metals and it gives you all the metals commodities, base, ferrous, and precious metals. Tons of green on that screen.
Tons of green, and it's been tons of green for the past couple of weeks as well. So let's bring in Mike McGlone. He's our senior commodity strategist at Bloomberg Intelligence. He's joining us from the Money Show in Orlando.
The what show?
The Money Show in Orlando.
Mike, what is the Money Show?
Gotta be well, I guess it's what it sounds like. It's just a lot of people speaking about investing, and a lot of investors, and I've been presenting here the last few years, and I'm looking forward to presenting this year, actually today, live for Market Mavericks at 4 o'clock.
All right, we will look ahead to that. And of course, please give us a preview of what you'll be saying. But, you know, metals traders are going to have a banner year. And this comes as trading desks that trade fixed income currencies, commodities, as well as equities have been doing spectacularly if the results from the big banks are to be judged.
Yeah, with the not just actually metals traders, but it strikes me, Scarlett, as I look back, it's probably been one of the best years for metals, most notably precious metals, since 1979. And I bet most of these traders weren't even born then. So it's good to be on the right side of the trade. But what you're seeing happening is a lot of commodity traders are just tilting over to what's moving and moving a lot. Gold's leading everything. Platinum, silver, and palladium all catching up. Copper's kind of stuck in the middle, but it's the metals are where it's at, because crude oil, the grains, most other commodities are heading lower. And the bottom line is people are trading a little bit for the debasement trade. The key thing I want to point out is once it hits the tape, like what we're talking about now, it's usually a sign it's pretty excessive. And I like to point out, I'll end with this, the 40, 50, and 16-month moving averages, if you take gold versus those levels, it's the highest since 1991. So people like Tom Keene would say it's like the 6th standard deviation against those levels. It's very expensive.
So, I mean, as it relates to these metals, is it a momentum trade here, do you think, particularly for these precious metals, Mike?
Oh, certainly it's pile on now. The key thing is central banks have been the biggest buyers the last few years, but they're a little more elastic. I don't think they're going out of the way to buy here. ETFs have been the key significant thing this year. We have a total inflows in ETFs this year approaching 20% of the amount of ounces into ETFs. And that's significant, Paul, because the last 4 years there have been outflows. So people are flowing in, but I just pointed out once gold gets this expensive and becomes this popular, it's really kind of, you got to be careful. It's not the place to pile in. In fact, the essence of the business is being able to take profits, particularly if you've been overweight long. But the key thing, it absolutely scares me when virtually all risk assets, particularly Bitcoin, the stock market, and all these high volatility assets underperform the rock. It's not a good sign.
Not a good sign. I know. The great lines here, Mike McGlone.
Those are the lines that traders have. You know, that's what Mike's got.
And that's what he's going to be discussing, I'm sure, at the Money Show as well. Mike, let's talk about the debasement trade, because I feel like 2 weeks ago, that was all anyone wanted to talk about, this de-dollarizing effort to get away from the U.S. dollar, to de-risk portfolios. You're seeing gold hold up. It's a little bit weaker at the moment, but Bitcoin has not found its footing just quite. What's going on there?
Well, I appreciate you going there, Scarlett, because I'm very concerned about Bitcoin. The key thing to remember about precious metals, I mentioned there's 4. There is only 4 major precious metals. In cryptocurrencies, there was 1 in 2009, Bitcoin. Now there's about 25 million listed on coinmarketcap.com. And I think all this narrative of this space being a debasement trade is kind of, people are finding out it's not. It's a risk-on trade, and we're finding out that with the VIX going up, Bitcoin goes down. It's a direct correlation. The thing is, I think the best days appreciation, the Bitcoin kicked in when it reached 100,000. That's now support. And key thing I really like to watch is the Bitcoin to gold ratio. Right now, it's about 25 ounces of gold per 1 Bitcoin. That's bottoming. It's holding at a support level that's very similar to the 10-year note at 4%. You see the connection? If it breaks below that level, which I think it will, it means everything kind of heads towards a more of a deflationary type trend, which is normal after significant inflation. So I'm not a fan of the debasement trade. In fact, I think gold's expensive, Bitcoin's expensive, and the only thing that's really cheap against a lot of these things are treasury bonds.
Treasury bonds. Interesting. Okay. All right. Somehow I missed my invitation to the Money Show. It seems like that's perfect for me. But we got Mike representing Bloomberg Intelligence there, so that's a good thing. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. He's traded everything from grains to all the gold and oil and all that kind of craziness. We'll talk we'll talk pork bellies next time, Mike.
You always promise that.
We always promise that, so we'll do pork bellies soon. Let's talk about these regional banks, because that's been an issue for the market over the last several days. And are there maybe some hidden credit challenges for some of these regional banks that maybe we're starting to see come to the surface? That's certainly been a concern, I think, over the last several days as we've gotten some of the regional banks reporting. Sally Bakewell joins us, Bloomberg U.S. Finance Team Leader. Sally, what's your reporting telling you about some of these regional banks and maybe some credit quality concerns there?
Yes. So we heard yesterday that for both the Zions and Western Alliance, these 2 regional banks, they had lent funds to investment funds tied to 2 individuals, stay with me, who borrowed the funds to finance their purchase of distressed commercial mortgage loans. And there seems to have been some fraud surrounding these investment funds. And the Zions and Western Alliance are likely, going to take hits tied to that borrowing. And so that spooked markets that wondered if these were not just isolated events, because don't forget, they come hot off the heels of the bankruptcies of both Tricolor, the auto subprime lender, and First Brands, the auto parts supplier. So to have so many, which also collapsed amid sort of alleged fraud. So to have so many of these events happening in quick succession made the markets think that these might not be isolated things, and there is a sort of more systemic and concerning underbelly to all of this. But we've had a slew of bank results today that have somewhat assuaged those investors' concerns. We had Fifth Third, we had Truist, and we had Regions Financial Corp all reporting. And some key themes here are they generally said that credit quality is good, net charge-offs seem to be stable or even lower, and some of them also set aside less money or provisions for souring loans, which is a sort of sign that they don't see a huge amount of trouble on the horizon.
How much did the management teams of those banks kind of make direct references to a lot of the concerns that have begun percolating this week?
Oh, yeah, they made direct references. And I think on Fifth Third, they even brought on a very senior credit executive there to again, to try to allay some of the concerns about exposure. I mean, I think they're all addressing it, but they all have a similar message that these events were somewhat idiosyncratic, and that they see that their credit quality is good, that they're being very diligent in how they evaluate deals, because that was another thing to come out of all of this. The idea that in this sort of late cycle behavior, some banks or other lenders may not be applying the rigorous due diligence to certain deals and certain borrowers that they should.
So, Sally, I think what gets people to sit up is this idea that in 2023 we had a regional banking crisis, the collapse of Silicon Valley Bank, the forced closure of First Republic as well. And I think people are maybe wondering if this is similar to that, at least in the early days before the latest set of results. How does this differ from what we saw in 2023?
Oh, it's very different, but I think the sensitivities are justified. You know, investors are very jittery about regional banks, or, you know, they have a faster twitch response when there are regional bank issues. But in terms of the problems here, so far it does seem very different. In 2023, the regional banks, they succumbed to this very sort of unfortunate mix of holding a lot of US Treasury bonds and interest rates. The sort of combination of those two things were really what caused problems for them at that time, and also very concentrated depositor bases. With this situation, it doesn't seem like it's any of those things, but I think regional banks have since that time been on the radar for investors in a very significant way, but they have also themselves taken a lot of steps to address the problems that emerged in 2023. And, you know, things like depositor concentration, uninsured deposits, commercial real estate concentration, they've tried to whittle all of those things in sort of to more appropriate levels that make them more stable and on solid footing. And I think that's another thought that is probably percolating around investors today. And we're seeing that in the shares a little bit.
Sally, thank you so much for joining us. Really appreciate your time. Sally Bigwell, she is the team leader for the U.S. Finance reporting team at Bloomberg News, joining us via Zoom. And, you know, we came out of the great financial crisis, Scarlett, and the banks since then greatly improved their balance sheets, in part because they were regulated. Yeah, they were regulated, and they have much more. I haven't sensed they backed away from that at all. I think that's just kind of the new normal, that this is they're going to.
But they do want to change the rules, or they are lobbying to hold less in capital.
I know that's something that the industry and the investors hope that President Trump and this administration will be more.
And he seems very open to that idea.
Yes, he does. S&P minus 10 points. The Dow unched on the day. NASDAQ down 79 points. So a little bit of red on the screen. The VIX 24.55. This.
headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The regional banks, they've recovered some of the sharp losses from the day before. This comes after several reported stronger profit for the latest quarter than expectations. So we have right now shares of Truist up 3.4%, Fifth Third up 1.4% right now. President Trump addressing the trade war with China. He says the high tariffs are not sustainable, so that's helping ease some of the worries, and that's delivering some of the risk-on sentiment or easing risk-off sentiment. Treasury prices lower, yields rising to recover some of the sharp slides from yesterday. That came as investors looking for some safety. Platinum card demand surging as a result of American Express earnings topping estimates. The shares right now up about 5%. S&P 500, 18 points lower. That's down 0.3%. 6610 on the index. The Dow Jones Industrial Average down 27 points. And right now the NASDAQ 100, 99 points lower. That is a decline of just about 0.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. So there you go. Let's talk muni bonds because it's Friday, and that's what we do at this time. Tom Kozlet joins us. He's head of public policy and municipal strategy at Hilltop Securities, a little town down there in Texas called Dallas, I believe, via Zoom. Tom, talk to us about the muni bond market. Do people want to talk to you guys at cocktail parties these days? Are you making any money?
So the two big things that I'm talking to folks about right now, number one, capturing yield. Number two, especially with all the headlines out there, all the uncertainty, I'm talking to investors about preserving wealth. But the first thing, capturing yield. Munis are having a little bit of a moment here. This started at the beginning of the month. The supply and demand dynamic and what started to happen again back in September, what's likely to happen in October and December with the Fed. Yields are starting to fall. But yields are still, especially tax-exempt yields, are still near generationally attractive levels. And I'm talking to investors about locking in those yields before supply falls in November and December.
Before supply falls, and that's typically what happens at the end of the year. But with the government in shutdown mode and with the White House threatening to withhold funding for certain states, like $20 billion for New York, for instance, do you see a situation where some of these states will need to raise money and quickly? And what would that do to that supply-demand dynamic?
So I think that with a lot of the things that are happening with the federal shutdown, I think that while the headlines are scary at times, I think that at some point this is going to be in our rearview mirror. And I think that the macroeconomic impact is like it usually is. It's not all that significant from shutdowns, right? There is a lot of headline risk out there. I get it, and I understand why investors, institutional and individual investors, have been asking me about that. But a lot of what it is that's happening at the federal level, state and local governments are generally pretty isolated from that. And to specifically answer your question, I'm not expecting that. I'm continuing to expect that we're still only going to see maybe 30 billion of issuance a month in November, December. I'm not expecting that issuance is going to jump as a result from anything related to the shutdown.
How has new issuance been this year? I know last year, I believe, was a record. How has this year been?
So we have seen, we're on pace to see a record amount of issuance again this year. And one of the reasons of why it is that I'm talking about this moment that municipals are having is that issuance has been, it's average kind of 45 billion plus a month through the first 9 months of the year. October is likely to is on pace to be a pretty strong, $45-50 billion month. This is one of the reasons of why it is that I'm talking to investors about acting now, is because even in September, there were a few weeks where issuance kind of slowed a little bit. And the conversations that I was having with investors, they were telling me that it was hard to find bonds. It wasn't hard to find bonds throughout the rest of the year, but there were a few weeks in September where it was hard to find bonds, and issuance was still 40+ billion. So it's going to be, it very well could be hard to find bonds in November and December when issuance falls to 30. And this is why it is that I really want investors to take advantage of this moment that municipals are having in October.
Interesting. I like the conviction. Conviction's coming through. How about the taxable municipal market here? That was when I first learned about the taxable municipal bond market. I was like, what the heck is that? Isn't that an oxymoron? But I understand it's a pretty big market. How's that market playing this year?
I think I would say that there are probably a lot of folks that would say that they would like that the municipal taxable market to be larger. They'd like to see something like, investors would like to see something like the Build America Bond Program from the 2009 Recovery Act come back into play, just because there are a lot of folks who really like the credit, really like the yields. If anything, what I would say is that there aren't enough taxable bonds to go around for the investors that want them.
All right, very good, Tom. Appreciate it. As always, Tom Kozlik. He is head of public policy and municipal strategy at Hilltop Securities. He likes this moment to be buying municipal bonds, and we appreciate getting some of those thoughts here. We had some earnings. We had American Express and some numbers out there, and bringing together bringing to the forefront just the credit card business, which is such a competitive business in terms of fees and
the
what
premium
service,
card
the
space.
premium card space, exactly, and kind of what services they provide you. I know people are really aggressive in kind of managing the points and really trying to take advantage of that. Ben Elliott, Bloomberg Intelligence consumer finance analyst. Ben, talk to us about American Express, the numbers that they reported today. What did you see, and what are some of the takeaways?
So I think what really jumped out to me today is their new Platinum Card product, which made a bunch of headlines for raising the fee. It's like $900 a year now. Is getting great traction amongst millennials and Gen Z. Amex says that they're getting 2 times as many applications and new card accounts after the refresh. So how that translates to Amex's earnings, you see their expenses go up right away because people get all these new benefits, all these new credits that they have access to with the new card. But the fee sort of amortizes in over a year or two. But the growth engine is still there. People are still clamoring for this card, and the business is really sustaining an incredible level of growth.
Okay, so they raised the fee to $895, and even more people applied for this card because there's a bunch of these new perks. Do these perks actually cost American Express a lot of money? I mean, we're talking about $400 a year of dining credits. There's also like free credits at Lululemon and Saks, and these are all things that people get really obsessed over on Reddit boards.
Yeah, the costs are real, right? They call them variable customer expenses. Typically, they run about like 40% of the revenue of the company, but that number is pretty flat, actually, despite the introduction of some of the new benefits. But so their expenses are up about 10%, which is sort of in line with their long-term revenue growth target. But over time, you'll see that fee increase start to amortize into earnings, and that should more than offset the increase in costs.
And how does the pickup in new customers compare to its biggest competitor, which is the Chase Sapphire card, and as well as Citigroup coming out with a new Strata card, its own elite card offering? How would you stack them up against one another?
It's interesting. Amex is always going to have a little bit of an advantage here because they capture all of the economics of a premium credit card because they're also the network, right? So they're, in addition to earning the fee, they're also earning a swipe fee every time customers use that card. So the value proposition to Amex is always inherently higher than it would be to Chase or to Citi to increase sort of the benefits they provide to the card and to drive more customers there. I think what's really interesting is that millennials and Gen Z are driving this. I think it's like 65% of the new customers are millennials and Gen Zs. And it's interesting, the CEO was saying today in the earnings call that they're looking into how many of these people are coming from other premium cards, or how many people are just coming to a premium card for the first time because they're so attracted to this new offering that Amex has out on the market. So it looks like there's appetite for this. It's probably driven by social media and sort of new forces in our society that are driving interest in premium credit cards, and it looks like it has legs.
It looks like it has legs, and people don't just get one Amex Platinum card. That's the other thing, right, Ben? I mean, they often get the Amex Gold card and the Amex Green card. This? I'm on these Reddit threads. I've been spending a lot of time on them because I'm trying to decide which card I should keep or use. And what struck me is how some people have like 10 credit cards in their wallet.
Yeah, they're very proud of how the Platinum and the Gold and some of their other cards work together, and people love to be in the Amex ecosystem. And they actually had a lot of strength in their high yield savings account growth this quarter as well, which kind of goes along with people sort of. Amex is able to meet all of their needs, right? From travel down through dining, down through sort of everyday spend on groceries. And that's kind of the ultimate goal, is to pull people fully into the ecosystem, capture 100% of the economics of these super prime, super high income customers.
Ben, I'm holding in my hand my money clip cash. I mean,
he pulls that out pretty regularly. Yeah,
I got the green card. I'm old school. So
what's the fee on that cash?
Exactly. Hey Ben, talk to us about just the credit quality. What are the card companies you follow? What are they saying these days about their consumer and credit quality?
So Amex is incredible, right? They have almost no signs whatsoever of stress. There's a little bit of stress last quarter. Airline spending was down. That's sort of like the top of the wallet, kind of front of cabin spend was down. But by and large, the companies I follow, even sort of the less prime companies, the Synchronies and Breads of the world that are doing things like point of sale retail credit cards, even they are continuing to see an improvement in credit. And the interesting thing about credit card charge-offs is you see people go delinquent first, and then you can kind of look 6 months into the future when they'll charge off, and delinquencies are still improving. So as far as we can tell, 6 months in the future, credit card charge-offs still look good.
So what does this say for what Capital One is likely to report, which I believe is on the 21st of October?
I would expect the read across to be positive for Capital One as well. They're interested in this top of wallet competition with Chase and Amex, but they're sort of the perennial third player. So it'll be interesting to see if they lean more into that, through their marketing spend and some of the other expenses. But ultimately, Chase's bread and butter, Capital One's bread and butter is kind of the less prime borrower, and that flows through in a much higher net interest margin versus Chase and Amex, which are more focused on fees and swipe revenue.
Ben Elliott, Bloomberg Intelligence consumer finance analyst. We didn't even get to the lounges yet, which is a whole nother world for those Reddit guys. Thank you so much. I'm on American Express's latest results. A lot of people get those cards, Paul, and spend $900 a year for the fee so that they can get access to the lounges and eat some food before they get on the plane.
I guess. I don't. All I know is my daughter, she travels internationally a lot with her buddies. She doesn't pay for anything. She does it all on points.
There you go.
I mean, I don't know.
She would have been super interested in this conversation.
Perfect. Exactly. I don't know.
She's probably on that Reddit.
Then I don't go anywhere, so I don't care.
You can get points
John
to
goes and
find gas.
He'll get a beer at bars. He'll be fine.
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with a Bloomberg Business Flash. Major stock averages now lower, well, let's call it a little change. President Trump said the current tariffs on China are not sustainable, so that's adding to some of the risk sentiment. Meantime, Ben Laidler at Bradesco Securities says, the investor jitters over some of the regional banks that we saw yesterday, that shouldn't really derail the overall market.
The regionals, which is, the focus of this right now, are much better positioned than they were even as recently as 2023, both on the capital side and the provisioning side.
The S&P Regional Banks Select Industry Index suffered a 6.3% rout yesterday. This comes after the regional banks Zions and Western Alliance said they were victims of fraud on loans to funds that invest in distressed commercial mortgages. Right now, Fifth Third, that's up 2%. Truist, after their earnings, also 3.4% higher right now. Volatility over $3.4 trillion worth of options expiring today, so that could stir some of the equity instability. S&P 500, 4 points lower. The Dow Jones Industrial Average is up right now, 84 points. The NASDAQ 100 up 46 points. That's up about 0.2%. You guys ski. I know Paul skis. I don't know if Scarlett does.
I snowboard.
Oh, you do?
Oh, you're one of those. Knuckle dragger.
So at the...
Knuckle dragger. No, I don't get to that point.
What shredders, right?
Shredder, yes.
So you're a shredder Betty. Is that what we say?
Yeah, except I don't really shred. I just kind of go down. I glide down.
Good enough. After more than 2 decades and 18,000 plus hours of development, now the BOA Fit system is in alpine ski boots. So this is the boot that snowboarders, it's called BOA because it wraps around like a snake on your ankle. So it's coming to the alpine ski boot. Really? Solomon's first dual BOA buckle-free boot. The S Pro Super BOA model is now out, and it only costs $840 for ski boot.
I spent more than that on my boots.
When I was a kid,
use your Amex Platinum card.
Your points to buy a boot. I remember the lace-up boots when I was a little kid. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Poland Scarlett.
All right, thank you so much, John Tucker. We need to take a Bloomberg Intelligence ski trip.
Yeah, that'd be fun.
John, you in?
Oh, yeah, Vernon Valley in New Jersey.
No, we got to leave New Jersey to go skiing.
Aspen,
yeah, okay, maybe John's not in because of that. Let's talk a little bit about higher education. It has been in the spotlight, and not always in a good way, but for 4 historically black colleges this week, it's been a very good week because the Family Foundation of Arthur Blank, who owns the Atlanta Falcons and was the co-founder of Home Depot, gave a very generous gift to 4 of those schools. I want to bring in now Roz Brewer. She is the interim president of Spelman College in Atlanta, and Janet Lauren, Bloomberg News' higher education finance reporter. Janet, why don't you just set the scene for us here?
Thanks for having me. So Arthur Blank, as you mentioned, is the owner of the Atlanta Falcons, his adopted hometown, and he decided to give a $50 million gift to 4 historically black colleges. And what I found pretty remarkable is that when all 4 colleges said what our needs are, it was exactly the same thing. It was grants to students to help them finish college, get over the line. And in some cases, it's just a couple of $100s. It could be a couple of $1,000s. But one of the most intractable problems in higher education is students completing college. And these types of grants literally help them get to the next semester and to finish and to realize the economic benefit of college rather than leaving and having loans, which is the worst outcome.
All right, so Roz, can you walk us through how the schools came up with this idea to give students small grants to finish their degrees, what the conversation was like with Arthur Blank?
Absolutely. I think if you know Arthur Blank and his family foundation, they are deeply committed to the Atlanta community, but he also has a great commitment to accessible education. And he's made that very clear to us over the years. This is actually the 2nd grant that we've received at Spelman College from the Arthur Blank Family Foundation. The first one was a $10 million grant towards our Center for the Innovation in the Arts. He named the Innovation Lab after his family and himself. But this was really a combination of discussions around how we both believe the game changer of education through accessibility and affordability. And he stepped right in. This wasn't an easy grant, let me just say, because we wanted to make sure that this was mutual and that we would meet his expectations.
Roz, talk to us about, the typical student at Spelman. What's the financial burden on them these days? We hear and read, and we all experience the spiraling cost of higher education. Talk to us about maybe a typical student at Spelman.
Yes, a typical student at Spelman actually is what we call a Pell eligible student, usually coming from a family of, roughly about $150,000 or less of income and has more than one child in the family. And so when you think about the cost of higher ed, tuition, room and board at an institution like Spelman College is roughly $56,000. And a young woman from Spelman could graduate with as much as $32,000 to $40,000 worth of student loans alone. And so when you think about that, that's sometimes a non-starter, especially if they're thinking of going on to graduate school.
Janet, just put this into context for us, because President Trump in his second term has boosted funding for historically Black colleges and universities while taking aim at higher ed. Has he followed through on that funding?
The details of that I don't know, but typically historically Black colleges do not have as high graduation rates as other colleges. And part of the reason are large populations of Pell eligible students, lower income students, where potentially just a couple of $100, a couple of $1,000 can get them again to that next semester to graduate.
Roz, just to kind of follow up a little bit on that, President Trump and this administration have taken aim at some very high-profile, large research universities, including Harvard and Columbia. As an educator yourself, how are you viewing this environment?
Well, it is a tough environment in higher ed right now because, on the early onset of this administration, we saw deep cuts in research funding. And the one thing that I know for sure, having a corporate background now combined with higher ed, is that research funds a lot of innovation and technology that happens at the corporate level, which becomes commercial opportunities. So I think, more understanding of cutting off the lifeline of innovation in this country is something that should be explored. I will, agree with Samantha that, we don't know what these new funds are that are directed towards HBCUs, and we're interested to learn more.
And of course, Roz, with your background leading Walgreens, leading Starbucks as COO, and of course, CEO of Sam's Club, what kind of best practices can you take from the corporate boardroom to the academic institutions that you're now running, to Spelman College, for instance, that would kind of dispel some of those concerns that people have about higher ed not knowing how to run their institutions efficiently?
Yes, one of the things I've committed to this board of trustees at Spelman College is that I will try to bring as much business to this institution as I possibly can. And that would be through a new financial or business model. We live off of very few sources of revenue. But if we looked at our institutions through the lens of what we could monetize, things like our online learning programs, that right now through the number of, high school students that need certifications, could we provide those? So there's some avenues that we're researching right now in terms of how we look at monetizing the things we do on our campus. I would also say strong fiduciary responsibility. We're proud of ourselves at Spelman that we actually balance our budget really for the last 20 to 25 years. But that takes discipline. And also, too, looking at unique partnerships. I reflect on my corporate career and said, when we wanted to venture into a new category, we oftentimes selected a partner to go with.
Yep, absolutely. Roz, thank you so much for joining us. We really appreciate you taking the time. Roz Brewer, she is Spelman College interim president, joining us from Atlanta, Georgia via Zoom. And Janet Lauren, our higher education finance reporter, joining us live here in our Bloomberg Interactive Broker Studio. Fascinating story. You can check it out on the Bloomberg terminal by Janet and also on Bloomberg.com. Looking at the markets, kind of red and green on the screen here. The S&P's up 5 points. The Dow's up 130 points. The Nasdaq's off 33 points. So a little bit of mixed messages there. WTI crude oil, it is steady here at $57 per barrel. This is Bloomberg Morning.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, and we are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. Brooke Sutherland joins us. She's a Bloomberg Bureau Chief, and she's the author of the Industrial Strength newsletter. She's got a newsletter out there about the private jet market. This is near and dear to my heart. I don't have a private jet, but I like watching them fly over. Brooke, thanks so much for joining us here. I was not expecting this, so I love your lead sentences, as the kids say. The uncertainty unleashed by President Donald Trump's trade war is continuing to wreak havoc on many parts of the industrial economy, but there's one corner in which it may actually be helping boost demand: private jet travel. That one doesn't make sense to me. Explain.
I mean, I think when you think about it a little bit, it kind of does, but it does take a little bit of unpacking. But I mean, if you think about the uncertainty that this has unleashed, it's caused a lot of conversations to need to happen. That's customers talking, with their suppliers and understanding what the ramifications are in terms of price increases. Those suppliers also wanting to meet with those customers to smooth over the passing on of those price increases. And then you have companies who need to visit their various manufacturing operations all around the world and potentially think about new sites. I mean, I think when you have an environment where there's a lot of uncertainty and there is a lot of change, and I think the one constant of the Trump administration is change, something different every day. That requires a lot of conversations and a lot of meetings. I think short of having, much more clarity, particularly on the tariff front, the way that companies are dealing with this is by talking to each other.
And you got a great chart in here about deliveries of business jets. Man, it's kind of been all over the place, hasn't it?
It has. I mean, there was a really robust business jet market around the financial crisis, and then you saw, a pretty deep bust in the years after that. And then you really saw the private jet market come back in a big way during COVID. And we saw demand really rise for private jet travel as people, wanted to distance themselves from the airport because of concerns about COVID. And then it just stayed strong. And, the private jet industry likes to talk about once you fly private, you don't go back. And so they really see this demand, compound and continue to build on itself. And I think what's different from what we've seen in past business jet cycles is you've really seen a rise in demand for the fractional jet companies. So companies like NetJets, where you buy essentially a share on a business jet and you get to use it, a certain number of times each year. And I think what's interesting about that market, it's not just wealthy individuals. You're increasingly seeing corporations lean on fractional jet operators for their business travel. And so even companies that have their own fleet of corporate jets use NetJets or companies like that. And there's a lot of benefits to that, if you think about, companies that are doing an acquisition who might not want their corporate jet tail number noted to be in the town of their rival, or, there's concerns about privacy and security, and there's not as much visibility in terms of who is on, one of those NetJets planes as there is with like a company branded jet.
I remember years ago, maybe 10, 15 years ago, there was a big movement to put pressure on companies to limit their corporate jet ownership as seen as a lavish perk. We had even had shareholders pushing back and activist shareholders, and I haven't heard that too much in the last, few years here. Do companies, are they buying jets and owning them, or are they, as you say, maybe doing a little bit more of the fractional stuff?
I think it's a little bit of both. I do think that you could see companies buying more jets outright as a result of the One Big Beautiful bill. And so one of the provisions in that was the permanent bonus depreciation, which sort of guarantees preferential treatment for certain qualified business assets, of which private jets can be one under certain conditions. And so with that, you basically get to write off the cost of the asset immediately rather than depreciating it over several years. And that's a big benefit. And so if you're thinking about a bigger purchase, like a corporate jet, that can, maybe swing things. And so I do think, the expectation is we'll see outright purchases pick up as well, just because of that tax advantage.
Talking to George Ferguson at Bloomberg Intelligence, he says, there's a real shortage of commercial jet availability and deliveries because the Boeings and Airbuses of the world have problems making delivery requirements here and getting the parts and getting the labor. But it doesn't seem to be that much of a problem in the business jet side. I mean, it seems like production is pretty good and availability is pretty good.
I think production is getting better. The business jet industry was certainly not immune to the supply chain challenges that we saw on the commercial side of things. And I mean, really, that was the whole aerospace and defense world in general. You also saw that with defense manufacturers. But, you know, you are seeing on the business jet market, manufacturers make progress of working through those supply chain logjams. You're seeing deliveries start to pick up. And, you know, what I think is notable is that even as deliveries are improving, as the supply chain crunch eases, those backlogs are still staying pretty robust, which is an indicator that, you know, demand is still very strong for these jets. And even as they're able to fill orders, they still have, you know, several years of orders to work through.
You know, I sit on the beach in the Jersey Shore and very close to Belmar Airport, which services kind of the North Jersey coastline. There's stuff coming in and out of there all the time. And I'm wondering who has these things. But I guess on these fractional ownership, it's just opens up the availability to other people.
It does. And, you know, you've seen private equity get more involved in this industry as well just this week. You know, KKR was leading a $350 million investment in Bond, you know, which is a new fractional jet operator that plans to launch in early 2027. And so, and you've seen a couple other transactions like that, you know, where investors are really paying attention to this shift between the traditional corporate jet fleet and into fractional as well.
All right. Well, I'm not taking a jet home or a helicopter. I'm taking New Jersey Transit. But it'll get me there safe and sorry. All right, Brooke, thanks so much for joining us. Really appreciate it. It's a fascinating story. Brooke Sutherland, she's a Boston bureau chief and author of the Industrial Strength newsletter. And she's based up there in Boston. For our customers and listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories start right now. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump meets today with Ukraine's president at the White House. CBS's Ramy Inocencio reports Volodymyr Zelensky has made it clear he'd like his country to get more American military hardware.
This is U.S. aerial hardware, not just for defense, but also for offense. And this is expected to include things like short and long-range missiles, potentially fighter jets as well, American detection systems so they can wean themselves off Soviet systems. And then there's discussion about the production of drones.
Former Trump National Security Advisor John Bolton appeared in court this morning, a day after he was indicted. He pleaded not guilty to mishandling classified information. CBS's Scott McFarland.
This is a particularly elaborate, intricate case. There are 18 felony charges here, including the transmission of and the retention of national defense information. Some of it, according to the prosecutors, is top secret. So they have to create this separate track for this case for classified information.
Bolton says he's become the latest target in the weaponizing of the Justice Department. The Associated Press reports the U.S. has seized survivors of a military strike yesterday on a suspected drug-carrying vessel in the Caribbean. It's day 17 of the federal government shutdown. CBS's Naomi Ruckham says federal workers are struggling to get by without paychecks.
In Salt Lake City, the city and airport officials have teamed up to open a food pantry to support federal employees from several agencies who still have to show up for work without pay.
CBS's Michael Wallace tells us about Instagram's new string of safety features for teen users.
The changes, which will be rolled out early next year, will address growing concerns about the impact of AI chatbots, which have been blamed for some recent child suicides. Instagram will offer more parental controls over how teens use its chatbots and its AI characters. The app will also limit chatbot conversations on topics like self-harm, eating disorders, and sex. Last year, Instagram announced teen accounts would be private by default to protect them from predators.
Well, seatbelts and rear-view cameras are at the center of two new recalls from Ford. Reporter Jeff Gilbert of affiliate WWJ Detroit.
The seatbelt issue impacts 332,000 Mustangs. Dealers will inspect the parts and make replacements. Ford also recalling 292,000 Super Duty pickups. They have an issue with rear cameras that may not show a proper image. No word of any crashes or injuries related to either recall.
And on Wall Street, right now the Dow Jones Industrial Average is up 194 points. This is CBS News. If Taylor Swift wears it, you can pretty much guarantee it'll be a hit.
I heard you calling on the megaphone. The Monterey Bay Aquarium heard Swifties calling after Taylor wore its vintage Sea Otter t-shirt in her promotional movie for her new album. Her legions of fans immediately wanted one too. So the aquarium reissued the tee, first printed in the 1990s. It raised more than $1 million for its Sea Otter program in a matter of hours. Despite the $65.13 price tag, Liberty Graphics in Maine, where the tees are produced, is struggling to keep up with demand. Deborah Rodriguez, CBS News.
Illinois Governor J.B. Pritzker says he was incredibly lucky. His 2024 tax return reveals $1.4 million in blackjack winnings at a Las Vegas casino. The billionaire governor says he'll donate it to charity. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
John Bolton pleads not guilty. Welcome to the Friday edition as President Trump's former national security advisor is indicted on 18 counts of mishandling classified information in what some see as political retribution. We'll dig into the case coming up with June Grasso, the host of Bloomberg Law. She's live in New York. President Zelensky returning to the Oval Office today. This is just about to kick off at the White House. Will it matter, though, after President Trump's call with Vladimir Putin? We're going to talk about it with Ian Kelly, former ambassador to Georgia. He's now at Northwestern University. And as candidates for New York mayor throw down in their televised debate, the race looks no different today. We're going to play it to our political panel. Make sure you get your bodega order ready. Mario Parker is at my side this hour, and we turn to Wall Street first, as always. Alexis Christoforous in for Charlie Pellet today. Alexis, how's it look?
Thanks very much, Joe. Well, right now, we've got some green on the screen. Another volatile day, though, on Wall Street. Investors trying to move past those credit concerns that sparked that big sell-off in regional banks yesterday. Amy Wu Silverman over at RBC Capital Markets tells Bloomberg News the recent market run-up was probably due for a pullback.
I feel like we were in some ways due for a shakedown, for a volatility pothole. There are a lot of folks who are very well hedged going into this year end. And, you know, you've seen a lot of monetization of hedges because people, you know, I think it was just a very reluctant rally.
And checking the numbers now, we've got the Dow Jones Industrial Average up 236 points. Broader market also higher. The S&P up 22. We've got the NASDAQ gaining 50. Gold, by the way, pulling back from that record run down now about 2%. Now, stocks that led yesterday's rally, or yesterday's sell-off, I should say, are rallying back today as traders bet any bad credit bets were really one-offs and not part of a bigger crisis. We've got Zion's up about 4% after yesterday's sell-off. Western Alliance gaining about 3%. And investment bank Jefferies caught up in the storm for its exposure to bankrupt auto parts retailer First Brands, up about 5% now after Oppenheimer raised its rating to outperform. And not to be left out, shares of American Express now rallying 6.5%. Earnings topped estimates as demand for its revamped Platinum card surged. To recap, Dow Industrials now up 235. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. Let's head it back over to Balance of Power and Joe.
All right, Alexis, great to see you. Happy Friday and welcome indeed to the Friday edition of Balance of Power here on Bloomberg Radio. On YouTube, where we're always streaming live, search Bloomberg Business News Live. And if you've got Sirius XM, you can find us on channel 121. Bloomberg Originals carrying this program now, too, because we are everywhere, including our podcast that I invite you to subscribe to. Big doings today in Washington. If you're just joining us, we're roughly an hour away, if things are on time, for the arrival of President Zelensky at the White House. We've done this a couple times now, right? This is number 4, in which he will sit in the Oval Office beside the president in front of the fireplace. They're going to bring the press in for this. They'll have a bilateral lunch in the cabinet room, and then we're going to have a bit of a news conference, we understand, with President Zelensky at Blair House. As I mentioned, we've also got a government shutdown. No one's talking about it today, Mario. Day 17, and there's no news because lawmakers are all out of town. It's the indictment that's got our attention today.
Oh, yes. All of our attention is in Greenbelt, Maryland, where John Bolton, Trump's former national security advisor during his first term, reported to court today after he was indicted for his handling of national security documents.
This is something that they've been beaten the drum on for some time at the White House. I recall about a month ago, Peter Navarro sitting right there telling us that John Bolton should be in federal prison because of this matter, knowing that those two never got along. But Donald Trump has no love lost for John Bolton either, as we heard last evening from the White House. Let's listen.
I think he's, a bad person. I think he's a bad guy. Yeah, he's a bad guy. It's too bad, but it's the way it goes.
Case against him?
That's the way it goes, right? That's the way it goes. Will I what?
Have you reviewed the case against him?
No, I haven't. But I just think he's a bad person.
He's just a bad person. That's quite the indictment in itself, coming from the commander-in-chief.
Yes, absolutely. And I recall, to use your terminology, a post that went on Truth Social just a few weeks ago. Pam, we have to do something. And here we are.
He was on the list with Letitia James, right? With Jim Comey. And Adam Schiff must be making sure he's got clean underwear on today, because anybody could be knocking at the door at any time.
Absolutely. And should have his lawyer on speed dial, just given what we've seen from this administration right now. We're joined by June Grasso up in New York to take us through what the latest, how the latest of this case looks. June is our host of Bloomberg Law. June.
Hi.
Give us a sense of what's new here. Anything surprising at all?
New? I don't know about new. This case has been going on since what? 2020, since the Trump administration tried to stop Bolton's book. There are serious charges, but there are a couple of things I'd like to point out. One is that none of the charges is connected to a marked classified document. And supposedly when they raided his home, they found all kinds of classified information. Yet none of these charges is connected. And the government is going to have to come back and show that these diary entries where he supposedly wrote to his, allegedly it was his wife and daughter, that they're connected to specific classified documents or to, for example, meetings, secret top meetings, in order to prove this case. Another thing that's sort of odd is that the federal judge, when the Trump administration was trying to stop Bolton's book from being published, the federal judge declared that certain parts of the book did contain classified information. Yet none of that is here in the diary entries that were for the book. So, who decided about this classified information? And I talked to a national security expert this morning, and he explained that he's had not only directors of national intelligence, but also defense secretaries come to him writing the same kinds of things with notes. And they always think that they didn't include any classified information. And then they find out they did because of the way it's classified. It depends on who's classifying the information. So maybe Bolton thought this wasn't classified, but along came a different classifier. That was Mark Zaid, who's a top national security expert. So there's a lot that's going to be coming out as they go through discovery. And it's just hard to tell what the government actually has here that's connected. And why didn't the Trump administration
We should mention his response,
prosecute him?
June.
Oh, yes.
John Bolton's accusing the president of weaponizing the Justice Department. He even invokes Joseph Stalin, who cracked down on enemies in the Great Purge of the 30s. He refers to his 4 decades of public service in the name of foreign policy and national security, and I would never compromise those goals, he said. I'm just curious, June, and I hope I didn't interrupt the point you were already making.
No.
Does President Trump's case involving classified documents with boxes stacked up around the shower and the toilet, will all of that be entered as evidence by the defense?
I don't think so. I think that that's a separate case, and it's under the same statute, but it's a different situation. So I don't think, but I mean, the irony of it is kind of hard to ignore. And also, what Bolton said, selective prosecution, vindictive prosecution. He's the third one. You have Comey, James Comey, the former the former FBI director. You have Letitia James, the New York Attorney General, and now you have John Bolton, who were all on Trump's perceived enemies list. And that's a hard motion to make, that you're going to try to get it dismissed because of selective prosecution. But still, if ever there was a case where selective prosecution was proven, it might be these cases, although this case is different and it's more substantial than the Comey and James cases.
June, I want to piggyback off of that point. One of the fig leaves that the administration is using, at least, is that some of this got started under Biden. Is that about right?
Yeah, I mean, I think it started with the Trump administration, the first, with the book. But yeah, it was under Biden. It's been going on for a long, long time. So that brings up the question, so why now? Why are they bringing these charges now? And I think that feeds into the other two cases and perhaps more cases to come. And this is different because here you have career prosecutor in charge, and on the indictment you have all the names of all the career prosecutors, including career national security prosecutors who are signing off on this. Whereas with the Letitia James and James Comey indictment, it was done by an attorney who was put in there, an insurance attorney who was put in there last minute when the career prosecutor left, resigned, was fired. It depends on who you talk to, whether it's President Trump or the career prosecutor. And no career prosecutors signed on to that indictment. And she presented that to the grand jury with no experience in prosecutions by herself. So that's a real clear difference. And this is, a long indictment. It's a talking indictment as opposed to those which were kind of skimpy. So, there's so much going on here on so many different levels. Yeah. And,
June, we talked about the drumbeat coming out of the White House here. It wasn't just President Trump. It was Peter Navarro who talked about the memoirs when he joined us 1 month ago here on Balance of Power. Let's just rewind the tape and give you a listen.
That guy took, by his own admission, copious notes in places like the Situation Room and places where national intelligence secrets were being done. And then he cashed in on that with his memoirs, and he's just been out of control ever since. He's a threat to national security. The guy should be investigated. If they find he's got what we think he might have, that guy should go to a federal prison.
Well, he has been investigated a lot, years and years of investigation.
That's right.
So, and who
that was a month ago, though, and it is pretty remarkable hearing Peter Navarro, suggest that you should be in federal prison. But I guess the question in our remaining moment for you, June, you talked about the note to Pam, the similarities when it comes to Comey, James, Schiff. We'll see. But isn't this case a little bit different than the others?
Yeah, it is different, and it's a lot more substantial than the others. And as I mentioned, one of the big differences is that career prosecutors were on the indictment, and were so basically that shows that there was some level of career prosecutors who are not political appointees bringing this down. But I mean, remember General Petraeus? Do you remember his book and the leak?
Sure.
So he got a two years suspended on probation.
Right.
So, I mean, this does happen a lot. And a lot of times you have, how many times do you hear people writing books after they leave an administration? And are they taking notes about it? Yes, and some of them are national security experts. So, why are they prosecuting this particular case is a question. But it's going to be years, I think, before we find out any real answers.
Wow. That means years worth of Bloomberg law talking about this with the great June Grasso. We've missed you, June. Thank you for being ready for this particular one. We've got another indictment and another not guilty plea from John Bolton. Alongside Mario Parker, I'm Joe Matthew in Washington. We'll turn to geopolitics in Ukraine next on Bloomberg.
I'm Alexis Christophorous with your Bloomberg Business Flash. Stocks are staging a comeback after yesterday's sell-off, which was sparked by concerns about bad loans at a couple of regional banks. Moody's head of global private credit says despite worries over those bad loans at Zions and Western Alliance, there is little evidence of a systemic problem. Stocks are higher right now, though, after President Trump said that threatened high tariffs on Chinese goods were, quote, not sustainable. That eased fears of further trade escalation between the two countries. We've got the Dow Jones Industrial Average up 215 points, the S&P 500 adding 20, and the NASDAQ up by 48. Yields are also slightly higher. The yield on the 10-year, 3.99%, the 2-year yield at 3.45, and gold taking a break from its record run, down about 2% right now. Shares of Eli Lilly and Novo Nordisk coming under pressure after President Trump said the price of the blockbuster diabetes drug Ozempic could come down to just $150 a month. It currently costs about $1,000 for a month's supply. Novo, of course, makes Ozempic. That stock is down more than 3.5%. Lilly sells similar treatments, including Mounjaro and Zepbound, and Lilly is down about 3.25%. Apple and Formula One announcing a 5-year media rights deal that will bring all races to the Apple TV platform beginning next season. Apple's paying about $140 million per year for F1 rights. Disney's ESPN had been the most recent broadcaster of F1 races in the U.S. Shares of Apple up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophorous. That's a Bloomberg Business Flash. Back to Balance of Power now with Joe Matthew and Mario Parker.
All right, Alexis, great to see you. Thank you, and welcome to the Friday edition of Balance of Power. You've made it to the threshold of the weekend. And this is going to be quite a Friday for Volodymyr Zelensky. He's in town right now, spent the night at Blair House, and of course, well, right across the street sits the White House, where he's going to be about a half an hour from now if things go on time. The President of the United States will greet the President of Ukraine outside the West Wing, as we've been seeing now with a parade of world leaders most recently. I don't know if he's going to get the color guard today. We'll have to see what kind of hospitality he receives, Mario, because we've seen all flavors when it comes to Zelensky in the Oval, right down to his dressing down on his first visit to what seemed to be a pretty good conversation last time he was here.
Yes, and I like what you did there with the dressing down.
You saw that.
Indeed.
Think he's got a suit?
I think he should. I think
Pun not intended.
Yeah, and if he didn't have a suit, I think after hearing President Trump's comments following his call with Vladimir Putin yesterday, he very well should turn on the charm offensive with the president here in the Oval Office.
That's right. Well, you know, you talked about that call with Putin. The statement that came out from President Trump on Truth Social really raised a lot of eyebrows here. I can't imagine what Zelensky himself thought, as we now apparently have another meeting in the works. There was not a mention of secondary sanctions, nor a mention of tomahawks, at least in the Post. He did tell reporters later it came up, but just very briefly. Let's listen to what the president said following that call yesterday.
I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call. I mean, we have a problem. They don't get along too well, those two. We hope we're going to get it stopped.
Didn't call it a perfect call, but it sounds like he thought it went pretty well. And this is where we start our conversation with Ian Kelly, ambassador in residence at Northwestern University. He was former ambassador, U.S. ambassador to Georgia, former U.S. ambassador to the Organization for Security and Cooperation in Europe, and former State Department spokesman under Secretary Hillary Clinton. With a resume that is appropriate for the conversation, Mr. Ambassador, welcome back to Bloomberg. It's great to see you. What are your expectations for this meeting, and were they lowered by that call with Putin?
Well, I think that I was disappointed in the fact that although the president seemed to want to keep the momentum up for peacekeeping, or his peacekeeping role after the Gaza agreement, but unfortunately he doesn't seem to have learned the lessons of the Gaza agreement. They were able to get to that agreement with Hamas because Israel, with the help of the U.S., had established complete dominance over Hamas in two ways: crushing costs on the aggressor, and then isolating the aggressor. Trump's Truth Social seemed to take off the table a couple of those costs that he had been talking about and the Senate had been talking about. That's longer range weapons like the Tomahawks and the crushing secondary sanctions in the Senate bill. And the other lesson, of course, is isolate the aggressor. And this is not isolating Putin by giving him another summit meeting, this time in the capital of another leader who's been under isolation, Viktor Orban in Budapest. So the signs are not encouraging that we're going to see some kind of breakthrough, unfortunately.
And Ambassador, you make a great point in terms of Viktor Orban. I mean, in one of the last meetings at the Oval Office, Zelensky promised to meet Vladimir Putin anywhere, anytime, in order to hash out some type of peace between the two. Hungary seems to be, I mean, in some ways, very not the friendliest towards Zelensky, right? So how, if President Trump today tries to pressure Zelensky on that meeting, how does he play it? How tough is it to commit to that and follow through on that promise, given the territory in Hungary?
Yeah, I mean, Viktor Orban has not been a great friend of Ukraine. He has not agreed to a number of EU initiatives to help Ukraine. He hasn't joined his fellow EU leaders. He has some concerns about Ukraine because of the eastern border of Hungary. So it's not a good sign that this is being this summit is taking place in a Russia or friendly and Ukraine hostile country, so this is yet another sign that Vladimir Putin is putting scores on the board even before the meeting takes place.
Ambassador, I want to ask you about the Tomahawk specifically, because the language we heard from President Trump last evening did not sound like we were about to send a shipment to Kyiv. Let's listen to what he said again following the call with Putin.
We talked about it a little bit, didn't say much, but I do say to you, we need Tomahawks for the United States of America, too. We have a lot of them, but we need them. I mean, we can't deplete for our country. So, they're very vital. They're very powerful. They're very accurate. They're very good, but we need them too. So I don't know what we can do about that.
Ambassador, when you hear we need them, we can't deplete for our country, what does that tell you?
Well, it's he's breaking a cardinal rule of negotiating with the Russians, and that's don't negotiate away leverage before you even start negotiating. And it's probable that Putin called Trump. I mean, Putin initiated the call because he's afraid that Ukraine will have the kind of long-range capability that will be able to take out, more military and economic assets. Right now, they can only send drones, which do not pack much of a punch at all in any sort of long-range way. So to say that, I don't think we are going to send them these because we need them here. It's kind of breaking that cardinal rule of don't give things up before you actually start negotiating.
Ambassador Kelly, thank you so much for joining us today here on Bloomberg Balance of Power. We really do appreciate it. And we're joined now by Mike McGlone, senior analyst for Bloomberg Intelligence on crude oil prices. We know that crude oil prices have been top of mind for President Trump, censor on geopolitics as well. Mike, thanks so much for joining us. I do have a fond spot in my heart as a former commodities reporter here at Bloomberg News. Prices for crude oil, I mean, I think I saw on CO1 GP, this is the third or fourth day of declines. We're in some very low territory here. What's driving that?
Yes, hello, Mario. Our paths crossed a lot in Chicago, being from Chicago, which is where I learned trading from the Chicago trading. It's a key thing about crude oil is it's a pretty substantial bear market, but it's a bear market for what was mentioned with earlier part of the program. When Russia invaded Ukraine, it pumped up prices really high, incentivized all that new production, and tilted the world towards alternatives, i.e. all the EVs that are being sold around the world, most notably in China. So now we're in the midst of a pretty significant bear market. It's about where do we find the low price cure? So right now, WTI crude oil is about $57 a barrel. The average price in 2019, before the COVID and everything, was $57 a barrel. The low this year is $55. We're right about the U.S. cost of production. And rural commodities usually have to get below that cost of production to offset these excesses of supply and demand on a global scale. It's also a sign when crude oil goes down and gold goes up. It's a sign of a global recessionary trajectory. So looking forward, the last 20 years, the lows for crude oil has been around 40. I started saying that about 3 years ago that we might go down to 40. It didn't look so good in 2022, but I think we're still heading towards 40. The key thing to remember, when crude oil's down about 20% in a year that stock market's up about 15%, if the stock market just tilts a little bit lower, that's a significant deflationary force.
Wow, fascinating. Mike, it's great to see you. I think it's time for you to take a bit of a victory lap here before we ask any more questions, and maybe you will at the Money Show in Orlando today, because you told us this was going to happen. We're going to drop below 60. You told us gold was going to top 4,000, and we're looking in the rearview mirror at 4,000 now. I don't know what the next stop in the road is here. And I'm also looking at Bitcoin today, which I don't know if this is interrupting your base case, but this risk-off situation with Bitcoin, even as good old-fashioned gold continues to climb. First of all, congratulations on being just absolutely correct on your calls. How do you rationalize what we're seeing now with all three?
Sometimes you get them right, and sometimes you get it wrong. And sometimes to get it right, oftentimes you have to be thrown down in the mat. And I took a while. I kept thinking gold was going to go above 2,000 for 4 years, and finally it did. The key thing now is gold is just plain scary, Joe. It's rallying so fast. If you look at relative to its 40, 50, and 60-month moving average, it's so high you have to go back to 1981. The last time it got this high, people like Tom Keene would say it's like a fifth standard deviation move. So it's very expensive, but it's happening for a reason. And crude oil going down is a reason. But part of that, what's right in the middle, is people are reminding is that gold is the old school, old-fashioned store of value. It's been around forever. Bitcoin's the new one. The problem is gold is...
Oh, we're just about to get the... He's breaking up. Don't do it to me. Come on. The internet lost today. I wanted to hear the end of that. Oh, geez, Mike, you broke up on me. We need to... See if you can say that again real quick. We got 30 seconds. Oh, he's frozen. All right, we love you, Mike. I got to get the Bitcoin line from Mike McGlone. Find him on the terminal and online, our commodities trader at BI. Have a great weekend. Mike, I'll tell you what, Bitcoin is back above 106,000, but still down $1,300, about 1% today. We'll assemble the panel next, right here on Bloomberg.
It's 12:40 on Wall Street. I'm Alexis Christoforous, and stocks are bouncing back after yesterday's sell-off, which was sparked by concerns about bad loans at a couple of regional banks. The Dow Jones Industrial Average up by 185 points now. We have more modest gains in the broader market. S&P up 19. The NASDAQ Composite climbing 57. Precious metals taking a breather from their record run. Gold is down 2.5%. Spot silver off 5% for its biggest one-day drop in about 6 months. So what should investors be focused on next? We put that question to Seema Shah at Principal Global Investors.
I think we just, we want to continue to see those earnings, positive surprises. I think news of productivity gains, that's going to be really key. And I think that's something that investors increasingly are going to be looking out for. Which companies are really benefiting? Are we seeing further strides in terms of growth?
And more Americans across all income levels are struggling to make their monthly car payments. That's according to the credit scoring company Vantage Score. Auto loan delinquencies are now up more than 50%, driven by soaring car prices and higher interest rates. The average monthly payment on a new car is at around $770, and 1 in 5 borrowers are paying more than $1,000 a month. Consumers are also stretching the length of loans to 7 years or more to get a more affordable monthly payment. Tesla reports earnings next week. Analysts have increased their profit forecast somewhat in October. We've got shares of Tesla up about 2% right now. And Meta's stock, now little changed. It's set to seal a nearly $30 billion finance package for its data center site in Louisiana, which would be the largest private capital deal on record. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Now back over to Balance of Power.
All right, Alexis, it's great to spend this Friday with you and you as well. Thanks for joining us on the Friday edition of Balance of Power. You got to the end of the week. The government's still closed. It's showing no signs of opening, and Washington's attention is turning to other matters today, including President Zelensky's visit to the White House. That's scheduled for 20 minutes from now. We'll see how on time things are when the two presidents sit down and welcome reporters into the room. We'll, of course, bring you there live for the conversation that follows President Trump's phone call with Vladimir Putin by only a day. And we have a lot of questions about what, if anything, this might lead to. Zelensky is in town. He spent the night at Blair House across the street inside the White House complex, and again, should be crossing over there a short time from now. It's a beautiful day in Washington. Mario Parker, we'll see if he takes the motorcade or if he actually decides to walk across the street.
Yes, absolutely. But we'll be watching, every detail of this meeting.
Yeah.
Again, just given how the president's comments yesterday, both on Truth Social, after he concluded a phone call with Vladimir Putin, but also his comments in the Oval Office yesterday with reporters, where he equivocated on tomahawks, which was supposed to be the subject of the meeting today with Zelensky.
True. Might not have been terribly encouraged by what he heard. When Zelensky gets there, we'll bring you there too, so we can experience this together. Last evening, it was time for the popcorn. I don't know if you watched this New York mayoral debate, but we wonk out on these like this is primetime entertainment for Mario and I. When we've got a ripper like this, especially when you're in an off cycle, we stop down. Thank God for C-SPAN and the internet, of course. We all had a chance to watch this thing with Curtis Sliwa without the beret. He's had a whole makeover in this campaign. Of course, a more svelte-looking former governor Cuomo and Zoran Mamdani, whose name Curtis Sliwa seemed to struggle with last evening. This is a race that a lot of people think they have figured out already, including the President of the United States, because Mamdani is so far ahead, and it's unclear that anything changed last night.
No, absolutely. Besides politics, I'm also a fan of the sweet science. And when you're down in the cards, as Cuomo is right now, you have to come out throwing some haymakers with the intent to at least get a knockout.
Isn't that right?
Mamdani, when you're up with the cards, you just want to make sure that you're just landing jabs, that you stay clean for the most part.
Listen
and that
to
seems
you.
to be what we had last night with the debate.
You going to fights this weekend?
I wish that I would.
I love this. Well, here's a little taste of what we saw with these candidates last evening in the debate.
This is not a job for a first-timer. Any day, you could have a hurricane, you have, God forbid, a 9/11, a health pandemic. If you don't know what you're doing, people could die.
Mr. Mamdani, you want to respond? And if we have a health pandemic, then why would New Yorkers turn back to the governor who sent seniors to their death in nursing homes? That's the kind of experience that's on offer here today. What I don't have in experience, I make up for in integrity. And what you don't have in integrity, you could never make up for in experience.
Wow. That was a clearly prepared Mamdani, who for every zinger or point that Cuomo tried to make, he had a better one, it seemed, coming back.
Yeah, that was a haymaker.
That was okay. There you go.
To the anecdote, and that was a haymaker from the person that is up right now, and that's to our point. That's the one that really went viral that we saw.
Yeah,
circulating in political circles.
He had some good lines. I mean, they clearly spent time preparing for this opportunity, and you're talking about a candidate who was already some 30 points ahead, depending on the poll. Let's assemble our panel because they love this stuff as much as we do. Bloomberg Politics contributor Jeannie Shanzano. By the way, in New York, democracy visiting fellow at Harvard Kennedy School's Ash Center, but of course, our New York representative on this program. Lisa Camuso-Miller with us here in the Capitol, former RNC communications director, our Republican strategist, and host of the Friday Reporter podcast. Now, I'm going to just warn everybody, I'm going to get your breakfast bodega order before this segment is out, but let's start, Jeannie, with style and substance. Did Mamdani just codify the polls last evening? Is he as good as New York's next mayor?
Yeah, and I love Mario. What was it? The sweet science? I'm learning all these new phrases from Mario. I'm loving this. Yeah, and by the way, Joe, I was on an Amtrak from Boston to New York City, and you can bet I got myself all ready, and I was able to stream. So thank God for streaming, and boy, it was worth it. Yeah, thank you. You know, I think the reality is that, as you mentioned, the polls, the Fox poll had Mamdani up 25%. Cuomo has a long way to go. And of course, it would be a race that Cuomo wants to see in a head-to-head. But Curtis Sliwa is going nowhere, except losing his beret, as you mentioned. He is going nowhere. And he had some of the best lines of the night. And Cuomo could not lay a glove on Zoran Mamdani. And, you know, he didn't get any of those sort of viral moments. In fact, the best moments that Andrew Cuomo had, I think, were when he was talking about his experience as a manager. But of course, Mamdani was able to come back and say, well, wait a minute, defend yourself and everything you did with the nursing homes. And he couldn't defend himself. But on housing and other things, Andrew Cuomo showed that experience in HUD and elsewhere does matter. And then, of course, Mamdani was smooth as a cucumber. He was smiling the whole time, unflappable, and didn't make any errors. And so in this kind of race, they have one more debate, which is next Wednesday, or next week, I should say. And unless Andrew Cuomo can lay a glove on him, or really, unless Sliwa gets out of the race, which he shows no signs of doing, this thing is probably a done deal, and Mamdani is going to walk into Gracie Mansion.
And Lisa, I want to get your take on whether you think that Andrew Cuomo has a chance to come back. I mean, in this final stretch. What's odd, I think, is the fact that you got President Trump, a Republican. He and Cuomo, there's no love lost there. But he's kind of tacitly endorsing or pushing for Cuomo, warning of Mamdani's mayoral campaign and likening it to some type of democratic revolution or some such. Can Cuomo dig himself out of this hole?
You know, Mario, I think you make a really good point, and it's one that I don't think that Cuomo can come out from. I think both he and Curtis Sliwa represent the old guard and the old news in New York. And we know how Manhattan likes to vote. I mean, we know how the city likes to operate. All those boroughs really make those decisions based on who can affect change at a time when people are looking for it. And I think that that's what is represented in this candidate. The president, though, absolutely wants to be able to have an advocate in the city, in Gracie Mansion, someone that maybe isn't his best friend, but one that he can predict, one that he can understand where he's going to go. I've heard other political people say that maybe Mamdani is the best foil for Donald Trump because he can point to New York City over and over again as a city that's not performing the way the president thinks it ought to be. So to me, there's no way that Mamdani does not win. To me, as long as he makes no more errors. Last night's debate was a tremendous performance on his part, and good for him.
Well, there you go, from both our Democrat and Republican members of the panel. Cuomo was making the point, Jeannie, that if you elect Mamdani, you're going to have Mayor Trump, because tanks will be rolling in the streets of New York before election night is even over. Curtis Sliwa had a different take on this. Let's listen to what Mr. Sliwa had to say.
The president is going to back down to you, Andrew Cuomo. I know You think you're the toughest guy alive. But let me tell you something. You lost your own primary, right? You were rejected by your Democrats.
Why
and
didn't
you have a
send the National
difficult
Guard?
understanding that what the term no is. You're not going to stand up to Donald Trump.
I agree with Curtis.
I agree with Curtis. Mamdani gets in there. First of all, I mean, he's got the right accent for the job, Jeannie. I guess that's just not worth enough to put him over the top here. But does he have a point when it comes to Cuomo? We talked about the difficulty he had in the primary. His ability to recover seems impossible. Slee was essentially providing the same analysis you are.
Yeah, and Curtis Lee, I'm telling you, it's a debate to rewatch. He had so many good zingers. He was calling Cuomo the architect or the father, and Mamdani the apprentice. I mean, for people who don't like politicians to begin with, it's a great quip. And you know, Donald Trump was really the candidate on the stage who wasn't there. I mean, they kept talking about him, and it's a big deal in New York. There is no love lost for hometown boy Donald Trump in New York City, as we all know. And so, you know, Curtis Lewa really did have a really good comeback to Andrew Cuomo. And of course, so did Mamdani, because Mamdani said, you know, the reality is with Donald Trump, number one, he's been attacking New York regardless of who's here or not. And number two, you know, the reality is that Andrew Cuomo is going to be another Eric Adams. He's going to be in Donald Trump's pocket. He's, you know, subject, as Mamdani says, to the same big billionaire donors and blah, blah, blah. And so that is an attractive message for New Yorkers. You know, for Mamdani, Trump's continued attacks are really helpful in a city that doesn't like Donald Trump that much. And one thing I would say about Sliwa, he's a different Republican because he's a leading Republican, obviously, but one that Donald Trump doesn't like either. I mean, he accused him of wanting to bring his cats into Gracie Mansion. And so, you know, for Curtis Sliwa, he's walking this very tight line. He has a lot of cats, for anybody who doesn't know. I love cats, so I have no problem with it.
No cats on stage last evening. And, you know, if you made it through this remarkable debate, you get to the softy questions at the end. Usually they'll ask you if you could say something nice about the other opponent. Last night it was about breakfast. And if you're a New Yorker and you're asked, I'm looking at you, Lisa Cabuso-Miller, who called the New Jersey governor's race based on a pork roll comment from Mikey Sherrill. The food stuff's important. If you want to pretend to be local, you're never going to fool them. And the question last night was, what is your breakfast bodega order? Let's listen.
What's your go-to breakfast order at the bodega, Mr. Sliwa?
Oh, eggs and cheese on a roll. No salt, please.
Mr. Cuomo?
Same thing, no salt also.
Mr. Mamdani?
Egg and cheese on a roll with jalapenos.
Ah, see? But wait, you can't pick the same thing as the first guy, even if that was your order. Don't you need to change it? Right down to the no salt? It got us talking here in the newsroom, Jeannie and Lisa, and this became a cause here for the program on Balance of Power. We thought we'd take a little survey. The Balance of Power team bodega orders, we're all part of this now. I'm just going to come right out with it. I'm a bacon, egg, and cheese on an English muffin guy. You can call me an elitist, but that's what I'm going to do. It turns out I might not be alone. Justin and America's producer, James Mahoney, both went bacon, egg, and cheese, but they went with the SPK, Mario. Salt, pepper, ketchup. Elizabeth, egg and cheese on a roll. CC, sausage, egg, and cheese, just like Nicholas. Salt and pepper on one. Pepper and ketchup on the other. So Nicholas is going no salt. How about you? We got a minute left.
Well, I'm from Chicago, so we don't really do the bodegas. No. But I do see in the movies where they walk in and say, hey, give me a chopped cheese.
Okay. Just like the movies, Lisa, you're the food expert here when it comes to politics. Did Cuomo just lose the race based on this one question?
Nah, but listen, it's pork roll, egg, and cheese all the way on a hard roll. That's the way to go. And the no salt just reminds us that these guys are old.
Jeannie, are you going to give me some tofu or something? What are you hitting at the bodega?
Worse. Number one, I feel so much empathy for Andrew Cuomo because I would have been like, the same, I guess. I have no idea. Because I would just do coffee. I would be doing my coffee. I have nothing. I defer to Lisa.
Yeah. black coffee would have been a pretty cool answer, I have to admit.
Absolutely. Well, thank you, J.D. Shan, Zaino, Lisa, Camuso, Miller. Thank you so much for joining us here at Balance of Power.
A great hour. We're going to be, by the way, in New York for the election. We'll have special coverage that evening when we come around to November. We'll talk more about that between now and then. Great spend on the week with you, Mario Parker. Have a great weekend. Have fun at the fights. I'm Joe Matthew. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
It's back to the Oval for President Zelensky. Welcome to the Friday edition as Zelensky makes his fourth visit now to President Trump at the White House just a day after Trump made a phone call to Vladimir Putin, suggesting another meeting. We have a lot of questions, and we'll get the latest straight ahead from Bloomberg's Mike Shepard here in Washington. And as Zelensky makes the case for Tomahawk missiles, we hear from an expert, Ben Jensen, from the Futures Lab, senior fellow for the Defense and Security Department at CSIS, will be with us to talk about what a game changer that may or may not be for the war. And we'll bring you to the IMF for a special conversation with Rachel Reeves, Coming straight up this hour. It's all after a look at Wall Street. Let's do it ahead with Alexis Christoforous, who's in for Charlie Pellet today. Alexis.
All right, thanks, Joe. Stocks are shaking off worries about those bad loans at a couple of regional banks. That's what sent stocks lower yesterday. Today, stocks steadying after President Trump told Fox News that very high tariffs on China are, quote, not sustainable. So right now, the Dow off its best level of the day, but still up 118 points. The S&P 500 up about 12. We've got the NASDAQ on the plus side by 23. Yields are also slightly higher, and precious metals pulling back from their record highs. Gold now down 2.5%. We've got shares of Eli Lilly and Novo Nordisk coming under pressure after President Trump said the price of the blockbuster diabetes drug Ozempic could come down to just $150 a month. We know it currently costs about $1,000 for a month's supply. We've got shares of Novo, which makes Ozempic, down about 4%. Shares of Eli Lilly, which has a similar drug, down more than 3%. On the flip side, shares of American Express rallying today, up better than 6% after earnings topped estimates as demand for its revamped Platinum card surged. Also keeping an eye on Apple because it has inked a deal with Formula One, announcing a 5-year media rights deal that will bring all races to the Apple TV platform beginning next season. Apple's going to pay about $140 million a year for those F1 rights. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Let's send it back to Balance of Power now and Joe Matthew.
Alexis, thanks so much. We'll have more on the markets with Alexis, presuming things don't get rolling on time at the White House, just about 20 minutes away as we keep track of the Friday trade here. Thanks for joining us on the Friday edition of Balance of Power on Bloomberg TV and radio. President Zelensky about to make his 4th appearance at the White House, and we've got our eyes trained on the West Wing, where media have gathered in the driveway waiting for his arrival. Zelensky just across the street at Blair House, enjoying the full services of the White House complex, so he's not far away. They're going to sit down for a conversation that we're going to bring you in the room for, remembering that we have had a few different versions of this, including Zelensky's first visit to President Trump in this term that devolved into a shouting match. He has since had better conversations, but new questions following President Trump's conversation with Vladimir Putin yesterday, in which he did not suggest that Tomahawk missiles were on the way to Kyiv. With me now in our Washington bureau is Bloomberg's Mike Shepard, who's also keeping his eyes on the White House today. Mike, what should be our expectations after this talk with Putin?
Well, that really is the big question, and it's more a mystery about how Trump will present himself and the U.S. to Volodymyr Zelensky this time around. Will the call with Vladimir Putin from yesterday influence to a great extent the call or the conversation we're about to see take place? Remember that Zelensky is coming to the White House with a series of requests. One of those, of course, is for some longer range weaponry to be able to strike deeper within Russia at those air bases where they've been launching those drone attacks, and also at some of the industrial production for the defense base of Russia. And yet the coolness that Trump signaled to sending Tomahawk missiles was a bit of a reversal from what he had said several days beforehand, where he had floated the idea of sending Tomahawks to bolster Ukraine, but also send a signal to Putin that it's time to come to the bargaining table.
Yeah, you wonder what Putin said to him yesterday, particularly to get President Trump to the point of floating another meeting. It was suggested later that that may happen. We don't know if there's in fact going to be a gathering in Hungary, but if that does happen, has Vladimir Putin done anything to deserve it?
Well, so far, from the view of many foreign policy observers here in Washington, the answer is a clear no. And even in President Donald Trump's eyes, since the Alaska summit back in August, Vladimir Putin has not taken any really concrete steps, Joe, toward moving to the bargaining table, to trying to end the war that he started with the invasion of Ukraine in February of 2022, and then prior to that with the annexation in violation of international law of Crimea. So the Russian government's moves toward trying to reach this peace deal that President Donald Trump promised on the campaign trail, said could be done in a day, really has not been enough to satisfy Trump, who's been increasingly frustrated by this.
But you wonder how the last 3 meetings will inform President Zelensky's posture and maybe check his frustration at a moment like this.
Well, he has learned how to read Trump a little bit better. And the more that he spends time with President Donald Trump, the better he understands how to react and, engage in some of the flattery that we have seen other foreign leaders exercise and show to the U.S. leader to try to win favor, to try to win approval and win over his view to join theirs in whatever it may be. And in this case, we will have to see if that will go as far as making that offer on weaponry. Now, Volodymyr Zelensky doesn't go into this completely empty-handed. One thing he is floating is this idea of collaborating with the U.S. on drone production. And that is something where a lot of innovation has occurred in Ukraine. Necessity is the mother of invention, and they've really been able to advance their industry and to a large extent, Joe, on the cheap. And it's the kind of thing that could be replicated here. And there is an interest in the defense base and in the current administration in trying to adopt some of that innovation and sophistication. So we'll see if the U.S. president accepts some of that and perhaps offers something else in exchange.
Maybe that could be some common ground that would result in an announcement.
Certainly.
Mike, thank you so much for helping us get ready for this. Shep with us live in Washington as we wait to hear from both presidents at the White House. And we are spinning a couple of plates today, as always. It's day 17 of the government shutdown. Lawmakers are not in town. But Washington is actually quite busy this week with the IMF meetings underway. And as we wait to hear from President Trump and President Zelensky, it's a great opportunity to bring you an important conversation with the IMF meetings underway now with the UK Chancellor of the Exchequer, Rachel Reeves, who sits down now with my colleague, who you know from Bloomberg Surveillance here on Bloomberg TV, Lisa Abramowitz at the IMF. Lisa, take it away.
Thank you so much, Joe. I really appreciate it. I am here with the Chancellor of the Exchequer of the United Kingdom, Rachel Reeves. Chancellor Reeves, thank you so much for being with us. You're heading into a pretty tough budget season. There's the expectation that taxes are going to have to go up and that spending is going to have to cut. How much headroom are you looking to build for yourself so you don't have to do this again in terms of raising taxes again and going through another round of cuts?
I think the British people recognise that the last year has been a challenging one, whether it is conflict in the Middle East, Russia's continued aggression in Ukraine, the need for higher defence spending, and also increasing trade barriers around the world have put countries under a lot of pressure, and no country, including the UK, is immune from that. But I've also been really clear that we will continue to meet the fiscal rules that I set out in my budget last year, and we will get debt down as a share of our economy, we will bring down the deficit, and we will balance day-to-day spending with tax receipts. And when we get the full forecasts from the Independent Office for Budget Responsibility, we will make sure that we are continuing to achieve those things. In terms specifically of the headroom, the headroom has been lower in the past. It was as low as £6.5 billion in the last parliamentary session. Obviously, more headroom would be good, but there's always trade-offs because, of course, to build more headroom, you would have to increase taxes further or cut spending further. But we'll continue to manage that balancing act. But I recognise that in a world as volatile as it is today, having a bit more of a buffer can help absorb shocks.
You've talked about raising the taxes, and in a previous interview you were talking about particularly targeting wealthy residents of the United Kingdom. Is that really the focus right now? Is it broader based in terms of the tax raise you have in mind?
In the budget last year, I did increase taxes on some of the wealthiest, and we also increased taxes on business. I'm very mindful, again, to get the balance right. We want to attract talent to the UK and keep talent in the UK. I also want to make it easier for businesses to grow and stay in Britain. So I'll set out the individual taxes on November the 26th, but I want this to be a pro-growth budget that maintains recognise Britain as a great place to start and grow a business and to bring in investment. And obviously, over the last few months, we've secured huge amounts of foreign direct investment, including from the United States, with those big technology companies investing in Britain.
There's been a concern that if taxes go up too much on businesses, people will start to leave and individuals will leave, and that there's been some anecdotal evidence of that, just personally, when I meet people from London and New York. I'm just wondering, have you kind of grown aware of that and tried to reduce how much you lean on that lever?
Well, we made some further changes to the tax arrangements for non-domiciled people earlier this year, which I think have been welcomed. We'll continue to monitor the response to any tax, but I would also say there are many people choosing to make Britain their home. We've just doubled the number of visas available for high net worth individuals, for entrepreneurs, and for academics in some of the growth sectors to build teams in the UK. And we've no doubt that people will apply for those visas and we will fill those places. So the UK remains an attractive place, in part because we are securing investment from the world. We're reforming our capital markets to make it easier for businesses to raise finance in London, and we're reforming our regulatory and planning systems to make it easier to get things done in the UK.
How much are you planning to cut some of the welfare spending in particular, not just sort of day-to-day spending of the government?
Well, it is important to make sure that all budgets, including the welfare budget, are well managed, and we do need to see reform of our welfare system. And we'll continue to make the case with that reform. We've already brought in some changes to something called the universal credit system to reduce the incentives to get the health-related element of that. And just a couple of weeks ago, I announced a youth guarantee to help young people not in education, employment and training get back into work. Like many countries around the world, particularly since the pandemic, we have experienced challenges in terms of youth unemployment and youth inactivity, and we're determined to turn that around with particular programs targeted at those young people.
One big question for a lot of people is the Office for Budget Responsibility and what they'll come out with in terms of downgrading the growth forecast for the United Kingdom. Do you have any expectation or understanding of what that growth downgrade looks like?
Well, the Office of Budget Responsibility, like other forecasters, use the past productivity performance to forecast the future. And it is true that under the previous government, over the last 14 years, both growth and productivity were underwhelming. And the Office of Budget Responsibility will update their predictions for the future based on the past. And it's my job as Chancellor to try and beat those expectations. And that's why we're pursuing policies on trade, investment, on planning, on permitting, on regulation and capital market reform, as well as through the trade deals that we're securing to make sure that our economy is well suited to benefit from global investment, from business and wealth creation. And that's what we'll continue to do.
Chancellor Reeves, thank you so much for taking the time.
Thank you.
That was Rachel Reeves, the Chancellor of the Exchequer in the United Kingdom. Joe, I'll send it back to you.
Great, Lisa, thank you so much. What a treat to have Lisa Abramowitz in Washington bringing us that great conversation with the Chancellor. We thank you. It's live on Bloomberg as we keep our eyes on a couple of moving parts here, including an imminent meeting between President Trump and President Zelensky. They're preparing in the West Wing for his arrival right now. He was supposed to be there about 13 minutes ago at the top of the hour. These things tend to go late. When these two gentlemen do sit down, we're going to bring you in the room so you can hear everything that the reporters hear live and unfiltered, knowing that these have taken on a couple of different shapes in what is now the fourth visit by Zelensky to the White House. He spent the evening at Blair House across the street, and he is, by the way, expected to hold his own press conference with reporters afterward. Now, we did hear from President Trump about this meeting yesterday because he spoke on the phone for some time. It was a 2-hour call, we understand, with Vladimir Putin, remembering that Zelensky wanted Tomahawk missiles, cruise missiles that could reach Moscow to help turn the tide in this war. President Trump suggested that he was considering that request. But then we heard from him yesterday following his call from Putin, and it's unclear where we stand. Here's the president.
We talked about it a little bit, didn't say much, but I do say to you, you know, we need Tomahawks for the United States of America, too. We have a lot of them, but we need them. I mean, we can't deplete for our country. So, you know, they're very vital. They're very powerful. They're They're very accurate. They're very good, but we need them too. So I don't know what we can do about that.
Okay, so how many do we have? How many could we afford to give? And what difference would it actually make in the war? We thought we would talk to an expert, a voice you've heard before on this program and seen before on Balance of Power. Ben Jensen is back with us. He's director of the Futures Lab and senior fellow for the Defense and Security Department at the Center for Strategic and International Studies, CSIS. Ben, welcome back. It's great to have you on Bloomberg. Some basic questions to start with here. In terms of the efficacy of a Tomahawk missile, if you put this in the hands of the Ukrainians, could it in fact reach Moscow? What type of damage would it do, and what would be the impact on the war?
Sure, yeah. Great to be back again, and because you have empirical viewers, let's start with just the facts.
Super.
The Tomahawk, the way it works is it does have the range characteristics where fired from either in the air, can go further, or from the ground, not as far, but either firing trajectory would mean that it could reach strategically important targets in and around Moscow and other centers. This is why Putin really needs to try to declare a new red line. What is we up to, like his 20th red line?
Maybe,
who knows? Yeah. But that's the real efficacy of it, it's range. Yep. The other key factor isn't just that it can go far with a big boom, it's how it actually flies. The Tomahawk is amazing because this is actually old 80s technology. Yeah, right. It actually flies based upon digital maps it creates the terrain beneath it. So this means it actually is less susceptible to GPS jamming because it's following its own almost version of terrain recognition. That also means it can fly lower than some radars can pick it up. Okay. So a Tomahawk is designed to fly long distances, to stay low to the ground, and then to pop up and hit the target so the defender has less time to react. That's why it's such a disturbing weapon for the Russians and so effective for the Ukrainians.
Would we have to also provide a delivery system, or could this be delivered by boat, by ground, by aircraft that Ukraine already has?
You know, Ukraine is second only to MacGyver in its ability to make battlefield improvisation. So I have no doubt the Ukrainians would find a way to fire it, even if we somehow forgot to deliver it, which our military is good, we wouldn't. The bigger question is how much intelligence would you pass with it? Are you helping train the flight profiles and routes? This has been an issue with Scout missiles in the past. So Tomahawk is a cruise missile. European countries have given other cruise missiles to the Ukrainians in the past. So you're right, it does come with a support package. It's not just you buy it off the shelf, you take it home and use it. You have to think about that intelligence package, and then also how are you firing it.
Okay, let's talk inventories. President Trump, who was open to this idea a couple of days ago, says, hey, we need them too, and we cannot deplete. Do we have a sense of how many we have?
So not as readily as you think. Usually, you know, defense wonks like myself spend time like looking at congressional budgets to see how many were ordered and how many were bought. And then sometimes we don't get accurate numbers and the number shot in terms of actual strikes on an enemy, or much less in training. So what we do know is this is a high demand asset, right? You always hear that term. It's why it's ubiquitous now to say Tomahawk, which means there's never enough. And the bigger issue we have is that we just can't produce many of these missiles at the large enough quantities and in a timely manner, especially when we're confronted with the world where one day we might fire a Tomahawk from a destroyer to hit a Houthi, the next day we might give it to Ukrainian to shoot something in Russia, but then the following day we all of a sudden need to fire 1,000 of them in the defense of a treaty ally like the Philippines or Japan because of the Taiwan scenario.
Okay, so you mentioned Yemen, by the way. We've popped off a lot of these at Yemen, and they come at what, $1 million a pop?
Yeah, prices vary. And remember, the way the defense contracts work, it isn't just as simple. You usually have to go for an average, $1 million a pop on average, but it depends on the block. And so my guess is we're probably going to give older inventory, lower block item Tomahawks to the Ukrainians to fire. Ones that we would be kind of like we did with some of the ATACMs that were nearing the end of their service life. So it's still an amazing missile. That's not to discount its power. But we're not going to be giving them the latest block that is more advanced and has maybe even some other features that would be of interest.
Could it change the strategy for Ukraine? Could it break this war of attrition, or would this just be an opportunity to provide a deterrent for Vladimir Putin? How would it be employed?
I tend to look at this, and this is where I think something is happening that's more interesting than gets credit in the Trump administration. I think that they're actually having what I would call a compounding coercive campaign right now. So the Tomahawks are actually a powerful deterrent and a powerful negotiating mechanism, even if not a single one enters Ukraine. Now Vladimir Putin has to reckon with the Americans can give the Ukrainians something that can hit targets with a bigger boom than the long-range drones attacks that are hitting Russian oil refineries. That is taken by compounding, because now think of the economic side. We've got the Indian oil dynamics going on. We've got this new call for a victory tariff to further hit Chinese support to Russia. We've got existing sanctions. We've got EU calls to create really interesting, like structured financial products, like essentially loans off Russian frozen assets. And we even have a bill in the U.S. Where we would essentially take, I think it's about $6 billion, it's a few $1 billion of Russian frozen assets and give it to the Ukrainians. So I actually see the economic dimensions of that coercive campaign as more deterrent than the individual Tomahawk delivery, but you can't separate them. I think the Trump team has developed a pretty sophisticated notion of this compounding coercive signal to try to really put the hard press on Putin in the wake of Gaza to then kind of put at least freeze the conflict, if not outright end it.
Fascinating. It's a great theory, and it makes a lot of sense. And I wonder, when you consider the hotspots around the world, the amount of munitions that we're providing and using, there was fascinating analysis from Colonel Sanders at Bloomberg Intelligence, who sits right in the newsroom with us and was out with a client note talking about a potential re-rating of the major defense contractors based on the massive orders for missiles specifically that are going to be coming. Tomahawk is a Lockheed product. Who makes it?
Well, remember, the weirdest part about most of these is because after that famous thing you call the Last Supper in defense, where you went from a lot of firms to a few firms, it's never as simple as
everyone makes everything here. Like it takes every company to make something, right?
And never think about a missile as just a missile. A missile is a series of component parts, from a rocket engine to a guidance system to a warhead to avionics to a command and control suite. So usually the really interesting way to look at these weapon systems, and especially for Bloomberg watchers, as you're thinking about this, from how do you make bets upon the possibility of protracted conflict or the recapitalization of the American industrial base, you really have to look at it at that angle.
Fascinating.
Then you start making very different bets, because it turns out probably in a couple years we're probably going to have more rocket motors than we need, but we might not have as many drones as we need. And so you have to start to look carefully at what companies, who are their contracts, who are their suppliers. You then got to throw in weird curveballs like this whole critical mineral thing and the magnets. So it's never just as simple as Boeing or a Lockheed or a Northrop, all of whom make phenomenal weapons. It's what part of the end item do they make, and then where do we understand those supply chains? And because of that complexity, that's why it's so hard to recapitalize the defense industrial base.
What a great answer. So it sounds like for the investor, you might be looking at a basket. You're buying the industry, maybe more than individual names. But where do the Andurils come into play here, and some of the other smaller, more nimble, more innovative defense contractors they're being profiled on 60 Minutes as the next big thing? Will that, in fact, change procurement at the Pentagon? Unmanned drone, whether it's air or water?
Who knows? I mean, in some sense...
You don't seem impressed at all.
So I'm impressed with some of their stuff, but I'll be more impressed when they have multiple factories that are mass producing.
Understood. It's about scale for you.
Yeah, it's about scale. And I also think a lot of the defense primes, despite the inefficiencies of federal procurement processes, a lot of our actually large primes are actually some of the most innovative companies you can find. It's American firms with DARPA that invent this thing called stealth. It's American firms actually working with DARPA researchers that invent the internet. So I have yet to see any small, amazing, disruptive company that has something as disruptive as stealth aircraft or the internet.
Really interesting.
What I do see, though, is that their willingness to create a more competitive, kind of Schumpeterian creative destruction landscape. So if nothing else, even if a lot of these new defense companies end up failing and failing tragically, they've at least forced interesting debates and energy, which is exactly what we want in capitalism. So I think they're serving a really important function. I think some of them will do amazing work, but don't discount some of the amazing stuff that these larger defense firms make.
Oh, how much did we just learn in the last 10 minutes from Ben Jensen? Come on every day. That was truly helpful, and I think we got a lot out of it, Ben. Thank you so much.
Always love coming to see you.
CSIS, which is just an incredible stable of talent and insight here on the program. Ben, thank you so much for being with us here. Keep this in mind when you hear President Trump and President Zelensky talking about tomahawks, and when reporters ask about that, that could kick off at any moment. We're going to bring it to the White House when President Zelensky arrives. And of course, we're always keeping tabs on Wall Street. We've been talking stocks a little bit here with regard to defense, but let's get the big picture right now. Alexis Christoforous has Wall Street for us covered at World Headquarters in New York. Alexis?
Another roller coaster ride on Wall Street today, Joe. An earlier rally starting to lose a little steam here. Investors still trying to shake off those bank credit concerns at a couple of regional banks, which we know sparked yesterday's big sell-off. So right now, the Dow off its best levels, but up 117. The S&P 500 now in the green by about 8. The NASDAQ composite adding about 12 points, we'll call it. And precious metals pulling back from their record run. We've got gold down nearly 3% and spot silver off nearly 6%, biggest drop there in 6 months. Now, stocks that led yesterday's sell-off are rallying back today. We've got Zions Bancorp up about 4%. Also, Western Alliance up now 2%, as a lot of investors believe problems at those banks are specific to those banks and don't represent a wider issue in the banking industry. Also, investment bank Jefferies up by more than 4%. It was caught in the storm for its exposure to bankrupt auto parts retailer First Brands. Well, Jefferies was upgraded today at Oppenheimer. And shares of American Express up 6.5%. Earnings there topping estimates as demand for its revamped Platinum card surged last quarter. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Joe Matthew in Balance of Power.
Do appreciate it, Alexis. Thanks. We'll have more on the markets with Alexis Christoforous in about 20 minutes' time. Thank you for spending part of your Friday with us on Balance of Power on Bloomberg TV and radio. Indeed, I'm Joe Matthew in Washington, and we're waiting to see something start here at the White House when President Zelensky arrives at the West Wing. Things will start to move pretty quickly. We've been through this 3 times already. Of course, this is his 4th visit with the call for Tomahawk missiles. That not just Tomahawks as well, and also defensive weaponry to close the skies, as Zelensky likes to say. There's a live view if you're with us on Bloomberg TV or on YouTube of the West Wing entrance. When Zelensky arrives, President Trump will step out and welcome him inside, and then we'll be off and running with a bilateral meeting that will involve reporters, and we'll hear that and see it live and unfiltered here on Bloomberg. As we assemble our political panel with their take, and to the big questions, which Trump do we get, which Zelensky do we get today? We've seen 4 different versions of this, or we will have by the end of the day. The first 3 were different in very significant ways, and we're joined now by Bloomberg Politics contributor, Democratic analyst Jeannie Sheehan Zaino, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, alongside Republican strategist Lisa Camuso-Miller, the former RNC Communications Director and host of the great Friday Reporter podcast. Lisa, which Zelensky shows up today and which Trump will greet him?
Oh, boy. I mean, Joe, it's hard to tell. I think that both sides probably are feeling very optimistic. There's been a lot of good news as it relates to what's happening overseas in terms of negotiation conversations, open conversations. I think a lot of it will be tempered by how the call went yesterday with Putin. And that's, to me, also, there's so many variables that could take place here. I'm optimistic. I'm hopeful that it's a productive conversation because it's one that needs to be had. And it's one that needs to keep the momentum going.
I have to admit, I'd be on time for this, Jeannie, if it were me. He's a half an hour late, and maybe that was in coordination with the White House. That we don't know. He's staying literally across the street at Blair House. Be curious to see if he walks or drives over. We can tell you, according to the press pool, by the way, that a military honor guard is waiting on the lawn, lined up along the driveway there to greet him. So he is not getting the red carpet, so to speak, but the same treatment as another world leader, Jeannie, which is a lot different than the feeling, at least, that we had on his first visit. Is this going to be contentious, collaborative? What's the vibe today?
Yeah, and I'm so glad you mentioned the Blair House, because my understanding is this is the first time in one of these visits he has been able to stay at the Blair House, which several people are suggesting is a sign of respect. In the past, I think he's had to get one of those hotels in D.C. that we've all stayed at. So that
it's a great point that you make, Jeannie. He was staying at the Four Seasons the night that the meeting went south, and forgive me for interrupting, but he has just arrived. There you see the two standing side by side at the West Wing portico. The president He's got his arm around him, pat on the back. It looks, based on my view here, it's a little bit difficult to tell in the shadows that he's wearing the same black suit that he had on last evening, and they've just resolved inside the West Wing. So we'll be hearing from them a bit from now as the photographers follow them inside. Jeannie, it's an upgrade to get Blair House when you're used to staying in a hotel, even if it is the Four Seasons.
That's right. And listen, I love myself some Four Seasons, Joe. So I would stay there in a heartbeat. But the Blair House is an upgrade. So that people are saying is one sign that he may be looking forward to a meeting with more respect. But we never know. I mean, you and I were sitting here the first meeting, and we probably thought it was going to be a regular meeting, and it turned into something other than any of us had ever seen. And of course, a big question is JD Vance as the vice president there? It's hard to know. But I do think on this Tomahawk issue, one thing, and I thought Ben's point was so well taken, the politics of this, I think, are even more critical than the strategy from a military perspective, because, of course, they already have the flamingos. They already have the ability to go into Russia and with a precision missile. And that hasn't changed the trajectory of the war. And most experts say that even if they got a limited number of Tomahawks, it wouldn't change the trajectory of the war. But it was enough to get Vladimir Putin on that phone call yesterday, which, to Lisa's point, is really critical here. And Donald Trump seems to have altered his thinking maybe in terms of both the Tomahawks and sanctions, with that bipartisan bill still hovering over. So Vladimir Putin and congratulating Donald Trump, they all know how to play him now. Zelensky in his suit today seems to have been able to speak his language on the sanctions and the Tomahawks to a certain extent so far.
Press pool is gathering right now, so we could be hearing and seeing them shortly with more color from the pool. If you put yourself out there in the driveway, having just seen these two at the door together, the faint sound of music is emanating from the Rose Garden, what the president calls the Rose Garden Club. The soundtrack for this arrival, Chiquita by ABBA and Maria from West Side Story. Lisa, what will be the mood music for the meeting?
I don't know, Joe. Did you just hand me the auxiliary connection? I don't know, Joe. I mean, the whole thing to me is just bananas. Don't even get me started on the Rose Garden conversation. I think more than anything, though, it's a great sign. Jeannie makes an awesome point about the fact that he's at Blair House. Great conversation, great starting point that the two of them meet one another. They meet at the same point of view. They're dressed similarly. I mean, all of these sort of small moments that we're looking for some indication about how the conversation goes to show that there has been a tremendous evolution in this relationship. And that, to me, I think is encouraging. I'm encouraged by that alone. And so I'll be curious to see how this conversation goes. But this relationship is one that has been fraught with ups and downs. The other point Jeannie makes is very good. Who knows who's in the room? Is it the vice president? Is it someone else? Is it Pete Hegseth, right? So all of these pieces are really set to be played out today. We'll wait and see.
Or maybe Andrea Bocelli, who was in the Oval Office a short time ago, Jeannie. That Oval Office, as the president likes to call it, the greatest show on earth, is quite the staging area. And so this is going to play locally for President Zelensky as well. I mentioned he's going to hold a news conference, maybe an impromptu news conference out there outside, presumably, the White House gates. He said he would do it in front of Blair House later on today. What's going to happen here following the meeting when both sides try to frame this to their own benefit? And how will it play locally for President Zelensky?
Yeah, and Joe, I'm glad you said they played Maria from West Side Story and not like I Feel Pretty or one of those. So I think Donald Trump
I can't say they didn't, but yeah.
Yeah, let's hope not. And I love West Side Story. But, I'm glad you raised the domestic issue, because that is critical. And it's on both sides, of course, for Zelensky, who is facing his own real challenges at home, and also for Donald Trump. I mean, we had Marjorie Taylor Greene out in the last few hours talking about the fact that Donald Trump has taken his eye off the America First agenda with what she calls a revolving door of foreign policy leaders, and less focus on things like you just had Lisa Abramowitz on talking about the economy, affordability, housing. And so these, the domestic issues are critical. And I'm going to be very curious to see if both Zelensky and Donald Trump can do anything to improve their standing domestically. Because, of course, when you see the MAGA folks starting to cry foul when Donald Trump is focusing too much on foreign policy, that is a sign that he needs to get back to the business of the government, which is in its 14th, 15th day of a shutdown. And of course, again, Zelensky has his own challenges at home.
Day 17, Jeannie, and nobody's talking about it. You're the first person I think maybe I said something at this hour. It is interesting how we go from one to the next, but that's what Flooding the Zone is all about. We have less than a minute left, Lisa. What are you going to be watching when the cameras open up and we see these two sitting there? What are you watching for? Is it like Jeannie said, who's on the other couch?
Yeah, I mean, no doubt about it. I'm looking for who's on the other couch, and I'm looking for body language. Look, I'm a communications person by trade, Joe, so I'm always looking for those nonverbal cues. How did it go? How did this early conversation, when they walked in the door, what did the president talk about? How did it go? Who greeted him? There's so many. I mean, that's why we're here on the political panel, because we love to evaluate all these little ins and outs. And so for me, I'm really looking for that early body language and who else is in the room.
Yep. Excellent. It's going to be the cabinet room, by the way, and we're going into overtime here because we're just now watching reporters enter the room. We want to make sure they get the microphone straight. Everyone's standing against that wall. This is the long cabinet room table. There you see it on Bloomberg TV. And once the president gets started here, they've got the boom mics out. We will get up and rolling here. Jeannie was asking the question, of course, who is in the room? And we're getting a sense of that now. J.D. Vance is sitting right next to the president at his right, and Marco Rubio at his immediate left, with the Secretary of Defense, Pete Hegseth, and the Treasury Secretary the next seat over. These are typically the sort of assigned seats that we see at meetings like these. President Zelensky in the White House. If you're joining us right now on Bloomberg TV, these are live pictures as we wait for this conversation to begin. There's no telling how long it will go or what questions will be asked, but we do have the press pool in the room, and we start now with live coverage here on Bloomberg TV and radio. Here's President Trump.
Has endured a lot. I mean, he really has. He's endured a lot, and we've endured it with him, to be honest. It's been a long time, and I think we're making great progress. So we're going to be talking about that today. We'll be talking about what took place yesterday with my phone call with President Putin. And I think that things are coming along pretty well. It began with Alaska, where I think certain guidelines were discussed, and we want to see if we can get this done. This was long ago into the Biden administration. I came here and we inherited this, and we'd like to see if we could finish it, end it. We want it ended. So many people have died in this war, and we're gonna get it ended. So I just want to thank you all very much. If you have a couple of questions, go ahead, please. In fact, before I do that, let me just ask the president to say a few words. Thank you, President.
Pleasure. Glad to meet you again, Mr. President. Thank you very much for the invitation. Again, my congratulations with your successful ceasefire in the Middle East.
Thank you.
Yeah, and you did it. And I think this is a momentum to finish Russia's war against Ukraine. I think that, yes, we understand that Putin is not ready. I think not ready, but I think that I'm confident that with your help, we can stop this war. And we really need it. We see that they don't have successful steps on the battlefield, and it's good. I think that their army is weak now, but a lot of losses. They have a lot of losses and in economy and people, and I think this is a very important moment. And I wanted to thank you, Mr. President, after our phone calls. Yesterday, I had a good opportunity to meet with the big American energy companies, and they are ready to help us. Yes, after all these attacks on our infrastructure, Russian attacks, and etc. And I had also meetings, thanks to your team. We had meetings with a good military companies. We spoke about air defense, and I want to share it after with details where we are. Thank you. Thank you so much.
Thank you very much. Very good. And I think it looks beautiful in his jacket.
Yeah?
It's beautiful. I hope people notice it's actually very stylish. I like it.
President Trump.
Yeah, please, go ahead.
Under the Biden administration, the White House was fearing of the possible escalation. They were not allowing the Ukrainians to strike into Russia, fearing of this escalation.
Yeah.
Would your administration allow Ukrainians to strike deep into Russia?
We're going to be talking about that. That's something we'll be talking about. You're right. It's an escalation, but we'll be talking about that.
Mr. President, will President Zelensky join you in Hungary to meet President Putin?
Because it's a leader that we like. We like Viktor Orban. He likes him. I like him. It's a country that's a safe country. Done a very good job. He's been a very good leader in the sense of running his country. He doesn't have a lot of the problems that other countries have. And so we've decided that we'll be going to be with Viktor Orban, and I think he'll be a very good host.
President Trump, right here.
It's
President Trump.
Hungary, yeah. We're doing Hungary, yeah.
With Putin, trilateral meeting, or is it just you and Putin?
To be determined, but I would say most likely it's going to be a double meeting. It'll be a double meeting, but we will have the President, Zelensky, in touch. There's a lot of bad blood with the two presidents, and I'm not speaking out of turn when I say it. It's a very difficult situation. You know, we just settled the war, and after thousands of years, I guess. People say anywhere from 500 to 3,000 years, and I was in rooms, as you saw, because you were with me, a lot of you were with me last week, with leaders that didn't like each other, but they were able to get along. These two leaders do not like each other, and we want to make it comfortable for everybody. So one way or the other, we'll be involved in threes, but it may be separated.
President Trump. President Trump.
Was he what? Where are you from?
From Ukraine. We actually had a
Okay, good. Good, yeah.
What if President Putin doesn't agree to peace in Hungary? What do you do then? Do you have...
Well, let's see what happens. I mean, you know, what if? I think he will. I think that President Putin wants to end the war, or I wouldn't be talking this way. I think he wants to end the war. I spoke to him yesterday for 2.5 hours. We went through a lot of details. He wants to get it ended. I think that President Zelensky wants to get it ended. Now we have to get it done.
President Trump, Kara Castronova from Lindell TV. And although I love asking you questions today, my question is for President Zelensky
Sure.
of Ukraine.
Go ahead, please.
Thank you. Our President Zelensky, President Trump, just brokered a peace deal in the Middle East that all Americans, both sides of the aisle, are very proud of. But to meet that deal, both sides had to make concessions. Our president has stuck out his neck in many ways to make a peace deal for your war as well. What specific concessions are you willing to make to end this war with Russia? Will you give up joining NATO? Americans have foreign war fatigue, and our president, as he said, we need our Tomahawks too.
To me?
Yes, you, President
Okay.
Zelensky.
Thank you very much.
That's some question. Right?
So many questions in one. Thank you very much for your question. First of all, I think we need to sit and speak. The second point, we need ceasefire. Even now, you see in the Middle East, it's very difficult to hold ceasefire. Everywhere, in every war, it's very difficult. We want peace. Putin doesn't want. That's why we need pressure on him. We will speak with President today what we need. We understand what we need to push Putin to negotiation table. And as I said previously, so we are ready to speak in any kind of format, bilateral, trilateral, doesn't matter. Matter just peace. This is important. And we don't speak about NATO or NATO. For Ukrainians, it's very important. Of course, it's our decisions of allies to decide where we are.
But are you willing to give up
Yes,
joining
but the
NATO?
most important thing for people in Ukraine, which are under each day's attacks, to have really strong security guarantees. NATO is the best, but weapon is very important. Allies on our side is very important. And between us, for us, bilateral security guarantees between me and President Trump is very important. I don't know, we didn't speak with details about it, but this is the most important document because the United States is very strong.
Sir, President Trump, President Trump, you are the middleman right now, hoping to end this conflict. Who is doing a better job negotiating, President Zelensky or President Putin?
I think they're both doing a great job in that sense. We have to get it done. We've got to take some of the hatred of each other. You know, they don't like each other. I say that in front of President Zelensky, but I say it in front of President Putin too. They have tremendous bad blood. It really is what is holding up, I think, a settlement. I think we're going to get it done, and we have to make it long-lasting. As I said in the Middle East, everlasting, right? Everlasting. And the Middle East is a much more complicated situation. You know, we had 59 countries involved, and every one of them agreed. And it's, you know, it's sort of amazing. Most people didn't think that was doable. This is going to be something I really believe that's going to get done. I had a very good talk yesterday with President Putin. I think he wants to get it done.
And President Zelensky, right behind you. When we were in Israel with President Trump earlier in the week, we heard a lot about the difference in diplomacy between President Trump and President Joe Biden before him. What do you see as the biggest difference in diplomacy between President Trump and President Biden?
President Trump has a big chance now to finish this war. President Biden now is not the president, so he doesn't have a chance to finish this war. And President Trump is really showed for the world that he can manage ceasefire in Middle East, and that's why I hope that he will do this, and we will also have such big success. For Ukraine, it's a big chance, and I hope that President Trump can manage it.
I would say the biggest difference is one is extremely competent and the other one is grossly incompetent.
Sir, a few weeks ago in New York when you two met, you said that you think Ukraine could ultimately take back all the territory that it's lost so far. Do you still think that's the case, or do you think there'll have to be some sort of
You never know. Look, you know, war is very interesting. You never know, do you? You just never know with war and peace, but you never know. Please.
Russia calls Tomahawk supply to Ukraine as an escalation, yet it continues using similar cruise missiles like Caliber and
Yeah. Who are you with? Who are you with? You Ukraine?
Yeah.
Good.
But Russia continue even using the cruise missiles and also nuclear-capable ballistic missiles in Ukraine since 2022. So do you consider providing Ukraine with the Tomahawk or similar missiles as an opportunity to equalize the possibilities of Ukraine and Russia and push Moscow to the negotiation table?
Sure. We're going to be talking about that. That's why we're here. Okay? Fair question. Exactly as he told you to say it. But we're going to be talking about it. Okay? Yeah, please.
Mr. President, message to India and Hungary who is still refusing.
You said India and Hungary? That's an interesting. India and Hungary. It's an interesting combination.
Refuse to stop buying Russian oil.
Well, India is not going to be buying Russian oil anymore. And Hungary is sort of stuck because they have one pipeline that's been there for years and years and years, and they're inland. They don't have sea. They don't have sea. And I spoke with the very great leader of Hungary, and they are, you know, it's very hard for them to get oil. I understand it. Hungary's in a very interesting position because they can't have ports. You know, they're surrounded by land. So we'll see what happens there. But India will not be buying oil from Russia. And they've already de-escalated, and they've more or less stopped. They're pulling back. They bought about 38% of the oil, and they won't be doing it anymore.
Mr. President Trump has been helping you in achieving peace in Ukraine.
Who has?
First Lady Melania Trump has been helping in returning abducted Ukrainian children from Russian captivity. President Zelensky, do you appreciate those efforts? How do you assess them? And did you ask her to step in to help you?
No, she wanted to do it. She just felt very strongly about the children. And she's done a really good job, I think, in bringing it to the fore. You know, we have a lot of children involved. Now, it's some people say it's 20,000 and some people say it's 300. There's a big difference between that, so nobody really knows. But she felt very strongly about the children. She thinks about the children all the time.
President Trump, if you okay tomahawks to Ukraine, what's going to happen if the United States is in a conflict and we need the tomahawks? Do we have enough?
That's a problem. We need tomahawks, and we need a lot of other things that we've been sending over the last 4 years to Ukraine. We've been, you know, we gave them a lot. Now we have a different situation. We send it to the European Union. They pay for it and all that, and they have plenty of money. But it's beyond the money. You know, we need tomahawks, and we need a lot of other weapons that we're sending to Ukraine. One of the reasons we want to get this war over is exactly that. It's not easy for us to give. You're talking about massive numbers of very powerful weapons. So that's one of the things we'll be talking about. Hopefully they won't need it. Hopefully we'll be able to get the war over with without thinking about tomahawks. I think we're fairly close to that. Yeah, go ahead.
President,
yeah, please.
Just you to understand. So for today, of course, we want to finish this war, but the war is another technological war. You don't use just tomahawks. If you want to target a military goal, you need thousands of drones. It goes together with such missiles. Ukraine has such thousands of our production drones, but we don't have tomahawks. That's why we need tomahawks. But the United States is a very strong production, and the United States has tomahawks and other missiles, very strong missiles. But they can have our thousands of drones. That's why where we can work together, where we can strengthen American production.
And so just so that I understand, so you're suggesting kind of a trade. If President Trump okays Tomahawk missiles to help you launch...
Yes, it's about Russia, military goals. It's only about military goals.
Right, but then you would authorize some kind of an exchange where...
Yes, of course.
The U.S.
Yes, we have proposition. We have big proposition with our drones.
President Trump, I don't mean to be brokering an arms deal here, but is that something that you would be interested in, Ukrainian drones?
We are, yeah, we would. We have a lot of drones right now. We build our own drones, but we also buy drones from others, and they make a very good drone. I mean, drone warfare has really come to the fore over the last couple of years because of this war. I will say, there's nothing like the jets. You know, we knocked out a lot of drones in Israel. We were knocking them out for Israel, and we were doing it with extremely fast and powerful jets, following the drones and knocking the hell out of them. So, you know, we know a lot about the drones, and we know a lot about the great jets, the great ones. The ones, well, and the B-52s, which were totally they were stealth. They were undetectable. So we have a lot of different weapons. And, you know, I have an obligation also, though, to make sure that we're completely stocked up as a country, because you never know what's going to happen. In war and peace, right? You never know what's going to happen. So we're going to be talking about tomahawks, and would much rather have them not need tomahawks. Would much rather have the war be over, to be honest, because, you know, we're in it to get the war over. We're selling a lot of different types of weapon, as you know, to the European Union. We're not in it for that. We're in it to get it over. We're losing thousands of people a week, thousands of people, Russian, Ukrainian, and mostly soldiers. I mean, mostly soldiers. But we're in it to see that end. And if we can end quickly, and I think we can. I mean, I had a very good talk yesterday. We're going to be talking about it. But I had a very productive talk yesterday with President Putin. We'll see what happens. But the war in the Middle East was far more complicated. We got that one done. And I think we have a good chance. I think President Zelensky wants it done, and I think President Putin wants it done. Now all they have to do is get along a little bit.
Can you give us an update on the trade negotiations with China, or perhaps Secretary Bessent?
Yeah, I will, and I'm going to let Scott do that. But I think we're doing very well. I think we're getting along with China. China would like to have something. As of this moment, we'll be meeting in a couple of weeks. We'll be meeting in South Korea.
You think
myself.
Will go forward?
I think so. It looks like it's going forward. I think so. They want to meet. We like to meet. I have a very good relationship with President Xi, and we're going to see what happens. But, for years we were taken advantage of by China very badly. We were losing hundreds of billions of dollars a year to China. We really built their military, if you think about it. The kind of money that presidents allowed to be lost to China was just insane. And then when I came into office, as you know, I put very severe tariffs. So we took in hundreds of billions of dollars in my first term from China. Biden let that go because it was so much. He let it continue, but he gave all sorts of exceptions. And by the time you looked at it, Scott, I would say it wasn't the same thing. He would give an exception for anything. If you got up and went out to dinner, he'd give you an exception. So it wasn't the same thing. But I put on very serious tariffs. So we took in hundreds of billions of dollars. And then I left office. The election was rigged. I left office, and that was the story. Now I come back, and we are in a very strong position because of tariffs. We're in a very powerful position because of the fact that we have tariffs. If we didn't have tariffs, we would be in a very weak position. We would be in a weakened state. But with tariffs, we've made hundreds of billions of dollars, not only from China, but from others. And China wants to talk, and we like talking to China. So we have a very good relationship, and we're going to be meeting in South Korea in a couple of weeks. And I just got back from a long trip. I'm going on another long trip. And Scott, you want to say a few words on that, please?
Yes, sir. So the entire relationship stems from the great perspective the two leaders have for each other. China did a substantial, unprovoked escalation last week. We were unable to get in touch with them. Since then, it's been IMF World Bank Week. They have had working level people here there have been meetings. The Vice Premier, who is my counterpart, and I will be speaking this evening at around 8:30, 9 o'clock. And then he and I and a delegation will meet in Malaysia probably a week from tomorrow to prepare for the two presidents to meet. So I think that things have de-escalated. We hope that China will show the respect that we have shown them. And I am confident that President Trump, because of his relationship with President Xi, will be able to get things back on a good course. Is the hope for that meeting with you and President Xi some kind of trade deal then? Or
could be.
More
Look, I think we're in a very strong position. We're getting, as you know, as of November 1st, I could move it up if I wanted, a 100% tariff over and above what we get now. So that would make it about 157%. And China doesn't want that, and they want to talk, and we're talking. And I think we'll make a deal that will be good for both. I think we will do something. But you have to understand, we never got anything from China. It was a one-way street. For many years, for decades, it was a one-way street. And they became rich because of the United States. And frankly, presidents that, let's be nice, they didn't know. They just didn't know. They didn't understand what was happening to them. But I understood it. I understood it long before I ran for politics. I used to watch in amazement at how stupid our country was, how stupid they were. And we're not stupid anymore. And that includes with the European Union. That includes with Japan and South Korea. All we want to do is be treated fairly. But the fairly is hundreds of billions and even trillions of dollars coming into the United States. And it's our national security is secure because of tariffs. If we didn't have tariffs, we would have no national security. So it's very important.
Will you seek China's help in ending the war in Ukraine? Do you need them to put pressure on Russia?
I'll be discussing that, but I'd love to see it ended before that. I think we have a chance of ending the war quickly if flexibility is shown on behalf. And again, we're not losing people. The United States is not. We're not losing people. We're not spending money. We're getting paid for the, ammunition and missiles and everything else that we're sending to the European Union, but to NATO. But it's very similar. If you look at the countries, it's very similar. And we just made a very fair trade deal with the European Union, and what we wanted, and we made a very good deal with NATO too. They pay for all of this. That's not what we're in this for. We're in it to save thousands of lives every week. Thousands and thousands of lives. That's why we're in it. And I think we have a very good chance of bringing this war to a conclusion.
President, and your cabinet has done honestly an excellent job. I think that a lot of people could agree to that.
Thank you.
I'm speaking as someone who lost my father in a war, so I know the human cost. What would your advice be to American leaders, to world leaders, to neocons, to TV hosts who often speak about conflict in abstract or strategic terms rather than the human cost and the human terms?
Look, my only statement is we have to get together. It's a very small group of people. It's the president, and the president. Okay, 3 presidents. And I'm the mediator president. And I'm mediating not an easy situation. It should be easy, but it's a lot easier when people understand each other, when they get together, and when they like each other. We don't necessarily have that situation as far as like is concerned. Maybe it can turn around. Maybe it can. But in the meantime, we'll have them keep a little bit of distance, and we're going to see if we can get it done. This is number 9, okay? This will be number 9 for me. I've solved 8, including the Middle East. I've solved 8. This, I thought, would have been among the easiest. We solved, President Putin mentioned yesterday Armenia, all of the different wars. He said it was amazing but the big one that he was surprised that we were able to settle was the Middle East. He thought it was incredible. He was very generous in that sense. This should be something we're able to settle, and I think we will be able to settle. Yeah, Brian.
On that note, you will go down as the peacemaker, no doubt, and you will resolve this war.
Well, we resolved 8 others. It's funny how people say that. If you get this one, every time I do one, they forget about that one. I solved 8 wars. Go to Rwanda and the Congo, talk about India and Pakistan, look at Thailand, look at all of the wars that we solved. And every time I solve one, they say, if you solve the next one, you're going to get the Nobel Prize. I didn't get a Nobel Prize. Somebody got it who's a very nice woman, very nice. I don't know who she is, but she was very generous. So I don't care about all that stuff. I just care about saving lives. But this will be number 9. But every time I solve one, they said, sir, if you solve one more, you're going to be known as a peacekeeper. So to the best of my knowledge, we've never had a president that solved one war. Not one war. Bush started a war. A lot of them start wars, but they don't solve the wars. They don't settle them. And especially when they have nothing to do with us. I guess just about all of these wars had nothing to do with us. But I saved tens of millions of lives. The Prime Minister of Pakistan said, I saved millions of lives in interceding on Pakistan. And you look at Pakistan and India as an example. That would have been a bad one, 2 nuclear nations, right? So I say this. This is pretty much the last one, although I do understand that Pakistan attacked, or there is an attack going on with Afghanistan. That's an easy one for me to solve if I have to solve it. In the meantime, I have to run the USA, but I love solving wars. You know why? I like stopping people from being killed, and I've saved millions and millions of lives, and I think we're going to have success with this war. Wait, please.
President Zelensky, this is your 3rd time over here. And by the way, you look excellent.
Thank you, sir. Thank you.
For you, by the way. This is your 3rd time here. How different sitting across from the president is this time versus the 2 previous times here at the White House? And how confident are you hearing the success rate of solving these prior wars that he can get this war solved?
First of all, about suit. The same suit because the same president. It's very simple. The next president will have another suit. Yes, about our relations with President Trump, I think we have important dialogues, and I think we begin to understand each other. Yes, and I know that the president is briefed very well about the situation in the battlefield, and he knows a lot what's going on the battlefield in Ukraine, and I think it really helps when you know a lot of things, a lot of details about one or another war, it helps a lot. But we are still in war, and I hope we can manage.
You have been clear that there are some countries that are not meeting their commitment. You pointed out Spain. They said that it's impossible.
No, Spain has not come through. No, Spain has not been loyal to NATO. Spain has been, they're the only one. Everyone went up to, as you know, I mean, you were at 2% and they all went up to 5%, but Spain disagreed with that. I think Spain should be reprimanded for that. I think it's very bad that they did that, but that's up to them. That's up to NATO and Spain.
They cannot be expelled from NATO.
Can they or not?
They cannot, according to the treaty, but they also claim that they are protected by the European Union umbrella for trade.
Well, the other people, many of the other countries are in the European Union too. They're not complaining, right?
President, tell you that Putin is serious.
That's of interest.
Mr. President.
Yeah, please go ahead.
Thank you, Mr. President. Do you think you can carry the momentum from the Middle East deal over to this deal? And if
I do.
So, how does that move the needle?
Yeah, I do. I think we carry a lot of momentum, a lot of credibility. Getting Middle East done was very important. Nobody thought it could be done. That was one nobody thought could be done, and we got it done. And a lot of that was the big hit that we put on Iran with respect to the nuclear. They took that was an unbelievable military maneuver, the B-2s, and many other planes involved, by the way, but the B-2s. Yeah, I think nobody expected that to happen. And, you know, we had 59 countries involved, and these were countries very diverse. You had Arab, Muslim, Jewish, you had every country, Christian, you had every country, and many countries involved, and we got that done. And we got it done pretty swiftly after we set the table properly. We had to set the table properly. This should be one that we get done. And I think the table is set properly here now, too. And it'll be a great honor. It'll be a great honor to get it done. And the Ukrainian people are great, and the Russian people are great. And obviously they have much in common, as we understand. They have a lot in common. So it'll be a great honor to get it done. Yeah.
On Venezuela, there are survivors from your latest boat strike. What happens to those survivors?
Well, I'll ask Marco to discuss that possibly.
Yeah, it's well known there's an ongoing narco-terrorist operation the United States has been conducting. As far as details of any recent strikes, we're not prepared here to announce all those details, but you'll get that information here very shortly.
And how are there survivors when these are meant to be lethal attacks?
Yeah, again, I mean, we're undertaking these operations against narco-terrorists. That's what these are. These are terrorists. Let's be clear. And but as far as the details of any recent operations, when we are prepared to announce those, we will, as the president has consistently done. So you may get something on that later today.
Let me ask you, that was in a submarine, right? We attacked a submarine, and that was a drug-carrying submarine built specifically for the transportation of massive amounts of drugs, just so you understand. This was not an innocent group of people. I don't know too many people that have submarines. And that was an attack on a drug-carrying, loaded-up submarine. Yeah.
On Putin, is it your belief, as Mr. Zelensky said yesterday, that the threat of tomahawks and costs, as Secretary Hicks had put it, is that bringing him to the table, the fact that it's kind of a carrot and stick?
I don't know what's bringing him to it. I think he wants to make a deal, that's all. I can't tell you what's bringing him. Sure, that's the threat of that is good, but the threat of that is always there. Tomahawks are very dangerous weapons. They're incredible weapons. If you like warfare, it's one of the most accurate. You know, we hit 30 Tomahawks in Iran after the B-2s did their damage. We sort of gave it a little capper with 30 Tomahawks from a submarine, quite far away actually, but they're an amazing weapon. They're a very powerful weapon, but they're a very dangerous weapon, and it could mean big, escalation. It could mean a lot of bad things can happen. Tomahawks are a big deal. But one thing I have to say, we want Tomahawks also. We don't want to be giving away things that we need to protect our country. We have a very strong country right now. We have a strong military. We have the greatest military in the world. We have the greatest weapons in the world. I want to get this war over. Okay?
Putin-Trump tunnel to connect Russia and Alaska. Are you interested?
I just heard about it. A tunnel from Russia to Alaska. I just heard about that one. That's an interesting one. We'll have to think about that. I hadn't heard that. We just did a nice road in Alaska that's going to get us to a lot of minerals, and we have a piece of it, a good piece of the ownership because of the fact we made it possible. But this came up yesterday, a tunnel from Russia to Alaska. That's an interesting. What do you think of that, Mr. President? Do you have any ideas? How do you like that idea?
I'm not happy with this.
I don't think you're going to like it. I don't think he liked it. I don't think he liked it.
President Trump, do you think that Vladimir Putin, do you think that Putin is your gut instinct?
Well, we had a senator that wanted, remember, from Hawaii. She wanted a tunnel from the mainland to Hawaii. And she said, well, we can't do that, so we're going to build a railroad to Hawaii. Do you remember? She's a current sitting senator, a Democrat. She wants a railroad to go to Hawaii, right? You know who that is, right? She's another beauty.
President Trump, on Putin, your gut instinct.
Yeah, please.
On your meeting with Putin, aren't you concerned that maybe the Russian president is trying to buy himself more time?
Yeah, I am, but, you know, I've been played all my life by the best of them, and I came out really well. So it's possible, yeah, a little time.
Is your gut instinct?
It's all right. But I think that I'm pretty good at this stuff. I think that he wants to make a deal. I made 8 of them. I'm going to make a 9th. I think he wants to make a deal. Well, I think that he should have won the war in a week. Yeah, I do think. And if we didn't give the anti-tank missiles, as you know, the javelins they call them, they got stuck in the mud. They would have been in Kiev very quickly. They were heading to Kiev. So, you know, in war, you have a lot of luck, too. You know, people, weather has won war, and the cold and the heat and all things take place in war. But that was a very interesting moment when the tanks started rolling and some brilliant general said, let's go through the mud instead of going down the highway, right? So they got a little bit lucky. But you know where they really got lucky? I gave javelins. That wasn't given by Barack Hussein Obama. He gave them sheets. You know, there's a statement. Obama gave them sheets, and I gave them the javelins. And the javelins are a devastating weapon. And that wasn't given by Obama. That was given by, because at the time it was Obama. That was given by me. So it was like one of those things. And you had hundreds of them. They're a devastating weapon. We have a lot of devastating weapons. I'd rather not use them. But that was a big moment. You know, when the tanks got stuck, they got stuck. And call it luck or call it talent. I'm not sure what you'd call it, but it was a big moment in time.
Do you think Democrats will give you credit? Do you think Democrats will give you credit when you finally end this war, like they did with the war in the Middle East? And
I think right now the Democrats are really damaged, mentally damaged. They want to take $1.5 trillion with a T, $1 trillion, and give it to people that invaded our country. They came into our country illegally, from prisons, from mental institutions, gang members. They want to give them health care and take it away from our citizens. We're not going to do that. $1.5 trillion. They want to destroy our health care system. We're not going to let that happen.
Have you authorized CIA operations in Venezuela as part of?
Well, I wouldn't say that, but some interesting things are happening around the world. I'll say that.
Mr. President, it has been reported that Maduro offered everything in his country, all the natural resources. He even recorded a message to you in English recently, offering mediation. What should we do in order to stop that?
He has offered everything. He's offered everything. You're right. You know why? Because he doesn't want to fuck around with the United States. Thank you, everybody. Thank you, everybody.
Thank you, guys. Thanks, guys. Let's go. Start moving. Thank you, guys. Let's go. Thank you, guys. Thanks, guys. Thank you, press. Thank you, press.
Thanks, President Trump.
Thank you, Good job.
All right, folks, you have been listening to President Trump in the cabinet room, a packed room, no doubt about it. Key members of the president's administration certainly around him. Ukrainian President Volodymyr Zelensky there as well, and they covered a range of topics, but as you can guess, front and center with the Ukrainian president in that room talking about the potential for an end to the war between Russia and Ukraine. Now, 3.5 years in. A very good afternoon, everybody. A busy Friday afternoon. I'm Carol Masser, along with Bailey Lipschultz. Tim will be back on Monday. We are across, of course, Bloomberg platforms. I just want to kind of touch upon some of the headlines, I should say. Maybe it feels like sometimes deer in the headlights for some of us. In terms of Russia-Ukraine, President saying he thinks President Putin will agree to peace and that Ukrainian President Zelensky will be in touch on the upcoming meeting with Putin. We know yesterday we did hear from President Trump on another meeting after a 2-hour phone call that he had yesterday, a plan for the two leaders to meet again. But President Trump also, Bailey, talking about this being a double meeting. So the assumption is meeting with maybe President Putin, then maybe a meeting with President Zelensky to hopefully figure out a way to end this war.
Yeah, he really spoke about being the mediator of this ongoing conflict. And the big question then inevitably is, how do we come to a resolution? What does that actually look like? When do these conversations turn into some form of action? And I think that's the thing that'll be interesting, that may or may not come from this meeting with Zelensky, just given kind of how long and drawn out this could be. And then Trump also kind of acknowledging that it does seem, at least in the Q&A portion of that, that maybe Putin is potentially trying to drag this along as long as he can. So that'll be certainly something to keep an eye on.
One more thing I want to mention, that in that room, we did get some questions from members of the press about U.S. and China and the trade talks. As you know, markets, a week ago, we saw the equity market here in the U.S. sell off on concerns about talks breaking down. U.S. Treasury Secretary Scott Bessent was in the cabinet room. He said he will talk with China's vice premier tonight and then meet him probably a week from tomorrow in Malaysia. We're talking about He Lai Feng to prepare for their two presidents to meet. So president also weighing in, saying China wants to talk and that he thinks a deal will be made that is good for both sides. So a lot coming at us. We're going to dig into all of these big stories. We've also got a great read on housing amid a lack of data from the U.S. government. So all that coming your way in the next 45 minutes or so. Right now, though, I do want to head to the nation's capital, check in with Bloomberg News senior editor for technology and strategic industries, Mike Shepard, on a day where we do see stocks right now at their best levels of the session, up about 32 points on the S&P 500, 151 to the upside on the NASDAQ 100. Some of that on easing concerns about U.S.-China trade, but also maybe breathing somewhat of a sigh of relief when it comes to regional banks. Some others reported their results, and they came in better than expected after some of the concerns yesterday with Zions and Western Alliance. I said there's a lot coming at us. Mike Shepard, come on in on what we just heard from President Trump. I got to say, an F-bomb is not something we usually get from a president, but maybe it speaks to the difficult negotiations and how long this process has been going on. But what jumped out for you in that press conference and meeting with President Zelensky of Ukraine?
Well, a couple of things stood out. One is his vision for this meeting that he plans to have with Vladimir Putin at some point in the near future. We don't have a date for it, but he does not see the two warring leaders, Vladimir Putin and Volodymyr Zelensky, actually sitting down together. It would be, as you had noted at the top, a pair of bilateral meetings that Trump would orchestrate and perhaps set the two men closer on a path toward peace. It really does seem that this session today is more to lay the groundwork than anything else. And there does seem to be a bit of deal-making to happen between the U.S. and Ukraine in these discussions as well. Volodymyr Zelensky came prepared to talk about what his country could offer the U.S. in terms of drone production and technology. This is an area where they have innovated, really necessity being the mother of invention. They've really made advances in drone production and technology to be able to counter Russia since the invasion in 2022. And one of the things that he would be looking to get in return would be some more capability and permission from the U.S. to strike deeper into Russia using U.S. weapons, and those possibly could include those Tomahawk missiles. Trump was non-committal on that, and that was another thing that stood out. So these are open questions that the two leaders will be discussing now that they've chased the press out on that resounding note of the F-bomb. But we'll have to see what comes further from this meeting and whether it will last as long as the Putin call of 2 hours yesterday.
And Mike, how productive can this meeting be in your view, given, as you mentioned, maybe it's just simply to lay the groundwork and get a sense of what Ukraine can do for the U.S.?
Well, it really depends on how the two leaders continue to get along. And we saw that at the beginning of the year, late February, their first get-togethers after Trump returned to office ended quite badly. And it really set relations between the U.S. and Ukraine on a bit of a tailspin, and it raised questions about whether Trump might walk away altogether from the Ukrainian side and seek to somehow force them into Russia's arms to reach a peace deal that they might not want. But Ukraine and President Zelensky have really taken pains to try to meet Trump more than halfway, to meet him where he is. And you saw the president complimenting the Ukrainian leader on his suit, something that came up during that first meeting in February.
Right.
And so it does seem that they are reaching some sort of understanding, and that'll be critical, Bailey, to trying to get something actually done. This interpersonal deal-making and diplomacy is Trump's hallmark, and Zelensky recognizes that.
I felt like that stood out real in a big way, right? Complimenting him on the suit, and it's like Zelensky kind of got the message too. Okay, this is how we play ball. Having said that, just last question, Mike, these things can change. We've seen the relationship, certainly when it comes to Russia, Ukraine, go back and forth here.
It is hot and cold, and you really don't know what you're going to get almost from day to day and week to week. And it also is a common strand in the China relationship with the U.S. as well. A week ago today, Carol, we were talking about, well, is this meeting between Trump and Xi even going to happen? And what about these 100% tariffs he's threatening? And now he is saying that, look, earlier today in an interview on Fox Business, he's saying, look, I recognize the non-viability of imposing such heavy tariffs and holding out the prospect of actually following through in this meeting. So you never know what you're going to get. And it will really also depend on Vladimir Putin and whether he truly will take some steps toward reaching the bargaining table with Zelensky at some point. Since the Alaska meeting, Trump has been frustrated that Putin has not shown more or done more to achieve progress in this area. And that's prompted some harsh rhetoric from the U.S. president in this regard toward Putin and toward Russia. So we'll have to see what the fruits of today are and what happens in Hungary if that meeting comes off.
All right. Lots of stuff going on. It does feel like the ball is in President Putin's court, at least at this point, but let's see how it all plays out. Michael Shepard, thank you so much. Mike Shepard, Senior Editor for Technology and Strategic Industries at Bloomberg News there in our D.C. bureau. All right, folks, we're going to stay in the nation's capital, dig a little bit deeper into the story with a voice that so understands President Putin. She's, in fact, written a book, Putin's World, Russia Against the West and With the Rest. She is Angela Stent, Senior Fellow at the American Enterprise Institute, former National Intelligence Officer for Russia and Eurasia at the National Intelligence Council, and she served in the Office of Policy Planning at the U.S. Department of State. A friend of the show, she joins us on this Friday. Angela, your takeaway on what we just saw in the cabinet room in the White House.
Well, I still think that President Trump is kind of on a high from the Israel-Gaza peace deal. He really does want to get the Nobel Peace Prize. And so he and his relationship with Zelensky, as we just heard from your correspondent, has definitely improved greatly since February. Zelensky understands exactly what he has to do to deal with President Trump. And I think the fact that Zelensky yesterday met with business folks here to talk about joint production of drones, other military material, other potential business deals, also speaks to his focus on telling President Trump, you know, the U.S. can make money from this too. On the other hand, you know, we know that we thought at least that the president was fairly serious about supplying Ukraine with these long-range Tomahawk missiles with which Ukraine could strike quite deeply into Russia. And President Putin intervened. He requested a phone call. He got it yesterday. So I wouldn't say we're back to square one, but we're back to a situation where President Trump, I think, still believes that he can get Putin to agree to a ceasefire and a peace deal.
Angela, with that in mind, who has the most power between the three leaders and who's facing the most pressure right now?
Well, I think that Putin is feeling some pressure, but I think Putin still feels that he holds quite a lot of cards. He's in no hurry to end this war. He still believes Russia can win. I think President Trump is really more of a hurry to end the war, and clearly President Zelensky wants to see it end because of the terrible loss of life there. I think unlike in, let's say, the Israel-Gaza situation, President Trump has much less leverage over President Putin than he had, say, over Prime Minister Netanyahu and others, and even to some extent over President Zelensky, because Russia still holds a lot of cards, and it can always threaten, as it does periodically, that if, say, the Tomahawk missiles were given to Ukraine, that Russia would escalate, and who knows what it would do with its nuclear weapons. So Putin, I think, still feels that he holds many cards here.
Well, and I think about all the conversations, Angela, we've had since this war started. Hard to believe we're 3.5 years in. It's really kind of shocking. Why would President Putin want to end this war? I mean, we've talked about this with you. I mean, this isn't just about Ukraine. These are what he believes Russia should be, going back to kind of its former glory. So is there really any reason that he would want to end the war? Is there possibly economic pressures? I mean, help me out here.
I mean, the economic pressure is there. The sanctions have had an impact. They'd have more impact if President Trump gave the go-ahead to the Senate bill, which I think 89 senators have agreed to support, bipartisan, to impose more sanctions on Russia. And I think, in fact, supplying Ukraine with these Tomahawk missiles, with maybe other weapons, if Putin really believes that he cannot win on the battlefield, then he might have to think about actually sitting down and negotiating. By the way, I don't think he's ready to sit down with President Zelensky. He said that President Zelensky isn't a legitimate leader, but he'll certainly sit down with President Trump. He believes he's at war with the West. So I think the incentives here are just his concern, because Trump periodically says they're going to be much harsher measures taken, and he wants to fend those off. He wants to make sure that those are not imposed on Russia.
Angela, can a real ceasefire end to this war happen if we don't see all three, or really the two primary people, and I'm talking about President Zelensky and President Putin, in the same room?
I mean, if you look at what happened, again, it's not a perfect analogy with the Israelis and then Gaza and the other Arab countries. There weren't that many direct negotiations. I mean, you could have intermediaries. You could theoretically have the U.S. negotiating with Russia, with Ukraine, maybe some other intermediaries, and they could agree to a ceasefire. I think that the meeting between Putin and Zelensky would be more relevant if they're actually going to have a peace deal. But I think you have to understand that there could be a ceasefire and armistice without them actually working out a peace deal. I mean, as there was really after the Korean War. I mean, that's how it ended. So you could just have the guns as silent, but you can't really get this settled.
What other countries could be stepping in to help support Donald Trump in the U.S. and kind of mediating this? And what would you expect from, I don't know, the European Union or other countries?
So, I mean, Turkey has been quite active, President Erdogan, in intervening. I mean, when they had the initial talks after the war broke out to try and come up with a peace agreement, Turkey was very active there because Erdogan has pretty good relations both with Russia and Ukraine. I mean, theoretically, there's China. And I think in the beginning, people in the West hoped that China would do more. But China really isn't neutral in this conflict. I mean, it's been supplying Russia with the wherewithal to continue the war. I mean, theoretically, it could. I think the European Union, that's much more difficult because Putin sees the Europeans as enemies, except, of course, for Prime Minister Viktor Orban. But his problem would be, as an intermediary, that he's been very critical of Zelensky. I mean, theoretically, Hungary is neutral in this war, but it isn't really. So I think Turkey, maybe China, I don't know, Saudi Arabia was involved in the beginning in trying to get the two parties together. So there maybe are some other countries that could be involved in helping to negotiate this.
How do you think President Zelensky feels when he's in a room and President Trump does mention Mr. Orban and that he's playing a role and there's going to be a meeting in Hungary? Like, how do you think that comes off? Is that kind of like a reminder to Zelensky, like, keep your jacket on?
It's a reminder, right? I mean, President Trump is not going to say to him publicly, I hope, as he did in February, you don't have any cards. But I think, President Zelensky and the Ukrainians realize that they have limited leverage in all of this, and they're doing everything they can to support the U.S., to give business opportunities for the U.S., to get the U.S. to understand it would be much better if this war came to an end. But obviously there's a limit to what President Zelensky can do, and I'm sure he'll be viewing this meeting in Budapest with a very wary eye.
And Angela, just given your experience and your focus on the topic, what happens next in your view, and how long does this drag on?
Well, I mean, assuming that there is this meeting in Budapest with President Putin, and we haven't even talked about how he's actually going to get there. This will be his first trip to Europe since the war broke out, and most of the airspace is closed to him. But assuming he does get there, I'm assuming that there will be, more discussions about the possibility of various things. Putin, I'm sure, will push the settlement that he thought that Stephen Witkoff had agreed to, but apparently hadn't, which is that Ukraine would have to cede to Russia all of the 4 provinces that Russia claims to have annexed, none of which Russia fully controls. In other words, Ukraine would have to give some territory to Russia. In return, there would be a quote-unquote land swap. There is some land that it might get back. So I think if it were to agree to that, or if President Trump were to say that he would pressure Zelensky to agree to that, that would be a possible way of getting to a ceasefire. But unless Putin moderates his conditions, and the other one is Ukraine saying that it will never join NATO, it's not so clear about the European Union, then I think it would be, those are still, I haven't heard anything from the Kremlin where they've moderated the maximum demands, where they always say we have to get to the root causes, and the root causes are they don't want a sovereign Ukraine that's integrated with the West.
What are they so worried about? Just the West then supporting Ukraine going forward? Is that what it's all about?
Well, they're worried about that. And what about the example? What about if you actually had a successful, prosperous, much more democratic Ukraine next door to you? That also might, give the population in Russia something to think about.
President Trump, how crucial is he in all of this, in your view?
Oh, I think he's very crucial. I mean, I think, under the Biden administration, there were no negotiations because the Biden administration essentially only had very few contacts with Russia after the full-scale invasion. So I think President Trump is a very important player here, and I think he's going to have to decide how much pressure he's going to bring to bear on both sides, and what the U.S. would be willing to accept for both sides as a reasonable at least precondition to a ceasefire.
Hey, one last question, 30 seconds. Does President Putin respect President Trump?
I think he does. I think he recognizes that President Trump, even if he's sometimes unpredictable, the U.S. is still the most powerful country in the world, and it does have the ability to make life more difficult for the Russians. So I think he does, yeah.
So glad we got some time with you, as we always feel that way. Angela, be well, have a great weekend. Angela Stent, Senior Fellow at the American Enterprise Institute, author of Putin's World, Russia Against the West, and With the Rest, joining us there from Washington. All right, folks, we are seeing stocks take a move up to their best levels of the session. So maybe some of that has to be with what feels like easing tensions on multiple fronts. For a check on the trading day and your top business stories, let's head to Alexis Christophorus. She's in for Charlie Pellet. Alexis.
Hey, you are right on all fronts, Carol. Thanks so much. Stocks now back near their highs of the session. Investors shaking off those credit concerns that sparked a big sell-off yesterday in regional banks. So stocks are getting a boost after President Trump said the U.S. is doing well in its trade negotiations with China, adding that it looks like that meeting with President Xi Jinping is going forward. Right now, the Dow Industrials up more than 300 points, the S&P 500 adding 40. We've got the NASDAQ Composite at its best level, up 142. Precious metals, though, are pulling back from their recent record rallies. We've got gold down nearly 2% and silver taking it on the chin today. Spot silver is down about 6%, biggest drop in about 6 months. Despite a volatile week, though, stocks actually got big inflows as investors put their cash to work. Equity funds drawing $28 billion. Stocks that led yesterday's sell-off are rallying back today as traders bet any bad credit bets were just one-offs and not a part of a bigger crisis. We've got shares of Zion's Corp up about 5.5% right now, best level there. Western Alliance is rallying more than 2%. And investment bank Jefferies, which was caught up in that storm for its exposure to bankrupt auto parts retailer First Brands, it is up now better than 6% after Oppenheimer raised its rating to outperform. Got to mention American Express. It is up 6.5%, biggest gainer in the Dow, earnings topping estimates as demand for its revamped Platinum card surged. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, Alexis, thank you so much. Well, that has certainly been one thing on our mind, everything we just got out of the White House. And you can see how, at this point, as Alexis pointed out, you know, we're seeing kind of a sigh of relief in the market, certainly a very different Friday than what we got 1 week ago. Having said that, there is something that continues to be on our mind, and that is what happened with two regional banks yesterday. Global credit markets on the edge still as fresh loan blow-ups, a full credit risk concerns and stir kind of memories of the 2023 U.S. regional banking crisis. And so we wanted to kind of get into this. Safe to say all of this, Bailey, I just take it back to Tuesday. JP Morgan's earnings, and then Jamie Dimon kind of making some comments on that earnings call.
Yeah, talking badly, if you will, about at least some products in the private credit space, and certainly an area that people have been pointing to, but maybe we are finally seeing issues bubbling to the surface, or at least we have seen a few.
Right, and we definitely saw it with Zions and Western Alliance yesterday after they said that they were victims of fraud on loans to funds that invest in distressed commercial mortgages. Gets my hairs all tingling. Let's get to what Jamie Dimon said. Just in case you missed it, here's what he had to say when it came to some credit concerns.
Like, you should assume that whenever something happens, we scour all process, all procedures, all underwriting, all everything. And, you know, we think we're okay in other stuff, but my antenna goes up when things like that happen. And, you know, I probably shouldn't say this, but when you see one cockroach, there are probably more. You know, and so everyone should be forewarned on this one.
Yeah, it felt like all of our spidey senses went up. That, of course, was Jamie Dimon of JP Morgan on that bank's earnings call on Tuesday. So we wanted to dig a little bit deeper into the credit picture. With us is Winnie Caesar, Global Head of Strategy at Credit Sites, joining us from Charlotte, North Carolina. Winnie, good to have you here. Markets a little yesterday were a little bit on edge, to say the least. Are there lots more credit cockroaches out there, in your view?
In my view. So I'm not sure that there are necessarily a lot more credit cockroaches out there to the level that we've seen over the past few weeks. But I will say, as someone who's focused on credit for quite some time, you can usually follow the capital to challenges. And we've seen a tremendous growth in some private asset classes, private credit being one, and it's not particularly transparent. And that makes it really difficult to assess the true credit quality, true credit health of a big part now of the credit market, when there's been so much capital and perhaps not as much time to do really robust due diligence and underwriting.
And Winnie, what industries, though, could be most exposed to that? Because when I look at Tricolor and First Brand showing up in the auto space, but are there broader concerns?
Yeah, this is a good question, and one we've been mulling over with our autos analysts, trying to assess, is this something that is specific to just those handful of companies in terms of having true fraud issues, true structural issues from a business operation perspective? Or do we need to give bigger thought to just the amount of debt capital that's outstanding, not just for auto OEMs or suppliers, but within the personal consumer finance space, within ABS? And I think that it's always important to start to poke around. Now, when we look at, where capital has flowed over the past 5 years or so, there have been a number of sectors that have grown quite tremendously. When we think back to the kind of media and telecom bust-ups that we've seen for the past couple of years, that has to do a lot with the fact that just a lot of capital went into those sectors, kind of leading into COVID and during the COVID pandemic. And so as we're looking forward, we always are looking at technology, at software, data centers, all of these things that have just seen such a robust amount of cash put to work.
It's interesting that you say data centers, because that seems like an area that could not be hotter, whether it's in the private or public markets. So if there are concerns in data centers, how long does that take to show up, though, just given that a lot of these are either starting to break ground or not even there yet?
Yeah, it's a really good question, especially because of just the way that a lot of the data centers have been financed, right? We know we have these massive hyperscalers with a lot of cash flow that, if one data center is eventually, not particularly successful, that's probably not going to be make it or break it. And there has been a lot of diversification in terms of how data centers have been financed within the ABS market, within the world of private credit for investment grade. So I do think it's going to take some time to really assess, what is the return on investment for all of the data center investment, for all of the AI investment. I don't think that we're necessarily going to have a full picture within the next 3, 6, 12 months. But it might be, here and there, we start to see some things that are a bit more challenging on the headline perspective.
I do wonder, though, it's interesting. I was looking at Zion's, and it got an upgrade today. But if I go back to the October 13th, Moody's came out and said the outlook remains stable. I'm just putting it out there. And then you have what we got yesterday, and we're learning more about it. And then you did have an analyst come out over at Baird and said, actually upgraded it to outperform from neutral. Analysts noting the sell-off seems excessive. So I just wonder, David George is the analyst. I just wonder, it's hard to keep track of all this stuff, and I do wonder, there has been so much sloshing around for a while. Is there a good chance that we miss it or we don't realize that there's a problem until we're too far in? I don't want to be exclamatory, but I just, great financial crisis is hard to forget.
It really is. It's really hard to forget. And especially when you look specifically at credit markets and where valuations stand today, right? Investment grade trading at very tight spreads now, well below 5% yield. High yield, similarly, very tight spreads, below 7% on a yield basis. And when you think about what compensation am I getting for credit risk, it's much lower than it once was. So even if we don't have, a widespread systemic blowup like we had with COVID, like we had with the GFC, the upside downside feels a bit more skewed at this point to the downside within credit markets. That's not to say you have to sell everything. There's nothing to buy. There's definitely a good number of very high quality issuers where you can clip a coupon and feel reasonably okay about things. But the reality of credit markets is when you are lending, not every deal is going to be a home run. Not every deal is even going to be a single. Sometimes there are going to be losses. And whether, we have broad-based systemic fraud, I don't think that that's necessarily the case. I'm not necessarily worried about that. But when I think at just what credit valuations are paying me to tolerate right now, it feels like the skew is towards the downside.
Hey, one thing I'm curious, Winnie, though, private markets, they were there during the great financial crisis, but not like they are today. How does that potentially complicate things and the opacity of it, like that we just don't know what's going on?
Yes, it's true. It's hard to assess truly, what is going on in private markets in aggregate. Now, the good thing about private markets so far is that there is still a lot of liquidity on the sidelines within private markets. Just all of the cash that's been deployed into private credit, private markets, has not actually been fully invested. Also, we know that within private markets, it's a very fragmented lender and borrower relationship. There's just a lot of different types of companies that have been lent money to, and then also lenders. And so to think about, is this systemic, you would need to see some sort of event that was kind of widespread enough across the private markets to really pull all of that liquidity out. And given some of the structural considerations, that makes it a little bit more difficult to say, oh my gosh, private markets, this is the next systemic thing to be really worried about. But are private markets necessarily going to be just an ample source of liquidity without any problems, which has kind of been the case for the past few years? I don't know that that's going to be what we expect going forward.
And Winnie, just one more question here. When I look at or think back to the kind of fears around the collapse of SVB, the big question was how interrelated are these banks? And also how scary can a dash to either pulling money out or shorting the stocks could be kind of to the entire system. Given where we are right now, when you look at kind of the backdrop, is that a risk? Is that at the top of people's minds in terms of what could be the next chip to fall and what does that mean? Or are we not there yet?
say we're not there yet. Talking to clients within the world of credit, people have been really constructive on the banking system as a whole. You know, having come through the regional banking crisis of 2023, with definitely some issues, some banks that did not make it through, but not necessarily seeing that kind of systemic collapse. And I think also the types of issues that we've seen more recently in the banking system, having some loans that have just, you know, gone very bad, that happens in the banking system. Whereas in 2023, you had a very interesting dynamic with, you know, the rise in treasury yields and the way that bank balance sheets were constructed that actually required the Fed to step in. And so far, I would say that what we're seeing is, you know, just kind of bad credit due diligence, which sometimes happens within the world of banking. Hopefully it is not a widespread issue versus something that could have become much more problematic had, you know, the Fed not stepped in 2023.
All right, so glad we could get some time with you as well. Winnie Caesar, she's Global Head of Strategy at CreditSights, joining us from Charlotte, North Carolina.
Just a quick look at the markets. S&P 500 right now up about 0.5%, so just a touch back from those intraday highs, but NASDAQ and Dow Jones up. Similarly, Carol, just want to call out that we are on pace for the S&P 500 on the week to close up about 1.8%, so not quite recouping the losses from last week, but another step in the right direction, at least when you look at kind of broader headline moves, 9 of the 11 main sectors in the green in the S&P 500 today.
And a fair amount of volatility on any given day.
It's been choppy. It's been choppy. Paying attention to True Social, posts on other social media, as well as comments from certain areas of the White House. Absolutely.
I'm looking at S&P 500 major industry groups too. There are 11, 9 are higher in today's session. Consumer staples, the outperformer, up about 1.25%. All right, we're going to stay with kind of the narrative that now includes credit concerns. And we just talked about that a lot with Winnie Caesar over at CreditSights. Curious to see what our next guest has to say. Well known in terms of understanding land acquisition, real estate, housing, and more. Great to be talking again with Katie Hubbard. She's Executive Vice President of Capital Markets at Walton Global. It's a privately owned asset and real estate investment company. It's got over $4.5 billion of land assets under management and administration and more than 89,000 acres of land under ownership management throughout North America, with nearly 89% located across the U.S. They are, though, global, and they do operate in the retail, industrial, and commercial sectors. Katie, good to have you here with us. I got to start with what is now, courtesy of the last 24 hours, part of our narrative, and that is some credit concerns. Those bad loans reported by Zions and Western Alliance being traced back to the bankruptcy of a commercial real estate investment firm in Southern California earlier this year. I know not apples to apples with you, but I got to guess it's on your radar. First of all, any connection with any of this, and what can you tell us about your world and credit concerns?
Yeah, Carolyn Bailey, thanks so much for having me. The good news is there's no connection there, but we are definitely seeing some interesting things on credit and housing. What we're seeing on our side is that the adjustable rate mortgage is having a renaissance, and ARMs are up 134% year over year, and people are really able to hit that magic 5.5% mortgage rate, and that's helping them qualify for and hit that affordability metric for people with hitting certain income limitations. So we're seeing an increase in ARMs. 24% of our builder clients, which, you know, just as a reminder, Walton provides land banking for public home builders. So we have a really unique perspective behind the curtain of what's happening in home building, and 24% of people taking out a mortgage are getting an adjustable rate mortgage right now. And that is tied to the SOFR, which is tied to the Fed funds rate. So we're looking to see, for affordability factor going forward, rates coming down for people who are looking to get an ARM.
But we're seeing rates coming down, but I still think and I'm interested in your thoughts, is there still concern about a consumer being able to afford housing and how that works out, just given the, again, concern and issues we've been seeing showing up, especially for, call it, the lower third consumer here in the U.S.?
Yeah, there definitely is a concern. About half of people versus 2016 can actually have the income to be able to afford a house today versus what we're seeing, just because of the affordability factor. Like you're saying, for 5 months in a row, we're seeing new homes actually cheaper than existing homes. So the market has some interesting dynamics, and affordability being one of them.
Yeah, it's interesting because we did have, you know, some data. We've seen prices of new home sales continue to fall amid high inventories. So that dynamic in terms of home builders, are you continuing to see some pressure or them putting, having lower prices here because they're trying to bring buyers in?
Definitely. So if you look at inventory across the U.S., we're sitting at 2.6 homes per community unsold, but Southern California is really feeling the effects of that. They're at 5 homes per community unsold, and their sales, September net sales and new homes are down 30% in Southern California, where other parts of the country are doing just fine, where the home prices are really flat in the Northeast and Midwest, and sales are sitting about 1.5 homes per community, where seasonal average we're about 1.9. So we're seeing slightly elevated inventory. And that's why starts and permits are down to 1.3 million homes. And we're delivering 1.6 million, but we need to really deliver more homes at more affordable prices to get back to equilibrium.
Well, what's driving that in Southern California?
It's affordability. To your point, Bailey, it's just people can't afford the homes, and so it's bringing down prices not only on homes, but also we're seeing land prices in California and even in A and B locations decrease, which is really unheard of. Most of the time, land prices are going up in A and B and C and D locations across the rest of the country, but affordability is the problem there.
But is that just people who have enough money are leaving the state? Is that people just aren't having enough income? Inflation's driving the pinch? I'm from Southern California, and I'm actually pretty surprised by how stark those numbers are, just given it seems like an area that is doing quite well, broadly speaking, no?
It's really just it's people being taxed out and wanting to sell their houses there, and they're going to Idaho, they're going to Texas, they're coming to Colorado where I'm based, and it's just they're leaving for that affordability. They can sell their house and go pay cash and have much lower taxes, and that's just leaving the builders that are building and having to offer incentives. Lennar is one of the largest builders. They build 12% of all homes across the U.S., and they're the largest builder. And most of the sub communities they're building over 50%. They're having to offer over 14% incentives to get that inventory moving.
Hey, one thing I want to ask you, we talked to you a lot, and I feel like we have over the last couple of years at this point. You seem to often have about $4.5 billion of land assets under management. Do you guys try to keep it at that number? It doesn't seem to change much.
Yeah, so we are doing off-balance sheet land financing for the builders. We're giving them maximum flexibility so that they can take that land when it's development ready and when the market has the demand for the product that it's zoned for. So it does stay about that, but that's just really off-balance sheet financing. So we're buying the land for the builders, and then they're taking it down as they need it across the country.
Well, and in the land acquisition, what are the costs that you guys are seeing? Are you seeing also those prices lower than what they've been?
It is varied across the country. I mean, in A and B locations with good zoning where builders can get higher densities, that land is worth a lot of money if they have the utilities, the water, the political wherewithal to build there. That's that's really worth gold. But if you're holding land that has some political opposition, you don't have the water, the utilities, then you're going to be waiting till the next cycle, really.
Yeah, I guess when you look at